made here in Asia Pacific as we're going to see in other parts of the world.
Jeff, I'll just ask you to hold on for a second if I can. I'll come back to you in a moment. We just want to catch the open of trading in India and see how we track here, because there are a few AI-related stocks that we're watching also. If we just take a look at the open, a little bit of softness to get going, perhaps not surprising. We're seeing a risk-off sentiment across the Asia-Pacific region at the moment. But Reliance Industries, one of the stocks that we talked about a little bit earlier, off by about 2.25% at the moment. We did see a lower than expected quarterly profit, soft on petrochemicals and retail business as well. Revenue, though, was up 11%, but we're seeing Reliance just slipping a little bit there. Wipro, another one that we're watching, off now 8%, a little bit more than that. This is a company that specializes in IT, computer-related technologies as well. Bit of a mixed bag there, 7% net profit decline, which was worse than expected, although you could probably say a lot of that was due to implementing the new labour code, but shares a bit softer in the first few minutes there, now off 8.3%. We'll be talking to the CFO of Wipro in a little while. Jeff, on the topic of India, I just want to get your thoughts on what trends you're seeing in terms of AI adoption in that market and how much room you see for growth.
Oh, it's a great question. Actually, when you take a bit of a tour around Asia Pacific and think about, well, in which countries do we see the most ambition, the most adoption? Actually, in Asia Pacific, India and China certainly top the list in our research and when I talk with business leaders in both places. So going back to those key points of, what does it really take to transform with AI? We see leaders in India really thinking about this, really taking action. In fact, I tell many of my colleagues around the world and many leaders around the world, if I were to look at where some of the most, I'd say, forward-thinking banks and other companies in terms of adopting AI in terms of how they work, you find some of them in India. You also find some of them in China, and you find some other parts of Asia as well, too. But there is as much innovation, happening in that market as we would see in some of the Western markets, certainly.
All right, Jeff Walters of Boston Consulting Group, thanks so much for joining us today with your insights. Let's take a quick look at those Indian markets again, a little bit softer as I described, and Reliance coming in with those lower than expected quarterly profit numbers. The refining and telecoms business was reasonably strong, but overall a little bit of softness there in the share price, although we're off session lows now, off by about 1.7%. And we're also tracking Wipro. This is after the tech giant reported earnings that did fall short of expectations. The company's CFO, Aparna Iyer, is going to be joining us in the next hour. Those shares now off more than 9%, so we'll have plenty to talk about. Coming up, new polling puts Australia's populist One Nation Party ahead of the Conservative opposition for the first
Kuwait Vision 2035 is based on 3 pillars: innovation, sustainability, and partnership.
We have a very young population that are very well educated. They are ambitious. Kuwait is undergoing this next wave of modernization.
We believe innovation flourishes when idea and talent are convened. That's why we are investing with education, R&D, and partnerships to attract more investors and to be ready for the next generation.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like like you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be.
Hello everyone, good morning to all of you. Welcome once again to this live session. नेचुरल गैस में देखो मैंने कल ही बताया था सैटरडे के दिन जब हम वीकली एनालिसिस कर रहे थे एक लास्ट बाइंग का ट्रेड था लास्ट ट्रेडिंग सेशन में, याद होगा। तेरह के आसपास यहाँ बाई किया था, उसका टारगेट हो चुका है। एक अपर सर्किट बनाया मार्केट ने, गैप अप ओपन होकर फिर से एक और अपर सर्किट लगा दिया है। तो जो बाइंग में थे वो निकल जाना उनका हो गया है, टारगेट डन। यहाँ से देखते हैं एक सेलिंग का प्लान करेंगे वापस। बाकी क्रूड ऑयल का देखो करंट मंथ का फ्यूचर अभी शायद चल नहीं रहा है ट्रेडिंग व्यू में, ब्रोकर में भी शो नहीं कर रहा है, तो मुझे लग रहा है थोड़ा वेट करना पड़ेगा यहाँ पर। अभी फिलहाल करंट मंथ का फ्यूचर इज नॉट वर्किंग। ऑलमोस्ट फ्लैट ओपनिंग लग रही है क्रूड ऑयल की। निफ्टी बैंक निफ्टी थोड़ा सा गैप डाउन ओपन हुए हैं। रिलायंस ने आज भी कुछ खास किया नहीं, 2% डाउन है ऑलरेडी। लेट्स सी कुछ ट्रेड बनेगा वैसे इंडियन मार्केट में, मुझे लग नहीं रहा। चांसेस कुछ हैं आज इंडियन मार्केट में ज़्यादा अच्छे ट्रेड बनने के, विल सी दैट। करंट मंथ का भी फ्यूचर अपडेट नहीं हुआ शायद ट्रेडिंग व्यू में, तो नेक्स्ट मंथ का फ्यूचर चल रहा है, बट वहाँ पर भी बहुत ज़्यादा गैप है बिटवीन बायर एंड सेलर, तो थोड़ा सा अवॉइड करेंगे। फ्लैट ही ओपनिंग हो रही है वहाँ पर भी। इज इंटरेस्टिंग। परसों जो बाइंग का ट्रेड लगाया था एग्जैक्टली इसका टारगेट इतना ही था, 302 के आसपास का, उसके ऊपर ही निकल गया है। लेट्स से अपर सर्किट ओपन होता है तो दूसरा अपर सर्किट है राइट नाउ इन नेचुरल गैस 15 मिनट टाइम फ्रेम।
is how that happens. Does that happen here? The Labour Party right now is a historic majority, but a lot of those seats are very marginal. And so come the next election, which doesn't have to happen for a few years yet, come the next election, do we see a lot of those Labour Party seats going to minor parties, fringe parties, or hard right parties?
Yep. All right, Australian politics and economy reporter James Mager there in Canberra. Still to come, we'll speak exclusively with Wipro CFO Aparna Iyer after the firm's reported earnings fell short of expectations. Shares tumbling minutes after the open in India. We'll dig into their outlook next hour. Plenty more to come in our next hour of Insight. Keep it here with us. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The lesson is that 1.5 is not the end of it. So if we look at last year, you mentioned one of the metrics, one of the temperature databases went above 1.5, but there are about 4 or 5 others that still are below 1.5 for now. The IPCC has sort of projected that by early 2030s or thereabouts, all the other databases will consistently be above 1.5 for the entire year. So we still have that little bit of wiggle room. But I think some of the messaging is a bit mistaken. It's not that we passed 1.5, we're dead in the water. No, the assessment of the science has shown that if we go to net zero by 2050, there is still a chance of us peaking and coming back down to 1.5 or below by the end of the century. There is still hope to actually get back down to something of a livable world if we get our act together.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back. You're watching Insight. It is a risk-off mood for Asian markets after President Trump's latest tariff threat on European allies. He's ramping up the pressure to acquire Greenland. US and European futures sliding as traders flock to haven assets. We've got gold pushing to a fresh record high. It's above that $4,600 level. Elsewhere around the region, it's broad risk-off sentiment. The Nikkei at the moment off by about 0.9%, returning from the lunch break there. But it's weakness all around, except for the Kospi, which just keeps on roaring ahead in 2026, now better by 0.9% on the tech story. Elsewhere, though, we've got the CSI 300 in China off by about 0.25%. The Hang Seng down by about 1% as well. We've got the euro hanging in there, though, 116 at the moment, despite all this interesting saber rattling on Greenland. And we had some data out of China a bit earlier as well, which we'll get into in a moment. Mostly in line, the fourth quarter GDP numbers 4.5%, the 2025 GDP number 5%. These are all in line with estimates. It's really only retail sales that was a down note there, expanding only by 0.9%. Industrial output better than expected at 5.2%. Well, those official figures, as I mentioned, they're showing China's economy growing 5% last year. That meets Beijing's target despite a significant slowdown in recent months. China's weathered President Trump's trade war by boosting exports outside of the US. President Xi Jinping signed a sweeping trade deal with Canada last week following Prime Minister Mark Carney's visit. Meanwhile, activity data for December, as I mentioned, showing industrial production climbing 5.2%. That's the fastest in 3 months, just ahead of expectations. Retail sales there a weak spot, the weakest, in fact, since the COVID reopening, just missing forecasts. All right, let's get to our next guest now, Pei Qian Liu, Asia economist of Fidelity International. Pei Qian, thank you so much for joining us today. I just want to get your reaction to those GDP numbers coming in bang in line with estimates.
ओके गाइज, यहाँ पर नेचुरल गैस को देखोगे अभी भी अपर सर्किट पर ही है, सेकंड अपर सर्किट पर थोड़ा सा ऊपर मिलता है ना। यहाँ पर दो रेजिस्टेंस है, एक तो ये पॉइंट ऑफ इंटरेस्ट वाला रेजिस्टेंस है, ऊपर एक एक्सटर्नल लिक्विडिटी जोन है। दोनों वैसे टेस्ट हो गए हैं, तो मैं एक्सपेक्ट कर रहा हूँ ऊपर वाले लेवल तक पहुँच जाए तो फिर सेलिंग का प्लान करेंगे। लेट्स सी, नीचे से कोई सपोर्ट ना बने, इसके चांसेस अभी कमी है फ्रेश सपोर्ट बनने के, बट या अगर कहीं यहाँ कहीं सपोर्ट बना के जाता है ऊपर तो फिर टारगेट थोड़ा छोटा रखेंगे। तो ये रेजिस्टेंस जोन है, एक्सपेक्टेड है, इनको होल्ड करना चाहिए प्राइस को। ये दोनों ही रेजिस्टेंस है, ध्यान रखना, बट ये लोअर और हायर दोनों एंड टेस्ट हो चुके हैं। ठीक है, ये तो 3 बार हो गया, ये एक ही बार हुआ है अभी। ये सपोर्ट तो परसों का लो का एंड का सपोर्ट एरिया था, वहां से मार्केट में काफ़ी अच्छी बाइंग आ गई। मैंने आपको परसों ही बताया था, मार्केट ऑलरेडी 4 आवर टाइम फ्रेम के सपोर्ट जोन पे है, तो एक पुल बैक अच्छा आ सकता है। ऑलमोस्ट देखोगे 30 पॉइंट निकल चुका है, 11% का पुल बैक फ्रॉम दैट पर्टिकुलर जोन्स। फ्यूचर अभी भी स्टक है करंट मंथ का। निफ्टी बैंक निफ्टी में कुछ ट्रेड नहीं है 15 मिनट में गैप डाउन हुआ है वहां पर प्राइस एक्शन थोड़ा सा डिस्टर्ब किया है
Property there, well, the slide in fixed asset investments track the slide in property as well. So, to what degree does China's property woes just continue to cast a shadow over the rest of the data and sentiment more broadly?
I think this restructuring of the economy is going to take a long time, and we've been fourth, fifth year into the property sector adjustment. We don't really see the case of a much worse deterioration going forward, but the real question really is when does the policy comes into place to restore and stabilize the property sector investment at the current levels. Given that property sector is no longer viewed as a main engine of growth, I think the cyclical upturn for fixed assets investment might come from other aspects such as the infrastructure investment and a continued performance from the service sector investment as well as to some extent manufacturing investment stabilization.
Yeah, well, let's talk about industrial production on that note. That was a bright spot, expanding a bit faster than expected on year, 5.2%. Do you see that trend continuing, and how does that fit with another narrative, which is overcapacity in China's economy?
Yes, I think there is still more runway for industrial production to remain strong, and that is given the nature that China's manufacturing output has been a main anchor of global manufacturing supply chain. As we have argued earlier, that domestic demand is probably not the main driver of China's industrial sector and manufacturing sector outperformance. It hinges more on the global demand. So if we think that the global demand is going to remain resilient, perhaps there's still some room to run for China's industrial production.
You were talking about the K-shaped economy a little bit earlier, and some of China's homegrown tech names have been performing extremely well, particularly in the AI space most recently. To what degree do you see those businesses providing a tailwind to China's economy?
Well, I think this K-shaped economy is actually a phenomenon existing across Asia, given that I've been looking at other countries as well. So the AI-related and non-AI-related supply chains are now seeing divergent performance. So on that perspective, I think given that the AI capex remains strong, estimates has been optimistic, there is room for optimism for the AI-related supply chain as well as the demand coming from there. But really, it's about the transmission of that optimism and profits into other parts of the economy in terms of seeing jobs improvement, wage growth, and probably that's going to be the focus that we will be looking at for the coming quarters.
Well, I did say I'd like to talk to you a bit about policy, so let's do that now. We've got a policy decision coming up tomorrow, the loan prime rate. Do you see that being moved anytime soon, or do you think policymakers would prefer a different lever in terms of monetary policy?
Well, given that we have heard quite a few targeted easing last week, the PBOC has been announcing a few very specific rate cuts for relending, for structural monetary policy tools. The urgency or the need for cutting broad-based benchmark rates might be lowered. So just in terms of the very near term, we probably expect the LPR for 1 year and 5 year to remain unchanged for now. But going forward, I do think that we probably will see monetary policy easing continuously, providing support to the economy. Given the constraints of currency and FX stability has been reduced somewhat with renminbi appreciation, there's room for the PBOC to be cutting rates further. So we expect perhaps another 10 basis point rate cut in 2026 and another 1 or 2 triple R cuts for the rest of the year.
And how do you view that impacting the fight against deflation, and how have policy measures on that front been so far? Do you expect to see more?
I think that the PBOC has been, in the past few monetary policy statements, putting fighting or restoring inflation as one of the policy priorities. It's very likely that there will be more easing in form of both broad-based and targeted easing to bring inflation back on track. But PBOC does have its constraints as well. We mentioned earlier, currency has been the constraint, which is less so right now. But the other aspects of the constraint is really the bank's net interest margins. So the PBOC will probably still going to balance among the multiple policy goals, the FX, the NIMs, and restoring inflation to bring it back on track.
Before we let you go, Pei Chuan, I just want to get your thoughts on the direction of travel for the yuan. It's been strengthening. It's a little stronger again today, 6.9578 now. Where do you see us heading in the coming quarter?
I think the appreciation momentum will likely to continue based on a few factors on the background. The current account surplus is running at a very high level, and we do see more exporters FX conversion in the last few months. It might continue going into the Chinese New Year as more profits and receivables are converted into yuan. Going forward into the later half or the 2026, I think that given that weak dollar momentum is likely to continue, and that's going to support yuan on a dollar-yuan basis. And in terms of the pace and momentum, the PBOC might prefer a stability of gradual appreciation rather than any rapid moves, in my view.
All right, Pei Chuan Liu of Fidelity International, thanks so much for joining us today. Staying with China, as we mentioned earlier, households there are also searching for higher yielding investments. There's roughly $7 trillion in time deposits going to be coming due this year. For more, Asia Equities reporter Charlotte Yang joins us. So, Charlotte, where's all that money going to go, and how could it potentially reshape Chinese markets?
Yes, Paul, we're looking at a massive figure there. Around $7 trillion of savings deposits are likely to do this year. And Chinese households in the past, they've liked to park the cash in the banks because property is weak, stocks weren't returning, aren't really delivering. But now with deposit rates slipping to 1%, they are also looking at other venues to put their money. And the shift is already happening. We're seeing some of that going into equities. You have the Chinese market adding more than $1 trillion in market value over the past months. Gold is also another venue that's hitting record highs. We're also hearing from contacts that there's very strong demand for those insurance policies that provide steadier yields. So while it's important to know that historically, UBS says that over 90% of these those mature deposits will stay in the banking system. But what's important, I think, is what those additional flow will mean for the market. For example, for equities, that could be a real tailwind. The liquidity-driven rally has been so strong recently, but we also need fresh powders going into it. And I think this also goes into what authority has been wanting on a slow bull market, that's steadier, and also to have a healthier capital market that could actually support the broader economy better. So I think all of these, so where these money will go is a very important trend to watch.
Well, China's tech stocks are off to a pretty strong start in 2026, and that's despite a few struggles there. Where do you see that heading?
Yeah, so investors, this year has been so strong for Chinese tech stock. Investors are just now not really paying
So guys, finally crude oil का chart running है now. Current month का future is running right now. ठीक है, एक्चुअली परसों एक्सपायरी हो गई थी, उसके बाद से 2 दिन से फ्रेश फ्यूचर का चार्ट, प्रीवियस मंथ का फ्यूचर का चार्ट ही हम यूज कर रहे थे. सो दिस इज नाउ द करंट मंथ चार्ट. फ्लैट ओपनिंग है, प्राइस वहीं पर है. नेचुरल गैस, देखो नेचुरल गैस में जैसा मैंने बताया था, इसको थोड़ा सा साइड कर देते हैं. ये दोनों ही रेजिस्टेंस जोन है, ठीक है. दोनों ही रेजिस्टेंस जोन है. ये लेवल ऑलरेडी 3-4 बार टेस्ट हो गया, ये एक ही बार टेस्ट हुआ है, तो एक्सपेक्ट करेंगे दोनों लेवल से सेलिंग आए. बाकी देखो प्राइस वापस 300 के ऊपर आ गया, तो एसएल थोड़े से बड़े बनेंगे अब. ठीक है, डोंट एक्सपेक्ट 2.3 पॉइंट एसएल, एटलीस्ट 3 to 4 पॉइंट इज नॉर्मल एसएल राइट नाउ. According to that, the target will be there. But yeah, there is a possibility price will hold this level as well. यहाँ से प्राइस थोड़ा बहुत होल्ड कर सकता है, थोड़ी बहुत सेलिंग यहाँ से भी आ सकती है. यहाँ से सेल करोगे थोड़ी क्वांटिटी कम रखना, ऊपर से आएगा तो नॉर्मल क्वांटिटी में सेल कर सकते हैं उस केस में. ठीक है, तो इसको मैं कर देता हूँ कुछ ऐसा. ये थोड़ा सा रिस्की रहेगा. दिस वन ट्रेड इज काइंड ऑफ अ रिस्की ट्रेड. ऊपर आएगा तो नॉर्मल प्लान कर सकते हैं. होने का रीजन ये है कि ऑलरेडी 3 बार टेस्ट हो गया है, फोर्थ टाइम यहाँ पर हिट कर रहा है, तो थोड़ा कम ही क्वांटिटी में प्लान करना है. इस सेलिंग वाले को ऊपर से आता है तो फिर नॉर्मल क्वांटिटी में हो सकती है. इस लेवल पे कम क्वांटिटी होनी चाहिए. Bank Nifty continues sell off 15 minute. $5,000 के अराउंड लग रहा है प्राइस वापस फॉल कर सकता है निफ्टी फ्यूचर में. अप्रॉक्सीमेटली एक्सपेक्टेड ही है 25,000 का लेवल. 25,000 के अप्रॉक्सीमेटली हो सकता है प्राइस वापस आने की कोशिश में जाए. इस मंथ के फ्यूचर में देखोगे क्रूड ऑयल को हल्का सा गैप डाउन जरूर हुआ था, रिकवरी कर रहा है बट करंट मंथ में ऑलमोस्ट फ्लैट ही है. निफ्टी में भी कुछ ट्रेड नहीं है यहाँ पर, बाइंग तो कर नहीं सकते अब ऑलरेडी. नीचे सपोर्ट काफ़ी लो लेवल पर है. सेलिंग के लिए रेजिस्टेंस पे आया ही नहीं है तो गैप डाउन में निकाल दिया इन लोगों ने. जाने देते हैं, अननेसेसरी जाते नहीं है. याद रखना यूएस में बैंक हॉलिडे है तो वहाँ पर वॉल्यूम थोड़ा सा हो सकता है थिन रहे. देयर इज अ बैंक हॉलिडे इन यूएसए. वर्ल्ड इकोनॉमिक फोरम की एनुअल मीटिंग्स आज से स्टार्ट हो जाएंगी एंड देन 1:30 न्यूयॉर्क लंदन सेशन इज ओपन. देखना पड़ेगा शाम को 6:30 पे न्यूयॉर्क सेशन से वॉल्यूम आता है या फिर नहीं आता है. ये देखो थोड़ा सा नीचे आता है ना, इसमें एक बाइंग का ट्रेड बनेगा, बट या थोड़ा सा नीचे और 15 मिनट में मुझे लग नहीं रहा निफ्टी में कोई ट्रेड बनेगा यहाँ पे। सपोर्ट काफी दूर है, रेजिस्टेंस से परसों ही सेलिंग आ गई थी, बीच में गैप डाउन ओपन हुआ है। एटलीस्ट 15 मिनट फ्यूचर में कुछ ट्रेड नहीं है यहाँ पर अभी। ठीक है, हो सकता है स्मॉल टाइम फ्रेम पे कुछ बनाओ, 15 मिनट में कुछ नहीं है। परसों सेलिंग जोन से सेलिंग कंटिन्यू चल रही है अभी भी। कोई अगर कॉल शॉर्ट करके बैठा है, फ्यूचर शॉर्ट करके बैठा है तो होल्ड करो। कॉल देखोगे तो बाइंग यहाँ पर मेरे अकॉर्डिंग तो बिल्कुल भी नहीं है, और सेलिंग परसों से चल रही है, फ्रेश सेलिंग जोन कुछ बना नहीं है। सो दैट इज सेलिंग इज कंटिन्यू फ्रॉम थर्सडे फ्राइडे।
Your initial reaction to the numbers, and among the many that we mentioned, what do you think is the most important?
I look at the FAI number, the fixed asset investment is perhaps the worst in history since I observed this data back in from 1998.
First negative
figures.
Wow.
So you can see how bad
outside
it was.
of COVID.
Outside of COVID.
Outside of COVID. Okay.
No, even including COVID for the full years, the number was still positive.
Oh, was it? Okay.
Across the whole year. It was a drop. In terms of, I don't have the nominal GDP growth number because I'm sitting in the state studio, but I expect that this would also be one of the worst in terms of nominal growth. Maybe since 1976. Except COVID. This one is except COVID.
Okay. This is the absolute number of output.
Yeah.
Nominal. Okay.
Yeah.
Okay.
But apparently,
we'll try
if you look at the fourth
you.
quarter number, you know the momentum dropped a lot in the last few months, except maybe some rebound in December, just looking at the PMI number and also today's industrial production, not bad, higher than 5%.
So what does that mean for 2026? What's going to turn around this investment story, that this negative sort of sentiment that we're seeing when it comes to people?
Well, the low number in the second half of last year provide low base for comparison. So just in terms of headline figures, we improved in the second half of the year, but that tells us still whether the government is willing to relax the anti-involution and relax some of the pipeline. That's been a lot of money sitting in the local government ready to deploy. But then the sentiment in the second half of last year started to drop a lot because of anti-involution. Well, I'm looking at the GDP figures, 4.8% this year. I know that some of the local governments still set a very aggressive target, maybe at 5%. So this may still be the official target for the Chinese economy as a whole. But my worry is not about the headline number, it's about the distribution. Because now, if you look at the unemployment number too, especially the youth unemployment, I expect to be a second-digit number still. I don't have the number for December, but the November number is 16.9%. It's higher than the November number last year. Or 2024.
Yeah, okay, we're going to try an effort to get you that number.
You won't get that today.
Okay. The headline number of jobless rate is 5.1, which is the same. Yeah.
Is that informative to you, just the overall number?
It is very informed. I think this is very indicative about the structural changes, the regime shift of the economy. GDP is doing quite well, but what about AI, robots replacing, the demand for labor, and how would that weigh on and drag consumption? So you see that the retail sales number is very, very weak. I can't whether China can count on consumption to boost the domestic demand because still, I believe the export and external environment is still pretty vulnerable.
So vulnerable. So maybe the export side of things. How does that look for this year then? People are pointing to maybe we're finally going to see payback, things are going to be slower than what we saw last year. But even the December numbers for trade were very, very strong.
Very strong. This is structural. I think the China export is structurally strong because of the super cycle of the technology and digital economy, the transformation of the world. This is still, I believe, is a real activity that drives the China export because of the electronic supply chains.
News when you want it with Bloomberg News Now. I'm Doug Krisner. Members of the European Union are discussing options for how to respond to President Trump's use of tariffs as punishment for EU support of Greenland. EU leaders are set to hold an emergency meeting in the coming days. Now, Greenland is a semi-autonomous territory of Denmark, itself a founding member of NATO, and Trump is threatening to seize control of the territory, potentially with military force. Over the weekend, the president slapped a 10% tariff on goods from the 8 European countries supporting Denmark, and now we are told the EU is considering the use of retaliatory tariffs on $108 billion worth of U.S. goods. Now, despite the threats from President Trump, the foreign minister of Denmark, Lars Rasmussen, said the door remains open to talks with the U.S. over Greenland.
We have been asking since the very beginning of this to have constructive dialogue with our American ally and friends, free from social media and headlines and strong words. And we opened that dialogue last week. We will not give up on that.
That is Danish Foreign Minister Lars Rasmussen. Meantime, U.S. Treasury Secretary Scott Bessent dismissed threats from the European Union to halt a tariff deal reached last year with the U.S. Here is Bessent speaking to NBC's Meet the Press.
Well, first of all, the trade deal hasn't been finalized, and an emergency action can be very different from another trade deal.
That is U.S. Treasury Secretary Scott Bessent speaking to NBC's Meet the Press. President Trump said he would soon announce his nomination to replace Fed Chair Jay Powell. Now, Trump also said he wants to keep Kevin Hassett, the current director of the National Economic Council, in his current role. Hassett had once been seen as a front-runner for the Fed chairmanship, and today Hassett told Fox News Trump may be right to pass him over.
From the beginning, he and I have talked about whether it's better for me to be here in the West Wing or over at the Fed. I don't think he's made a final call on that. But I got to say that I'm even humbled still, perhaps, to be in the running with the other people.
Now, the list of candidates to succeed Powell includes Fed Governor Chris Waller, as well as former Governor Kevin Warsh, and there's Rick Reeder, the CIO of fixed income at BlackRock. We are told his candidacy has gained momentum. We go to southern Spain next, where a high-speed train derailed and slammed into an oncoming train on the rail line between Madrid and Malaga. 21 people have been killed at least, and dozens more injured. Here is Spanish Prime Minister Pedro Sanchez speaking through an interpreter.
Tonight is a night of profound grief for our country.
I would like to express my deepest condolences to the families and loved ones of the victims. No words can alleviate such great suffering, but I want you to know that the entire country stands with you during this difficult time.
Spanish Prime Minister Pedro Sanchez speaking through an interpreter. Officials in Spain say the cause of the crash is unknown. In Minneapolis, tensions remain high 10 days after an ICE agent shot and killed Renee Good. Over the weekend, thousands of protesters denounced federal immigration enforcement. Meantime, the U.S. is increasing the number of law enforcement agents and potentially sending military personnel to Minneapolis. The FBI is also sending messages to its agents nationwide seeking volunteers to temporarily transfer to Minneapolis. And at the same time, the Pentagon has ordered U.S. troops to be on standby. Here is Homeland Security Secretary Kristi Noem speaking on CBS Face the Nation.
We won't stop until we are sure that all the dangerous people are picked up, brought to justice, and then deported back to their home countries.
Or a date?
We wouldn't be in this situation. We wouldn't be in this situation if Joe Biden hadn't allowed our open border policies to be in place.
That is Homeland Security Secretary Kristi Noem speaking on CBS Face the Nation. Meantime, the governor of Minnesota, Tim Walz, has mobilized the state's National Guard to support local law enforcement. The government of Syria and the U.S.-backed Syrian Democratic Forces have agreed to end their clashes. The two sides reached a new deal on expanding the SDF's control over vital territories and resources. Now, this agreement includes a ceasefire as well as the retreat of SDF troops east of the Euphrates River. It also relinquishes authority in the eastern provinces to the government and the military. In sports, the NFL playoffs are underway, and the New England Patriots defeated the Houston Texans 28-16 in the divisional round. The Patriots will now face the Denver Broncos in the AFC Championship next weekend. In the NFC, the Los Angeles Rams have defeated the Chicago Bears 20-17 in overtime. And with that victory, the Rams advance to the NFC Championship next weekend, where they will face the Seattle Seahawks. And that is News When You Want It. With Bloomberg News Now, I'm Doug Krisner, and this is Bloomberg.
Minuses of one possible solution, so-called big ski. But we start with the story of the week for the Federal Reserve, with Chair Jay Powell reacting forcefully to a grand jury subpoena looking into his testimony about renovations in the Fed's D.C. office building.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do, with integrity and a commitment to serving the American people.
Everyone from central bankers around the world to several Republican senators condemned the move, including senior Senate Banking Committee member Tom Tillis, who spoke with Bloomberg on Capitol Hill.
If suddenly the threat of a lawsuit can take a chair out of play, how can anybody think that that's anything more than a de facto ending the independence of the Fed? And we all know what that does to markets worldwide. I will block any effort to name any member of the Fed board until this matter is resolved. To move on would almost validate that this is a way that you can actually get the Fed under heel.
Bill Dudley is former president of the New York Fed and now a Bloomberg contributor. There was a lot of reaction to the news that there was a grand jury subpoena against the Federal Reserve and Chair Powell. A lot of reaction by politicians, by the news media. There wasn't as much reaction actually in the markets. So is one of them right and one of them wrong?
Well, time will tell. But I think the market view is, look, they issued a subpoena. It's a long way from issuing a subpoena to actually having the grand jury indictment, a trial. and that's going to take so long. Powell is already no longer going to be chair. So I think the market view is this is sort of a lot of noise.
So it may not have the effects in the real world, but Chair Powell, who had repeatedly just sloughed off criticism of the White House, had an entirely different reaction. It was a very, I thought, forceful statement that he taped.
Oh, very much so. And the contrast with how he behaved previously, where he was basically, I'm not going to engage, I'm not going to engage. And this time he said, no, you crossed the line. You're accusing me of malfeasance, and I'm not going to take it. And so I think because he was so measured before, this made it even more effective.
So you've been in the room, and whenever we ask somebody who's on the Fed, they say, oh, no, we pay no attention to politics at all. Absolutely not. It doesn't affect us. But you are human beings. I mean, it must play in the back of your mind somewhere, even if it's not discussed in the meeting.
Look at the Federal Reserve transcripts of all the FOMC meetings released with a lag of 5 years, and you won't see any discussion about political considerations. So I think that's actually true. But you're certainly right in the sense that if the administration is putting tremendous pressure on the Fed to do something, that makes it a little bit more difficult for the Fed to deliver what the administration actually wants, because it creates the idea of are they doing it because they think this is appropriate for the economy, or are they caving to the administration's pressure? So I think that's why it's actually counterproductive what they're doing. I can imagine Powell thinking, should I do one more rate cut or not? Boy, now if I do a rate cut, it looks like I'm bending to this pressure. Maybe I better hold off. So it's actually making it more difficult for the Fed to cut rates, frankly.
As you say, Chair Powell's term will be up in May. There will be a new Fed chair. How much difference will the chair make in himself?
I think the chair is certainly important because, one, they control the agenda. The Board of Governors staff works mainly for the chairman. So that's a lot of authority. But at the end of the day, in terms of the votes on the Federal Open Market Committee, the chair only has one vote. And so I think the influence of the chair really depends in part on how credible that person is in terms of making the case for the monetary policy that he wants to see implemented. So if someone comes in and says we should cut 100 basis points and the economy doesn't suggest that that's appropriate, the committee is going to say, well, that's what you think, but we're going to dissent against that. And that's really, that would actually be quite bad for the chairman if the chairman sort of lost a vote to the rest of the committee. So I think there's quite a few guardrails there. I think the broader question is, can the Trump administration put enough loyalists into the Federal Reserve so it's not just the chairman, it's a majority of voting members of the Federal Open Market Committee. And that's why the Lisa Cook case is so important. Because if Lisa Cook can be dismissed for cause, well, then maybe other people can be dismissed for cause, and then you get a much more rapid turnover of the Board of Governors. Board of Governors had 7 votes on the FOMC. The presidents have 5. So if you could take over the Board of Governors, you could actually start to get the monetary policy you wanted.
From the outside, the job of chair of the Federal Reserve looks pretty hard for anyone, anytime. Is President Trump making it harder for the next chair with what he's saying and doing, including his grand jury subpoena?
Yeah, I think he is, because I think it's when the new chair comes in, people are going to be wondering, so are you President Trump's lackey, or are you going to be on the side of independent monetary policy based on what the economy calls for in terms of inflation and employment? What interest rate path should we follow? And so there's going to be a question about, are you supporting the idea of an independent central bank or not? And so the new incoming chair is caught in a very difficult place, frankly. I mean, it's almost like they're going to get someone mad at them if they side on the side of let's independence of monetary policy, let's set the right monetary policy. That might run into conflict with the president, and obviously if he tries to push the president's agenda and the FOMC thinks that's inappropriate, then he's going to get on the wrong side of the FOMC. So I wouldn't want to be the new chair, frankly.
It strikes me when it comes to the Supreme Court, the president typically goes out of his way to say, I didn't ask, for example, how they would vote on this particular issue. I didn't ask that question in advance. I'm not sure President Trump would have the same reticence with the next Fed chair of not asking them specifically, what are you going to do?
I wouldn't be surprised if he asked them what to do. And I think if I was the Fed chair, I'd say it depends on the incoming economic data and what's warranted to keep the economy on a smooth glide path. I mean, look, I think President Trump, is coming at it from a real estate developer perspective, and which is lower rates are always good. But the reality is lower rates aren't always good, because if you set rates too low, the economy will overheat and you'll have an inflation problem. It's sort of ironic in an environment where people are worried about affordability, that inflation is the thing that really resonates with voters, that you're pressing so hard for lower interest rates, which would actually probably make inflation worse.
President Trump has said repeatedly, I have the right to express my views. I think I'm pretty smart on this, and there is a First Amendment right, even for the President of the United States, to express your views. Is there a point where that expression of views actually starts to do long-term damage to the institution?
I think it depends on how you're expressing the point of view. You could say, my view is that the Federal Reserve should interest rates more. Fine, that's just an impression of view. Powell is an idiot. He better lower interest rates by 100 basis points or I'll fire him. That's a totally different expression of a point of view. One is saying what I think interest rates should be. The other is saying, not only is what do I think interest rates should be, this just should be the consequence of my decision. So I think there are two different things. So I don't think anyone quarrels with the president having a view on interest rates.
The latter is what the president has done.
Yes.
Which would imply there is some damage being done. How long lasting is that? I mean, there will be a new president at some point, and let's assume a new president comes in and says, no, I'm not going to criticize the Fed anymore. Does it restore the credibility, or is there lingering damage?
I mean, I think it depends on how the Federal Reserve behaves over the next couple of years. You know, if the Federal Reserve basically sticks to its knitting, conducts monetary policy in an independent way, keeps the economy on a smooth trajectory, no lasting damage. The President Trump was thwarted in his attempts to take over the Fed. But if President Trump is somehow successful in taking over the Fed and getting a very accommodative monetary policy as a consequence that's not appropriate for the economic outlook, then of course there'll be more lasting damage to the Fed.
Take us inside the room when the FOMC meets, because historically it's sort of been like secret. We don't know what's going on.
Well, you have the transcripts, and I think the transcripts are pretty accurate about what the meetings are like. You know, basically what happens at a meeting is typically you have a briefing from the system open account manager about what's going on in markets. Then you have a briefing on the economy from the staff, and then a briefing on international staff. And then you have a go-around, and everyone talks about their views on the economic outlook. It's a pretty collegial place. I mean, people want to understand the views of others. People aren't yelling and screaming and arguing, vociferously. It's very respectful. And, people spend, quite a bit of time, when the meeting's not in place, actually, talking in the halls at coffee, having a cup of coffee on the break or at the breakfast or lunch. So I would say, I find it to be quite collegial, I think that makes the institution function better.
A collegial place where one in Lisa Cook and now two in the chair, Jay Powell, are under very public attack, personal attack.
And I think people are feeling that could be me. So I think, there's quite a bit of sympathy for what those two people are going through. So I think, I think the Federal Reserve leadership, including all the FOMC participants, are very sympathetic to where Powell's coming from, and I think they feel really good about what he did and had to say in his video message this past weekend.
Up next, competition in the Gulf between Saudi Arabia and the UAE. This is a story about transforming a brand. The Kingdom of Saudi Arabia has long been associated with the Muslim holy cities of Mecca and Medina, and perhaps even more so with oil. But the country's rulers have been trying to diversify. What if it could become a favorite vacation spot as well? Our colleague Jomana Brzezinski brings us the story.
Many countries seek to transform their economies, but few do it with such a centralized approach and such vast amounts of capital. Through its Vision 2030, Saudi Arabia wants to shed its image as just an oil nation and modernize its economy. It's a goal that comes from the very top, with the Crown Prince meeting President Trump and foreign business leaders in the United States at the end of 2025. More than 40% of Saudi Arabia's GDP comes from oil, but by 2030, the kingdom wants that number to be closer to 35%, with around 2/3 of GDP coming from non-oil sources. Just this month, the country started opening its property market to foreign investors and announced plans to do the same with its equity markets after a year of poor returns. In 2025, Saudi Arabia's benchmark index dropped 13%, despite strong stock performance in much of the rest of the world. Stephen Cook is a senior fellow for Middle East and Africa Studies at the Council on Foreign Relations.
The Saudi economy has been a commercial economy, but it hasn't really had genuine institutions of a market economy. Independent courts, which he hasn't even tackled yet, but rational investment laws and the things that investors really need in order to operate outside of the hydrocarbon industry.
You know, with the Vision 2030, His Royal Highness the Crown Prince said we have to diversify the economy. We don't want to continue relying on one source of income, which is the oil. In a time where we have vast number of other things like mining, natural resources, phosphate, gold, and nature. We can do a lot in the sport, culture, and entertainment and tourism.
His Excellency Ahmed Al Khatib has been serving as Saudi Arabia's Minister of Tourism since 2020.
Tourism was one of the main pillars of Vision 2030, and since then we have been working to modernize the country, build new destinations, new airlines, Riyadh Airlines, new airports including King Salman Airport, and new hotels.
Leisure tourism might be relatively new to Saudi Arabia, but for centuries, millions of Muslims have come to Mecca and Medina for the Hajj religious pilgrimage.
We are blessed to have the two holy cities. They used to represent 60% of our international arrivals back in 2019, and last year they dropped to 46%, and the leisure increased, and therefore we will continue pushing and promoting travel for leisure to Saudi Arabia, travel to enjoy your holidays in Saudi Arabia, and in the same time, the religious tourism will grow to a much bigger number than what we are having today.
But now Saudi Arabia wants to put a new foot forward. It might look like the Maldives, but that's the Shabara Resort, Saudi Arabia, on the Red Sea.
Well, we were born out of Vision 2030. Vision 2030 is trying to accomplish a number of different things for the country, amongst which, obviously, creating a vibrant society, opening up the kingdom, and diversifying the economy.
John Pagano is CEO of Red Sea Global, a real estate development company founded by the Crown Prince himself to create the real estate that will become part of Saudi Arabia's tourism offerings.
We have a beautiful, pristine environment, which in the world today doesn't exist. I mean, we've exploited our nature and our environments globally. When I first came to Saudi Arabia, I was shocked at how beautiful and pristine this environment was. We had beautiful islands, a coastline that was largely untouched.
Pagano's shock is exactly the image that the kingdom wants to change. Stephen Cook said there's a long road ahead.
I was there before the opening up of Saudi Arabia, and it was extraordinary because nobody had been there. But in terms of tourism, I think that, yes, there'll be tourism from, major Muslim countries, Indonesia, Malaysia, India, which has the second largest Muslim population in the world, even though it's not a Muslim country. But also, I think there is a genuine interest in attracting people from the West, Americans and Europeans, and not just the kind of, adventure tourism that they may have seen so far.
Beach resorts attract wealthy tourists, but the kingdom is also leaning into its rich history to combine luxury and culture for what it hopes will be a unique experience.
Al-Ula is an incredible place, a place like no other. It's a region in northwest Saudi Arabia with incredible natural and cultural significance. It's located on the ancient incense route, and many civilization has passed through for thousands of years.
Abir Al-Akil is the CEO of the Royal Commission for Al-Ula, which means glory in Arabic. The city is one of 8 UNESCO World Heritage Sites in Saudi Arabia, and the kingdom has big plans to make the destination a central part of its tourism initiative.
Al-Ula is not just a historical site. Al-Ula is a home. Many families has lived there for generations, and I would say that an example would be Al-Ula Old Town, where it was inhabited by the families starting from the 12th century until late 1980s. Now, if you bring all of this together, the ancient past, the incredible nature, protected nature, and the living culture and living community. This basically gets you a complete picture of Al-Ula. It's important to say that Al-Ula is Saudi Arabia's treasure, but it's also the gift for the world.
Which year did Al-Ula open for international tourists?
We started our efforts back in 2019. Today, we have received around 300,000 guests, visitors to Al-Ula, 30% of which are international visitation. So we're targeting around 2 million visitors by 2035.
If Al-Ula's plan to bring in 2 million visitors by 2035 sounds ambitious when it attracted only 15% of that last year, that's because it is. It echoes the kingdom's big target of getting 50 million foreign visitors a year by the end of the decade, in addition to 100 million local tourists. It's a goal that is even more stunning considering the kingdom only opened its borders to leisure tourists in 2019. Do you feel like you're on track to get there?
I'm very comfortable. The 50 million will put Saudi Arabia among the top 10 most visited countries around the world.
And how much of a draw are those big mega events, the World Expo, potentially FIFA World Cup? How much of a draw is that going to be in terms of bringing in those international tourists, and where does it fit in to your broader plan?
It is very important for us to repeat the visitors who will come again and again to spend their holidays in Saudi Arabia, not to come only for business or to visit their families and friends.
Adding leisure tourism to its offerings requires a big capital outlay. The government plans to spend almost $1 trillion in all to transform its tourism industry. Private investment in tourism rose to $3.8 billion in 2024, and about 40% of that comes from foreign capital. How important is it to get private sector involvement with all of these events and projects that you're putting together?
It's very important. It is part of Vision 2030. We want the private sector to drive. We are a regulator. When we opened this sector, the government started to stimulate the sector. But down the road, this sector has to be run by the private sector. The private sector in the tourism build the hotel, build the shopping mall, and build the restaurants, etc. And they operate it. They are the investor. They are the operator. But they have to. The private sector in Saudi Arabia is contributing heavily in building new destinations and the new experiences. We cannot do it alone. The private sector role is very vital to the success of this sector.
The Kingdom of Saudi Arabia also has stiff competition from its neighbor, the United Arab Emirates, and beach destinations in Africa and Asia.
This is a dynamic throughout the region. There is competition among all of these countries and cities, actually, and even within them. There's a competition between Abu Dhabi and Dubai, even though they're both in the UAE. And I think that the Saudis always looked at themselves as the big dog in the region, but they'd lag behind in terms of the kind of ability to attract businesses and firms and build these gleaming cities.
International visitors account for almost 80% of the UAE's tourism expenditure. And right now, Dubai offers tourists something that much of the rest of Saudi Arabia doesn't: alcohol. But even that is changing.
Well, you can get alcohol in the diplomatic quarter. You could always get it through diplomatic pouch, but now there's actually a shop. And so Saudis proclaim, not officially, but they would say, this is a precursor. This is the first step towards legalizing alcohol in the kingdom. I don't think anybody knows when that's going to happen. And from, I think, the Saudi perspective, that's not make or break. People will want to come to Saudi Arabia. They'll want to see Jeddah and Riyadh and Al-Ula and other places. And it won't deter them if they can't get a glass of wine. But it certainly would be a nice addition if they could.
A growing tourism industry is also changing things at home.
Look, I think the transformation has been breathtaking. I first came to Saudi Arabia for the very first time in 2017. And, the changes in society, simple things like cinemas and music, women driving, and you're walking around today in a Western business suit, which back then you probably didn't see.
The local community are basically the heart of our vision. Since the beginning, we ensured that we have set in place an approach that ensures empowering our local community through education, stewardship, and
opportunities. Is Saudi infrastructure ready to accommodate this potential influx of future tourists?
Oh, yes. We're ready today. We have catered for 116 without any issue. But definitely we're building new destinations, new experiences. I believe we are ready to cater for with the projects in the pipeline under construction, whether Riyadh Airlines or King Salman Airport that will happen, and many other airports like Abha Airport, Asir Airport, which is important, and the hotel rooms that are under constructions in Dir'iyah and many other destination or location. We will be absolutely fine. I don't think we will have a challenge to achieve the 150 billion.
The irony is that to change the world's impression of Saudi Arabia, it needs foreigners to come see what it is. But it's also foreign capital that will help fund the success of its new image.
Coming up, amid signs that the ceasefire in Gaza may be more fragile than ever, we go to Israel to see what the fighting has done to the tech industry on which the country depends. This is a story about success. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about. Born of adversity. Israel is known as the startup nation because of all the successful tech companies it has hatched, accounting for more than 1/2 of the country's annual exports.
There are more Israeli companies listed on the NASDAQ than any country in the world outside of China and the United States and maybe Japan.
One might have thought that the Israeli tech juggernaut would slow down during the nation's war against Hamas, but it turns out that it's done the opposite. Since the war began in 2023, Israeli high-tech companies have raised more money than ever, some $15.6 billion in 2025, up from $12.2 billion in 2024.
The entire tech sector, despite war, has actually grown considerably. Record number of exits this year. For instance, Google made its largest acquisition, not just of an Israeli company, but its largest private acquisition of any company in its history for over $30 billion, where it bought the cloud security company Wiz in the middle of this post-October 7th attack on Israel.
Dan Senor is the author of Startup Nation and The Genius of Israel, and hosts the Call Me Back podcast.
Israel's number of exits from the tech sector in 2025 will be about 300% higher than 2024. In the defense tech sector, which is an area of considerable growth, there were some fewer than 300 defense tech startups on October 6th, 2023. In terms of the number of startups, the amount of private funding coming into Israel, and then the number of exits, it's all kind of multiples higher than we've seen in a couple of years.
Israel's tech sector has become one of the largest in the world, accounting for 17% of the country's GDP, compared to 13% for South Korea, 10% for the United States, and less than 5% for the EU.
So for some time now, Israel has been punching above its weight, highest density of multinationals that have set up operations in Israel. Countries that, don't set up R&D shops outside of the United States anywhere in the world, and they're setting them up, many tech companies in Israel. So for some time now, Israel has been what we call the startup nation, this innovation ecosystem that much of the world is depending on. The big changes, most recently, is more and more cooperation with the Gulf states, some in very public ways like the UAE and Bahrain, some in not so public ways like Saudi Arabia, where you're seeing more and more investment from these countries into the Israeli tech ecosystem because they realize to really thrive, they need to co-innovate with another tech ecosystem.
There's 450 multinationals that have set up shop in Israel. So when you talk about the maturity, it's not just the companies, it's the overall ecosystem has become so powerful because we've all been working together and figuring out how to develop things that benefit Israel and the world through this ecosystem.
Eli Raisin is the Chief Strategic Officer at Our Crowd, an online investment platform based in Israel that connects investors from around the world.
We've set up at our crowd a super interesting fund, which is a three-part fund, or what we call the Tripont Fund, between the U.S., Israel, and Korea for not just developing or designing deep tech, but being able to produce it in partnership with strong partners in Korea and in the U.S.
And why Korea particularly?
So Korea is a super energetic, highly technologized ecosystem and economy to begin with. It's less well known because it's somewhat insular. At the same time, though, the U.S. looks at Korea as an incredibly strategic ally. There's all sorts of crossovers for our goals and our capabilities among the three countries where we really see that union as being incredibly powerful.
Israel is a good partner for the Korean startup ecosystem because they are very known for the startup nations.
Hyun-Jun Kim is the CEO of NH Ventures, a subsidiary of Nong Hiep Financial Group. In July, NH joined forces with our crowd to create an $80 million fund to invest in Israeli startups.
In Korea, we have a lot of interest about the technology in Israel, but we don't have a lot of chance to visit each other and how to communicate each other. Fortunately, we can establish the venture fund between Israel, our crowd, and NH. That makes a lot of information flow from Israel to Korea and Korea to Israel. We think Israel can be the good partner to support, expand the Korean startup, go to the US market. And Israel also, they can find a good partner to manufacturing. Korea can provide good quality and reasonable price.
Israeli tech startups run the gamut, from defense to cybersecurity to biotech to AI. But whatever the technology, it often traces back to Israel's mandatory military service.
The military is sort of a bedrock of all Israeli innovation because of a couple of things. One is there are many really fascinating technologies that are both defense in nature but also civilian in nature that are brought up through the military. And the other, less spoken about but highly impactful, is the incredible development of leadership and teamwork that happens in the military. And those teams and those leaders transition into roles leading civilian companies. We invest in defense companies, certainly, and cyber, but most of our investments are not. Most of our investments are in things that are commercial or civilian use.
Has that line between civilian and defense become blurred as we talk about dual use?
Absolutely. So we see that all the time now, both because some inventions are inherently dual use and because many of the entrepreneurs are seeing a real opportunity now to serve the incredibly impactful defense needs that are experienced not only in Israel but all around the world for the reasons that we all understand.
So perhaps it should come as no surprise that the onset of the war also opened a new front for startup technologies, including those that may have been developed for civilian or dual use.
From day one, we wanted to bring innovation to the battery sector, the battery industry. We wanted to integrate our technology into every battery in the world. That's still our vision. But I think the vision is now even bigger as we see the potential in other markets.
Adionics CEO Moshiel Biton saw a clear potential for growth for his battery parts company once the Israel-Hamas war started.
It's not where we wanted to deploy our technology, or if you'll ask me what were our vision or dream, is not to be on the defense sector. But we understand now that this is also on obligations, this is our service. That's one of the things that actually shifted and changed during October 7.
War is never a good thing, and the Israel-Hamas war has been particularly horrific, starting with the attacks on Israeli civilians and followed by the devastation of much of Gaza.
Most of the investors, they were they empathy and lots of supports and asked how we actually manage, and when we ask if we need anything. Of course, there were investors that were silent, and some investors even asked direct questions about the situation, the war, and sometimes it felt a bit awkward when, some foreigners blaming you on things that are not in your control. A private company, business company, are not part or represent any government, and they are blaming you.
The war definitely had impact in terms of which companies essentially were newly created or, like we discussed, where they leaned into in terms of their customer base or defense use cases. We also did see through the war investors sort of, in some cases, take a little bit of a step back mostly because of optics, not because of anything substantive. And now that the war's over, I'll tell you that we've seen this huge pickup in foreign investor interest in Israel. So in the last few weeks, I personally have hosted Japanese, Korean, and I'm about to host a Taiwanese delegation. Minutes before you and I joined this call, hosted a large group of Canadian entrepreneurs here in our office. So what we're seeing is a real pickup in foreign investor comfort with investing in Israel.
Out of adversity has come at least some success for the startup nation. Success involving businesses from halfway across the world.
I think most important thing is Israel always try to go global because their domestic market is not so big. In Korea also need to expand their market horizon to the global market. But they have their own strength point. We try to combine those strength points. We can raise the global success. It's a very physically separated, but our idea with the NH investments and our crowd is making same thing. So that is very important thing. Israel and Korea also have a very good relationship with the U.S.
We need to be opening up cooperation with Israel. So that was already starting to happen before October 7th. And then obviously since October 7th, you've seen this incredible flourishing in ways that were completely unexpected in areas related to defense tech and cybersecurity that has just gone to another level. So many of those same players, the Gulf states in particular, want to piggyback onto Israel's strength in these areas even more because they've seen how successful Israel has been. And then this startup nation that was buzzing long before October 7th, 2023 continues to do so.
Up next, skiing is more popular than ever, despite the lack of snow in some of America's top ski areas. We take a look at the ups and downs of big ski. This is a story about what you
Bloomberg Invest, where intelligence meets capital. In the heart of the financial district, powered by Bloomberg's award-winning journalists, bringing together the market's most influential minds.
A big part of our job thematically is understanding the risk environment we're in.
We are facing a once-in-a-generation technological disruption.
We will continue to have a convergence in credit markets.
Liquidity at moments in time when there's a lot of volatility is challenging.
Bloomberg Invest, March 3rd and 4th in New York.
You gain from joining a team and what you lose when you stop flying solo. In the last 20 years, two major players came to dominate the ski industry, turning the sport from a local pastime into a global portfolio. Scarlett Fu brings us the story.
This is the view up at Winter Park. I mean, we are in desperate need of snow. You can see how thin that snowpack is.
In the past year, skiers have dealt with record high prices, record low snow, and disruption on the slopes caused by strikes. Despite the challenges, the industry is booming, with the number of skiers rising almost 17% from 2016. And for the 60 million plus skiers visiting U.S. resorts each winter, there is a choice to make. Buy a mega pass before the season starts that gives you access to up to 80 mountains around the world, but leaves you at the mercy of seasonal conditions.
Our job is really to have a long-term relationship with our guests, and so that they feel like they're making a commitment to us year in and year out, good weather, bad weather.
Or go old school. Buy a less expensive pass at your favorite resort, preserving that hometown feel.
It's been a great thing, I think, for our industry because it's a challenging industry that we have.
Ski mountains have to make a similar decision. Are they in with the mega pass or are they out?
The one thing that hasn't changed is you get people to come here, they get out on the hill, they go skiing, they have a great time, and they want to come back.
Whatever they decide, they have Vail Resorts to thank or blame. CEO Rob Katz introduced the Epic Pass 18 years ago, offering a deal to skiers and shaking up the business of skiing in the process.
So it was a massive discount when we offered it at, $579. But the thinking was that we could, at that low price point, we could put many more people in the product, and all of a sudden that would start to create more of a subscription model to the ski business, rather than just this kind of daily feast or famine model, which was the lift ticket business.
Katz's relationship with Vail Resorts, now the largest ski resort operator in the world, goes back to the 1990s when he oversaw a deal that rescued what was then Vail Associates. Katz joined the board and became CEO in 2006. He left the company in 2021 and returned in 2025. During his first go-round, he grew the company from 5 resorts to a portfolio of 37.
I think initially the pitch was just, hey, we thought that there was an opportunity for us to really apply better management techniques to these other resorts that we bought. And 2 resorts that we bought initially were Keystone and Breckenridge, which were right down the road from Vail and Beaver Creek. And so the thought was also we could start actually managing them and doing it more efficiently. We could also offer some things so people could go to these different resorts and market to that in a more unified way.
Vail initially targeted other neighboring resorts in Colorado.
The first group of founders at Arapahoe Basin hung on to the place till 72. Another independent guy owned it till 1978. And then in the late 90s, what was called Ralston Resort, which was Arapahoe Basin, Keystone, and Breckenridge, merged with Vail Associates, forming Vail Resorts.
It wasn't long before Vail controlled roughly 43% of Colorado's ski areas by count. In 1997, the U.S. Department of Justice forced a sale on Arapahoe Basin, citing Vail's excessive market concentration. Still, A-Basin, as locals call it, chose to continue partnering with Vail, which meant it was included in the first iteration of the Epic Pass.
The view at that point was that the company's multiple was well below a lot of other travel companies. And there was a real sense that the ski industry was really a feast or famine business, where if it snowed, you did well. If it didn't snow, you didn't do well. And actually, ski resorts had been declining in the United States from 720 ski resorts, I think in the late 70s, to 550 ski resorts. So the business was really struggling, and the focus was that there was not the stability and the confidence in the future of the industry because of the ups and downs of weather. So the thinking was, how could we stabilize that? And so what we came up with was really offering an incredible value to our guests by giving them a huge discount on this season pass and trading with them, right? Essentially giving them this great discount, this great value, but then also our guests taking some of the risk of weather for the rest of the season.
Before Epic was introduced in 2008, a season pass at Vail Resort would cost you around $1,800. With an Epic Pass today, an adult skier has unlimited access to 42 Vail-owned or partner mountains around the world for just over $1,000. How did this pass model change how you plan capital expenditures, how you assess risk overall?
It made a big difference. So, historically in the ski industry, you would wait to see how the ski season was. And if it snowed and you had a good year, then you'd make commitments for the following year for capital. But as we started to do well with our season pass business, we all of a sudden started to move back when we were willing to commit. So we started saying, hey, wait, we can commit to things in December or in September or in March the year before.
Then came competition. In 2018, Alterra brought together Mammoth Resorts and Squaw Valley, now known as Palisades Tahoe in California, and Deer Valley in Utah. Soon, Alterra launched the Icon Pass, its version of the Epic Pass. Here's Jared Smith, CEO of Alterra.
The premise or the thesis for the business was really that there was some space in the industry for another large player. The introduction of Epic Pass by Vail was a game changer for the industry, no doubt about it. It's one of those unique products that is truly win-win. What we were able to do at Icon Pass was take that core model, which was for Vail of its owned and operated resorts largely, and take that and put together a network of people that didn't have to be owned by the same corporation to enjoy those same benefits. And in turn, to give consumers the opportunity to have that same exposure and that same cost-benefit analysis across a whole variety of other resorts.
The 2 dominant megapasses ushered in a new demographic of skiers.
The new mega passes, really what it did initially was drive the prices down. It's just that there are ski areas out there are companies out there that do want to drive guests to that mega resort pass or that multi-resort pass. And in doing so, they're trying to entice you with that great price point.
It's kind of a membership, right? So I think people historically said the only kind of person who could buy a season pass has to be a local. So the fact that we made the product price competitive for the destination skier, somebody coming from New York or Florida or Texas, all of a sudden they started to feel like they were a local as well.
For resorts, climate unpredictability reinforced the case for the megapass, as the industry depends more heavily on capital-intensive snowmaking equipment.
As we started to acquire resorts in different regions, all of a sudden the pass provided access to different regions who all have different weather patterns. And so that made the pass even more attractive.
Where we're able to make some of the investment in the physical plants here, combined with the technology advancements that you've seen in the quality of things like snowmaking, which uses less energy and uses less water to produce actually more yield and what we're able to put on the hill.
But as demand for the Epic Pass grew, it became kind of a victim of its own success. 2 seasons ago, Vail sold a record number of passes. It's too early to tally up this season's pass sales, but Vail said the total number of skiers is down 20% from the same time last year.
The locals don't love the whole Epic situation because of the crowds, because of the prices, because of the concentration on just finances and money.
I think there's no doubt that anytime you make something more accessible and more affordable, there's an opportunity that you have too much of a good thing, right? And you have some people who come, or lots of people who come as a result of that affordability, and they want to come at the peak times. So I think there are lots of examples in the ski industry of, you know, peak windows on high holidays with great snow conditions where lots of people want to come out and do the thing that they love that can lead to longer lines.
In 2019, A-Basin ended its partnership with Vail, cutting off ties with the Epic Pass.
Arapahoe Basin opened early. It was one of the first resorts in the country, and the concept of ski resorts was very different back then. How's the skiing?
Alan Hensroth is president and COO of A-Basin.
By 2019, 2018, we felt we could really do this better not being part of Vail. Vail was a great company for us in a lot of ways, but we kind of outgrown that, and we're looking for something different. We just thought we needed more control over our passes, more control of people coming here, more control of the actual experience that all our guests were having. And Vail was such a big, successful company, they brought really more people here than we could handle at one time. So we made a change in our past relationships.
In 2024, A-Basin completed its journey from being an independent resort to a partner of Vail, to independent again, to now a partner of Alterra. For a ski area that's passed through the hands of companies big and small, A-Basin is hoping for the best of both worlds, an independent feel on a megapass.
You know, of course, when the sale went down, you know, and it was almost a year leading to the closing of the sale, people were concerned. But as last year went on and they realized we weren't turning into a bunch of monsters, I think more and more people are accepting that A-Basin's going to be okay. And we're going to do just fine. You know, the one thing about being part of a family of more resorts is, you know, there are some people that are committed skiers and they want to buy a season pass to one place, and they're satisfied with that. But I think there's another group of people that like some diversity. They want to try different resorts. They want to ski at different resorts. They want to have choices. And, you know, when we decided to leave Vail, we could have been independent, but we thought people really wanted choices. And we thought we'd have the best future when there were opportunities for people to take advantage of those choices.
Today, you know, we have, I think it's roughly 2/3 of our resorts fall into that independent category. Like last year, independent resorts did see an uptick in visitation, which was great to see. And we saw a little bit of a decline in some of our large or extra large resorts. You know, it's just the way the pendulum swings, is that if you're not happy in one aspect of the sport, maybe you're going to go find something a little bit different.
While A-Basin joins a new team and navigates another chapter, there's still the choice to ski the old-fashioned way, at smaller independent resorts like Mad River Glen in Waitsfield, Vermont, which runs on a skier-owned co-op model and is the last remaining slope in the continental U.S. to operate a single chairlift.
We really are known for our black trails.
Matt Lillard is the general manager.
The co-op has 3,000 shares, but there can only be 2,500 owners of those shares. So everybody that has a share gets a vote. You can only own a maximum of 4 shares, but that's still only 1 vote. So that's one of the key things about a cooperative is you can't have somebody come in, buy up a bunch of shares, and have an outweighted say like you would a normal corporation.
What problems did the co-op ownership structure solve that traditional ownership did not?
I think what it did is it was able to pool the passion that the skiers have for the mountain into an entity that can take care of it. So it enabled those people to have a say in what was going on here and support it both financially and with their visits. The shareholders have a bigger say in a cooperative than they will, at a publicly traded place like Vail Resorts or something private like Altera. So they get to say that we want low skier density, and that's one of their primary goals. It's written into the bylaws, it's written into the articles of incorporation. And so that's basically saying that when you're on the mountain, they don't want it to be crowded. They want to be able to ski, they don't want people whizzing by them.
He says the co-op sold out of shares this year, even if that means bringing skiers up one share at a time. So I sit down.
Yep, so you'll sit down, and then once you get going, you'll close the safety bar.
And that's it.
That's it.
Oh.
Up next, competition in the Gulf between Saudi Arabia and the UAE. When Crown Prince Mohammed bin Salman came to Washington late last year, he was competing for time, attention, and for capital. And one of his main competitors is his neighbor, the UAE. Pasalina's Deborah Lair has seen the race from the inside. Give us a sense of where we are in that competition between the UAE and Saudi Arabia.
Well, certainly there is competition. It's both are trying to diversify their economies and to attract new technologies. But they both are really, I think, focusing on what their own competitive advantage is. In the case of the kingdom, it's scale. They have a large land mass, a larger population. When it comes to the UAE, they're more agile. They have a more mature economy. They're much more integrated into the global system. But really, there's room for both of them. There's plenty of room in the Middle East, and increased competition results in better standards, better services, and I think increased opportunities for both of them.
Is the UAE ahead, or is it just not on the same track?
It's interesting. It just depends on how you measure it. Certainly, the kingdom is a maturing economy where the UAE is a matured economy, but they are going to be competitors when it comes to technology and who can attract more. For the kingdom, they have the landmass to be able to put in place a lot of the AI infrastructure that's necessary for technological growth. But for the UAE, they're much more integrated and sophisticated when it comes to the financial system and financial networks. So there's room for them to be competitive, but also to have their own competitive advantage in different sectors.
When it comes to technology, there's a big rivalry going on globally between the United States and China on standards, on technology, on chips, on all sorts of things. Does Saudi Arabia, does the UAE have to make a choice between U.S. and China?
Well, for both Saudi Arabia and the UAE, China is their largest trading partner, and not just by a small amount, by a significant amount. But I would argue that the United States is probably a more strategic partner for both of them, and they have to make a decision when it comes to technology of what they want their infrastructure to be based on. For the U.S., it's not just about technological competition, it's also about national security. And there will be concerns given the relationships that Saudi Arabia and the UAE have with China if the United States is going to approve sending of our latest semiconductors, our latest other kinds of technology, like concerns have been voiced over the sale of the F-35, that China might get access to some of the stealth technologies. We would want to know that if we're going to provide those kinds of technologies to the kingdom and to the UAE, that they're going to put the appropriate safeguards in place to protect them.
What about the geopolitics of the area? I mean, we had the Abraham Accords. It doesn't look like we're going to have an equivalent with Saudi Arabia anytime soon. President Trump hopes it will happen sooner or later. But how stable are the geopolitics of the area in terms of investment?
Well, certainly the kingdom's in a tough neighborhood. There's no question about that. But so far, there's been stability, and certainly as they look ahead, they're hoping that one of their selling points is going to be government stability in Saudi Arabia, and they're trying to position themselves as one of the geopolitical leaders, not just in the region, but globally. For investment, then, part of what they have to do is work out some of the issues with their neighbors, and certainly it's not going to be on this trip that we see some big announcements on that. But hopefully what we see are steps that lead towards resolution of some of the big conflicts that they're facing in the region. They have to worry about the relationship that they have ongoing with Iran. There are concerns about what's happening in Sudan. They need to work out what the ongoing relationship is going to be with Israel. So these are many of the issues that will be on the agenda with the president today, but these are issues that are going to take time to resolve. In the meantime, hopefully, and this is going to be a lot of what the discussion will also be about this week, is what does the investment environment look like and how can we use economics to create a more stable relationship between the United States and Saudi Arabia. And that business-to-business partnership is going to be a very important part of that overall strategic relationship.
The Crown Prince is a young man, relatively young man. He, in all likelihood, has a very long tenure in front of him. We change our presidents every 4 years or 8 years. President Trump seems to be a pretty good president for Saudi Arabia right now. But how do they plan out their future when there may be changes coming in policy down the road?
Well, I thought the Crown Prince was very diplomatic in his discussions with President Trump today at the White House, and he was talking about Saudi Arabia needing to get along with all administrations, and that's going to be a critical part of his path and his mission as he looks ahead to a very long reign and having to work through many different presidents. But certainly President Trump has gotten the bilateral relationship back on track.
The Crown Prince, as you say, set out a very ambitious agenda for 2030. Do they have enough of a track record yet to know whether they're on track for where they need to get to?
You're right, 2030 really was sort of an all-of-nation transformation plan. And looking at some of the early results, you can see that they're making progress. It may not be across every one of the metrics, but if you take one of the really important ones, women in the workplace, they're already way ahead of schedule. They had planned by 2030 to have 30% of the workforce be female. They've already hit that target, and they're much likely to be on track to closer to 50% by 2030.
You mentioned women in the workplace. What about women just in society? There was a time not too long ago that I think a lot of Western women were reluctant to go to the kingdom because of head coverings, because of various restrictions they may understand, may not understand. How much of that has changed?
That it really is very interesting because when I first went to the kingdom about 10 years ago, you're right, we had to wear an arabia and to cover our heads. And today, we can wear any of our Western clothes. Of course, we're usually respectful of their customs, but it's not a requirement for any foreign woman. And we often see even many of the Saudi women now who choose to wear perhaps a jacket as opposed to wearing a full-length arabia. And so these customs have changed significantly, and you see women in the workplace, you see women out at restaurants dining by themselves, which never used to happen, and you see them out with friends, even driving around the city, which again didn't happen. And so there's been significant change. In some areas there can be more, certainly, but it does seem to be on the right track.
If I'm a Western investor and I'm interested in investing in Saudi Arabia, what are the best real estate prospects for me? Where should I be looking?
There are huge opportunities still in building homes in some of the major cities. There isn't enough housing there. There's requirements, too, for commercial office space. The cities are just growing so quickly, and there's such demand that just supply can't keep up with demand. And it's not just real estate. It's looking at everything that a consumer is going to want. So there are opportunities around retail, opportunities around wellness that are growing. As I mentioned earlier, tourism is growing very rapidly, and there's a big push to encourage more people to come visit the kingdom. It was closed for so long that there's really a curiosity about being there, and the kingdom wants to make sure that that experience isn't just a one-time visit, but they're creating the whole infrastructure that it will be a destination over time that people are going for, whether it's their heritage tourism, sports tourism as they build out the sports infrastructure and try to become a sports capital in the region, but also medical tourism and many other types.
That does it for us here at Wall Street Week. I'm David Weston. See you next week for more stories of capitalism.
if there were an attack on Greenland from Russia, from some other area, we would get dragged in. So better now, peace through strength, make it part of the United States, and there will not be a conflict, because the United States right now, we are the hottest country in the world, we are the strongest country in the world. The Europeans project weakness, the U.S. projects strength.
U.S. Treasury Secretary Scott Bessent discussing U.S. ambitions to take over Greenland, as we've already heard President Trump threatening tariffs on 8 European countries. Take a look at how havens are trading, because we're seeing gold and silver reach record highs. Swiss franc is also gaining ground. The Japanese yen, that almost lately hasn't really behaved as a safe haven asset, is actually gaining ground against the greenback as well at a 1-week high. And you can see with the moves in the commodity space how those miners in Australia are also gaining ground. And all of this coming at a time, of course, when we continue to digest the latest on the Greenland issue between President Trump and the European leaders. This is also expected to be talked about at Davos as well. That starts this week. Let's bring in Bloomberg East Asia government editor John Herskowitz. John, so we've heard about the potential of more tariffs for Europe after we thought we had a trade truce between the U.S. and Europe back in the summer. So what's next here?
Yeah, we have these tariff threats, February for the start of the 10% and June for the 25%. But the rhetoric is turning up. The Europeans are also trying to look at mechanisms that they can use that can counter this. You have a few things that are going on. We have the U.S.-EU trade deal, which hasn't been approved yet by the EU's parliament. This could be halted or delayed. France is backing something called the trade bazooka, which are these anti-coercion measures which could go after American goods, services, and really hit tech companies hard. And also, Europe is looking at measures just to keep the U.S. at bay and perhaps reimpose the trade restrictions on about 93 billion euros worth of goods. They were to apply these. They put these on the back burner. These could come up again. So Europe is looking at stuff. America is just turning up the heat as well.
But to be fair, President Trump has been talking about Greenland since, 2019 or so, right? How do you wind down the tensions at this juncture?
Yeah, it doesn't seem like there's an off-ramp now. I mean, we have the high-level talks which started last week between the U.S., Denmark, and Greenland. So we have the diplomatic thing that's going on, but there is no real off-ramp that is appearing right now. The thing is, there is a solution to this. There's a 1951 treaty between the U.S. and Denmark, which allows for the U.S. to have military presence there. After the Cold War, the U.S. military presence was quite large. It's been wound down. The U.S. is also looking at trade and mineral deals. They can negotiate trade and mineral deals. So if you're looking at security, the U.S. can put more troops there. They can put more monitors there. They can do more in terms of military presence. They can do more economically if they're there for resource exploitation. But for Denmark, Europe, and Greenland, this is national integrity, self-determination, sovereignty. These are what nations are made of, and it's all being threatened to fall apart.
John, to what extent does it matter to Trump that he might not get congressional backing on this, given what we saw with Venezuela?
Sure. We've seen some pushback from Congress, both sides of the aisles, Republicans as well. No concrete action has been taken yet. But the thing is, this could revise Congress's intention, Congress to use its powers on tariffs, something that they've pretty much ceded to Trump. This could make Congress impose some measures which would block some of these tariffs that Trump is seeking to impose. And also, the pushback is there. So Trump really risks worrying a compliant Republican Party that has gone along with a lot of his diplomatic and economic measures over this Greenland issue. So haven't seen anything specific from Congress, but the murmurings are there, and they're from both sides of the aisle.
Today's show is brought to you by Vanguard. To all the financial advisors listening, it's a commitment to your clients. We're talking top-grade products across the board of over 80 bond funds, actively managed by a 200-person global squad of sector specialists, analysts, and traders. These folks live and breathe fixed income. So if you're looking to give your clients consistent results year in and year out, go see the record for yourself at Vanguard.com/audio. That's Vanguard.com/audio. All investing is subject to risk. Vanguard Marketing Corporation Distributor.
News when you want it with Bloomberg News Now. I'm Doug Krisner. Members of the European Union are discussing options for how to respond to President Trump's use of tariffs as punishment for EU support of Greenland. EU leaders are set to hold an emergency meeting in the coming days. Now, Greenland is a semi-autonomous territory of Denmark, itself a founding member of NATO, and Trump is threatening to seize control of the territory, potentially with military force. Over the weekend, the president slapped a 10% tariff on goods from the 8 European countries supporting Denmark, and now we are told the EU is considering the use of retaliatory tariffs on $108 billion worth of U.S. goods. Now, despite the threats from President Trump, the foreign minister of Denmark, Lars Rasmussen, said the door remains open to talks with the U.S. over Greenland.
We have been asking since the very beginning of this to have constructive dialogue with our American ally and friends, free from social media and headlines and strong words. And we opened that dialogue last week. We will not give up on that.
That is Danish Foreign Minister Lars Rasmussen. Meantime, U.S. Treasury Secretary Scott Bessent dismissed threats from the European Union to halt a tariff deal reached last year with the U.S. Here is Bessent speaking to NBC's Meet the Press.
Well, first of all, the trade deal hasn't been finalized, and an emergency action can be very different from another trade deal.
That is U.S. Treasury Secretary Scott Bessent speaking to NBC's Meet the Press. President Trump said he would soon announce his nomination to replace Fed Chair Jay Powell. Now, Trump also said he wants to keep Kevin Hassett, the current director of the National Economic Council, in his current role. Hassett had once been seen as a front-runner for the Fed chairmanship, and today Hassett told Fox News Trump may be right to pass him over.
From the beginning, he and I have talked about whether it's better for me to be here in the West Wing or over at the Fed. I don't think he's made a final call on that. But I got to say that I'm even humbled still, perhaps, to be in the running with the other people.
Now, the list of candidates to succeed Powell includes Fed Governor Chris Waller, as well as former Governor Kevin Warsh, and there's Rick Reeder, the CIO of fixed income at BlackRock. We are told his candidacy has gained momentum. We go to southern Spain next, where a high-speed train derailed and slammed into an oncoming train on the rail line between Madrid and Malaga. 21 people have been killed at least, and dozens more injured. Here is Spanish Prime Minister Pedro Sanchez speaking through an interpreter.
Tonight is a night of profound grief for our country. I would like to express my deepest condolences to the families and loved ones of the victims. No words can alleviate such great suffering, but I want you to know that the entire country stands with you during this difficult time.
Spanish Prime Minister Pedro Sanchez speaking through an interpreter. Official.
ये नेचुरल गैस में यहाँ पर हाफ प्रॉफिट बुक कर लेना, देन ट्रेल करो, ठीक है, थोड़ा पुल बैक वापस आ सकता है प्राइस में, ऐसा नहीं कि जाता ही रहेगा, थोड़ा पुल बैक एक्सपेक्टेड है, देन फिर प्राइस हो सकता है कंटिन्यूएशन में गिरे, तो बुक द हाफ प्रॉफिट अराउंड दिस एरिया एंड देन ट्रेल द रिमेनिंग क्वांटिटी. हल्का सा पुल बैक आके अगर एक और लो लो बनाता है तो फिर एक्सपेक्ट आप करना जितना मोमेंटम आज आया है उतना ही सेल ऑफ में चला जाएगा प्राइस, बट उसके लिए प्राइस को एक हल्का सा कुछ इस तरह का फॉर्मेशन देना जरूरी है.
Officials in Spain say the cause of the crash is unknown. In Minneapolis, tensions remain high 10 days after an ICE agent shot and killed Renee Good. Over the weekend, thousands of protesters denounced federal immigration enforcement. Meantime, the U.S. is increasing the number of law enforcement agents and potentially sending military personnel to Minneapolis. The FBI is also sending messages to its agents nationwide, seeking volunteers to temporarily transfer to Minneapolis. And at the same time, the Pentagon has ordered U.S. troops to be on standby. Here is Homeland Security Secretary Kristi Noem speaking on CBS Face the Nation.
We won't stop until we are sure that all the dangerous people are picked up, brought to justice, and then deported back to their home countries.
Or a date?
We wouldn't be in this situation. We wouldn't be in this situation if Joe Biden hadn't allowed our open border policies to be in place.
That is Homeland Security Secretary Kristi Noem speaking on CBS Face the Nation. Meantime, the governor of Minnesota, Tim Walz, has mobilized the state's National Guard to support local law enforcement. The government of Syria and the U.S.-backed Syrian Democratic Forces have agreed to end their clashes. The two sides reached a new deal on expanding the SDF's control over vital territories and resources. Now, this agreement includes a ceasefire as well as the retreat of SDF troops east of the Euphrates River. It also relinquishes authority in the eastern provinces to the government and the military. In sports, the NFL playoffs are underway, and the New England Patriots defeated the Houston Texans 28-16 in the divisional round. The Patriots will now face the Denver Broncos in the AFC Championship next weekend. In the NFC, the Los Angeles Rams have defeated the Chicago Bears 20-17 in overtime. And with that victory, the Rams advance to the NFC Championship next weekend, where they will face the Seattle Seahawks. And that is News When You Want It. With Bloomberg News Now, I'm Doug Krisner, and this is Bloomberg.
Begin 2026 with a bold exploration. Drive home Honda Elevate ADV with bold looks, 360-degree surround vision camera, and Ivy Tech performance. Also get benefits.
26. That's about what the average S&P 500 has been over the last few decades. And of course, we know the Wall Street forecasters are historically bullish. But of course, you can see on the chart here, that would be a lot less than what Wall Street traders have been used to for the last 3 years. And it kind of makes sense when you think about what Andrew Slyman is saying. He says we're in the late stages of the bull market. So not the end of the bull market, but the late stages. So a 9.2% gain in the S&P 500 would make more sense with that kind of estimate, Romaine.
Well, let's go right to Andrew Slyman, almost 40 years on Wall Street, senior portfolio manager and head of applied equity advisors team over at Morgan Stanley Investment Management. And Andrew, when I look at maybe some of the tempered expectations for gains on the S&P, overlaid with some of the big gains we've seen so far in the Russell 2000 and some of these cyclical sectors, is this kind of telling us we are kind of late stage in this cycle?
I mean, I do, just for the chart that Emily showed, which is it's the fourth year. I mean, I don't know how you can say it's early cycle if we're into the fourth year and we've, the market's up 100% off the low. How can you say it's early cycle? But I don't, I think the reason why small caps are rallying, Romaine, is the small caps are anticipating that we have not only monetary policy stimulus coming through lower rates, but we also have fiscal policy stimulus. I'm amazed, Romaine, how little is discussed about these tax refunds that are about to start next month. We're all consumed with credit card caps and so forth. But I think that's what the market is queuing off of, is a real potential for GDP acceleration in 2026. And that's what causes a broadening out, right? Who needs to own just a few large cap stocks? You can go to a lot more stocks, including small caps.
Give me a sense, though, Andrew, and I'm glad you bring that up, because there are a lot of provisions from policies enacted last year that really have not kicked in just yet. Right. And we are anticipating that. Of course, the tax refund issue is a big component of that. But give me a sense as to why you don't think the market has actually priced some of that potential upside in.
Well, I think, maybe it has in the mega cap stocks, but clearly the differential as you move down the cap curve widens. And so if you tell me that, smaller companies are going to do better than they have in the past, it leads me to believe you're going to have a performance, narrowing, and that'll be good. And that's what we're seeing. It's not just small caps. It's moving down the S&Ps. Size has not worked this year, and I think that's not a commentary on weakness amongst the mega cap. I think they're going to report very good quarters. I just think it's more of a confidence that this recovery in the economy is broadening out. I mean, at the end of the day, my important statistic, Romaine, is if you took out from GDP the spending, CapEx spending by the mega cap, the economy barely grew this last year. So I think, the year-over-year comps for a lot of companies is going to be pretty easy.
I wanted to ask more about just what happens with the Mag 7 if we do see this rotation. We've seen 11 straight days now of the S&P 500 underperforming the Russell. Is it a time to be selling tech necessarily or not?
Well, I mean, I think one of the benefits that I also feel comforted is I spent a lot of time talking to companies and listening to conference calls. And, you know, what I heard out of TSMC the other night was business is booming. And so I think it's dangerous, Emily, right now to run out and say, oh, you know, it's over for these big companies, because I think they are going to report good numbers. And if, in fact, they've underperformed for 11 days, I would be a little hesitant to sell them here, because their earnings reports might remind people they're not, you know, they're not over just yet. And I think that's what TSMC, you know, started to tell us the other night.
Right. Talk about the consumer a little bit, because consumer sentiment has been very pessimistic. And why do you see that kind of turn higher as almost a contrarian signal for stocks?
Emily, it is. If you look at the University of Michigan Consumer Sentiment Index and you look at how the market does the next 12 months, when it's low, the market does well, and when it's very high, the market does poorly. And it's because the stock market focuses on the second derivative, which is the rate of change. And if it's low, it can go up. And if it's high, there's only one way to go, is lower. So I think the point is sentiment is poor right now. But if you get this stimulus for the consumer coming and you get lower rates, which should help the housing industry, I think there's a chance that consumer sentiment could lift. And I wonder whether this broadening out of the market, small caps doing better, is reflecting that.
Andrew, I do have to just get your thoughts in general on kind of the political and geopolitical risk out there. And I know it's always hard to quantify what that risk could actually be on corporate fundamentals and economic conditions, because it is basically unknown. But when do you start to maybe try to plot out more scenarios where some of those risks do become market events?
Well, yeah, I mean, you've nailed the risk for the market. Is if you look at the history of a stock market cycle during a presidential term, the second year tends to be the weakest with the biggest drawdown. And the reason is a very simple reason, is because in an effort to get Congress to win the party of the presidency, the presidents tend to roll out more populist agenda items. And that sends shockwaves through the stock market, like the credit card cap we've just seen. So I think that's the risk, is that could there be agenda items that the stock market doesn't like? I think that's where, kind of Washington, D.C. gets involved in the market. Now, however, is we do have a president, we certainly learned this last year after a big drawdown, that does get watches the stock market as a litmus test of popularity. So
yeah.
You saw a pivot, but it was certainly after a very big drawdown. I think that's important to consider, but that's the point, is that populist kind of rhetoric doesn't sit well with Wall Street.
All right, Andrew, always a pleasure talking to you. Andrew Slemon, Senior Portfolio Manager over at Morgan Stanley Investment Management, kicking us off to the close here on this Friday afternoon with a focus on Wall Street and a focus on Washington, the intersection of which encapsulated by former FDIC Chair Sheila Bair. She stops by to discuss the state of the banking system, the broader economy, and her thoughts here on the drama between Trump and Jay Powell.
And speaking of the banking system, the big banks are done and dusted with quarterly results, leaving room for Netflix to take center stage. We'll break down expectations with Laura Martin, Senior Entertainment Internet Analyst at Needham & Company. And as the earnings season shifts into second gear and those conference calls pick up, a lot of questions going to be posed to CEOs about what exactly is going on in the world. A conversation with Alex Partners CEO Simon Freakley and this latest disruption index that his firm puts out, and why some of those CEOs think disruption is here to stay. All that and more coming up in a bit. This is The Close on Bloomberg.
It isn't a matter of force. They want to develop a data center, so they've got to do whatever conditions are required to get permits and to be able to build a data center. But I would say that our relationships and negotiations with them have been extremely productive. They understand the need that we need to stop rising electricity prices on Americans. They get it.
U.S. Energy Secretary Chris Wright speaking to Bloomberg just a little earlier today about the power grid crisis and, well, some potential solutions being proposed by the Trump administration. Now, we also had a chance to catch up with the governor of Pennsylvania, where some of these proposals would have a direct impact. Here are his thoughts on who should lead the grid operator that controls that grid out there.
Someone who's responsive to consumers, someone who understands the challenges PJM is putting on the states, someone who can just move quickly. As we've been able to show in Pennsylvania by reforming our process, permitting process, we move quickly now. We need PJM to move as quickly as we are.
And we are expecting to hear a little bit more from PJM and some of the other grid operators a little bit later today. This is a developing story, and we will be all over it here as we move closer to the closing bells. Joining us right now is Andrew Weisel. He is an analyst over at Scotiabank to talk a little bit more here about the potential changes. And Andrew, first let's kind of put some context in this. Because of all the data center and tech build out that we've seen in a lot of communities, we've seen wholesale prices go up, at least based on the auctions, including the auctions at PJM, which is primarily dominant here in the Northeast, that they have conducted. There have been a lot of concerns about that. The proposal that's on the table right now by the Trump administration seems to suggest they want to go revisit some of those past auctions and potentially either cap rates or at least create dual tracks for what, say, a data center would pay relative to what a household would pay? Is that what's happening?
Yeah, there's a lot of possibilities. First of all, thank you for having me. It's definitely an important topic here. Affordability is a nationwide issue. It's electricity along with everything else, but electric bills recently have been rising more than a lot of other household items. And it's something we all deal with. Everyone has an electric bill, no matter who you are, no matter where you are. Data centers have become topical for everyone, and they are one of the biggest drivers of why electric rates are going up so much. It's not the only factor, let's be clear. You also have increased electrification of everything. You have more domestic manufacturing, and you have supply chain challenges, you have inflation, you have tariffs, etc. But for sure, data centers are the biggest single driver of those higher bills.
See, give me a sense.
PJM is the biggest grid.
Yeah.
And you're seeing a lot of upward pressure there.
Yeah.
A lot of states are very sensitive to it. So they do want to make some changes. The question is what? This is a proposal. It's not final, but certainly people want to take action.
Well, I am curious as to who you think is going to be affected by this most if we do see maybe a little bit of curtailment. I mean, we should just remind folks, PJM is under no obligation to take those higher costs and pass them on to consumers. Of course, that would erode their own profitability. But when you look at the independent power producers out there, who stands potentially to be affected most?
To be clear, PJM is not, they don't have profitability. PJM is a grid operator. They're not necessarily making money. The power producers make money, the utilities make money, but at the end of the day, PJM is a grid operator. The governors don't have a seat at the table. Any changes would need to be met by a negotiated settlement. The president and the governors are trying to implement these changes, but they can't do it unilaterally. There are a lot of steps that would have to happen for any changes to be implemented. Your question, who stands to benefit here or lose? Right now, the independent power producers do get a lot of their revenues from the capacity auction and from everyday energy prices. Quite simply, adding supply to the grid, both in terms of capacity and energy, would put downward pressure on those future prices.
Can you talk a little bit about what kind of role the tech companies, particularly the ones that are creating a lot of this need for power to power their artificial intelligence programs, what role do they play in kind of this whole deal here? Because this is tech companies that would have to fund these new power plants.
Well, first of all, I want to give the tech companies a lot of credit. They've been very proactive about wanting to pay their fair share. They don't want to pay more than their fair share, but they want to pay their fair share. They want to do the right thing. And they've kind of said that from day one. So in a lot of non-PJM states, they're being clear about take-or-pay commitments, tariffs that protect the rest of the customer base, et cetera. What this new proposal in PJM, to me, looks and feels like is a lot of those other tariffs meant to isolate the impact of data center demand to protect the rest of the customer base. So in a lot of ways, this is about separating that demand class from everybody else. It may or may not cause downward pressure on everybody else's rates, but the important thing is it should limit future upward pressure to protect everybody else.
Is there any sort of potential that we could see a more uniform, federally negotiated solution to this, or is this going to have to be state by state, region by region, as we're seeing now?
We've never really had a national energy policy. A lot of other countries do. That's been a big challenge in the U.S. We've never really seen it. We've seen efforts. We've seen pieces of a federal energy policy. But ultimately in the U.S., electricity is regulated by state commissions. They're generally appointed by governors. In some states, they're elected. Federal efforts have been there. Presidents have tried. Who knows what's going to happen, but I don't expect to see any nationwide law or policy. I think ultimately the states are going to be the ones to control it. PJM is a collection of states working together. It's been successful in some ways. It's been really unsuccessful in other ways. I do expect that we'll see some bigger changes than a lot of investors expect to the PJM construct. It might mean, at a minimum, an extension of the cap that we saw the last two auctions. And a more meaningful changes might mean states allowing a separate auction like this one.
Yeah.
Even more extreme, regulated utilities in those states might be allowed to spend on some generation, like solar or storage. In a real extreme, some states might choose to leave PJM. We might see single states ISOs like we have in New York and California.
Yeah.
That's extreme. I don't think that's going to happen this year or next year, but it's an election year.
Yeah.
So the June auction for PJM, if that clears at a high price, it's going to be a really noisy election cycle like we saw last fall.
All right, Andrew, I have to leave it there. Great stuff, really smart. Andrew Weisel, analyst over at Scotiabank, keeping an eye on the utility providers with Vistra, one of the biggest decliners on the day, down about 8% as we still await more news here on exactly what this new policy will look like. We'll be back in a moment. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Keep an eye on shares of Netflix down for a third straight day and a third straight week. They report earnings after the bell on Tuesday. Expectations high for the bottom line, but even greater expectations for clarity on that bid for Warner Brothers Discovery. Joining us right now is Brian White, Global Head of Internet and Software Equity Research at Monnez, Crespi, Hart & Company. All right, let's start off with the numbers first. What are we looking at in terms of growth?
Yeah, 17% growth. That'll be consistent with the third quarter. And, you know, Netflix has done okay on the top line, but there really wasn't much upside last year.
Yeah.
The first couple quarters, modest upside, and then third quarter they missed and the stock tanked.
Mm-hmm. Well, this gets to this idea, too, as to where growth comes for a company that is relatively mature. It's basically king of the hill, at least in terms of the streaming space. And they're going after Warner Brothers Discovery. At the time, it looked like that could have been a clean deal. But now we've got this weird bidding war. And I just raises the question as to what do they need out of WBD, if at all?
I mean, I don't think they need anything.
Mm-hmm.
I think this is a defensive play. I think they saw companies like Apple, Amazon, and obviously Paramount looking at this, and they said, you know, we got to do something. Because for them, this is so outside the scope of who they are and their North Star. They don't need it.
So we have to ask you about whether, obviously the earnings are coming next week. Is Wall Street really going to care about what the earnings are for Netflix, considering that the stock, as you've written, has been really driven by all of this volatility and the bidding war that's not closing anytime soon?
I think it'll be irrelevant. It could move like a slight in the morning one way or the other, but at the end of the day, the dark cloud on this stock in 2026 is Warner Brothers.
And yet, Bloomberg reporting they might do an all-cash bid. What does that just say about the strength of Netflix, particularly heading into the earnings report?
Yeah, I think this will eventually turn into a massive bidding war. And so there were reports that, Paramount might increase their bid. So where does this go? Just remember, David Ellison, Larry Ellison, Oracle, and PeopleSoft in 2004.
Yeah.
That hostile takeover that was, wrecked Silicon Valley.
Yes. We all remember it. Yeah.
We could be in for something like that.
Yeah, and there's a lot of political dynamics given how close Larry Ellison is to the president and whether Ted Sarandos and Peter really want to sort of get involved in that. But it gets to this idea, as the company sort of tries to build on the success, obviously had a lot of success last year, not just with Stranger Things and the scripted stuff, but they're pushing the live events, which I think they're expanding even further this year with some of the agreements they have. Can that actually be a catalyst for greater subscription growth, even though we don't see the subscription numbers, and greater profitability?
I think engagement in the fourth quarter will be solid. Some of these new, like live sports is great and fine. But the issue that I think there's a lot of video slop on Netflix. Mm-hmm. That's why I said, in my view, the highest quality right now is Apple TV. Apple TV doesn't have the depth of content.
No.
That's why this could have been a killer acquisition for them.
Yeah.
And so this is great. They add all this stuff. I'm sorry, I don't want to pay for WWE. Right? And so when they add all this content, what they want to do, they come back and say, hey, you know what? It's an extra couple bucks. They are a serial price hiker. Right?
Yeah.
And so is Spotify. It's the same thing.
Yeah.
Right? And adding content that no one wants to watch, I'm not paying more for that. It's ridiculous.
Yeah. All right, we got to leave it there. And I should point out, a lot of people watch the slop. Someone in my household, that show will remain nameless. Brian, always great to catch up with you. Well, I'm sure we'll catch up with you again next week. Brian White is the global head of internet and software equity research over at Monness Crespi. A preview of those Netflix earnings, which come out next Tuesday. Meanwhile, here on this Friday, Sheila Bair, former FDIC chair, joins us next.
I actually want to keep you where you are, if you want to know the truth. Kevin Hassett is so good. I'm saying, wait a minute. If I move them, these Fed guys, certainly the one we have now, they don't talk much. I would lose you. It's a serious concern to me. So I just want to say thank you very much. You've done incredible. We don't want to lose him, Susie. But we'll see how it all works out.
That's a great way to find out that you didn't get the job that maybe you just wanted. Live from Studio 2 here at Bloomberg headquarters in New York. It's 3:30 p.m. This is the countdown to the close. I'm Romaine Bostic.
And I'm Emily Griffeo. That was President Trump earlier today talking about, it seems a little like Apprentice, right?
Yeah, and who knows? No one really knows what the heck's in Trump's head, who he's going to pick. But the idea that a lot of folks in this market thought that Kevin Hassett would be an appropriate pick for Fed chair. And then the Trump, I don't know if he was being serious or not. Always hard to tell, but saying that, hey, I saw him on TV today. He was great. So I don't want him to be Fed chair. I want him out on TV, singing my praises. So
this was something that did seem to move Treasury markets just a little bit, though. We do have the 2-year up 3 basis points as traders kind of pare back. Maybe we're not going to see as many rate cuts this year as they expected if this is not the person that's going to be leading the Fed.
Yeah, and this is a big parlor game going on from Washington to Wall Street. And our next guest, who sits at the intersection of both, says the Trump administration has clearly made a, quote, strategic error with regards to its handling of the Fed. Joining us right now is Sheila Bair. She helmed the FDIC during the financial crisis and is now a senior fellow at the Center for Financial Stability. She's also got a great book out on financial planning for our youth called How to Not Lose $1 Million. And I love this book only because, Sheila, I was just at a book party with somebody whose title was How to, Make Your Next $1 Billion. So a nice counterpoint to that. I won't pitch you two against each other, but I do want to get your thoughts and pick your brain in all seriousness about this issue, not just of Fed independence in the most esoteric sense, but just this idea of letting government agencies do the job that they, to a certain extent, have been, obligated to do either by the Constitution or Congress in some way or another, and whether we actually are seeing a complete erosion of that we might not actually be able to get back.
Yeah.
Well, I think we're definitely more broadly seeing an erosion of independent agencies' independence. But when the Supreme Court has supported that erosion and increasing authorities by the president to fire people who are otherwise term protected and where the statute says they can only be fired for cause. But they have carefully carved out the Fed as unique and in a need of independence and have a long tradition of independence. So I do think the Supreme Court may draw a line in terms of protecting Fed independence, even though for the other agencies, I think it's going, if not gone.
Well, I am curious. I mean, you were at the FDIC for several years, and you were at the FDIC particularly during a very contentious time for our economy. And so you were no stranger to criticism from lawmakers and the public. So I am curious about the state of these institutions today, Sheila, and whether you think they are sound enough to, if not prevent the next financial crisis, certainly to respond to it in an appropriate way.
Yeah, no, I do worry about that. I mean, there's been a lot of drama. The emphasis is definitely, around job layoffs, DOGE cutbacks, all of that. That seems to be the emphasis, plus deregulation as opposed to safety and soundness and bank supervision. That's not to say some of the regulations were perfect or could have been simplified. That's definitely true. But the trend really has been to deregulate, not to simplify. And yeah, I think it's been a distraction. And, we don't want to relive 2008. We need an agency, especially my old agency, the FDIC, to be prepared to handle significant bank failures to make sure those depositors are protected. If depositors lose confidence in the FDIC, we've really got a problem.
Well, let's stay on banks here. We did get big bank earnings this week that were fairly positive across the board. When you look at the outlook for the banking system, where do you see potential vulnerabilities?
Yeah. Well, whenever I look at how strong and healthy and bank earnings are good, I remember that was all true prior to the financial crisis. It was clearly, and then everything fell apart. So this may be the higher markets go, the harder they fall when it happens, and things just seem kind of bubbly to me right now. Mr. Trump clearly wants to run the economy hot. We're going to have credit stimulus. We've got fiscal stimulus. We're going to have monetary stimulus. He wants to cut credit card rates, deficit spending as far as the eye can see, deregulation. We're going to lower rates at the Fed. Whoever's in charge, that's probably going to be the trend. So I do fear that with markets already bubbly, that we're putting a lot of fuel on it, and how long, that works until it doesn't. So, and you do get complacent, when profits are good, bank failures are low, defaults are low, you get complacent. Oh, the good times are here, they're going to last forever, and they never do.
And of course, another theme that we're seeing a lot of people talk about on Wall Street is the K-shaped economy. You have the big banks doing really well, and then you have consumers really feeling stretched at the lower income side. People talk about housing affordability affecting a lot of Americans. Do you think any policy changes coming out of the current administration are actually going to move the needle on affordability?
Yeah, well, I'm glad he's starting to focus more on it. I think with housing, though, he seems singularly focused on getting interest rate down, which is going to just boost demand, which is going to make inflation worse because you have a housing supply problem. So I really wish he would focus singularly on supply. There's $200 million in MBS purchases that they're going to have the GSEs do. That is really ill-advised. I mean, that's like using the GSEs to do quantitative easing. And as we all recall, the MBS purchases by the Fed, there's like $1.3 trillion, I think, during the pandemic. That was kind of disastrous because it brought interest rates down, but it ignited, very high housing inflation. And most of the beneficiaries of those low rates were people refinancing. It wasn't people trying to buy a house. Home prices just kept getting farther out of their reach. So that juicing demand, getting rates down by whatever means, and certainly doing MBS purchases at GSEs, it's a risk for them too. They were doing this prior to the crisis. That's the reason they failed. They had these massive investment portfolios that included a lot of subprime securitizations. They did not know how to handle those risks. They did not know how to manage those risks. They had insufficient capital to absorb the volatility and the losses. The GSEs now are still undercapitalized. So to have them take on all this new risk on their balance sheet to try to get interest rates down, which is not their job, is really, puts them at peril again. And we can't risk I hope we don't see them getting into trouble again. So those are the wrong ways. We need to, he's a real estate investor. Build, baby, build. I mean, that's what we need to do. We need to build houses, and it seems like he's uniquely qualified for that. And it's frustrating there isn't a bigger focus, though he has been strong-arming the builders right now. So maybe we'll see some progress.
I am curious, though, on the point of the banks, and particularly the GSEs, and this idea that since the financial crisis, largely because of a lot of policies that arose out of that, including under the Obama administration, this idea that a lot of the risk in our markets moved into the private capital space writ large, and that's a very umbrella statement. But I am curious as to whether regulators have enough of a view into really what's going on behind the scenes in a way that they certainly had prior to the financial crisis, given so much of the risk was on the balance sheet of publicly traded banks.
Yeah. Well, that's true, though I would add that in the lead up to the crisis, most of those subprime mortgages were being made by non-bank mortgage lenders. Now, they were being securitized by the big Wall Street banks, but the originations were being by the non-banks, the so-called shadow banks. So there was some of that going on. And then the banks themselves were purposely keeping a lot of stuff off balance sheet in special investment vehicles. Remember those SIBs? They imploded and came back on the balance sheets when things started going bad. So it was a problem then, but it's a much worse problem now. You're absolutely right. And there's been so much hand-wringing about this in both Democrat and Republican administrations, but nobody really does anything about it. And in point of fact, a lot of the fuel that has driven the growth of the shadow banks, all these private funds in particular, it's bank lending. The banks are lending to them, and then they're lending to companies, as opposed to the banks lending to the companies directly. And that's basically a capital arbitrage, because the banks have a lower risk weight on their capital if they lend to the private fund versus if they just lend to the company directly. And then a lot of those companies probably shouldn't be getting credit, right? You don't want everybody to get credit. That's just, we're going to expand access to credit. Those are dangerous words I've heard so many times. Yeah. Some companies just shouldn't get credit. They're tenuous, they're risky. They shouldn't be getting credit. And so, just blindly saying, we're going to tolerate all this shadow banking and these shadowy structures to expand credit is kind of a dangerous mindset.
All right, Sheila, we can keep going on here, but they're telling me we have to go. Always appreciate talking to you. Sheila Bair.
Good chatting. Yep.
Former FDIC chair. We'll be back in a moment. This is Bloomberg. It's Friday. Well, more importantly, it's Factor Friday. Chris Kane of Bloomberg Intelligence joins us right now to talk about some of the big factors that have been leading this market. And Chris, we've been talking really for the last few days about this outperformance that we've seen among small cap stocks. I am curious, though, is this a value play? I mean, when we look at it from a factor perspective, is it value stocks kind of leading the way?
Don't look now, Romaine, but value has basically woken up over the last 2.5 months. I mean, especially in large caps, actually. Value hasn't worked great in small caps, but in large caps, we have the cheapest quintile of the index, meaning the Bloomberg 500, outpacing the most expensive quintile by about 13% since just the beginning of November. So that's a pretty large, long, short move in just 2.5 months. So, value has finally woken up. I will remind everyone that value as a factor remains very cheap. So meaning cheap stocks are way cheaper than expensive stocks compared to history. I won't bore you with all the numbers, but it's about less than 11% the price to sales when you compare those two. That's a 10th percentile relative ratio going back to 2000. So it's cheap. It has the momentum on its side, and potentially it could be set up for a decent run here.
And Chris, you wrote about an interesting twist on the traditional momentum factor that has done well recently. Just in the last minute here, tell us what it is.
Yeah, Emily, I don't have a great explanation as to why this is true, but so taking a step back, momentum generally was the best performing factor in 2025 when you look at the traditional factors. But a little twist on that did even better. So what we did was we looked at the percent a stock was above its 52-week low. So your long stocks that are way above their 52-week low, and your short the ones that are closest to its 52-week low. That long-short factor is up over 35% over the last year. That's compared to about 13% for just more traditional momentum. You can even go back all the way to 2003, and that little twist on momentum has done a lot better. So, I don't really have an explanation as to why that's true, but, the performance kind of jumps off the page.
Chris Kane of Bloomberg Intelligence. Next week, you'll have that explanation. Thank you so much. Coming up, we take you to the closing bell with Jeff Blazek, multi-asset co-chief investment officer, and Neuberger Berman. This is the close on Bloomberg.
Welcome back to the close. 10 minutes until we get to those bells on a soft day and what's turning out to be a soft week. I'm Romaine Bostick.
And I'm Emily Griffeo. Let's take a look at markets as we close out the day. The S&P 500 actually just turning into red territory here, but, well, call it unch, but it's about to finish the week in the red after a green week last week. You can see the outperformance here of the Philadelphia Semiconductor Index, those chip stocks rallying today after TSMC yesterday boosted their outlook. And then another outperformer here, just by slightly, the Russell 2000 Index, those small caps lifting ahead of the pack. It's the 11th straight day of outperformance for the small cap index. Finally, looking at yields, Treasury yields across the curve were higher today, but the policy-sensitive 2-year yield was up about 3 basis points as traders start to maybe pare back the amount of policy easing that we will get this year if we don't have Hassett as that Fed chair pick.
Yeah, kind of interesting, particularly on the 2 and the 10-year. One of the biggest moves higher on a points basis for those yields that we've seen in quite some time here. Maybe belies some of the bets in the markets here for maybe downward pressure on rates because of monetary policy. Jeff Blazek joins us right now here in Studio 2, multi-asset co-chief investment officer at Neuberger Berman. Jeff, great to see you here.
It's great to be here.
Let's talk about the potential tailwinds for this market and, more importantly, the headwinds that maybe could neutralize that. Are we kind of in a bull cycle? And I don't mean that in the traditional sense, but the idea we came into this year, coming off of 3 phenomenal years, most people are looking at history and saying this can't repeat itself a 4th time, but we got this phenomenal rally in small caps to start the year. But in the past, I looked historically, the last time we've seen these type of outsized moves in small caps, they all came during years where effectively we ended up in recession.
Well, we do think we're in the bull cycle,
yeah.
And we look at it as a ledger of the positives and the negatives, and the positives overwhelmingly dominate the negatives.
Mm-hmm.
We do constantly ask the question, what could throw this off kilter? Mm-hmm. And the 3 risks I would call out fairly quickly is employment, but yet again, we had great unemployment claims data last week, so that appears not to be a huge threat imminently. The second one would be the credit markets. Spreads are tight, so maybe something goes wrong there that could cause a little bit of de-risking. The third would probably be the AI super cycle funding, and whether some of the players start to run out of cash, frankly. But outside that, strong earnings and GDP growth, and it's full speed ahead in our view.
We do want to get to the AI and the data center stuff, but before that, I'm curious about your second point there on where we see credit spreads, which are just like, you can't even like fit a nickel between that spread right now. Is that a bet or a conviction on, I guess, the positive fundamentals for a lot of those borrowers and, for that matter, economic conditions?
The fundamentals are validated at this moment because you look at gross debt to EBITDA and a lot of other measures, and at high quality across the board. We're going to watch the distortions that we're going to see in terms of the investment grade benchmarks because mega cap tech is issuing far more debt than they have in many, many years. Yeah. And so investors are going to have to decide for a fairly paltry spread if they want to be assuming AI-like risk in an asymmetry where, as a credit holder, your win is you get the bonds maturing, your lose could be downgrades and defaults.
Let's talk about AI because you are in charge of multi-asset here. And of course, a lot of people for a couple years have been investing in AI-linked equities. But I'm wondering if you're looking at other opportunities across asset classes. You talk about credit, a lot of these IG names funding data centers, some maybe more junk-rated companies are starting to issue debt that goes towards data center financing. Is this an area that you like right now?
We do, but what I would say is our overarching way we're playing this theme is the equities still. That's where you get the highest payoff, and we're playing the infrastructure build-out. So we've been heavily overweight Korea and Japan and China and the components makers, chips makers, because that's going to be validated for a couple more years to come. We do like the data center side, and you can pick your spot in the spectrum of either equity or debt or some points in between. And by the way, another dimension you can add to this is you can do it in the public markets. We also increasingly find attractive opportunities in the private markets to be an LP with a GP that's really picking the right spots where you can express better bets when it comes to AI.
I'm interested as more parts of the world of finance start to touch this theme, though. Does it introduce some risk here that all of Wall Street is all concentrated, public markets, private markets, all concentrated on this idea that this AI bet has to pay off?
It will. And when you do the math, there will be about 3 or 4 trillion of new capital expenditures deployed in the next few years. The stakes are really high. And when you figure out what type of sustainable revenue model will justify that return, we're talking hundreds and hundreds of billions of new incremental, whether it's coming from consumer or commercial, new fees that have to be paid for these services. And I don't think it's realistic to think that the hundreds of players that are making aggressive bets in this area are all going to be the winners. It's probably going to be a streamlined, small handful of companies that will be able to claim the superior returns, which may bode poorly for the other players.
But is that kind of what we're seeing, at least in public equity markets right now? Because there's been a lot of talk about the selling pressure we've seen on the big cap names, the idea that a lot of those names, including NVIDIA, haven't had a record high in 2 or 3 months. Yeah. But it's not like the money's necessarily coming out of the market. I mean, you see a lot of second-tier players, for lack of a better phrase, in the AI and tech space getting pretty strong bids.
Yeah, it's a rotation that's really been interesting to us. So first of all, value is technically outperforming growth. Your point around NVIDIA would highlight that. Smaller cap stocks are winning, and industrials. So those that are actually involved more directly in the build-out. But it's not to say that any tech is not winning. Like Korea is up 15% this month. China has been an outperformer. The emerging market equity has really been the main beneficiary of AI. And we should always remember this is not a U.S.-only story. There's going to be other countries.
Does that then expand? Because we talk about the outperformance of U.S. small caps relative to large caps. We kind of ignore the fact that last year the rest of the world as a group outperformed the U.S. And to start the year in 2026, that's also the same. Is there enough to invest in, though? I mean, I guess I can maybe understand Korea and some of the Asian nations. Europe?
Yeah, Europe, and we are at target on Europe after an overweight last year, and it worked out for kind of the wrong reasons. The multiples expanded, and the currency weakness of the dollar led to that outperformance, but the earnings were disappointing. So we've taken a pause on Europe, in part because, as you're saying, it's not as well tethered to AI. And earnings expectations are still for a 12% gain this year. We're in a kind of a show-me mode, we'd say, on Europe at this point.
Are you anticipating the dollar to remain weak to support some of those gains we saw?
At the margin, we don't think the dollar is going to fall as precipitously as it did last year. But it's still overvalued when we look at a lot of different measures. And we do think the dollar will probably be down a few percentage points this year.
All right, Jeff, always great to talk to you. Jeff Blazek is multi-asset co-chief investment officer at Neuberger Berman, counting us down to the closing bells. Emily here with just about 2.5 minutes to go here. Looks like we're going to close in the red for most of the major indices, with maybe the exception of the Russell 2000.
Yeah, it's really been a historic streak for those small caps. 11 straight days of outperformance. What was interesting is you see that weakness in the NASDAQ 100, S&P 500, but semiconductors really outperforming today. The stocks was up like 1%.
Semiconductors getting a strong bid, and specifically the semiconductor equipment makers. So an interesting rotation there. A full breakdown starts now with our global simulcast.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Emily Grafeo, taking you through to that closing bell with the global simulcast. It starts now. Carol Massar and Tim Stenovic join us in the radio booth. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube. On a decidedly soft day in a decidedly soft week, but Carol, think about where we were on Monday. I know you weren't here, but hitting record highs. And it looked like, for the large caps, and it looked like that was going to be...
Don't steal my thunder.
...the lead.
I know.
Should I just stop now?
Yes. Because I've been thinking about you a lot with the move up that we've seen.
It's the Sudafed, Carol.
I'm in your head.
That's why she's been thinking about you.
Get out. No, small caps, right? I'm looking at what we are seeing, about a 2% gain for the week overall. You look at the S&P 500, not even close. It's down about 1/3 of 1%. We still have a few seconds to go, but look at that outperformance.
I've been obviously focused.
Is that what you wanted to say?
I would have said it a little differently.
Well, you would have been much more
Romanian.
Eloquent.
Yeah. Tim?
I've been squarely focused on what's happening with Bitcoin this week because of that market structure bill, and surprised to see that it's not under more pressure as a result of questions about the future of this bill. Brian Armstrong over at Coinbase pulling his support. A lot of questions about the future of it, but still, Bitcoin's up close to, above $95,000 right now.
Yeah, it was kind of interesting, too. I mean, obviously, this is a bit of a negotiating tactic by Coinbase and Brian Armstrong, which, of course, had an outsized influence on the last presidential cycle with some of the donations that they rallied from the digital asset industry. That, of course, will be a big story going forward over the next few days. Just a reminder, next week, it's going to be a monster week here. We get several earnings. The president's in Davos, and we have a big Supreme Court opinion on the Fed governorship and quite a few other things, potential tariff ruling. All of this combining to keep the market maybe a bit in check here on this Friday afternoon. The Dow Jones Industrial Average is going to lose about 80 points, or 0.2%. The S&P 500 only losing about 5 points, but that's still going to be down less than 0.1% on the day. A similar move lower on a percentage basis for the NASDAQ Composite and the NASDAQ 100. But you have to talk about the Russell 2000 holding in the green once again, 11th straight session, outperforming the broader market. We have not seen that streak of outperformance by the Russell 2000 relative to the large caps since at least before I was born in the 1980s.
Wow.
I think the only person
Don't
around who
hard,
is
please.
not born yet is on your set.
Wait, that makes you, how old?
And it's not you, Romaine.
No.
Hey, I'm going to go back to the big caps just for a moment, because in today's trade, almost an even number of winners and losers, if I may say it that way. 227 names in the S&P 500 gaining in the Friday trade, Emily. 276 to the downside.
Yeah, and we take a look at the circle here. You only had 1, 2, 3, 4, 5 of the major S&P sectors, 5 of the 11 in the green today, and the outsized move was actually in real estate, a 1.2% move for that group higher. And we should just point out the second best gainer in that area was industrials, and that was only half of those gains. Tech not doing anything on the day, healthcare in the red.
All right, guys, let's get to some of the individual gainers, if I may, in today's session. Got to talk about semiconductors again, some outperformance there in the trade. ASML holding, Morgan Stanley laying out its bullish case for why investors should buy the stock, saying in the most optimistic scenario, the stock has a 70% rally ahead as chip makers ramp up spending to meet soaring demand for artificial intelligence. So you saw ASML up about 2% in the trade. And I got to mention semiconductors. They continue to be on a tear. They, as a group overall, most names in that index higher. The Philadelphia Semiconductor Index up more than 1% in today's session. All right, let's go to AST Space Mobile. Shares soaring in today's session. You saw that one up about 14%, up 19% at its highs intraday. But again, outperformance there. The satellite internet company was given prime contract position for the U.S. Missile Defense Agency's SHIELD program, something the president has talked about. It is connected, of course, to his Golden Dome effort. Stock up about 60% year to date, 17%, of the float is short. But again, some outperformance. Want to mention a bio.
What is the Golden Dome?
Well,
What?
you know. Yeah.
I don't know.
To protect in terms of missiles coming in.
Oh.
And this idea of like fighting back.
He knows.
I must have been off.
He
that
knows.
day.
He's just being
why
Romaine.
do you do this to me? Okay. Moving along.
I think they cut your mic, Romaine.
Immunity Bio, ticker is IBRX. That one up. Check it out, guys. Up almost 40% in today's session. It's a $5.2 billion market cap company extending its advance for an 11th straight session. It's a record streak. Company giving efficacy results from a clinical cancer trial for patients with a type of cancer that affects the lymphatic system. So really some outperformance there based on that trial. And I got to talk a little bit about the power sector. Talking about it all day. I'm sure you guys have as well today. President Trump moving to make tech giants pay for surging power costs. Analysts have been trying to figure out the winners and losers in here, and GE Vernova was certainly one, maker of natural gas turbines. Analysts seeing this as one of the winners, and you saw GE Vernova up more than 6% in today's session. Now to the losers. What?
Oh, she said losers and pointed right at me.
No,
That's
not-
okay. I'm glad you ended with GE Vernova because that's exactly where I want to start. We saw some stocks move lower as a result of this move from the White House. Constellation Energy Group, look at this. At the bottom of the S&P 500, down 9.8%. Worst performer. We've been talking about this all day. That move that caused GE Vernova shares to move higher caused some of the large power generation companies to move lower. Supply and demand here. If more power is available, if there is more supply, then prices could drop and, these companies would not benefit as a result. But Josh Saul on our program earlier reminding us this type of thing years out. Infrastructure takes a very long time to be built in the U.S., but still, this is the immediate share reaction that we saw. Also, the Mosaic company shares falling today. This after the company reported a significant decline in North American fertilizer demand in the fourth quarter of 2025. Phosphate sales volume fell at about 1.3 million tons. Shares falling today by about 4.5%. And finally, looking at DraftKings and Flutter Entertainment, the publicly traded companies in the sports betting industry. DraftKings falling 8%, Flutter, the parent company of FanDuel, down 6.3% today. This after weekly data from the New York State Gaming Commission showed that the revenue from online sports gambling fell during the NFL's wild card weekend. It typically attracts more bettors to games.
Yeah.
This decline comes at the same time the volume of sports wagers on competing prediction market platforms grows. You don't just bet on the new Fed share, Romaine.
Bet on the new Fed share.
On Polymarket.
Yeah, I don't do that.
You bet on NFL outcomes too,
You're
I guess.
betting on when Taylor's going to get. How many people Taylor invites to her wedding? Is that what you're betting on?
You bet on how many times Romaine is going to interrupt Carol.
Oh,
I have no idea what either one of you are talking about. Just root for the Bears
Taylor
this weekend.
Swift.
Taylor Swift. Okay, because you threw me off there. You're talking about a different
Emily,
Taylor.
thank you for being with it.
I was like, by the way.
The wedding of the year.
Yeah, the wedding of the year, yes. Thank you, T-Wigs. Yields. Can we get to yields here? They move higher. And that is significant here because we talk about a market that overall seems to think that through the course of this year, yields will move lower, but at least for right now, moving higher on the day and on the week. Carol.
Oh, so where are we going?
We're going to college.
We're going to go to college. Well, maybe not so many people are going to be going to college. Great Bloomberg Big Take story that's on the terminal. And it's basically talking about what's going on in terms of the U.S. birth rate in the United States, leaving too many colleges with too few kids. And we've seen the birth rate plunge since the 1950s. We saw a little bit of a kick up during COVID or during the financial crisis, excuse me. But basically, we're seeing it shrink. And so you think about the implications. We've already seen a bunch of schools closing. And so this is going to be tough, certainly on the educational sector.
What I like about this story is it's a completely different take on what a declining birth rate in this country means. This is all about higher education because oftentimes we talk about this in the context of, okay, what does it mean for Social Security in the future? What does it mean for the economic growth, especially with the decline in immigration in the U.S., which has filled this the fact that Americans aren't having as many kids in recent years as they had, a few generations ago. But there are serious implications, not just for those things, but also for the higher education industry. It's kind of like K-shaped. You have the really good schools harder and harder to get into, and then fewer people wanting to go to the schools that aren't necessarily at the highest end.
This is a great story. I got two nitpicks. One, I wanted them to analyze a little bit more as to whether we just had too many colleges, universities to begin with, which I think was a big part of the problem. Also, the idea that, there's a huge demographic of people opting not to go into colleges and universities and just go straight into the... Wow. Sorry, Tim.
Oh. That's what happened. So.
Wow, they were like, we're done with you guys.
Was it something I said?
Going into the long weekend.
What happened there?
That. I don't know. That was cool.
Say goodbye, Carol.
Goodbye. Good night, Gracie, is basically what they say. All right, that's a wrap. We're cross-platform, radio, TV, YouTube, Bloomberg Originals. Guys, have a really, really good weekend. Emily and Romaine, of course, continuing there on the close on Bloomberg Television. Tim and I continuing on Bloomberg Business Week. Well, maybe Tim won't be back.
I'm here. I'm still here.
I don't know. We'll see you again, same time, same place on Tuesday.
Our coverage continues here on Bloomberg Television with a push ahead to a busy week for earnings, including out of Capital One and all the concerns about those credit card rate caps, and Netflix and all the concern, not about its earnings, but of course about that pending bid for Warner Brothers Discovery. Laura Martin joins us next, right here on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. Markets closed just about 10 minutes ago. A soft day on a soft week, but that divergence between small and large caps still intact. 11 straight sessions, the Russell 2000 has outperformed the broader markets. You have to go all the way back to at least the early 90s or late 80s to see a streak of that magnitude. Bitcoin in stasis here on the day, and silver taking a bit of a breather after another record run earlier in this week. For the individual gainers, keep an eye on GE Vernova having one of its best days since at least last July on the back of policy proposals that may alter the electric grid industry here in the U.S. Meanwhile, Salesforce having its worst week since at least 2024. In fact, we saw a huge sell-off all week long. A lot of these software as services stocks. Fannie Mae under pressure as a lot of investors now starting to get fed up with the lack of movement on policy changes for that cohort. And Intel down about 3% on the day, but actually had a decent week here. Remember, we had some relatively, encouraging comments out of the president with regards to Intel CEO. And of course, that is the backdrop for the earnings that we're going to get out of that company a little bit later next week. And that is our top story, earnings season, and really all the hopes and fears that accompany it. Remember, we kicked off this week with mixed results from JP Morgan, Goldman Sachs, and a lot of the big banks, most of which largely sold off because of weak guidance, rising costs, and of course, the risk of government policy. And next week, we're going to get more. The regional banks and brokerages are out, but that aperture really does start to open up with the consumer sector and results from Procter & Gamble, with the energy sector and results out of Halliburton, the mining sector and results out of Freeport-McMoRan, in the media and tech sector out of Netflix. Let's go straight now to Laura Martin joining us here live, not in studio too, I should say, over at Needham & Company. And Laura, let's first start off with Netflix and the actual numbers themselves, the performance that we saw last quarter and what you expect them to report.
Right. So we're looking for revenue of $17 billion and adjusted EBITDA of $3 billion. Recall they no longer release subs or ARPU. So it's hard to we can't really follow those. And what that means is there's a lot higher stakes on them hitting their financial metrics.
So, of course, the elephant in the room, Laura, is, of course, going to be the bid for Warner Brothers Discovery. And a lot of questions here, not so much about whether they continue to fight this, assuming that Paramount Skydance continues to make a move, but also just the idea of whether they actually need this, whether they need those Warner Brothers Discovery assets to facilitate growth, or whether they could actually potentially continue to do this the way they've done it for the last few years, organically.
Right. And I think a worry is if they don't hit their numbers, there's going to be a worry that the senior management is distracted by sort of a hobby. Because I agree with you. I don't think they need Warner Brothers, but it is because they're in the middle of a hostile bid against, Paramount. I just worry that nobody's minding the shop. So if they don't hit their numbers, since this fight for Warner Brothers is going to go on for at least a year because of regulatory issues, I think people are going to be really worried that is what the P&L can't perform with all these people distracted at the top.
I have to sort of reference one of our competitors, the New York Times. They had a great interview kind of with Ted Sarandos, basically saying all the critics just kind of misunderstand what this company is, or at least what it's growing into. And I'm wondering if you can articulate, as someone who covers this company well, what exactly is Netflix becoming? Because we talk about the traditional scripted streaming series and movies that they're known for, this big push that they've made recently into live events, and of course now the expansion of this ad business. What exactly is this company?
So I think historically, if they don't buy Warner Brothers, let's say Paramount wins Warner Brothers in the end, then they just are a television company. That's all they are. They're a television company. They put everything on Netflix first. They have to be basically bullied to put anything into the window that's called the theatrical window. If they buy Warner Brothers, they get into a lot of new businesses in addition to streaming, in which case their strategic position does shift to be much more of look a lot more like a traditional studio company, like a Sony or a Disney, in which case they're really not differentiated. They've got big studio lot facilities, which has a lot of real estate costs. They have a ton of people. Netflix's revenue per person today, before it buys Warner, is $2.7 million. Mm-hmm. Warner Brothers is $300,000. Yeah. So they just, just really averages them down and makes them look much more like traditional old-fashioned studio if they actually are successful at buying Warner Brothers.
I am curious, though, also about this idea of how they can address shareholders. This was a stock that lagged last year, a stock that's already lagging at the start of this year, at least certainly once you put it against the backdrop of the broader tech and media space here. This is a company that doesn't pay a dividend, a company that has been pretty stingy on buybacks. Do you think we're going to maybe see a little bit more from the CFO and the accountant side of this business saying, let's find a way to reward shareholders?
Maybe. I think so the answer is, I think they're going to probably have to go to an all-cash deal, and they're going to use leverage to do that. And so I just think that they're so locked down on transferring value to the Warner Brothers shareholders. I don't think they're going to be focused on public shareholders in the near term. They've got their hands full focusing on new constituencies that aren't public shareholders.
All right, Laura, always great to catch up with you. Laura Martin, Senior Entertainment and Internet Analyst at Needham & Company. Reminder, Netflix earnings Tuesday after the closing bell. When we come back after the break, we're going to follow another big event unfolding this week that could spill over into next week, the president's calls for an emergency wholesale electricity auction. We're also going to take a look at his proposals for a credit card rate cap that he says needs to take effect by Monday or else. That's coming up next here on The Close. This is Bloomberg. President Trump calling for an emergency wholesale electricity auction. The president looking to tame surging utility bills that have largely been up because of that build out of data centers. A little bit earlier today, Bloomberg caught up with PJM Innovations. This, of course, is the largest regional transmission organization in the United States. And here's what they had to say. They said that they are reviewing some of the principles set forth by the White House and governors of several states and say that they would.
गाइस ये नेचुरल गैस का ध्यान रखना, ये डीप लेवल से हाई लेवल पे सेलिंग लेके आ गया है ऑलरेडी। यहाँ पर मैंने जैसा पहले बताया था, मार्केट 3 बार सेलिंग दे चुका है। दिस इज अ 4th टाइम सेलिंग आनी है, थोड़ा सा फास्ट आनी चाहिए, रुकना नहीं चाहिए, क्योंकि अब तो डीप लेवल से हायर लेवल पे देखोगे तो जिस तरह की विग बनी है, ऑल सेलर्स आर ऑलरेडी देयर। तो अगर अब नहीं आता है मार्केट डाउन तो फिर समझो ये ब्रेकआउट के लिए जाएगा, और फिर ब्रेकआउट के लिए अगर जाता है तो फिर हम रीटेस्ट कहीं प्लान करेंगे। अभी हुआ नहीं है ब्रेकआउट, स्टिल होल्डिंग द रेजिस्टेंस। तो लेट्स सी, सेलिंग आती है तो फास्ट और जल्दी आनी चाहिए। मार्केट ऑलरेडी देखोगे नेचुरल गैस में परसों बाइंग का जो ट्रेड लगा रखा था, वहां से एक अच्छा मूव करके जा चुका है ऑलरेडी अपसाइड पे। मैंने परसों ही बताया था आपको, हायर टाइम फ्रेम पे 4 आवर टाइम फ्रेम पे अराउंड सपोर्ट है 270 से 280 के बीच के जो जोन में 4 आवर टाइम फ्रेम पे, वहां से ऑलमोस्ट 15 पॉइंट अप है अभी तक, 40 पॉइंट कल से देखोगे लास्ट ट्रेडिंग सेशन से अभी तक। तो नीड टू सी ये इस लेवल का होल्ड करता है या फिर नहीं, या फिर ब्रेकआउट के लिए जाएगा या नहीं, क्योंकि सेलिंग आएगी तो यहाँ पर अब दिस इज अ 4th टाइम। एक ही चीज़ यहाँ पर प्राइस को रोकी हुई है, वो है यहाँ पर का प्राइस एक्शन। फर्स्ट टाइम आया था प्राइस, एक लो बना था, दूसरी बार लोअर लो बना था, तीसरी बार एक और लोअर लो बना था, ये 4th टाइम है। तो मुझे लग तो नहीं रहा अभी इस लेवल के नीचे कहीं जाने वाला है। मोस्टली एक हायर लो बनाएगा तो फिर एक हो सकता है इन्वर्टेड हेड एंड शोल्डर जैसा पैटर्न हमको देखने के लिए मिले उस केस में। अभी के लिए स्टिल होल्डिंग दैट प्राइस एक्शन, स्टिल act as a resistance over here. अगर नीचे आता है नेचुरल गैस तो एक्सपेक्ट करेंगे वापस बाइंग अराउंड 290 के अप्रॉक्सीमेटली। अच्छा सपोर्ट है वहाँ पे। ये जो आपका इंटरनल लिक्विडिटी एरिया है दैट नाउ एक्ट लाइक अ सपोर्ट, सो आई एम एक्सपेक्टिंग अगर ये थोड़ा नीचे आता है इस एरिया तक बेस्ट है यहाँ पर। पहले नीचे आ जाए rather than पहले ब्रेकआउट जाए और फिर नीचे आए। नेचुरल गैस एज आई सेड अगेन नीचे आता है तो टारगेट फाइनल 290 के अप्रॉक्सीमेटली है जो नीचे इंटरनल लिक्विडिटी एरिया है, दैट विल बी अ टारगेट जोन। बाकी क्रूड ऑयल में अभी कोई ट्रेड रनिंग नहीं है, देयर इज नो ट्रेड इज रनिंग राइट नाउ इन क्रूड ऑयल। बाकी थोड़ा सा रिस्की है इसलिए क्वांटिटी थोड़ी कम ही रखना। आए तो थोड़ा सा एक्सपेंड कर सकते हैं, इसकी जरूरत नहीं है, इंटरनल लिक्विडिटी तो जाएगा ही नहीं अभी। बाकी मुझे लग तो नहीं रहा है इसके ऊपर ये जाने वाला है वैसे, और नेचुरल गैस रियली चांसेस लग रहे हैं। ठीक है, क्रूड ऑयल में भी थोड़ा सा प्राइस अगर अपसाइड की ओर आएगा ना तो इसमें एक सेलिंग का प्लान करेंगे। थोड़ा सा हायर टाइम फ्रेम पे देखोगे तो प्राइस एक्शन थोड़ा सा अलग है, डिफरेंट है। ट्वेंटी वन इज द लास्ट एस एल 321.1, इसके ऊपर कैंडल क्लोज नहीं होनी चाहिए। इसके ऊपर अगर कैंडल क्लोज हो गई तो फिर ये ब्रेकआउट माना जाएगा। इसके ऊपर जब तक कैंडल क्लोज नहीं हो रही है, विक बनाने से ज़्यादा फर्क नहीं पड़ता, विक तो बनाता रहेगा। बट या 321 के ऊपर अगर कहीं सक्सेसफुली 15 मिनट की कैंडल क्लोज होती है तो फिर ये ब्रेकआउट होगा। टिल देन इट इज़ ऑन रेजिस्टेंस, साइडवेज है बट है रेजिस्टेंस पर ही। एंड यहाँ पर कोई सपोर्ट नहीं है ब्लू कलर की लाइन पे 304 के आसपास, दैट इज जस्ट हाफ वे लेवल ऑफ दैट पर्टिकुलर कंप्लीट टारगेट ऑफ जोन। ठीक है, तब काफ़ी बड़ा जोन है वो, ऑलमोस्ट वहाँ तक एक्सपेक्ट करेंगे तो आप समझो कि प्राइस जितना मॉर्निंग पे ऊपर गया उतना ही नीचे आ जाएगा। सो उस वजह से देयर चांसेस कि प्राइस पहले हल्का ही मूव करे डाउन साइड पे, देन मार्केट मूव डाउन साइड। तो इससे बड़ा ये एस एल कैंडल क्लोज नहीं होनी चाहिए इस लेवल के ऊपर, इन द सेंस ऑफ इसके ऊपर कैंडल क्लोज हो गई अगर 321 के ऊपर तो फिर वन के ऊपर ही कहीं बुलिस होंगे, उससे पहले अभी तो बुलिस नहीं है, और जितना हो रहा था बुलिस मोमेंटम मॉर्निंग पे हो गया ऑलरेडी। क्रूड ऑयल में पॉइंट ऑफ इंटरेस्ट से सेल मत करना, पॉइंट ऑफ इंटरेस्ट इज हियर नॉट अ सेलिंग पॉइंट, यहाँ पर नहीं है वो सेलिंग पॉइंट। से देखोगे तो अराउंड 50 पॉइंट की रेंज में घूमे जा रहा है क्रूड। तक तो मुझे बुलिश ही रहा है क्रूड ओवरऑल ओवर हियर इस एरिया के आसपास तक। ऐसा अगर नीचे आ जाता तो बाई करते, इसमें एग्जैक्टली लेवल पे भी नहीं आ रहा है क्रूड। इसको हटा दो, ये काफी टेस्ट हो गया। एक्सपेक्ट ही कर रहा हूँ क्रूड में बाइंग ओवरऑल, वैसे तो थोड़ा साइडवे जरूर है बट ओवरऑल बाइंग ही एक्सपेक्ट है। थोड़ा सा डाउन साइड पे अगर आ जाता प्राइस तो एक बाइंग प्लान यहाँ पर हो सकती है। वैसे तो लेवल को हिट करके चला ही गया कह सकते हो, थोड़ा सा मैं और एक्सपेक्ट कर रहा था नीचे आता। करेंगे क्रूड ऑयल भी अब वापस 5350 के नीचे क्लोजिंग नहीं देता तब तक ये भी साइडवेज तो बुलिश ही है। 5350 के नीचे कहीं वापस बेरिस हो सकता है। पुल बैक देता है तो क्रूड ऑयल में भी एक बाइंग का प्लान करते हैं, ठीक है। यहाँ पर चाहो तो वैसे अगर पुट भी शॉर्ट करके बैठ सकते हो। एक्सपेक्टेशन है बट अगेन वही वॉल्यूम थोड़ा सा कम है, ऐसा ना हो साइडवेज ही रह जाए प्राइस। तो बाइंग लेने से ज़्यादा बेटर कॉल, अब सॉरी पुट शॉर्ट करना ज़्यादा सेफ है इन क्रूड ऑयल, क्योंकि टारगेट बड़ा है, मार्केट हो सकता है साइडवेज ही रहे कुछ देर तक। बाकी आज यूएस में भी वहाँ पर बैंक हॉलिडे है तो आई डोंट नो वॉल्यूम कितना आएगा। यूएस बैंक हॉलिडे, आई डोंट रीजन पता नहीं बट वहाँ पर बैंक हॉलिडे है, देखना पड़ेगा। यूएस मार्केट ओपन है नहीं एक बार। तो यहाँ पर थोड़ा कॉल का ध्यान रखना, अगर कॉल ले रहे हो ऑप्शन में तो हो सकता है प्रीमियम कुछ मोमेंटम ना दे अपसाइड की, अनटिल अनलेस बड़ा मूव ना आ जाए सडनली।
House lawn. Take a listen.
Now the pay-per-view's gone. I mean, what it would have cost you for one fight, it's less than that now for the year for Paramount. So that brings in a much bigger fan base, and all the different shoulder programming that we can do with Paramount Plus and CBS. For instance, CBS already has our entire library. Paramount Plus already has our entire library up on their platform. So as soon as you click on, I watched Landman, the new episode when it came out the other day. As soon as you click on to watch, UFC is the first thing you see.
Wow. So, but does this deal, is it going to change the compensation practices that you have for fighters? I mean, the pay-per-view model was a pretty straightforward model in terms of how you compensated the fighters. How does that change under a straight agreement with Paramount?
Mathematically, it can be figured out. And, obviously, the new deal is incredible for the fans. It's incredible for the sport and the business. And it's definitely incredible for the fighters.
I mean, you've had overall. I mean, UFC has had a relationship with Paramount, CBS, that entire structure, and this new regime under David Ellison. I am curious going forward. You also have a pretty good relationship with the president, and I know that there were plans to do some sort of big fight on the White House lawn, potentially in commemoration of the anniversary, 250th anniversary of 1776. Is that still happening?
Yes. So we literally, my whole production and ops team was over there going through all the logistics. We got all that dialed in. Now, heading into, this month we launch Zuffa Boxing and UFC on Paramount Plus. After that fight is over, we'll start focusing on what fights are going to be at the White House.
I mean, you think about your fights filling stadiums. I know that there's plenty of space on the White House lawn, but how are you factoring that into your planning when you think about just the sheer number of seats, for example, you can
There'll be 5,000. Yeah, there'll be 5,000 seats. And then right across the street, the park, the Ellipse, that'll hold 85,000 people. We'll have screens over there, and people will be able to hang out. We're going to take over Washington, D.C. the week of the fight.
And my understanding is that, you've had dozens of fighters say that they want to participate in this event. So how are you evaluating who actually makes it on the roster, so to speak?
Yeah, I mean, just about everybody on the roster wants to fight on that card. It's a one-of-one special event. I mean, when will there ever be another fight or sporting event at the White House? So it's a history-making event, and we'll see how this year plays out with different fighters, and you want the biggest, the best, and you want the card to be great. You want it to be, we want that every Saturday, but we definitely want it for that card. So it's all about matchmaking, and we'll try to make the best fights we possibly can.
Obviously, you're known primarily for MMA, but you mentioned the Zuffa boxing venture that is getting up and running this month. Talk a little bit more about how far along that is and whether you think it will be a viable competitor to some of the other straight boxing promotions.
I don't want to say we'll be a viable competitor. We're going to blow them all out of the water is what we're going to do. We're in a good spot with that. That launches the 23rd. It'll be the day before the UFC fight. That will also be on Paramount Plus. And, literally yesterday, before I flew here, that's all I worked on all day yesterday was boxing. So I'm excited about it. I wouldn't be sitting here talking to you today if it wasn't for boxing. That's where I came from. I love the sport, and I've talked a lot of smack about boxing over the years. And now
that's what I'm curious about. Is there a future there? Because I felt like listening to you over the years, it sounded like MMA was the future and boxing was somehow withering away.
It was, and it is, and now I'm going to fix it.
Well, Dana, before we let you go, you mentioned you're a busy man. You got a lot going on. One of the things that you do have going on is that you're on Meta's board of directors. I believe it's just over a year now. So curious to hear how that's going.
So if you would have asked me a year ago if I wanted to be on a board, I'd have told you there's no way in hell. When I got this opportunity, I'm so big into social media. And now that I'm on this board, I mean, I'm blown away every time I go to a board. Mark Zuckerberg is a killer. This guy is a killer. And when you sit in these board meetings, it is impressive. Not just him and how he runs his business and how he runs these board meetings. Everybody on the board. Every time I go there, I would think that it would bore me and drive me crazy. I'm literally sitting like this the entire board meeting. Yeah. It's one of the best decisions I ever made, and I love it.
Dana White, of course, the CEO and president of UFC. You can actually catch that full interview. Go to Bloomberg Markets, go to Bloomberg.com, type in the close, and you can see the full thing here. A very colorful interview here, of course, about the big fight night he's planning on the White House lawn for July 4th, his push into boxing, and, of course, his relationship with Mark Zuckerberg. Let's check in here on financial markets as we close out what has been an incredibly volatile week. Remember, we started the week with a massive surge in equity prices to record highs. And while the S&P and the NASDAQ and the Dow faded from those highs, the Russell 2000 kept chugging along. A 2% gain on the week, outperformance once again. In fact, it's been 11 straight sessions now where the Russell 2000, the small caps, have outperformed the large. We have not seen that type of outperformance since going back to the late 1980s. This is Bloomberg. As we close out a busy week, well, prepare yourself because next week's going to be even busier. Now, here in the U.S., it is a federal holiday in honor of Martin Luther King, so markets are closed, but the World Economic Forum is kicking off in Switzerland. We will have coverage of that starting on Monday right here on Bloomberg Television, and that will continue into Tuesday and beyond. Tuesday is going to be important because that is President Trump's self-imposed deadline for credit card companies to cap those interest rates at 10%. We're also scheduled to get earnings out of Netflix on Tuesday after the bell. We're going to hear from President Trump once again on Wednesday. This time he gives a keynote address at Davos, where we are expected to get some more details on some of his economic proposals. That speech also comes against the backdrop of the U.S. Supreme Court hearing arguments on whether the president has the power to fire a Fed governor. As we move to Thursday, we start to get more economic data, including the Fed's favored gauge on inflation, that PCE data. We're also going to get jobless claims, and we're going to get earnings out of Intel, Capital One, Alaska Air, and Alcoa. And we rounded out on Friday with a lot going on in the monetary policy space. ECB President Christine Lagarde scheduled to speak, and the Bank of Japan scheduled to make a rate decision. It's a lot going on. All of your coverage can be found right here on Bloomberg Television.
The tech companies, because frankly, they're up against something of the same problem that, governors and the Trump administration, all of which joined together, are feeling, which is this concern that data centers that we need in the U.S., that are, that U.S. leaders believe we need to win the AI race, that building them is driving up power costs for, American consumers, American voters, and that's really leading to a backlash against getting these data centers built. So this is being presented really not just as a solution for power prices, but also a solution for these tech companies who do need this power. They really need always on power to run these data centers, and they are concerned about this backlash too. It's important to note that it cuts differently across companies, and this may be a better fit for some of the really large tech operators out there.
Jen, anything surprise you from the governor's reactions that were there today?
They were incredibly intense in their criticism of PJM. The governors who were here today from Maryland, from Pennsylvania, from Virginia, they're all part of this, the PJM service area, PJM being the grid operator that runs the Mid-Atlantic to the Midwest. And they were just really critical in assessing how that grid operator has not been bringing enough electric generation capacity online. I was struck by the tone. We only saw 3 governors in the room today, but what's striking about this whole thing is that it's not just a Trump administration plan with a few governors joining in. It's every single governor of the 13 states that are part of the PJM service area. This isn't a binding presentation. These principles aren't binding on PJM, but at the same time, the governors, the Trump administration officials all said they really expect and hope PJM will go along. They're bringing obviously a lot of muscle to this effort, and Governor Shapiro of Pennsylvania, who has threatened to leave PJM before over price concerns, said that if the PJM doesn't act, he will be forced to, the state will be forced to.
Bloomberg's Jennifer DeLuey reporting live from the White House. Jen, thanks so much for being with us tonight. Now for a look at how energy stocks moved following today's roundtable, let's turn to power moves with Bloomberg's Romain Bostic, who joins us live from World Headquarters in New York. Romain?
Yeah, it's kind of interesting. We've been talking a lot, Julie, about kind of the bifurcation in the broader market, the idea of small caps outperforming large. A big story underneath all of that of why small caps have been outperforming is because those small cap indexes, they contain a lot of energy companies, and energy companies have been on fire. This rally actually started late last year, but it really picked up a lot of steam over the last couple of weeks, largely because of some of the geopolitical issues that have sort of moved oil prices around. And now, of course, the recent proposals out there with regards to addressing our energy crisis. You have names like GE Vernova up about 6% on the day. As a group, we should point out a lot of these sort of equipment makers, basically the people who would make equipment for a lot of utilities and the electrical grid, they've been on fire. As a group, trading at a record high today and on the week. Then you have like the oil services companies, your SLBs, your Halliburtons of the world, your Baker Hughes. They've also been rallying to fresh highs, and that's largely on the potential for more of a oil infrastructure build out, particularly in Venezuela and even in the southern Gulf Coast states, partly because of some of the positions and policies that the Trump administration has been proposing. I do want to also point out an interesting wrinkle, because I was looking at the complexion of this energy trade. It's not just oil and gas stocks, it's not just utilities. I want you to take a look at clean energy stocks, believe it or not, because this seems counterintuitive, but they have been on fire. In fact, the best performer across all regions, outperforming actually some of the more traditional energy names. So think of names like Bloom Energy, Plug Power, Solar Edge, etc. Names like this also moving higher, not because of the U.S. commitment to renewable energy, Julie, but because most non-U.S. nations are still committed to those projects, and they are making orders at a high clip.
Fascinating. Romain, I'm going to ask you about PJM. This utility is not a publicly traded company, but it's one that's been in the news a lot, and we just ran a red headline on the terminal. PJM proposing a backstop plan to support power grid reliability. They were not invited to the White House today. Is this a plan B?
Well, I mean, you know the president better than I, Joe, so no. But in fairness to them, we did reach out to PJM earlier. I haven't had a chance to read this, but we should point out they are basically sort of a transmission organization. So basically, they kind of facilitate these auctions of power. So basically, you say what we need for power, you go to PJM, they auction off and then pair you up with somebody that's actually on the grid. Now, those prices have been going up, wholesale prices, as we call them, because of all the demand for data centers, and they've been caught in the middle of all this. They've been trying to negotiate agreements with individual states and governors on a one-by-one basis. But I think it does look, based on this new proposal they put out, they're looking for something with a little bit more blanket coverage, whether that wins over the president and Chris Wright, the energy secretary. Your guess is as good as mine, but I can assure you here, one way or another, there will be some discussion between the White House and the executives at PJM.
Fascinating. That's the best description of that company I've heard yet. Romain, thank you, and have a great and long weekend. Romain Bostic live in New York. A group of House Democrats who've been critical of President Trump's immigration enforcement policies left Washington today to gather in Minnesota for a field hearing titled Kidnapped and Disappeared: Trump's Deadly Assault on Minnesota, featuring testimony from people impacted by ICE raids in the state. Congresswoman Catherine Clark of Massachusetts, the House Democratic whip, led that hearing and joined us from the Minnesota State Building in St. Paul. Listen.
Well, Joe, thank you for having me on and bringing attention to this hearing that we held today. And let me tell you, hearing it firsthand from people who have been taken by ICE, U.S. citizens detained for no reason whatsoever, ripped out of their car, having tear gas put in through the air filter of their car just for honking their horn and blowing a whistle. They're the stories that we heard. And of course, we have all seen the horrific video of the shooting of Renee Good. They really bring to life what is at stake here in Minneapolis and here across the country if we continue to allow ICE to have this unlawful reign of terror on our communities. And so going to your question about what do we do about it, as we are having one of the funding bills that funds the Department of Homeland Security coming up potentially next week? And the answer is we have been very clear with Republicans. There needs to be accountability and guardrails in this funding, or they are going to have to fund this on their own, because we need to see that we are going to have body cameras, that we are going to have the ability to have actual arrest warrants, that there is going to be proper training for these officers, that we are going to have to look about how ICE is deploying these people who do not seem to have the training or the temperament to protect our communities, and is being targeted by this administration in a highly political way.
Well, I know Boston and the Boston area has been part of the areas targeted by ICE, whether it's Everett or Revere. With what you just described, if you can get legislation that puts body cameras on agents and provides training for deconfliction, for de-escalation, will Democrats be on board?
Listen, we're in active negotiations over this weekend, but we need to see real change and a real commitment to it from this administration. And so we have to be assured that the billions of dollars that they have poured in to ICE, it's sevenfold the size agency that it was. It is now the largest law enforcement agency in the federal government, is actually serving a national security purpose. And what we saw today in this hearing, what we heard from people in Minnesota, whether that was the chief of police, whether it was the mayor of both Minneapolis and St. Paul, we got to speak with the governor earlier, the attorney general, all of them with the same message. If this is happening in Minnesota, it can happen in your hometown as well. And so we, at this moment, have to stand up for our Constitution, for the rule of law, for fundamental fairness, and the end of terror that we're seeing here in Minneapolis.
Congresswoman, while your group today obviously feels very strongly about this, are you getting any assurances from your colleagues or colleagues on the other side of the aisle that they would be in favor of this and that you can get it done fairly quickly?
I have to say, in a day that was filled with both outrage and inspiration, it was just such a blow to know that not a single Republican from Minnesota has spoken out against what they're seeing happening in their own communities. And it is not just restrained to the Twin Cities. It is throughout Minnesota. And as you know, Joe pointed out, throughout communities in my district and across the country. So this is the moment. This isn't a left or right issue, a red or blue issue. This is about who are we going to be? Are we going to be a country that has law enforcement that is working for the safety and security of our communities, that are accountable and transparent and well-trained? Or are we going to have a mass paramilitary special force that is working on behalf of the president and carrying out political retribution? And this should not be a partisan issue. So we're going to continue to negotiate. I hope that people will come and hear what happened in Minneapolis and take those lessons of this is the moment. History is calling us to stand up at this moment and say, while we are fighting for the economic security, to lower the cost of living for Americans, make sure we protect their health care, we also have to stand up at this moment for our constitutional rights, whether it's the First Amendment right to protest peacefully, or whether it is the right to just go about your daily life and not have to fear being stopped, asked for papers, and possibly abducted.
Congresswoman, this is all happening within weeks of a possible government shutdown. Are you willing to shut down the government over this?
You know, we have had one approach around these government budgets, and that is negotiate. and imploring our Republican colleagues to come to the table and negotiate with us. And we saw what happened back in the fall. Rather than coming and working with us around extending the ACA tax credits, they chose to go home, to close the government down, and to just leave town for over 40 days. I certainly hope they are not going to make that choice now and do that again to the American people, to our economy, and to the message that it would send, that they are unwilling to come and negotiate around guardrails for ICE and DHS, and would choose instead.
Well, that ACA matter is still not resolved, Congresswoman. I'm just wondering where your head is on this. I know there's the Bernie Moreno bill in the Senate, but senators just left town. House won't be here when they get back. Is the extension of Obamacare subsidies on the rocks?
Oh, it certainly is. And what a tragedy. And what a statement to the American people. We had 17 Republican members of Congress join us in a 3-year extension to give time to the American people to delay the spikes we're seeing in premiums, and to leave D.C. without resolving this, to let the last day of enrollment in the ACA come and go. It is just part of what we are seeing, indifference on behalf of this administration and my colleagues across the aisle in Congress to the plight of American people. And they are telling us loudly they can't afford their lives, whether it's the cost of housing or groceries or utility bills, and certainly what is so fundamental to giving your family security, to have affordable health insurance so they can get care when and where they need it. All of that has been turned upside down by Republicans in Congress and this administration, taking away health care in order to fund tax cuts. But we will stay with it. We will keep the pressure up, whether it's on health care, whether it's on lowering costs, certainly on whether it is putting guardrails and accountability and stopping this invasion of ICE in Minnesota.
And that was House Minority Whip Democratic Congresswoman Catherine Clark of Massachusetts. Coming up, while President Trump is renewing his pressure campaign on Greenland, we'll discuss how a bipartisan group of lawmakers are showing support for Denmark with Michael Allen of Beacon Global Strategies next on Balance of Power on Bloomberg TV and Radio.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
We can get whatever economic and military arrangements we want with Greenland without pressuring them or bullying them, much less with doing something that would essentially transform the United States in the eyes of many into a rogue actor and undermine NATO. So this seems to me unnecessary. You know, God invented diplomats for a reason, and the reason is to negotiate special arrangements. Greenland and Denmark are more than willing to do that if we would only meet them halfway.
It's Balance of Power on Bloomberg TV and radio. Alongside Julie Fine, I'm Joe Matthew in Washington. Conversation earlier with Richard Haass, President Emeritus, the Council of Foreign Relations, talking about the impact of President Trump's pressure on NATO to support his ambitions in Greenland. Joining us now with insights into this and more, Michael Allen, Managing Director, Beacon Global Strategies, former Special Assistant to President George W. Bush in the national security sector. It's good to see you back, Michael. Thank you for being here. When are we invading Greenland? I thought we had designs on Venezuela.
We do, and then, we may bomb Iran and then get to Greenland. I think the president probably in the end won't actually invade Greenland. I hope this is one of these plays where he's trying to say a lot of things to gain a lot of leverage in order to maybe get some things that he wants down the road. But it's hard to see what else he could want because the door is open. The Europeans are trying to negotiate with us, and he keeps saying he wants to own it.
What do you make of the president basically threatening to tariff countries that don't support him in this quest for Greenland?
Well, to me, this is unnecessarily rocking the boat. It was one thing to call out the Europeans for being terrible contributors in terms of dues to NATO, but to do this when they have so much else going on, namely trying to deter Russia and support the Ukrainians at our behest, I don't think we need to be knocking down their back door when they have so much else going on.
Well, there's talk of buying Greenland, maybe an enhanced
That's what we should do.
Agreement with Greenland, maybe not end NATO in the process. So let's move to Iran because there's been a lot of rhetoric about Iran recently. The president says the killing has stopped. He was very respectful. He posted on Truth Social today of the fact that prisoner executions were canceled. Is this a delay tactic or a different posture?
Well, at first I thought it was a delay tactic because, as you know, he said we were locked and loaded to go with virtually any massacring and killing. I think he's trying to take some credit for seemingly a reduced posture from the Iranians, but it's not by much. I mean, by all accounts, it's in the thousands of how many people have been killed by the regime. So I think the president has gotten himself into a place where U.S. credibility is at stake. He faulted President Obama for not enforcing his own red line in Syria on chemical weapons. He doesn't want to go down in history like Obama, who didn't call the Iranians out during the Green Movement. He feels like he needs to do something. And by the way, things have been going great for the president lately, especially with the exercise of military power. So I still think he's going to do it, but I think maybe we just need to get our military forces back in the region.
Now, he's reportedly getting some pressure from Gulf nations and from Israel. Hey, hold off on the strikes. Is that making a difference, do you think, to him?
Maybe. I mean, I was a little skeptical at first about the Israeli piece because I feel like Netanyahu was here at the end of December to sort of discuss with President Trump in Mar-a-Lago the fact that he wanted to hit Iran again because Iran's ballistic missile program is proving to be tougher than we thought. But I think, practically speaking, there aren't enough interceptors in Israel right now. The U.S. destroyers have gone elsewhere. Israel feels vulnerable. I think Israel's not saying no, they're just saying not now. And so I think they can get on board with this pretty easily.
So when the USS Lincoln steams in a couple weeks from now, maybe that's a more realistic prospect.
It is, but I worry we may have lost the moment. I mean, I still think the regime is going to go down. This is a broad-based revolt. They have no solutions to fix their own economy, but it might have been a better thing to do at the height of the protest to give them a little boost rather than 2 weeks afterward.
We talked to Alyssa Slotkin last evening, Democratic Senator, Armed Services Committee, surprised at the approach this president has taken to foreign policy after running on America First. Here's what she said.
I think it's just interesting that the president was considering yet more military action. He has really become a foreign policy president, and he campaigned about, being the domestic policy guy. But we went back and looked, and he has carried out military action in 9 different places in his first year, 7 countries, 2 oceans, more than any single president in U.S. history.
Is this what happens when you work in the White House? You worked for George W. Bush, rolled in off that ranch in Texas with a pretty strong domestic agenda, and ended up being involved in some of the longest wars in American history. This America First president running on closing the border and the economy is finding himself, again, as the senator put it, as a foreign policy president. How does this happen?
Well, most presidents in their second term, I think, especially when they feel like they've gotten everything they can get out of Congress, begins to shift toward an area where they don't have as many limits. And so he's definitely playing hard in the foreign policy area. But it is worth reflecting on the split in the Republican Party. Everyone says Donald Trump was a neo-isolationist. He's clearly not. There's no dispute that he doesn't want to get involved with, no foreign policy issue that he doesn't want to try to solve. So I think he's going to get in there and try and exercise American power all the time.
But is it a difficult thing for him to do with 2026 around the corner when you're going to have Democrats saying, okay, let's focus on the problems here. Your mind is elsewhere?
I do think that becomes a vulnerability. It reminds me of the Bill Clinton shirt of everywhere that George H.W. Bush had intervened or visited back in 1992 and ignoring the economy. So, yeah, I do think that's a big issue. Republicans need to watch affordability as well as anyone. And so I do think there is some risk, especially the president's luck may run out at some point. It was pretty bold to do the Maduro raid. I didn't have that on my list. So look out.
Well, you know, when we're calling Michael Allen, something's going on in another corner of the world. It's great to have you back, Michael. From Beacon Global Strategies, we thank you. Coming up on Balance of Power, how the administration is tackling energy costs. We're going to hear remarks from the governor of Pennsylvania, Josh Shapiro. He was at the White House today and will be on Balance of Power next on Bloomberg TV and radio.
This is Balance of Power on Bloomberg TV and radio. Alongside Joe Matthew, I'm Julie Fine. Let's get back to that breaking news that crossed this hour. PJM Interconnection is proposing a backstop plan to support America's power grid reliability. It's the operator of the largest U.S. power grid. We spoke about PJM and other issues with Pennsylvania Governor Josh Shapiro following an emergency energy grid AI summit at the White House. Here's a piece of his conversation with Bloomberg's Tyler Kendall.
For the last 3 years as governor of Pennsylvania, I've been working to bring down energy costs for Pennsylvanians. And I'll work with anyone, Democrat or Republican, federal level, state level, to bring down those costs. I think we have a common purpose in holding PJM accountable and making sure they connect more power to the grid more quickly and reduce costs. I think, as you know, we've talked about this in the past. I sued PJM with the support of several of my colleagues to try and stave off the price increases that they were pushing for. The fact that we've been able to work with the Trump administration over the last year in common purpose on that, and now those price collars, as we call it, that I pushed for and was successful in getting, are part of this package of principles, I think speaks to the importance of it for the 65 million Americans that rely on PJM for their power, the governors of these respective states, Democrats and Republicans, and the White House. And so it's good that we're working together to hold down costs for the American people.
I wanted to follow up on a question that my colleague asked you earlier, because in September you told me that you would be willing to leave PJM if they don't do more to curb costs for consumers. Right. Just to confirm, is that still on the table? Have there been active discussions about what that would look like in practice?
When I sued PJM, I made very clear they had to get their act together and they had to control costs. They did. We were successful. We then put a package of reforms forward on behalf of the Commonwealth of Pennsylvania, Commonwealth of Virginia, Maryland, some other states. So far, PJM has not committed to those. By us being here today in a bipartisan manner, working with the White House and saying, these are the principles, PJM, we need you to adhere to, we're going to learn very quickly here within the next few days whether PJM will actually adopt these principles. I think it would be in their best interest to do so. Should they not, Pennsylvania is going to be forced to take further action.
Democratic Governor Josh Shapiro of Pennsylvania speaking with Bloomberg earlier today at the White House. You can find Tyler's full conversation online or on the terminal. Now, Nebraska is a long way from Pennsylvania, but people who live in these states have to deal with the same issues, and we all need to pay our power bill. Joining us now with his reaction across the aisle, Republican Congressman Mike Flood of Nebraska, who serves on the House Financial Services Committee and is chair of the Republican Main Street Caucus. Congressman, it's great to see you. Welcome back to Bloomberg TV and radio. Is this the answer? Is this the approach as part of the affordability piece that the administration is talking about? Getting our arms around rising energy prices and specifically energy bills could be a very big component here when we consider the demand for power because of the data centers and the AI race that's consuming states around the country. Does big tech foot the bill?
Well, let me tell you something. First of all, I got to put my salesman hat on here. Nebraska is in a much different position than Pennsylvania. Over 100 years ago, now listen to this. Over 100 years ago, we changed our state constitution. All of our power in the state of Nebraska is public power. It has to be by law. And our power companies need to provide the lowest cost energy possible. According to the Nebraska Department of Water, Energy, and Environment, as of 2024, Nebraska's average electricity price is the third lowest rate in the country, based on the latest federal figures. Nationally, electricity in my state costs 30% more than it does in Nebraska. That's why Meta, Google, and so many others have built data centers here. So while Pennsylvania, California, they are dealing with this energy issue, here in Nebraska, we are some of the cheapest in the country, and that's why people should move to a state like ours, because building.
Understood. Does that mean you're inoculated from this trend, though? If I want to come and open a big data center in Nebraska, do you want me on your grid, or do you want me to provide my own power?
Well, we have to have a partnership, and that's what we've been talking about. Our governor's proposing to allow behind-the-meter generation to ensure that power generation keeps up with the needs in the area of AI. So we have a head start on every other state, but to your point, it's going to have to be a partnership. You can't just show up and take when we have to make sure we meet the needs of all the industries. But we have seen a lot of power needing businesses that have come here, and generation is on the table. We're talking about small nuclear reactors right now. That would go a very long way, I think, in Nebraska, and we are part of a multi-state effort to do that.
Congressman, as you said, you're home to data centers from Alphabet, Google, from Meta. But as you know, when they come to town, they take some power, but they don't necessarily bring the jobs. So what is the best way to keep up with the electricity demands in the future?
Well, and I think that's one of the questions that we have to have is, like, if you want to bring your data center here and you don't want to bring the jobs that are associated with it, is there another company that wants to do that? Like, I think as economic developers, as people who want to build opportunities for these very smart kids that come off the farm, we should prioritize those businesses that find it a way to have their employees work here, as well as use our natural resources. Listen, we have an underground freshwater ocean called the Ogallala Aquifer. We have the natural resources that the rest of the country doesn't. We have water, we have electricity, we have land, we have zoning, and we are business friendly. Our juries are conservative. This is a great place to do business, but we want to do business with companies that want to locate jobs, invest in our communities, and take advantage of our natural resources, but fairly compensate us for that. So it's a balance in order to find those companies. But if you want a free ride and you want to come take from a state like Nebraska, we are less interested in that than some company that wants to come here and really invest everything.
Really amazing how data center has become this kitchen table issue, Congressman. I want to ask you about another, and that's interest rates. And by way of the Fed, with your financial services hat on, remarkable moment today when Donald Trump was talking about his looming pick to be the next Fed chair. You know, we talk about the Kevins, the two Kevins a lot. Listen to what Donald Trump said today, and we'll get your reaction.
I actually want to keep you where you are, if you want to know the truth. Kevin Hassett is so good. I'm saying, wait a minute. If I move them, these Fed guys, certainly the one we have now, they don't talk much. I would lose you. It's a serious concern to me. So I just want to say thank you very much. You've done incredible. We don't want to lose him, Susie, but we'll see how it all works out.
I don't want to lose him, Susie. We thought Kevin Hassett had this in the bag. He was said to be at the top of the list, Congressman. Is the next Fed chair Kevin Warsh?
He's probably like, oh, man, can you imagine? I get what the president's saying. You know, like, the personal connection to his cabinet is important to him. And he's got somebody there that he trusts, that he relies on, that, is doing a good job for the nation. Listen, this is going to be a very important choice for the president. There's going to be more than one capable name that's going to be floated out there. I'm not going to weigh in on any single candidate's prospects, but this is clearly important to the president.
So the Main Street Caucus at this point does not have a top choice.
No. We're going to let the president kind of make that decision. But, French Hill is not only the chairman of the financial services, he's also a very active member of the Main Street Caucus. French, and as he's led our committee, we've been pretty clear as a committee that we're not going to weigh in on any single candidate's prospects. This is the president's choice. Certainly, there are going to be some very good options for him. This will be a long-term decision for our country, and I'm confident he'll make the right choice.
Let's talk about congressional matters for a moment, Congressman. When it comes to funding specifically, one of the least reported stories has been the fact that it's looking a little bit like regular order, at least a little bit closer in the House with a series of minibuses passing. It looks like with a short-term CR, tell me if I'm wrong, we might actually have a budget come together maybe early February. That's what Sarah Chamberlain from the Main Street Republican Partnership told us earlier today. I'm just wondering your thoughts specifically on DHS funding. Democrats want some language in that bill to address the way ICE raids, the way federal enforcement has been happening in cities around the country that might include body cams, for instance, or unmasking for some of these officers. What would you be comfortable with? Is there a deal in the works?
Well, let's remember that a lot of these ICE agents are targeted by organized crime rings called cartels. We seem to gloss over this all the time. But when ICE is enforcing, whether it's in Minnesota or Nebraska or in Texas, they are often dealing with organized criminals that are part of a Mexican drug cartel that put out, death threats and sometimes act on those things of these ICE agents. So, listen, we have to let law enforcement enforce the law. There are reasons that they do wear those masks. It is not to, it is to protect the safety of the officer and.
How about other than masks, though? How about cameras and training for de-escalation, for instance? Would those be palatable?
I would be, I will leave that up to the executive branch, but I do think cameras are a good idea. I think cameras have done a good job of protecting a lot of law enforcement from claims that are inaccurate. And when you talk to police officers, they say, hey, love the body cams. They've prevented a lot of bad things from happening. And in fact, when that officer was in that very tragic situation last week, he was holding his camera, videoing that. He should have had a body camera on so he didn't have to hold it up.
Right.
Republican Congressman Mike Flood of Nebraska, thanks for joining us late on a Friday afternoon. We appreciate you. And coming up, a group of bipartisan lawmakers met with their Danish counterparts today to push back on Trump's Greenland threat. We'll bring you the details on Balance of Power on Bloomberg TV and radio.
Bloomberg Invest, where intelligence meets capital. In the heart of the financial district, powered by Bloomberg's award-winning journalists, bringing together the market's most influential minds.
A big part of our job thematically is understanding the risk environment we're in.
We are facing a once-in-a-generation technological disruption.
We will continue to have a convergence in credit markets.
Liquidity at moments in time when there's a lot of volatility is challenging.
Bloomberg Invest, March 3rd and 4th in New York.
And I may do that for Greenland, too. I may put a tariff on countries if they don't go along with Greenland, because we need Greenland for national security. So I may do that.
It's Balance of Power on Bloomberg TV and radio alongside Joe Matthew. I'm Julie Fine. And that was President Trump earlier today floating the idea of slapping tariffs on countries who support Greenland amid his push to control the Arctic island. Yesterday, officials from both Denmark and Greenland were on Capitol Hill to push back on the administration's threats, and today members from both parties are returning the favor to reassure Danish leadership that any effort by Trump to take over the Arctic island would be met with strong opposition from Congress. Joining us now with the latest developments is Bloomberg's Copenhagen reporter, Sana Voss. Sana, thanks so much for being with us again. You wrote the story today about tariffs. Can you go into exactly what that would entail and what you're hearing?
I think it's a bit too early to say what it would entail. I mean, Trump has said he might impose tariffs on countries that don't support his aim to get Greenland. He's previously shown that he's willing to use tariffs as part of his foreign policy agenda. But he's also, made similar threats on countries that trade with Iran and hasn't followed through with that. But there's no doubt whether it's the threat of military force or economic measures, Denmark is worried because they say Trump, he means it seriously when he says that he wants Greenland.
You know, this is seen as a pretty significant breach for Republican lawmakers to get on a plane, cross the ocean, and address officials in Copenhagen to this extent. We spoke with a couple of them just this week, Tom Tillis and Chris Coons. They were strident in their language, a Democrat and a Republican. Bring us to Copenhagen and tell us what people are saying there when American lawmakers show up and say their president is wrong.
Yeah, I mean, obviously the Danes are very pleased to hear that they are getting all the support from U.S. Congress members. And the Danish officials have been around in Washington in the past few days speaking to Congress members, getting their support. They now met them in Copenhagen today. And of course, some of these members, senators are close to Donald Trump. And I think the Danish strategy here is really to try to get people close to Trump to convince him that to take a deal that doesn't involve taking control of Greenland, but something else.
So you think they're at this point nervous enough to say, okay, we've got to open lines of communication and figure out something that's going to work here?
It seems like the Danes and Greenlanders are willing to give Trump almost anything he asks, as long as it respects the clear red line that they've drawn, and that is to respect the sovereignty of Greenland. So Trump will not get to own Greenland, according to them, but they are willing to negotiate almost anything else.
Sana, we've been very lucky to have you here this week, and we appreciate your reporting. Thanks for joining us again. Sana Voss with us live in Washington, D.C. In the lead-up to today's CODEL to Denmark, we had a number of high-ranking senators, as I mentioned, join us on the program, all offering their thoughts on President Trump's push here, opposing this pressure campaign. Take a listen.
One of our most trusted and loyal allies in NATO saying that the future of this alliance that has kept us safe and secure and prosperous for 80 years, that is a staggering prospect. So this bipartisan and bicameral delegation is going to present ourselves in Denmark and Copenhagen to say we appreciate you, we value the NATO alliance.
I think that an illegal taking of another territory and from a sovereign nation and a member of NATO is just not good advice. And I'm going there to tell them there's at least one branch of government that stands with the NATO alliance.
Democrat and Republican singing from the same hymnal, and joining us now with their reaction, this evening's political panel. Republican strategist Lester Munson is with us, principal of the international practice at BGR Group, and look who's in Washington, Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano, democracy visiting fellow at Harvard Kennedy School's Ash Center. You dared come back to the swamp.
I couldn't let you have Julie all to yourself.
Thank you. I appreciate that. Yeah,
I'm glad you came for me.
One day to work with. Lester, welcome back to the table. I'm trying to figure out what's real here. Is this CODEL actually providing cover for the president so he can say whatever he wants in this pressure play, but we'll have a wink with Copenhagen knowing it's not real?
You know, I think that on the one hand, and on the other hand, I take Donald Trump at his word. One thing I feel like we've learned about Donald Trump throughout these many years is that when he's ruminating about something, particularly publicly and out loud, he usually tries to figure out a way to go after it. So do I believe he should do this? Absolutely not. Do I think there's a reason to? No. Is it a violation of international law, U.S. law? Absolutely. But have I completely discarded the idea he might try? Absolutely not. And I think the destructive impact on NATO and our European allies in particular is devastating for U.S. foreign policy.
How about members of his own party? Many are saying this is not a good idea. You just saw this right here. How do they do this right now, especially when you're in an election year and they don't want to upset the president?
Well, you got to be artful. You have to be a good political athlete. The president can be a challenging person to deal with. But I think most senators, who serve 6-year terms, not 4-year terms like the president, have a longer-term view. They see the importance of this relationship. They would like this to be worked out in a very amicable way. And so I think while Senator Tillis, who's retiring, maybe doesn't speak exactly like the rest of the Republican conference, he's actually pretty close to where a lot of them are.
Is NATO on the line as we hear, or are we pearl clutching when it comes to Greenland?
I would say that it's about half pearl clutching and about half a reason to be concerned. I'm not quite where Jeannie is on this, but the rhetoric's not great. The issue is a real issue. The president clearly wants to draw attention to this and wants to frame issues around this and wants to kind of drive a narrative here. And it does fit into his kind of Monroe Doctrine, Donroe Doctrine thing.
Jeannie, we're seeing a lot of Democrats say, okay, this is the president that talks all about America, but now he's focusing on foreign policy. Do you expect this message to just continue right through 2026?
I don't, because Donald Trump has really good political instincts. We know that. And if he is reading the same polls that we are, he's got to know that it is time to turn back to the U.S. and focus on issues like affordability, like immigration. That said, he really seems to enjoy his time on the international stage, but it is not good politics for him. So I suspect as the year goes on and we get closer to the midterms, he will turn his attention more clearly to health care and other things.
One of the more ironic turns this week is the president has considered striking Greenland, has talked about moving on Iran, a series of strikes that could be something much larger, even has toyed with Colombia, Cuba, and has had many wondering who or what is next. The president's got a Nobel Peace Prize hanging on his wall. This happened yesterday. He did not win it, but Maria Corina Machado, Venezuela's opposition leader, paid him a visit at the White House. They did not hold a public event, didn't have cameras or reporters at least in the room, but there was an official White House photograph the president put on social media showing it framed. He's got the medal, and he was asked about this today. Here's the president.
Yesterday, you accepted Maria Machado's Nobel Prize medal. What do you intend to do with it, and why would you want someone else's Nobel Prize?
Well, she offered it to me. I thought it was very nice. She said, you know, you've ended 8 wars, and nobody deserves this prize more than in history than you do. And I thought it was a very nice gesture. And by the way, I think she's a very fine woman, and we'll be talking again.
Shock, horror in Norway. That's completely unheard of, says Jane Matlery, a professor, University of Oslo, former politician, saying it is a total lack of respect for the award on her part, calling the act meaningless and pathetic. They say the award is non-transferable, Jeannie. Then why is he holding it in that frame?
I guess it's non-transferable, except if it's to Donald Trump. He's holding it. Listen, the framers thought about this. They gave us an emoluments clause to guard against foreign influence in the U.S., any kind of U.S. foreign policy. And what do we have? We have the opposition leader of Venezuela knowing our president enough to know he wants an award. I'll give him mine, and maybe I get back to the presidency. Disaster.
When you say the framers, I'm assuming you mean the founders, because somebody framed that thing so it could hang on his wall.
Should he keep it?
Look, the Norwegians gave the Nobel Peace Prize to Barack Obama basically just for showing up. So the idea that Maria Corina Machado can't share hers with Donald Trump, I find, maybe a little bit sideways. I think it says more about her than it does about him.
In a good
way. She is a very smart politician.
Yeah.
She is playing the long game in Venezuela. My money is on her. 5 years from now, she's probably going to be running that country.
Well, she obviously knows that he wanted a Nobel Peace Prize, and she thought she could provide it. She thought she could provide it for him, and hoping that he would provide her with some support. I think the question now is, did it work?
It's going to work, and I think they both know this. This is a long-term play in Venezuela. It's not going to be today. It's not going to be maybe even in the next year. But when there is an election in Venezuela, she will be in a very strong position, not just because of her own abilities, but I think because the Trump administration, particularly Marco Rubio, are setting her up to be the choice for the Venezuelan people in what will be seen as a very legitimate election.
It's a very unguarded moment on the driveway today when the president was answering questions from those reporters, and they said, well, what's the deal with how come this Nobel Peace Prize winner, opposition leader, winner of the election, at least by party, isn't in charge in Venezuela? Why Delcy Rodriguez? And he referred to Iraq. And he said, you remember what happened when they got rid of everybody in Iraq? And I'm wondering, when you consider the de-Baathification aspect, who is in his ear warning him against reliving that event?
Well, he's long said he doesn't want to get involved in turning over foreign governments and things like that. But let's take a step back. It is incredibly problematic that any decision about U.S. foreign policy would be made because an elected U.S. official decided they wanted an award. We have credible reporting from the Washington Post saying if the Nobel Peace Prize had gone to him, she would likely be there now. And we just heard Lester say she may be there pretty soon now that he's got she gave him the award because she knows he wants it and he'll give her something in return. Is that how we want to make policy now? Well, based on awards? Julie, save me here.
Jeannie, do you think that Democrats, though, at this point, should just be like, I'm not even going to pay attention to this, and I'm just going to stay on message?
Yes.
I mean, does this give them an opportunity to say, okay, you can all discuss this, and we're going to talk about housing and affordability?
Absolutely. Do they ever listen? Absolutely not, but they should. Affordability, affordability, affordability.
Maybe he'll wear it in Davos next week. Right around the neck.
He'll probably get like a bigger version of it, like have it remade like twice as big, and it will be more
As
dramatic.
important as this is, I have to stop this here. Lester Munson and
Flavor
G.
Flav.
Zano, thank you so much for being with us. We appreciate you being here on this Friday. And to learn more about all of these stories and more, make sure to check out the Washington Edition newsletter on the terminal and online.
It better be Friday. Thanks for joining us. This has been a week. All right, Julie, I'll meet you in Texas in 1 week. Don't tell anybody.
I can't wait.
We're coming down. Have a great long weekend. For those of you here in the U.S., Balance of Power will be back on Tuesday, and we'll see you then.
And he'll be back with boots.
This is Bloomberg.
Begin 2026 with a bold exploration. Drive home Honda Elevate ADV with bold looks, 360-degree surround vision camera and Ivy Tech performance. Also get benefits of up to ₹176,000. Hurry, offer available on limited 2025 stock only. Visit your nearest Honda dealership today. TNC apply.
News when you want it with Bloomberg News Now. I'm Jack Sidders.
And I'm Stephen Carroll.
President Trump has linked his desire for the US to own Greenland to not being awarded the Nobel Peace Prize. In a letter obtained by Bloomberg, Trump told Norway's Prime Minister, Jonas Gahr Store, that he no longer feels an obligation to think purely of peace. Our chief European correspondent, Oliver Crook, broke the news of the letter's contents on Bloomberg Radio.
It was addressed to Jonas Gahr Store, and I'll just read it here because it is fairly brief. Dear Jonas, considering your country decided not to give me the Nobel Peace Prize for having stopped 8 wars plus, I no longer feel an obligation to think purely of peace, although it will always be predominant. We can now think about what is good and proper for the United States of America. Denmark cannot protect the land from Russia or China, and why would they have, quote-unquote, right of ownership anyway? There are no written documents. It's only that a boat landed there hundreds of years ago, and it goes on from there. But really, basically, it seems that Donald Trump has now added another list of reasons why he feels the insistence and the importance of trying to take over Greenland and apparently not being awarded the Nobel Peace Prize is added to the list.
Oliver Crook speaking there after the US president on Saturday announced a 10% levy due to take effect next month and rising to 25% by June on 8 European countries, including the UK, Germany, France and Denmark. The move came after the nations committed to holding token NATO military drills in Greenland.
Well, news of the letter came as European leaders reacted with outrage to Donald Trump's threat to impose tariffs on countries that oppose his desire to own Greenland. US Treasury Secretary Scott Bessent says Europe's too weak to ensure the Arctic territory's security.
If there were an attack on Greenland from Russia, from some other area, we would get dragged in. So better now, peace through strength, make it part of the United States, and there will not be a conflict because the United States right now, we are the hottest country in the world. We are the strongest country in the world. The Europeans project weakness. The U.S. projects strength.
Scott Bessent's comments on NBC's Meet the Press came as European leaders forcefully pushed back against Trump's comments. The UK Prime Minister Keir Starmer blasted the tariff threat as completely wrong. France's President Emmanuel Macron called it unacceptable, and Swedish Prime Minister Ulf Kristersson said his country wouldn't be blackmailed.
Those EU leaders will hold an emergency meeting in the coming days to discuss possible retaliation to Trump's latest tariff threat. Member states are discussing several options, including levies on more than $100 billion of US goods. Meanwhile, French President Emmanuel Macron says the bloc should consider using its most powerful trade tool, the anti-coercion instrument. That would allow the EU to impose additional tariffs, new taxes on tech companies, or targeted curbs on investment in the bloc. Speaking on Sunday, Italy's Prime Minister Giorgia Meloni sought to cool tensions between the world's biggest trading partners after speaking to President Trump.
I think it is necessary instead to resume the dialogue on this to avoid an escalation from this point of view, and that is what I am working on. I spoke with Donald Trump a few hours ago, to whom I said what I think, and I spoke to the Secretary General of NATO, who confirms to me that NATO is starting to work from this point of view.
Despite Giorgia Meloni's efforts, Trump's plan to impose tariffs over Greenland calls into question the validity of the trade deal sealed last year between the EU and the US. That deal has already been partially implemented, but still needs approval from the European Parliament, which is now likely to halt the process.
An escalation of transatlantic tensions could risk a major market fallout, according to Deutsche Bank. Their global head of FX research, George Saravelos, notes that Europe is America's largest lender, with its countries owning $8 trillion of US bonds and equities. Emily Benson, head of strategy at Minerva Technology Futures, says the EU's response could prove challenging for the United States.
The European Union is considering what's called the anti-coercion instrument. It provides the European Union with very broad latitude to take a series of measures in order to protect itself against any coercive economic behavior. A couple of measures that it could invoke, for example, include a series of measures aimed at large U.S. tech companies. And here, I think a lot of people in Washington are underpricing the actual risk that this has for U.S. dominance.
Minerva Technologies' Emily Benson speaking there. Global stocks have been falling on the news as the dollar weakened against most of its major peers, while demand for haven assets pushed gold and silver to new record highs.
The annual gathering of the world's business elite in Davos is set to be dominated by Donald Trump's rewriting of the global economic order. Bloomberg's James Wilcock has more.
The Davos Summit's theme this year is a spirit of cooperation. The irony was noted by former UK Prime Minister Rishi Sunak, who told Bloomberg the old order is gone. He added, "These are the most dangerous times in living memory, but also the most transformative." You can see that change reflected in the World Economic Forum's agenda. In place of conversations about climate change and diversity, expect the gathering to now focus on AI, deal-making, and above all, the presence of President Trump. In London, James Woolcock, Bloomberg Radio.
At least 39 people have been killed and dozens more injured in a high-speed rail crash in Spain. The crash occurred between Madrid and Malaga after a train derailed and jumped the track. Speaking as details of the crash emerged, Spanish Prime Minister Pedro Sánchez offered this message of condolence.
Tonight is a night of profound grief for our country. I would like to express my deepest condolences to the families and loved ones of the victims. No words can alleviate such great suffering, but I want you to know that the entire country stands with you during this difficult time.
Spanish Prime Minister Pedro Sánchez there speaking via a translator as the country's transport minister said all survivors have been recovered. Well, those are your top stories on the markets. We're looking at the Stock 600 down by 1.2%. The CAC 40 in Paris 1.6% lower. The DAX in Frankfurt down by 1.4%. Particular pressure on car makers. BMW shares down by 4.7%. Volkswagen 3.8% lower. Stellantis down by 3.2% in trading this morning. Also pressure on the luxury groups too. 3.5% lower for LVMH. Kering is down by 2.8% in trading today too. We're looking at the Bloomberg Dollar Spot Index, a 0.1% weaker now. So some of the earlier weakness has been eroded as the euro is trading 0.2 stronger at 116.20.
That's news when you want it with Bloomberg News Now. I'm Jack Sidders.
I'm Stephen Carroll, and this is Bloomberg.
ये क्रूड ऑयल का जो ट्रेड है ना, इसमें निकल जाओ, ये कॉस्ट टू कॉस्ट पे निकल जाओ इस ट्रेड में। मुझे लग रहा है शायद एक न्यूज आई है, नॉट गुड, काइंड ऑफ नेगेटिव और बेरिश फॉर क्रूड ऑयल। यूरोपियन मार्केट एंटिसिपेटेड सिग्निफिकेंट डिक्लाइन ऑन मंडे फॉलोइंग ट्रम्प टैरिफ। ठीक है, एक बेरिश न्यूज़ थोड़ा सा मुझे लग रही है, शायद प्राइस को थोड़ा और डाउन डाल सकती है। ये क्रूड ऑयल का जो ट्रेड है बाइंग का, इसमें से एग्जिट कर लेना। ठीक है, एग्जिट फ्रॉम दिस ट्रेड, ये बाइंग वाला जो थोड़ा सा ट्रेड मिला है, कुछ गया नहीं खास ऊपर वैसे। ठीक है, जस्ट 27 पॉइंट टारगेट टारगेट कुछ नहीं मिला इसमें बाय द वे, बट इसमें से निकल जाना। एग्जिट फ्रॉम क्रूड ऑयल बाइंग ट्रेड, इसमें से निकल सकते हैं। ठीक है, डोंट होल्ड दिस, द न्यूज़ इज bearish फॉर क्रूड ऑयल, एक्सपेक्टिंग अ मोर सेल ऑफ फ्रॉम here। थोड़ा सा मुझे लग रहा है शायद प्राइस और डाउन जा सकता है इस पर्टिकुलर लेवल से। कैंडल भी ओपन इक्वल टू हाई ही बनी है। Iraq announces the complete withdrawal of US forces from its territory। क्रूड ऑयल में ये बाइंग के ट्रेड से निकल जाना। ठीक है, एग्जिट कर लेना, बाइंग का ट्रेड एंड हो गया ये। एग्जिट फ्रॉम क्रूड ऑयल, दिस बाइंग ट्रेड, इस क्रूड ऑयल के बाइंग के ट्रेड से एग्जिट कर लेना सब लोग। ये ट्रेड यहीं पर कंप्लीट हो गया, इसमें अब कोई ट्रेड नहीं है। न्यूज़ थोड़ा सा बेरिश लग रही है, प्राइस हो सकता है थोड़ा फॉल करे, हो सकता है चला जाए ऊपर की साइड, बट न्यूज़ की वजह से थोड़ा सा मुझे लग रहा है बेरिश ही होना चाहिए। प्राइस को थोड़ा सा और फॉल करके डाउन जाना चाहिए अब यहाँ से, एटलीस्ट 5300 के अराउंड। वहाँ पर देखते हैं कुछ बाइंग आती है तो। यहाँ पर मेरा जो ट्रेड था वो निकल दिया है। ठीक है, सो देर इज़ नो रनिंग ट्रेड इन क्रूड ऑयल राइट नाउ। में था, थोड़ा बहुत प्रॉफिट चल रहा है, लेके निकल जाओ, नहीं तो वैसे भी एग्जिट कर लो उससे। न्यूज़ इज somehow bearish for price, looks like bearish for new price। Expecting next liquidity will find over here। तो जो बाइंग का ट्रेड था क्रूड ऑयल का, उससे एग्जिट कर लेना। कॉस्ट टू कॉस्ट पर ही है, या थोड़ा प्रॉफिट भी चल रहा होगा तो। न्यूज़ आई है, बेयरिश ही है, सो आई एम एक्सपेक्टिंग प्राइस टू फॉल एटलीस्ट 5300। उस एरिया के आसपास फिर से वापस एक बाइंग का प्लान करेंगे, बट नॉट ओवर हियर। इस ट्रेड को होल्ड करना रिस्की है बहुत, सो उसमें से एग्जिट करो। थोड़ा नीचे आएगा तो फिर देखेंगे वापस, बीच से रिवर्स करता है तो लेट इट गो। से निकल जाना। क्रूड ऑयल में जो यहाँ पर एक बाइंग का ट्रेड लगाया था उससे निकाल दिया है लेवल। न्यूज आई थी, थोड़ा सा बेरिश ही है वैसे तो। देखना पड़ेगा। मेरे अकॉर्डिंग थोड़ा प्राइस नीचे आ जाए पहले तो बेटर है न्यूज़ की वजह से। इस लेवल पे होल्ड करना मुझे नहीं लगता अब सही है। सो वो रनिंग ट्रेड निकाल चुके हैं। थोड़ा सा प्रॉफिट चल रहा था उसमें, ज़्यादा नहीं। उसमें कोई टारगेट वगैरह हिट नहीं हुआ था, बट अगर उसमें अभी भी रनिंग में हो तो निकाल दो। थोड़ा बहुत प्रॉफिट भी चल रहा है तो भी मेरे अकॉर्डिंग तो हो सकता है पुल बैक आ जाए, बट इस लेवल से है वहाँ पर थोड़ी बहुत लिक्विडिटी, बट बिकॉज ऑफ दैट न्यूज़ नाउ आई एम नॉट इंटरेस्टेड इन दिस लेवल। ठीक है, या तो प्राइस थोड़ा नीचे आए या फिर अगर ऊपर जाएगा तो फिर 5460 के अराउंड देखेंगे वापस सेलिंग।
EU leaders who are coming. We're waiting.
That guide us, even as circumstances change. The United Kingdom has a long history. Our values were not improvised. They were built patiently over time. And while we are pragmatic in how we pursue our interests, we are resolute in defending those values when it matters. So let me begin with the United States. The UK and the US are close allies and close partners. That relationship matters profoundly, not just to our security, but to the prosperity and the stability that people here depend upon. Under President Trump, as under previous presidents, we're determined to keep that relationship strong, constructive, and focused on results. And that approach is delivering. Through sustained engagement, we've seen significant US investment into the UK economy, running into hundreds of billions of pounds, supporting growth, skills and jobs right across the country. Our cooperation on defence, nuclear capability and intelligence remains as close and effective as anywhere in the world, keeping Britain safe in an increasingly dangerous environment. We've secured good trading terms in key sectors, including cars, steel, aerospace and life sciences, protecting British jobs and manufacturers. That is why we take the approach that we do, because it delivers concrete outcomes in the national interest. I talk regularly to President Trump, and my team is in daily contact with all the key figures in his administration. These relationships matter. They deliver concrete outcomes in the national interest. Mature alliances are not about pretending differences don't exist. They are about addressing them directly, respectfully, and with a focus on results. On Greenland, the right way to approach an issue of this seriousness is through calm discussion between allies. And let's be clear, the security of Greenland matters. And it will matter more as climate change reshapes the Arctic, as sea routes open and strategic competition intensifies. The High North will require greater attention, greater investment and stronger collective defence. The United States will be central to that effort, and the UK stands ready to contribute fully alongside our allies through NATO. But there is a principle here that cannot be set aside, because it goes to the heart of how stable and trusted international cooperation works. And so any decision about the future status of Greenland belongs to the people of Greenland and the Kingdom of Denmark alone. That right is fundamental, and we support it. Denmark is a close ally of the United Kingdom and of the United States, a proud NATO member that has stood shoulder to shoulder with us, including at real human cost in recent decades. Alliances endure because they're built on respect and partnership, not pressure. That is why I said the use of tariffs against allies is completely wrong. It is not the right way to resolve differences within an alliance. nor is it helpful to frame efforts to strengthen Greenland's security as a justification for economic pressure. Such measures hurt British workers, British businesses, and the British economy. And that is why I've been so clear on this issue. A trade war is in no one's interest, and my job is always to act in the UK's national interest. That is why yesterday I spoke to President Trump, to European leaders, and to the Secretary-General of NATO to find a solution rooted in partnership, facts, and mutual respect, because that is how strong alliances protect shared interests. The same is true on other issues. In the Middle East, we welcome President Trump's focus on sustaining the ceasefire in Gaza and moving on to phase 2. We are open to participating constructively in such efforts. On Ukraine, I can be brief. We strongly support efforts to bring the killing to an end and secure a ceasefire as soon as possible. We recognise President Trump's role in pushing that process forward, and we will work closely with the United States, Ukraine, and our other allies to apply pressure where it belongs on Putin. Finally, let me say why all this matters so directly to people here at home. In today's world, geopolitics is not something that happens somewhere else. It shapes the cost of energy, the price of food, the security of jobs, and the stability that families rely on to plan their lives. When war drives up fuel prices, it's households who feel it first. When supply chains fracture, it's small businesses and working people who absorb the shock. And when instability grows, it's rarely those with the most power who pay the price. That is why this government's approach is rooted in a simple belief that we must use every tool of government, domestic and international, to fight for the interests of ordinary people. At home, that means active government. It means taking responsibility for economic stability so that inflation is controlled, interest rates come down, and family budgets are protected. It means stepping in where markets fail, strengthening resilience, and ensuring that global shocks do not always land on the same people in the same places, the people least able to withstand them. That's why we've taken action to reduce energy bills, to freeze rail fares and prescription charges. But tackling the cost of living today also means engagement beyond our borders. It requires shaping the world around us, not retreating from it. It requires strong alliances, steady diplomacy, and rules that reduce uncertainty rather than amplify it. That is why our commitment to international law and to alliances founded on trust is not abstract or ideological. It's practical. It's about stability, predictability, and fairness. The conditions that keep prices down, jobs secure, and economies resilient. That is what active government looks like in an age of uncertainty. Steady at home, engaged abroad, and always focused on protecting the people that we serve. Britain is a pragmatic country. We look for agreement. We believe in partnership. We prefer solutions to slogans. And we will not indulge in commentary and gesture politics that harm the British people. But being pragmatic does not mean being passive. And partnership does not mean abandoning principle. That is why it's important to be clear about who we stand with, what we stand for, and where our interests lie.
Well, that was the UK Prime Minister Keir Starmer speaking there at Downing Street, calling for calm discussion between allies and Greenland. I have to say, we have been trying to get to delegations that will come here in Davos, and calibration is everything when dealing with some of the threats that Donald Trump has been putting in place. We also have some breaking news out of Japan. The Japanese Prime Minister, Takeshi, will call an election for February 8th. So, again, that's something else that we need to watch for, and that's in just 2 to 3 weeks from now. Let's turn back to the world of banking. HSBC has just gone through its biggest restructuring in at least a decade, which has seen the bank retreat from its investment banking operations in Europe and the Americas in order to focus more on Asia and the Middle East. Well, joining us now is Michael Roberts, Chief Executive of HSBC Bank and Chief Executive of Corporate and Institutional Banking. Michael Roberts, thank you for joining us.
Wonderful to be here.
I got to start by saying let's go back to banking, but at the same time, you also have to straddle and understand and navigate some of these geopolitical tensions between China, between DC and Europe. So what's the most complicated thing for you right now?
Probably the pace of change. As you said, every week there's something else that you have to factor into how we run the business. Look, we've been around for 160 years. We're pretty good at this. We've managed through several world wars. We've managed through lots of geopolitical tensions. So, and we're a very strong institution, very large balance sheet, lots of liquidity, fortress balance sheet as well. But I do think it's the pace of change and how we help our clients navigate through that pace of change.
Will tariffs be different in 2026 to 2025? It seems that, we were very worried about what tariffs would do. I'm sure a lot of clients were calling you up saying, how do I navigate this? They're changing the supply chains. Then we forgot about it, saying, okay, we're over the worst, and now they're back at the forefront.
Yeah, no, you're right. In fact, I was amazed at how resilient the supply chains were. I mean, all the Liberation Day chaos that came afterwards, and I was, in fact, traveling then, and there was nothing but
calls.
Yeah, exactly right. And so now people, to your point, got used to it. I think the supply chains have been reordered a bit. I think, in fact, trade last year was up, which most people don't realize. It's $37 billion. It was up by $2.5 billion. Trillion, sorry. And you could see that what was happening, people just got used to it and accepted the fact there was going to be, on average, 15 to 70% tariffs. Now, this is yet more surprise, more chaos, more unpredictability, I think, put into the system. This one, however, is not just a Liberation Day. This is obviously politically driven, and that's a little bit different.
What's the risk to HSBC and the wider banking sector?
Look, I think, again, the risk are really more for our clients. It's not a big risk for us. I think we'll be able to get through it. It's really trying to help clients who, in particular European clients, who sell into the United States, because this is all levied against, of course, European countries. And that's going to be challenging for them. They've accepted the 15% tariff, although, of course, those negotiations seem to be stalled. And then on top of this, whether it's 10 or up to 25, it's quite a lot. And so for them, most of whom have very sizable operations in the U.S., that tends to be the largest operations outside of the home market, sometimes even more than the home market. Think of the Swiss companies here. So I think it's going to be quite a challenge. And so we'll try to help them figure that out. It stresses cash flow. It stresses just revenue, in a time where, debt is rising in most corporations around the world. That could be problematic as well.
Michael, HSBC shares now trading around all-time highs.
Yeah, we like that.
How higher can they go?
I hope a lot higher. So, no, we're very pleased with the progression in the share price, and I think it reflects, as you mentioned earlier, the transformation that we went through. It's really paying the dividends we thought. As George has said many times, we're going to hit the numbers we've told the street, and they could see that not only is this an efficiency play, which it was, it really is making HSBC it's a better organization, more agile, more customer-centric, less complex, which was always really the challenge for HSBC. And so we hope, I don't know where it's going to go. I hope investors see the value and the benefits, and it keeps going up. I think there's more buy than sells, which we love to see. So we hope it goes much higher.
I mean, you must have celebrated in December. I think you became a £200 billion bank.
We did. And
now we're $300 billion next?
I'm hoping so, yeah. And I think that's the trajectory. I mean, if you could see, to your point, from 200 to where we are today, 266, 270, to get to 300 is so certainly within reach. And that's where we want to be. We are one of the most important global banks in the world. We operate in 55 countries, $3.3 trillion worth of balance sheet. That really, in our opinion, given where we think we can generate the profit, really deserves a much higher rating.
Is that it for restructuring?
I think we've gone through much of it. You know, there's some trailing issues we're going through, which is always the case, but the bulk of it, yes. And the CIB, which I manage, is the largest part of that restructuring. And I could say we've gone through a very, very quick organizational change for such a big organization. That was the focus. Very intentionally did we want to go through a quick series of changes because we did not want to drag it on. Bad for clients, bad for employees, bad for everyone. And so the bulk of that is certainly done.
I was going to ask actually about morale. So is it better just to get done quickly so that then people feel better? And so how's morale right now?
Look, I think morale has rebounded. And I think George has said, you know, that toughest thing is to say goodbye to some very long time colleagues and friends. That's been done. That was done early in the process. So we can really safely say we're looking really to the future. And I think that is what builds better morale when people know the transformation's over. But I think they're very excited, actually. They're excited about the pace we've used to change the organization. They're excited about the direction, excited about the stock price. They're excited about some of the things we're doing, which really, I think, paint a very positive picture. But they don't like the uncertainty. And so that's why we went so quickly is to get rid of that uncertainty.
Michael, talk to me a little bit. I mean, here we have a lot of U.S. tech firms,
right,
and we talk a lot about AI. Talk to me about quantum tech and how you're expecting that to transform HSBC.
Yeah, you know, we have a joint venture with, or a joint initiative with IBM, really to develop quantum computing, which we did sort of as initially to look at how we could match buyers and sellers in the bond market, right, and to give better accuracy and how the predictability on where we should actually try to sell our bonds. It actually did improve it. Now, so it's just a first initiative, something that we think has value, because I do think quantum computing will become more and more a part of how banks trade. It's a big part of how we manage our cybersecurity, by the way. So it's already embedded in our cybersecurity, but now we're taking to more of a revenue generation type of activity. It's a first, so I don't want to get too excited about it. We have more to do, but we were very excited with the results, and you know, IBM's been a great partner in that as well.
Michael, I mean, if this is successful, like how large could it be? Like how much of a transformation could this actually be for HSBC and the sector?
Yeah, I mean, if you think, without doubt, most trading will be on a tokenized basis, it will be on an AI basis. You're just adding a layer of quantum computing to make it that much more efficient. So trading of all asset classes, I mean, none will be immune. It's going to go through a fundamental change, and I think probably after AI and after tokenization, you'll see quantum come.
What are you expecting from AI?
AI will be quite significant. So I think you'll see, you know, we do a lot of algorithmic trading already. Yeah. I think, you know, you'll have agents to agents start doing trading in the not too distant future. I think you'll look at different asset classes. Again, none are immune from that. And I do think it will speed up trading. I think it will make it more accurate. I think it will quickly become the way that most firms trade. And so we're in the process, like I'm sure many institutions, are really embedding that into our trading.
Yeah, are staff anxious about it? Because it feels like when you speak to a lot of employees, they're worried that their job will disappear.
Yeah.
And so I don't know how you manage that.
I think it's a bit of both. Yeah, and we need to show that it's not just about, you know, staff reductions or staff efficiencies. It's really about us being more efficient in general, serving clients better. I think it's about us really using the capacities that we create through AI to allow staff to do other things. And banks are built on process and procedures. I mean, they're the perfect, you know, user of AI going forward. And I really hope we can just free up all that time. And I don't think it'll lead to massive layoffs. I don't think it'll lead to massive change in how we do things, other than us to make it more efficient. For instance, our bankers today spend too much time on administrative details. Right. If we can free up that time, I could put them more to work going to see clients, really bringing value to those clients.
And Michael, for the next couple of years, I mean, do you see these are huge investments, right?
Yeah.
So you have to upgrade systems, change systems. Does that mean that you'll hire a little bit less, that there's less young staff coming in?
Yeah.
You know, until the cost adjusts?
You know, like, I think that's a great question. And that's one that I personally am very focused on. We are an apprenticeship culture. So you have to bring in younger people to give them the tools, the experience to do well. So I think there's going to be a lot of balance in between then. Yes, you could take one road to say we're going to just maximize efficiencies, not hire anyone, save a bunch of money, and plow it back in AI. Certainly there will be some of that. But at the same time, we really need to focus on making sure we bring in the young people to build for the future. And so there's going to be a lot of balance between the two.
Michael, thank you so much for joining us. Michael Roberts there, the Chief Executive of HSBC Bank and Chief Executive of Corporate and Institutional Banking. Now, that's it from me.
Long time now with.
I never have changed my show to make it for YouTube. I'm very conscious of the fact that ABC pays for the show and YouTube pays nothing, and YouTube gets to sell it and keep half the money, and that's quite a deal for them. It really is. But I've never made the show for YouTube. With that said, I love YouTube and I love being on YouTube because all you really want deep down is for as many people to see your stuff as you can. And I know that it has hurt because it is so easy to watch the monologue on YouTube now. I know that it has hurt the ratings, not just for our show, but all of the shows. And maybe that's kind of what has killed late night TV. More likely the fact that we have our lead-ins are a tenth of what they were when I started.
I was alarmed to see that the most watched video from your show had fewer views than the average Mr. Beast video. And I don't know what that says about the state of the world, but...
I think it says Mr. Beast is kicking is what it says, yeah. Well, you know what? There is a big difference. When you do the show every night, you're not going to get as many views. But we still, I mean, I woke up this morning, there were 2.2 million views of my monologue the night before. So for everyone who says late night is dying, it's just not true.
Welcome back to The Pulse, live from Davos. I'm Joanna Bersacci, filling in for Francine Lacroix. President Trump's visit to the World Economic Forum in Switzerland this week is set to be nothing short of dramatic, with the agenda likely to be overshadowed by a new tariff threat sparked by his pursuit of Greenland. Shortly, we'll go out to the Copenhagen bureau chief. But first, let's hear from InvestCorp's executive chairman, Mohamed El-Ardi, about global uncertainty and finding value in the U.S.
Obviously, uncertainty is there, but I think we look at value everywhere, and there is value everywhere in pockets. You know, in the United States, for instance, I think what's going on in terms of the stimulus, in terms of the focus on technology and AI, some of the things that made tax codes permanent is really helpful for business, but also the approach about looking at affordability. All these things are to make good business and investment environment. So basically, we see value everywhere in pockets.
Do you think private capital is going to play even more of a stabilizing force over the next couple of years as countries have to deal with the rise of protectionism and look inwards?
I believe so. I mean, as you know, InvestCorp has always really been a bridge for private capital from the Gulf outside and from outside the Gulf inside. And it's a patient, it's, I think, capital, it's something that really reduces volatility. Especially in times when you do need patience with capital. You do need thoughtful processes in ensuring that you invest through crises and cycles.
Yeah, so you're a homegrown Middle East investment fund, and I'm curious to hear how you see the opportunity set right now in the Gulf. I mean, you have countries like Kuwait also looking to open up as well. I mean, how are you seeing the opportunity set specifically in the Gulf? You've been there a really long time.
So we look at the Gulf as really an ecosystem for us. It is definitely a very compelling long-term investment market in this global economy. I mean, you have clear policies, you have sovereign balance sheet that is really strong, you have you have capital, you have huge economic transformation agenda.
That was the InvestCorp Executive Chairman, Mohammed Al-Ardi, speaking to me earlier. Now, thousands of people have rallied in Denmark's capital over the weekend, protesting Trump's aggressive stance towards Greenland, shaking the foundations of the NATO alliance after he pledged a barrage of new tariffs over his ambitions for the islands. Let's bring in Bloomberg's Copenhagen bureau chief, Sarah Solen. Keeping a close eye also on the reaction from Europe, because just a short while ago we were playing some live images of the UK Prime Minister Keir Starmer giving an emergency press briefing over the situation in Greenland. Obviously, that has been super topical over the course of the weekend. But now we are seeing demonstrations being held in both Copenhagen and in Nuuk. What has been the reaction of the people on the ground?
Well, it's just been, the last few weeks has just been shock and anger, upset, bewilderment. A lot of people don't really understand what all this is good for them. They're uncertain whether we can find an end to this stalemate. Now we have the tariffs. It just feels like this Kafka nightmare where it never really ends. I went to the protest on Saturday in Copenhagen, and there were more than 20,000 people out there to protest against the U.S. And what really struck me when I talked to the local Greenlanders and hearing the speeches from stage is that people are actually really scared. Maybe not so much here on the ground in Denmark, but they were concerned for the relatives in Greenland. The Greenlanders are scared. A lot of them have trouble sleeping. Some of them are being flown to Denmark for psychological help. It's a country that's already really have a difficult history, and now they feel like the boundaries have really been overstepped again.
When we talk about the U.S. military presence in Greenland, what are we seeing actually in terms of boots on the ground there? German soldiers have left, but Canada are considering sending their own now?
Yeah, Canada is considering sending some soldiers to Greenland. They're quite close by, there's a proximity, but it's quite significant if we're going Canada to send some troops there as well, because that would be the first non-European country to really show support here. The Greenlanders really, really welcome all this NATO presence, but they will, of course, they like to see more. They want to feel more safe.
Sarah, thank you so much. Sarah Solen, Bloomberg's Copenhagen bureau chief, right at the heart of it, a major story that we've been following over the course of the weekend and this morning. Now, former Bank of Portugal Governor Mário Centeno has told us monetary policy should act as a stabilizer amid heightened tensions between the EU and the US. Centeno, who is a candidate for the European Central Bank's vice presidency, spoke with Anna Edwards and Tom McKenzie on the opening trade.
I think European Union institutions will increasingly be called upon to act as a stabilizing actor. And this very much applies to the European Central Bank and to monetary policy. It would be great if Europe can continue this coordination of policies that we achieved in recent years, because really the challenges are very, very big.
Okay, so monetary policy should act as a stabilizer, you think, Mario. What if European politics dictates that the Commission responds with retaliatory tariffs? How should monetary policy respond then?
Well, you know, we have a mandate, which is price stability. Some of these policies and the shocks that we are facing, they have an impact on prices. So the best thing that could happen for all of us would be to each dimension of economic policy to do exactly what is expected for it to do. So monetary policy should continue to look for price stability. This is our mandate. But we do understand that it's very important for us to keep that in mind, that the coordination of policies helped us a lot to go through the COVID and inflation crisis. And these challenges that we face today are not smaller. So we need to, expect that this, how I put it, the stabilization anchoring from policy can really be on the table.
That was Mario Centeno, Portugal's former central bank governor, speaking to us earlier. All right, let's take you back to Downing Street now, where the UK Prime Minister Keir Starmer is still speaking on Europe's response to Donald Trump's threats of tariffs over Greenland.
Well, Andy, I don't agree with that assessment because taking the approach we've taken has yielded hundreds of billions of pounds of inward investment into the United Kingdom. That's hugely important for our economy and for jobs and businesses and the economy more generally. We are involved on a daily basis when it comes to security, defence and intelligence sharing, daily, 24/7, in relation to the interaction on intelligence between the US and the UK is the closest relationship of any two countries in the world. And that keeps us safe in ways I can't explain to you. But I can say very clearly it keeps us safe and is vital to every single person who lives in this country. And of course, before we got to the better trading arrangements on cars, on pharmaceuticals, etc., many people were urging me not to take the approach that we did, but we did take the approach we did and we got better trading terms. And that's why I'm taking the approach I am to this situation, to ensure that we focus on what's in our national interest. Thank you, Andy. And I've got Peter Walker from The Guardian.
Thank you.
Peter.
It's been widely reported this morning that the Norwegian Prime Minister has received a message from President Trump, basically saying the President is peeved because he didn't get the Nobel Peace Prize. Whilst I'm sure everyone watching this will fully understand why there is a need for the UK and US to kind of keep collaboration and links so close, can you understand why some voters look at what President Trump does and says and think, are we actually serious? Can we actually get anything from him? And if I may, I know that no policy has been announced yet, but from a personal point of view, do you think it would be a good idea for social media use to be restricted for younger people?
Yeah, just I completely understand why what President Trump said about tariffs over the weekend has been so badly received in this country. I completely understand that. And I think that's understandable. And it's important that that is met with me setting out, as Prime Minister of the United Kingdom, what our principles and values are in response to that. And not pretending that we don't have differences. Because strong, respectful alliance.
Well, you're listening to part of the press conference, an emergency press conference the UK Prime Minister Keir Starmer has been holding this morning to talk about some of the new threats to Europe, to European allies, and obviously the threats over Greenland. But today's big take is called Survival of the Richest, Trump's Chaos Sets Off Rush to Davos. It's co-written by our chief Wall Street correspondent, Srinath Rajan, who joins us now. You know what's interesting about all of this is despite the setup going into this week and the fact that there is going to be a big focus on the U.S. delegation, it is also a record number of people who are showing up to Davos this year. Over 3,000 world leaders. I think 6 out of the G7 leaders are also showing huge number of executives as well. And I guess partially some of that is because they do want to be in President Trump's good books.
Well, you can be rest assured that chaos always prompts interest, but it's fair to say that even before the start of the year and even before some of the most disruptive events that we've already seen in January, we had a lot of people who had signed up to come here this year because President Donald Trump had signaled very early on that he will be present in Davos in person for the first time in 6 years. And that certainly meant that a lot of CEOs signed up to come, a lot of heads of state signed up to come, because what we know is no one can predict the nature and the action of the step being taken by the U.S. administration, but what they want to do is make sure that they're part of the economy of access, because that seems to be super critical. We've seen that in the first year of Trump 2.0, and we know that there are still 3 more years of this to go.
Yeah, sort of an evolution of sorts to the relationship between the executive community and the president. You cover Wall Street executives very closely, and I think it's interesting that in the past couple of weeks also the industry has rallied behind the independence of the central bank. I mean, to what extent do you think that could pose somewhat of a barrier between President Trump and Wall Street in the months ahead, or is it something that actually Wall Street are willing to look past at this point?
I take the flip side of that. I would say minimal barrier, because the nature of the comments has been very moderated, has been very controlled. No one's really going out and ringing the big alarm bells. Yes, when they're asked about it, they're obviously saying that they believe in the independence of the Fed.
Yeah.
But if you actually think about the actions, think about what's happening back in the US, the fact that Fed Chair Jerome Powell has been served with a subpoena, that there is potential legal trouble that he's in that could leave him in real deep trouble, and yet the nature of the comments has been more controlled, which almost tells you that corporate America has realized that there is no upside in going up against President Donald Trump in a loud fashion. They will make their noises and they will express their policy disagreements on narrow issues, but as a broad-based corporate bloc, they're not going to rise together as one to combat this administration or even express their disapproval of actions that they in their bones truly believe to be wrong.
Yeah. Well, I highly recommend to everyone to take a look at today's Big Take. It's on the terminal, as Sri Natarajan, Bloomberg's chief Wall Street correspondent, co-authored the piece. Well, coming up tomorrow on The Pulse, Francine will be joined by JP Morgan's Philippe.
On The Pulse.
Markets like oil, you got the short, 2 weeks ago it was 230 million barrels short, bigger than what the glut is that's floating out in the South China Sea in these dark fleet ships. So the market going in is record short. Demand is not slowing down, it's picking up, and geopolitical risk is at, I would say, an all-time high. That's a recipe for a spike in prices right now.
Where do you see the next risk?
Basic commodities and affordability, starting to put pressure across the interest rates and everything like that. And the curve is beginning to steepen on the yield curve. And then you got to ask, as the yield curve begins to tip out and you start to see higher interest rates further out on the back end, are people going to be willing to sell these commodities? It starts to become even that much more riskier as your underlying cost structure of the economy changes and a re-rating of real assets.
It's like a shock.
It's a shock.
Don't miss The Pulse, live every weekday.
Governments make the commitment for net zero. Companies have begun to do the work of looking down their supply chain. I'm not sure. I think that while there isn't the intense activity around accelerating ESG, it is not a stop. In fact, I wouldn't even say that it's a pause. I think it is a, how do we do it in this current environment? I mean, it's only 3 short years that Thailand hosted APEC, and the thematic from that APEC to subsequent ASEANs to so many of the bilateral engagements that we've had is really, how are we going to do this just transition? How are we going to transition our economies from energy systems to data systems in a way that's going to get us to a net neutral world, right? I mean, a net zero world. I don't think that that's going to change. I think that there are adjustments to this. All the companies that I've been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going. And if you look at policies, like in Europe, they've got CBAM, right? I mean, the carbon border adjustment. Different governments have put forward commitments to getting to net zero. And I'm not seeing any giant signal around the world that is saying, let's stop doing this, right? I mean, so if that signal is still there, that is actually, I think, one area of predictability for businesses and investors, that is still directionally where we're going.
Welcome to Bloomberg Markets. It is 10 a.m. in London, 5 a.m. in New York. US markets are, of course, closed today for the Martin Luther King holiday. I'm Anna Edwards with this special edition of Bloomberg Markets Live from London. Here are your top stories. Coming up, Trump reignites a Europe trade war over Greenland as the EU weighs retaliatory measures. China's growth flashes warning signals as consumers pull back and deflation deepens. And we're live from the World Economic Forum in Davos with the CEO of the Qatar Investment Authority. We'll discuss sovereign wealth, the world economy, and the biggest risks shaping markets. Thinking about how those risks are shaping markets, let's have a look at how European equity markets are coping today, 2 hours into their trading session, and very much on the back foot as a result of President Trump's threats around trade tariffs. The stocks Europe 600 then down by 1.3%, the CAC 40 down 1.5%, a lot of luxury names, a lot of auto names in negative territory as a result of the tariff fears. We're also watching Scandinavian stocks in particular being hit pretty hard. Very few areas of green when it comes to equities. Let's have a look at fixed income markets, and through the Asia session we certainly did not see the fixed income markets acting as a haven. We saw yields going higher in Japan. That's a different political story, one we'll deal with as we go through this week, no doubt. But this is a picture for European bond markets. Of course, we don't have US bond markets trading today. We won't do because of the holiday. The UK 10-year yield pretty unmoved, as you can see. We are seeing some buying of the French and the German bond markets, but not a huge amount given the risk-off we're seeing in stocks. You might have expected to see more. Let's have a look at some commodities for you. We've got new highs on gold, new highs on silver. All of this very much illustrative of the doubts around fiat currencies, the flight into safe havens on days such as today. We do see the dollar on the back foot, and we see the euro showing some strength, up by 0.2%. But in precious metals, that's what we have right now. Copper is interesting, up by 0.6%. Actually quite a mixed picture when it comes to some of those metals. We have a mixed picture coming out of the Chinese growth story, and that's sending copper and some of the other metals in different directions, plus the dollar effect is having an impact in some cases. Let us get some of the stocks that we are focused on this morning. Here's Chloe Melly with a briefing. Chloe, good morning.
Good morning, Anna. Bayer is in the green today because the U.S. Supreme Court agreed to review its appeal related to lawsuits against its Roundup weed killer, which has been accused of causing cancer. So this is really positive for the company because this would mean that some of thousands of those cases could be thrown out because they could lose their legal footing, and so that means less risk of settlement for Bayer, and therefore this is really driving the shares this morning. We are up more than 6%. Moving on to automakers, which are not having as good of a day today. They are all in the red because of this latest threat on tariffs from Trump. The tensions between the US and the EU are really escalating over Greenland, and car makers, which are a sector that is particularly exposed to tariffs, to global trade, are really caught in the crossfire, and we are seeing BMW in particular very, very weak this morning. And finally, LVMH is also feeling some of that tariff pain, and also is feeling the Morgan Stanley downgrade, which said that there's only so much further those shares can go for LVMH, despite the industry being actually in a really good position this year.
Chloe, thank you. Chloe Melly with a briefing on some of those stocks that are on the move. Let's focus on our top story then. The EU is warning it's ready to strike back. European leaders weighing tariffs on 93 billion euros of US goods if President Trump follows through on new trade threats that, of course, he announced over the weekend. The UK Prime Minister Keir Starmer addressed the situation at Downing Street earlier.
Alliances endure because they're built on respect and partnership, not pressure. That is why I said the use of tariffs against allies is completely wrong. It is not the right way to resolve differences within an alliance.
Let's get to Bloomberg TV's chief European correspondent, Oliver Crook, who joins us now in Brussels. Ollie, some continuation of the messaging from Keir Starmer there, the UK Prime Minister. He said at the weekend that it was wrong what the Americans were, what President Trump had announced he was going to do around tariffs. We've heard some pretty vocal pushback from other European leaders as well.
Yeah, that's really the consensus here in Europe, that this is basically this tariff threat now being used, not just as it has been used in the past to basically rebalance what Trump has called, unfair trading relationships with the European Union, where you can see very calculably, very clearly a sort of imbalance of goods, right? The surplus that the EU runs with the United States. And I think that for that reason, those claims were seen as, in some way more legitimate from the European Union, even if they deviated from global norms in order to use tariffs to try to rectify that. Now, this is using the tariff tariffs in order to basically advance a geopolitical aim to violate the sovereignty of one of the European nations, that Denmark, that obviously is sovereign over Greenland, and that is seen widely as completely inappropriate by European leaders and may in fact be a red line. That's what the Germans have called it, that this is now a red line. With the word blackmail has come out from a number of different European leaders, saying that the Americans are basically just blackmailing the Europeans in order to advance the political aim. The question now is, where do we go from here? For the European leaders, what they need to gauge is how much risk appetite they have, how much willingness they have to get further enmeshed in potentially escalation with the United States. They basically will hold off on taking any retaliatory action until February the 4th to see if those tariffs in fact come in. But if those tariffs come in, it's hard to imagine a world in which the Europeans will not raise tariffs of their own and start to target some of those U.S. goods and potentially use the anti-coercion instrument, which would give them more sweeping powers to potentially target American tech companies. So that is the very difficult balance that the Europeans need to now walk. They're hoping to get a diplomatic breakthrough with President Trump while he's in Europe, while he is in Davos, though it's very difficult, I think, at this stage to see what the possible off-ramp is. So for the Europeans, that they're going to be assembled here in Brussels on Thursday for an emergency meeting in order to discuss the path forward. They're going to have to weigh the cost-benefit, the economic cost, of course, but of course, Anna, there's huge implications for the NATO alliance. Also, the fear that Ukraine could be used as a bargaining chip, that potentially the United States could withhold military hardware or intelligence support. All of these things go into this calculus for European leaders now faced with another crisis brought by the Trump administration.
Yes, and President Trump has said that this is because of different stances on Greenland and possibly even a misunderstanding about what troops from Europe were sent to Greenland to do, Ollie. But he's also, over the last couple of days, it's become clear that perhaps the Nobel Peace Prize and the fact he didn't win it has had some bearing on his thinking.
Yeah, so listen, Anna, we'll add that to the list of many things. There's initially the sort of idea that it's about security, about the Arctic, and that the United States doesn't feel really confident with anybody's ability to secure Greenland apart from themselves. There's been the argument about raw materials. There is the argument potentially about Trump's legacy and wanting to expand the U.S. landmass. Add to that what we got over the weekend, this very bizarre letter that was addressed to the Norwegian Prime Minister. And I'll just quote from it directly. Dear Jonas, this is in reference to Jonas Gahr Støre, the Prime Minister of Norway. Considering your country decided not to give me the Nobel Peace Prize for having stopped 8 wars plus, I no longer feel an obligation to think purely of peace, although it will always be predominant, but can now think about what is good and proper for the United States of America. So if this is in fact the actual reason that Trump is pursuing Denmark, that is not going to be seen as legitimate, of course, by any sort of European nation. It is actually quite terrifying, I think, for the Europeans to consider.
Ollie, thank you very much. Thanks for the update. Bloomberg's Oliver Crook with the latest on these developments around trade. Now, as tariffs shake global trade, let's speak to Sam Linton-Brown of BNP Paribas, who will break down what it means for currencies, rates, market resilience, and all the rest. Sam, very good to speak to you. Thank you for coming to join us. Let me start with stocks and what we're seeing here. We've got European stocks on the back foot. US futures actually looking a little worse than they did a couple of hours ago, worsening a little. Will a lot depend at whether these losses are sustained? Will a lot depend on Europe's decision about how it plans to retaliate?
It will, but zooming out for a moment on the equity market, I think the context in which this news flow has arrived is important. The market's had a very strong run. What we've seen is that expectations this year for growth have been continually revised up. The market's already bullish. And the market's also pricing in dovish central banks relative to how strong those growth expectations are. As a result, equity positioning, according to our proprietary quantitative positioning metrics that we run at BNP Paribas, has shifted from a little bit underweight to now overweight, which means that even prior to any of this news flow we've had today, we had advocated that for both equities and credit, it makes sense to shift to a tactically neutral stance, having previously been bullish. So I think the reaction that we've seen in the market today, this risk-off, needs to be seen in the context of a market that was already quite sensitive to any negative news.
OK, so equities was sort of prone to this, I suppose, then, Sam, from your analysis, given the positioning going into this news flow. What about FX markets? We've got the euro actually strengthening on this over the weekend. Lots of people were talking about whether the euro would go up or down as a result of this. Well, the euro gains and the dollar falls, as if this is seen as a bit more of an own goal from an FX perspective. What would you expect to develop there?
The market's very focused on what happened in the first half of last year. where we saw a big increase in uncertainty stemming from US policy on trade, more rhetoric as well around the Fed and potential independence concerns that were building in the market. And that H1 2025 paradigm, as we'll remember, saw a big weakening in the dollar. And so the market's got that in mind, that when we see these types of resurgence in foreign policy uncertainty, that the dollar can be vulnerable. There's 2 points I'd make in terms of what's going to determine euro-dollar near term. I'd say the first is how European countries respond. Europe, during times of potential crises, in some respects, if we look back, has actually benefited because it can act as a catalyst for either further integration or changes in fiscal policy that are viewed by the market as currency supportive. So, for example, if we were to see more steps towards EU issuance, further integration, and or more defense spending at a national level, the market would see that as euro bullish. The second point I'll mention is currency hedging. This was a super important driver of dollar weakness in the first half of 2025. Since the initial rush to hedge away dollar currency exposure on overweight US asset holdings from European investors passed in the first half of 2025, that flow has really slowed down. And what's going to be super key for the outlook for euro-dollar over the next few months is if we see the latest geopolitical tensions result in that flow resuming. We're bullish on euro-dollar overall. We have a 120 target for this year.
Okay, which just suggests a little upside. Are you surprised that we're not seeing more of a flight into European bonds, Sam? Or would that not be what you'd expect to see? We've seen a little, but it's not. Given the scale of the retreat in stocks, might you expect to see more?
I think there's two factors here, one short-term and one more structural. The short-term factor is Japan. You mentioned it in your opening remarks. We've had a huge move higher and steeper in the Japanese bond and swap curve today as the market's beginning to price an even looser fiscal policy in Japan. So that acts as a counterbalancing force to the bullish duration news we've had today for European fixed income markets. The second factor is structural, and that's supply. Supply globally of bonds, net redemptions, is going to remain very, very high this year. It's going to fall slightly across G4 compared to where we were in 2025, but 2025 was the highest ever, and that fall is only going to be slight. And that assumes we see no additional US fiscal stimulus before the midterms. If we do, it's possible that net bond supply in sovereign markets across G4 will actually be higher than it was last year. If that is accompanied by what is a big increase in US corporate bond issuance related to IG issuance, investment grade issuance because of hyperscaler debt issuance, it means the market has to digest a lot of bonds, which means that generally speaking, while you can have short-term risk aversion driven rallies in core duration in Europe, like the German government bond market, overall we think yields are going to head higher. We have a 3.1% target for 10-year Germany.
Yes, and it strikes me that we're without the US, aren't we, today, because it is this public holiday. And so perhaps we have to wait until tomorrow to get a full sense of how investors are going to respond to some of these news items. Sam, thank you very much. Thanks for joining us. Sam Linton-Brown of BNP Paribas Markets. Now to other top stories trending on the terminal this morning. Japan's Prime Minister Sanae Takaichi says she will call a lower house election for February the 8th and will dissolve Parliament on January 23rd. Takaichi plans to campaign on a temporary cut to the sales tax to zero on food for 2 years, a policy move that has resonated with the public in the last two national votes. Former UK Prime Minister Tony Blair has distanced himself from President Trump's demand that countries pay $1 billion for permanent membership of the Board of Peace. Blair declined to endorse the request for the funds, which is part of a draft charter for the nascent organisation. And at least 39 people have died in a train collision in southern Spain, and dozens more have been injured in the country's worst rail crash in more than a decade. Carriages on the Madrid-bound train derailed and crossed over the opposite tracks, colliding with an oncoming train in Adumas on Sunday evening. The Spanish Prime Minister Pedro Sanchez has cancelled his planned Davos trip in the wake of that crash. And the EU braces for a trade showdown with the United States as Washington awaits a key Supreme Court decision on presidential tariff powers this week. We'll get an update on what to watch there. This is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
In case you missed it, on Bloomberg Open Interest.
The kids, the millennials, they now all of a sudden have to pay back their student loans again.
Part of the millennial generation, when we also graduated, you were dealing with the aftermath of the financial crisis, and you also had this problem of finding jobs.
Weakness in the labor market is not just the young people, it's also my generation, the baby boomers. 67% of companies said, we're not thinking about hiring right now. That will change. This is a great time to be alive, I think.
Don't miss Open Interest, live weekdays.
In case you missed it, on Bloomberg Crypto.
Well, we certainly understand needing to pay back the debt. That certainly makes sense. But on the dividend, why are you so committed to paying this dividend? Would you ever consider suspending it? Companies do suspend dividends from time to time.
Yeah, companies do suspend the dividend, but it creates fear, uncertainty, doubt in our preferred shareholders, which will impact our convertible shareholders, which will impact our equity shareholders. So I think preserving the payment of the dividend, even if our board has the rights to suspend it, it's the right thing for the short term, for the next 1, 2, 3 years, and it's important. It's also important for the Bitcoin asset class, and we realize we play a role bigger than just strategy in the Bitcoin world.
So would you say investors should think you will never suspend that dividend?
Never say never, but yeah, our objective is to pay the dividend into perpetuity.
Don't miss Bloomberg Crypto, live Tuesdays.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Welcome back. This is a special edition of Bloomberg Markets because, of course, it's a US public holiday today. Let's focus in on the data we've had out of China overnight. China's economy lost more momentum last quarter, even as it met the government's target in 2025. It's the slowest pace since the reopening from COVID lockdowns in late 2022. Joining us now from Hong Kong is Bloomberg's Alan Wong. Alan, great to have you with us. It seemed that some of the data here, looking particularly at December, beat expectations. Some of it came in a little bit weaker than expectations, and it was met with not a particularly huge response from markets. What was the big takeaway for you?
If you will, the big takeaway is that China achieved its mission, its target of 5% growth for 2025. But the more important question is, what does the outlook look going forward? And then the data released today spells some trouble for the Chinese economy going ahead. A nominal GDP grew only 4% year over year, which is a very low number for China at this stage of its development. It means that people's wages aren't growing very fast and that deflation remains a very entrenched problem. In terms of the economy, domestically speaking, the spending of consumers remains a big hole in the economy. And in the last year, it was exports and industrial productions that contributed to the bulk of China's growth. And in the coming year, if there's more trade friction, there's more pushback against China's rising exports globally, then China's export momentum may not last. And as a result, that economy may not grow as much as China would hope.
Alan, thank you very much for the briefing. So a lot of focus then on the domestic story within China as we go through this year. Alan Wong joining us there with the latest on the Chinese data. Let's go back to our top story. President Trump escalating the Greenland standoff, announcing new tariffs on 8 European allies that have backed Denmark's stance. Meanwhile, the EU is preparing its own retaliatory measures. Here with the latest is Brendan Murray, our Bloomberg trade czar, of course. Brendan, so much to discuss here. I'll start with whether you think that do we know whether President Trump's tariff threat will actually come to pass? I mean, is it going to be something he plans to do under IEEPA? We're waiting for the Supreme Court to rule on that. Is it even possible to put tariffs on specific European countries that are under the EU's trade umbrella? What's your thinking there?
Yeah, those are all the questions that they're asking in Brussels and in Washington right now. The president didn't give many details about how these tariffs would be implemented. And of course, he threatened tariffs on Iran's trading partners a week ago, the 25% tariff, and those have not been implemented or any other details. So what we're seeing is we thought a lot of these trade disruptions from the White House were in the rearview mirror. They're not. And the president gave everyone another reminder over the weekend that he believes he has the authority to, at a moment's notice, or with a short window like the less than 2 weeks that he said these latest tariffs would be implemented by, could come at any moment. And he views the tariff tool that he has for the past year as something that he can use to accomplish geopolitical goals like controlling Greenland or bringing a regime change in Iran or other things that we saw him do with Venezuela last year, putting high tariffs on Indian exports to the U.S. So the president is kind of doubling down on this, and he knows that the Supreme Court is going to rule on this authority any day now. And so all of these foreign policy issues are getting wrapped up in this tariff authority that he's used.
Okay, and what are we watching for when it comes to the European response, Brendan? We know that the Europeans worked on using some of the tools at their disposal to draw up a list of companies they could put tariffs on from the United States. They did that last year. They then never actually put it into place because a trade deal was done. Well, that trade deal now is paused as a result of these developments over the weekend. So how would we expect Europe to respond?
Well, Europe seems to be hoping that diplomacy can still work, but they're getting to the end of their belief that it can. We heard from UK Prime Minister Keir Starmer, who said that he wants to give diplomacy a longer time to play out, but he also said that this was a completely wrong way for President Trump to go about the issues that he wants to achieve in Greenland. So we're seeing the European unity tested once again. The countries that President Trump targeted are export-exposed countries like Germany and France and Sweden, and so this is really going to test whether the Europeans will cave to President Trump like they did last year in Scotland, or whether they will stand up and use some of these these tougher tools that they have adopted to use against a country like China or the U.S. now, that they would see as applying economic coercion to their industries and their consumers.
It was interesting that Scott Bessent, when given the opportunity to sort of dial up or dial down the tension on this story, Brendan, wasn't doing necessarily what some in the market have become accustomed to him doing, which is to add a more sort of market-friendly take on what the Trump administration is doing. It didn't seem as if that was his plan. He was saying that President Trump is using his strategic leverage to get what he wants. I suppose for those watching the trade agenda, that will have been of interest.
Yeah, exactly. Well, he also said that, the Europeans will come around. So I think he thinks that, what we're hearing is the shock and the exasperation from the European leaders at the moment. But ultimately, President Trump and his administration's pressure will bring them to heel. And at least from Secretary Bessent's perspective, that's how he sees this playing out. We heard Kevin Hassett, the National Economic Council director, yesterday say this is really kind of textbook art of the deal stuff from Trump. So at least you have Hassett, again, he's a contender for the Federal Reserve chairman's position, saying this is really a negotiating tactic, and we'll see how it plays out. But this is the way the president does his diplomacy, and the Europeans will have to contend with that.
Yes, very much evident that President Trump is still very much drawing on his experience in real estate in the way he talks about this, saying you really need title, suggesting that ownership of this territory is what really matters. What are you going to be watching for in terms of the Davos news flow, Brendan? President Trump will be there, of course, and trade tensions kicking off the week with a great deal of focus on him, on his arrival, and all that he does there at Davos.
I mean, from my perspective, it's all eyes on 10 a.m. Washington time tomorrow, 4 p.m. in Davos. and whether the Supreme Court rules on these IEEPA tariffs then, or either tomorrow or Wednesday. And can you imagine, if that announcement, those headlines cross the news wire while President Trump is attending the gathering, you could expect some fireworks in Switzerland if that's the case. So we'll see. We don't know for sure what the Supreme Court's agenda will hold in terms of rulings tomorrow. They don't tell anybody in advance. But we'll be ready, and a lot of people think that could swing at least partially against Trump's IEEPA tariffs.
Yes, I mean, we've 2 times, I think, in the last couple of weeks, Brendan, and I've been braced to hear from the Supreme Court on this subject, and it hasn't happened. But as you say, they never promised when they will give us their conclusions. What's the latest thinking on which way they will decide to go, in favour of President Trump or against, and whether they will weigh in on the thorny issue of how refunds are made and to whom?
Yeah, exactly. So the betting markets still see a fairly high odds that Trump will lose this. But the longer it goes that we don't get a decision, the more people are going to second guess whether we're going to get more opinions from the justices and whether this isn't going to be such a clear-cut loss for President Trump. So the longer we go, and if we don't get anything to Tuesday or Wednesday of this week, it could be the end of February before the next opportunity comes along. So I think you could see those odds that President Trump will lose. It could go down quite a bit if we don't get anything this week. The thinking on the refunds is that the Supreme Court won't really get into that, and that they'll leave that to a lower court and leave it to the sort of bureaucracy in Washington to figure that out at the Treasury Department, to figure out how to send those something like $150 billion worth of refunds back to American importers.
Brendan, thank you very much. Bloomberg's Brendan Murray covering all things trade for us and feeding into the World Economic Forum. Of course, as he said, his focus this week might be elsewhere, might be on the Supreme Court. We will focus on that. We will also focus on everything that's taking place at the World Economic Forum in Davos, Switzerland, where Francine Lacroix is moderating currently a panel with the Qatar Investment Authority, the CEO of that, Mohammed Al Sawaidi. And let's just listen into that.
Fund commitments. And it's an ongoing exercise of thinking about growth. And now His Highness have elaborated last couple of years ago that a lot of the additional reserves that will come from the state, from the increase in the LNG production, will be rooted for the future generations. So we needed to live to the game. We wanted to focus more on sharpening the edges around QIA, being mindful as a long-term investor, increasing the level of specialization within the institution. We've been doing a lot of things throughout the years to be ready for it. And we're ready. And I think we're very ready despite all the changes and challenges that happens in the markets every day.
Could we see the fund do anything substantially different because of the extra capital?
I don't think substantially different. It's a large organization already. And those incremental changes will refine our conviction on how we address markets. Fundamentally different, no, but in the scale and size will increase naturally with time. But we've been thinking and visiting our philosophy as an organization a lot over the past 12 months and thinking what would be the right factors that enable us to grow systematically and be top performer and world-class investor in the world.
Your Excellency, you've announced a $500 billion investment pledged to the U.S. over the next decade. How's that going so far?
Going very strong. When you think of the U.S., it is the largest economy in the world, with close to 30% of the global GDP, but it is about 60% of the investable universe. So you cannot be a long-term investor not having significant exposure to the United States. At the same point of time, the U.S. enjoys strong position, a lot of the leading sectors in the world. If you think of technology, if you think about industrial activities, if you think about defense, if you think, go on, they have strong market positioning, the U.S. institutions. At the same point of time, it's a very deep market. It's very efficient, it's very deep capital market, which enable large investors like us to have a prominent position if we wanted to progress and grow the sizing. So the deployment is going as planned, and there is a probability within the 10 years we actually we deployed much more than the $500 billion.
How much do you worry about the short term? I mean, this Davos will be dominated by President Trump. There's been, since the beginning of the year, we've had Venezuela, concerns about Iran, and now there's the little thing called Greenland.
The short term is we'll be very worried with Tuesday and Wednesday logistics in Davos. Longer short term, I think in this market, as a large investor, we have to operate with both eyes open. One eye focusing on disruptions that are going on around the world. You have a tariff situation that is the highest since the 1930s. You have geopolitical challenges that are now global. You have some in South America, you have in the Middle East a couple of situations, and devastating humanitarian issues happening in Palestine and Israel conflict. And you have a major issue happening in Europe with the Ukraine-Russia situation. So those geopolitical challenges will effectively, if they prolonged, affect global growth and global inflation and global trade. The third thing, which is very important, I think, at the macro level, is the fundamental change that's expected to happen with technology. When we talk about technology, we're not referring to only the Apple of the world or the NVIDIA of the world, but I think the pace of AI innovation, if it becomes real, it will affect every industry, from financial institutions to industrials and so on. So this is in one eye what we focus on. On the other side of the equation, it's also very important to look into shorter-term disruption that are happening in capital markets. A tariff overall is a mechanism that creates inefficiencies in markets. And the major transmission that will happen is throughout currency volatilities, interest rate volatilities, varying inflation levels around the world. So while we need to be hopeful with the disruption and innovation and be focusing on investing, on the other side, you have to be very mindful of those challenges. So difficult question to answer. We do it through multiple things. The first thing is that investing in talent. I'm very proud to say that within QI, we have some of the best talents globally. We're focusing a lot on specializations, and we're focusing on growing up a lot of the talents that we have on the younger side of the institution. The second way we try to manage this is through strong partnerships. Large financial institutions around the world, large fund investors, and et cetera, and many times, not corporates. And many times we would align on alignment, but occasionally we'll have conflicting views on markets. So we have to have strong partnership that we trust and can challenge us when they're wrong, and we challenge them when we think they have misperception. The third thing we're focusing on a lot is active risk management and proactive management, because you could be very long-term, but by the time long-term happens, I'm already retired. So we have to focus on being long-term focused, but very short-term aware. And it's not easy, because market dynamics never stop, and you have to test yourself and be humble to really focus on strengths and weaknesses in your portfolio and see how we deal with them.
Is it fair to ask what would be more disruptive, geopolitics longer term or AI?
Personally, I think AI. I think, geopolitics is a major, really driven by economical. It's very interesting. We look into the history. A lot of the global wars, unfortunately, had an element of trade. But I think with time, prices set at the right equilibrium at some point. Now, it's inefficient as well, because sometimes you push up prices up and you don't really de-inflate them. They can continue to be up and later on eat up in growth of those economies. On the AI space, it's very interesting. I think the revolution in AI as a new industrialization form is real, but we have to be patient. Each significant uplift on the industrial revolution have taken 30 to 40 years to materialize. If you look at a recent example, if you look into Amazon, which was listed in 96 or so, only became profitable in about 2003, 2004. The size of revenue grew from 20s or 11 or 15 million to later on about 5 billion in 2003 and continued to grow. But at the same time Amazon came up, a lot of players also came up. The players that were not successful on thinking about vulnerabilities in your business models and adjusting them have left the market. So the thing we worry about in innovation AI, it's short-term heat. The thing which we worry about AI is businesses that take momentum trades versus actually building business models that fundamentally prove to be valuable over the long term. But the whole purpose of revolution in the industrial space is really to increase the level of productivity. So what we yet to achieve and observe very openly is that AI would actually bring fundamental growth on the level of productivity. And you will find economies that don't really utilize AI in the right way, or industries, they will fall further behind. So it's a long-winded answer. I think geopolitical risks are real. But I think ultimately over the long term, the more fundamental drive to the future growth would come from AI overall. And the integration of AI. And AI is really not a lot of the, I mean, there's my technology team, I have the best technology team, I think, within various institutions, and they have very fundamental views. But generalists, if you think about it from a general perspective, there are very simple things that create productivity. And there is very complicated things around the agentic AI and the robotics coming against the world. And human always tend to not have limits and expectations. But even if you think of the bare minimum of improving productivity globally, there is a big room which AI would enable to happen.
So if we talk about AI valuations, first of all, can you tell the winners and losers today of AI in terms of companies?
Well, I wish. I mean, if we knew it, we would put all our commitments. At QA, we go by conviction. So we don't follow a strategy overall of spray and pray on those things. We focus on having deep research and building predictions and ultimately have high conviction calls. I think materially some of the players will materialize much recent than others. We are large investors in Anthropic. We are a large investor in XAI. We are a large investor in Databricks. And we're investors in other businesses that are smaller in scale but very fundamental in value. The team invested in Christie AI, for example. Christie AI focuses on optimizing and human augmentation of call centers. I think none of us want to be in a call with a call center for long. So it's actually real productivity. And I think the people would be on the other side would focus on more specialized and complicated requests versus the small requests.
How do you view companies adopting AI? So one of the trends that we're seeing is many chief executives spending so much time and money on AI that maybe it also means they have less entry jobs because they can't afford more people at the moment.
What I'll tell you for sure is no one knows the real answer. No one the real answers of really utilizing AI the right approach. You have some institutions that were very forward-looking and focused on a lot of implementations that ultimately didn't really provide value. So there's a lot of optionality. But the most important thing that's fundamental for any implementation of AI is you have to have good data. So any business that does not have access to good data with what they do and conduct in their daily operations or their long-term strategic thinking would not be able to impose AI solutions in an efficient manner.
When you look at the sectors that you're focusing on or the areas that you're focused on for 2026, is it AI and something else? When I say
over the long term, we have a well-diversified portfolio. But what we've done last year is we've increased the level of tactical asset allocation. So in 2026, will be the large focus on AI that materialized and continue to grow. After 5-6 years of building a business, by that time, you should have a view on revenue projections and implementation and value add to productivity within those businesses and users. So those businesses are businesses we'll back more significantly. But the intersection between AI and in other industries is very important, is as important. Financial institutions, for example, are a large beneficiary of AI. Those who use AI in the right way will be able to be more efficient, have less compliance staff, for example, have faster processes in evaluating of customers. Industrial businesses is a major actor. I think we
News when you want it with Bloomberg News Now. I'm Dan Schwartzman. According to Spain's transport minister, at least 39 people are dead after a high-speed train carrying around 300 passengers traveling between Madrid and Malaga derailed and hit another coming in the opposite direction. The accident took place around 7:45 p.m. local time. Spain has one of the world's largest high-speed train networks, which consists of private and state-owned players. President Trump has linked his claims on Greenland to not being awarded the Nobel Peace Prize in a letter to Norway's prime minister. The president says the world is not secure unless the U.S. has, quote, complete and total control of Greenland. The Nobel Peace Prize, though, isn't decided by the Norwegian government, but is awarded by an independent committee. Treasury Secretary Scott Bessent, speaking this weekend on NBC's Meet the Press, says the U.S. won't back down on taking over Greenland.
Greenland is essential to the U.S. national security. We're building the Golden Dome, the missile system. And look, President Trump is being strategic. He's looking beyond this year. He's looking beyond next year to what could happen for a battle in the Arctic. We are not going to outsource our national security. We are not going to outsource our hemispheric security to other countries.
That's Treasury Secretary Scott Bessent speaking this weekend on NBC's Meet the Press. The European Union is discussing potentially imposing tariffs on 93 billion euros of U.S. goods if President Trump follows through on his threat to hit European countries with a 10% levy on February 1st. Trump threatened the tariff on goods from 8 European countries, which could rise to 25% in June unless there's a deal for the, quote, purchase of Greenland. The president made the threat after the countries undertook a NATO military exercise on the semi-autonomous Danish territory. The EU is also weighing additional countermeasures beyond the tariffs, but will first try to find a diplomatic solution. Representatives from the EU's 27 countries met Sunday to begin preparing options. Former Fed Chair Janet Yellen reacted to the news that current Fed Chair Jerome Powell is under criminal investigation by the Justice Department over testimony he gave last summer about the Fed's $2.5 billion building renovations.
I believe that they have asked questions about the building, and I believe that the Fed has provided the information that's been asked for. But that's where the oversight and the accountability lies, and not with the president. And I would be very surprised if Jay Powell lied to Congress, which is what's being alleged.
That's former Fed Chair Janet Yellen. Gold and silver jumped to record highs as President Trump's push to take over Greenland spurred fears of a trade war between the U.S. and Europe. Precious metals have rallied sharply this year, with many analysts expecting the gains to continue, citing geopolitical risks and uncertainty undermining growth prospects and trust in the U.S. dollar. Spot gold traded near $4,670 an ounce, while silver surged as much as 4.4%. The Supreme Court agreed to review Bayer's challenge to a $1.25 million Missouri jury verdict over claims the company failed to warn that Roundup weed killer could cause cancer. The pharmaceutical giant is hoping a favorable Supreme Court ruling would help knock out thousands of similar failure-to-warn cases. Bayer's stock rose by as much as 7.5% in early trading on the news. Micron Technology says an ongoing memory chip shortage has accelerated over the past quarter and will last beyond this year due to a surge in demand for high-end semiconductors required for artificial intelligence infrastructure. According to Micron's Executive Vice President of Operations, the shortage of high-bandwidth memory is leaving a big shortage for the conventional side of the industry, which includes phones and PCs. The company is expanding its manufacturing capacity in the U.S. and Asia to address the shortage, including a $100 billion production site in upstate New York. Cryptos fell sharply as risk assets slipped and haven demand strengthened after President Trump proposed new levies on 8 European countries for their support of Greenland. Bitcoin slid by as much as 3.6% to below $92,000, while while other tokens posted steeper losses, with the sell-off knocking about $100 billion off the crypto market's total value. Bitcoin had risen back up to just shy of $98,000 on January 14th before the latest drop. The Los Angeles Rams will face the Seattle Seahawks in the NFC Championship game next weekend after beating the Bears in Chicago 20-17 on a 42-yard field goal in overtime. In the AFC, the Patriots and the Broncos will battle for the right to go to the Super Bowl. College football's national championship game is tonight at Hard Rock Stadium in Miami as the Indiana Hoosiers face the Miami Hurricanes. Kickoff is scheduled for 7:30 Eastern Time. That's news when you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg.
European investors. So how does Europe assert any pressure on the United States without just imposing its own tariffs?
I think when we're talking about kind of read across from geopolitics and politics to markets, we have to think about transmission mechanisms. So it can work through either the cost of capital channel or it can work through the return on capital channel. I think in terms of the cost of capital channel, that has been the main channel in terms of how policies have been feeding through to U.S. asset pricing, right? So if you think about kind of international investors potentially demanding greater risk premium for holding U.S. assets. Here, geopolitics and tariffs being one, but debate about Fed independence is another example of this type of triggers for repricing potentially cost of capital channel. That is one example, and that has actually been mostly how policies from the U.S. has been feeding through so far. And I would also observe in terms of return on capital channel that has not been deployed so far. In fact, the policies from the administration have really been supportive of return on capital and earnings for U.S. corporates. They want U.S. corporates to do well. They want U.S. corporates to do better than everyone else. But recent kind of policy rhetoric around, for example, profitability, what that means, credit card caps, what that means in terms of defense companies, dividend policies, that is raising question around kind of return on capital channel, which is something that we haven't seen so far. But is it just rhetoric or is it a direction of travel that is new? That's something to pay attention to.
And all of that, we're ahead of the midterms, aren't we? So that adds another unpredictable layer, perhaps, to those conversations. When we think about strategy, then, within European stocks, Wei-Li, we look at today's picture across markets. Consumer products and services are weaker. That's a lot of luxury names in there. Autos are weaker. And both of those sectors heavily exposed to the US and to US consumers. Would you expect those businesses to underperform as a result of this, because of the tariffs? Does that make sense as a long-term play?
Well, I think for us to understand if the tariffs should have longer-term impact both on the economy and markets, we have to kind of stick to the immutable law framework to understand if they are here to stay. But as an immediate knee-jerk reaction, I can understand why these are the sectors that are being impacted first and foremost, and this knee-jerk reaction can last for days before if there is any kind of negotiation and walk back that should follow and be governed by immutable law. But more broadly, I think this is really a year where fundamentals needs to come through to support any relative outperformance of specific sectors and equity markets. So earnings are super key. I mean, it may not even feel like it, but we're right in the middle of the earnings season as well. So understanding where outperformers of earnings are is critical in us deploying risk and kind of where we want to stay overweight versus underweight.
Yes, maybe we'll be back to talking about earnings shortly. And within that, last year we saw dollar weakness in the first half of the year, and that became a feature of the earnings conversation. I guess, is that going to be something, the dollar weakness we see today, could that be something more sustained as a result of this new tariff threat?
I can also understand why dollar weakness is an immediate kind of knee-jerk reaction to tariff headlines, because that is working through the cost of capital channel that I just talked about. But then when we look at kind of other discussions about fundamentals, you look at U.S. earnings are still very strong. You look at growth. U.S. growth is still very strong, and some of the structural developments around the stable coin and all of that. You bring that together with the real rate differential discussion that could weaken the dollar, you actually get a somewhat mixed picture of maybe it could weaken in the near term, but over a slightly longer term horizon, there are forces that could offset that. So I think it's not for sure that this year we would see dollar weakness that we saw last year, but when markets are immediately repricing U.S. kind of risk premium, dollar is the one that gets impacted.
Okay, Wei Li, thank you very much. Thank you so much for joining us. Wei Li joining from BlackRock, of course. Coming up on the programme, we'll take you back to Davos and get a briefing on what to watch in the week ahead as global leaders take to the stage. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
In case you missed it, on the pulse.
Markets like oil, you got the short, 2 weeks ago it was 230 million barrels short, bigger than what the glut is that's floating out in the South China Sea in these dark fleet ships. So the market going in is record short. Demand is not slowing down, it's picking up, and geopolitical risk is at, I would say, an all-time high. That's a recipe for a spike in prices right now.
Where do you see the next risk?
Basic commodities and affordability, starting to put pressure across the interest rates and everything like that. And the curve is beginning to steepen on the yield curve. And then you got to ask, as the yield curve begins to tip out and you start to see higher interest rates further out on the back end, are people going to be willing to sell these commodities? It starts to become even that much more riskier as your underlying cost structure of the economy changes and a re-rating of real assets.
It's like a shock.
It's a shock.
Don't miss the Pulse, live every weekday.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
This is Bloomberg Markets, a special edition of the programme. I'm Anna Edwards, live in London. Now, let us go back to Davos, though, where global power players are, of course, converging for the World Economic Forum. Bloomberg's Haslinda Arman is amongst them. She's on the ground for us and can give us a bit of a briefing as to what we need to watch out for. Haslinda, good morning to you. Of course, the focus very much will be on President Trump, the middle of this week, not just the security challenges that will throw up, but, of course, the content of whatever it is he's come to Davos to say.
You're right. Huge issues. This is possibly the most consequential Davos meeting in the history of WEF. We have new tariffs, shifting alliances. We have a fragmented global economy. Over the course of just 10 days, we know that Trump attacked Venezuela, removed Maduro. He talked about controlling Greenland. He imposed 25% tariffs on anyone doing business with Iran. He also, over the weekend, talked about imposing 15 additional % tariffs on 8 European nations. This is the new world order. So despite the fact that we're talking about 30 heads of states coming to Davos this week alone, the man in focus, top of the agenda, is Trump himself. You said it, he arrives on Wednesday. He's bringing a huge entourage, the largest entourage ever in U.S. history in Davos, including the likes of Bassett and Lutnick. Also a huge and strong entourage of corporate America, the likes of Satya Nadella, even the CEO of NVIDIA, Jensen Huang. Expect lots of wheeling and dealing, expect lots of trade negotiations. We will see 30 trade ministers. A lot of these trade ministers want new deals or revised deals with the U.S., including perhaps the likes of Canada. It is represented by Mark Carney. We know that Canada has yet to sign a deal with the U.S. Also India, yes. We know that Prime Minister Modi has given this meeting a miss, but his lieutenants will be here to talk trade with the U.S. So lots on the agenda. And also, I want to talk about Europe. A lot at stake for Europe, Anna. We know that for the longest time, Davos has been Europe-centric, no longer the case. But this year, because of Greenland, because of Trump's, I guess, adamant in taking control of Greenland, a lot at stake for Europe. Expect European leaders, most of them are here, to talk about how to fight back. Does Europe have the gumption to stand up against Trump? What will they do? How will they respond to Trump's intentions in Europe and the implications on NATO itself?
Yeah, which levers will they pull given the security dependencies? Haslinda, thank you very much. Bloomberg's Haslinda Arman on the slopes of Davos, of course. That is it for this hour of Bloomberg Markets. Still ahead, plenty more to come. We'll talk about the global macro environment with Westbourne Research. Tina Fordham also here. This is Bloomberg.
Now, you've written that younger people today are not as happy as their parents were. That's correct. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in a climb. That's the climate of happiness that's been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses, You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home, make sure that people don't interact socially, and that was catastrophic for happiness.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Welcome to Bloomberg Markets. Coming up, trade tensions soaring. The European Union weighing tariffs on nearly $100 billion of US goods as the conflict over Greenland heats up. EU leaders set to hold an emergency meeting this week as President Trump threatens 10% levies beginning February 1st. Well, checking in on these markets, and we are firmly risk off this Monday morning. European stocks red across the continent. That sentiment deepening as European officials have taken a hardline stance in response to Trump's tariff threats. More on that in just a moment. We've got all but one European sector in negative territory this morning. As you would expect, those most exposed to tariffs are the hardest hit: autos, luxury. The defence names are rallying, but that's not enough to offset the losses elsewhere. Of course, US markets are on holiday today, so we've got no cash trading in treasuries or US stocks, but US futures pointing south. S&P E-minis down 1.2% at the moment. Gold and silver up to record highs on the haven demand. The dollar down on the flip side, and on the flip side of that, euro dollar is higher. So euro dollar, as you can see, at a 116 handle. The Swiss franc also benefiting this morning. But let's get back to what's actually happening in Brussels. Bloomberg's Oliver Crook has the latest for us. Ollie, what is the mood where you are in Europe, and how does it look like leaders are going to be retaliating? Good morning.
Good morning, Lizzie. The mood went really from bad last week to worse this week, and that's after Donald Trump came out on Truth Social on Saturday evening with that threat of tariffs against these 8 European nations, including the UK, Germany, France, Denmark, Sweden, Finland, for basically their solidarity and sending these sort of really symbolic number of troops to Greenland in order to help sort of secure the Arctic and sort of those exploratory missions. That 10% tariff effective, if we believe the President of the United States, on February the 1st, that will then ramp up to 25%. In June, if there is not a sort of concrete proposal moving towards basically the American full acquisition, annexation, shall we say, or really taking over sovereignty of Greenland. Obviously, the European response thus far has been unified. It has been saying that basically this is a red line. Those were the words of the German finance minister. Now the Americans have crossed a red line. I think it's notable, Lizzie, that in all of these conversations, there's much stronger rhetoric coming from the Europeans. The word blackmail has been thrown around by a number of different ministers and European leaders. And for the Europeans, they will now have to figure out how to respond in this collective way to the President of the United States. They're still hoping for a diplomatic off-ramp. They're hoping to achieve that in Davos this week with the President attending there, hoping to get their message across and try to find some kind of off-ramp. But it's hard really to see what that possible off-ramp could be, just given what the rhetoric has been from the President of the United States. So what will happen is European leaders, after those meetings with Trump in Davos, will come here to this building for a meeting, an emergency summit on Thursday, to discuss the path path forward, and they will need to weigh what they're willing to pay for the price for European sovereignty for Denmark. Is it going to be the economic cost? But of course, Lizzie, there are much larger implications about the potential future of NATO and what's on the line, for example, from the Ukrainians. Could the Americans step back from Ukraine, stop selling hardware? Could they, withhold military intelligence? Those sorts of things. It's a very complex situation. The Europeans would like to avoid escalation. That being said, if you get those tariffs on February 1st, it is hard to see how the Europeans could not respond.
Okay, Bloomberg's Oliver Crook, who will be on the ground for us throughout the day from Brussels. We thank you so much for the latest there. Well, turning back to markets, Sharmila Whelan, global macro strategist at Westbourne Research, is joining me now. She sees opportunities ahead. She writes, key business cycle indicators signal continued expansion. The profit cycle is still very much in upswing. Let's see if that holds, given all of the developments over the weekend. Sharmila joins me now. Good morning to you.
Good morning, Lizzie.
Are you ripping up this positive outlook for 2026, given what we've had in geopolitics, or do you have faith that Trump is going to chicken out? This is just a negotiating ploy.
No, I am not ripping out, and I haven't set the strategy for 2026, but the business cycle indicators, I wouldn't expect them to change, and the corporate profit cycle, the investment cycles are strongly in upswing in the U.S. The same goes for Europe. Real lending rate, the cost of capital is appropriately priced in Europe. So bringing it all together is the business cycle expansion continuing firmly on that path, and overweight equities. And okay, of course, there's geopolitics and Trump and Greenland, but 2 points there. One is he's using it as leverage to negotiate, and the question is, what are the options? Right. And second is, any disruptions to markets is an opportunity to buy. Okay. Well, I mean, as I say, we're risk off firmly on both sides of the Atlantic this morning. The US closed, but no one seems to be focused on the earnings picture at the moment. How quickly does that focus return? Depends on whether the investors, right, are they being driven by noise? And there was a lot of, you look at 2025, and we thought 26 was going to be a quieter year after 2025. And a lot of investors last year didn't do well because they were reacting to the noise. So it depends on whether you're focused on fundamentals or noise, really. I mean, how does it change your outlook for Europe, if at all? Because it's not just the threat on Greenland, of course, it's the tariff threat that backs that up. If those tariffs that Ollie has been setting out do materialise on February 1st and in June, how does that affect the earnings picture in Europe? The European profit cycle is still in upswing, but it has moderated. And, my view had always been that the biggest loser in Trump 2.0 would be Europe, and it's done really badly on the first trade deal, right? Think about it, 15% tariff, U.S. Industrial goods enter Europe with no tariffs at all, then a commitment of $600 billion to invest in the U.S. That's about 3.3% of EU GDP, and they're struggling to get to 2% NATO. So they've got military commitments. So what the tariff war and even the renewed tariff tensions, what it's exposing is Europe's structural weaknesses. And that's where the problem is. And even though the cyclical and the business cycle indicators are positive, the problem are what kind of drag are you going to get from the structural? Well, yeah, when you think about it from the bonds perspective, there's two sides to it, right? You could have a hit to growth from the tariffs. You could see the central bank stepping in. But on the flip side, increased defence spending. So is it net positive or net negative for bonds in Europe? A very good question. I would say it's a net negative, right? Because you've got Ukraine and the money that's going there. They've got the commitments to NATO. European fiscals are deteriorating. I don't believe the official numbers that portray them as kind of very rosy. The underlying numbers are deteriorating, and that's because you're getting massive debt mutualization from Brussels, right, which is not reflected on national government balance sheets. So I would say it is a net negative for bonds. And does the rise in precious metals that we're seeing on the safe haven demand today last? I don't see it lasting because, the rise in precious metals, it's, risk appetite, as you said, and today there's zero risk, and bonds, given the fiscals in the US and in Europe, bonds are less attractive and therefore go into precious metals. The other one is, of course, it's an inflation hedge, and the inflationary spiral that everyone consensus was forecasting last year has not materialized. So if growth picks up as I expect, equity markets and earnings do well, I see the shine coming off precious metals as we go through the course of this year.
Okay. The unflappable Sharmila Whelan. Thank you so much. Sharmila of Westbourne, of course, looking through what she says is the noise when it comes to tariffs and the Greenland threat. Well, staying on global markets, sovereign wealth funds are continuing to gain ground around the world, collectively passing the $15 trillion milestone in December. Now, one area seeing lots of interest is Malaysia, with the country's sovereign fund recently passing $35 billion as it continues to diversify its holdings. Of course, we are live on the ground in Davos throughout this week, and I'm pleased to say Bloomberg's Haslinda Amin joins us now from there with a special guest. Morning, Has.
Hey, good morning, Lizzie. You know what? Malaysia's had a reversal of fortune. The KLCI, by the way, at the highest level in 7 years, and the Malaysian ringgit was, well, the best performer in Asia in 2025. So is that sustainable? Well, we have the managing director of Malaysia's Sovereign Wealth Fund. That's called Khazanah. And Faisal is here with us. Faisal, good to have you with us. Huge question. I mean, how are international investors viewing Malaysian assets right now? The big question really is whether those gains are sustainable.
Well, you're right. I mean, when you actually look at what's powering the economic growth, I mean, the GDP is actually quite stable. In fact, when you actually look at it, people are not just looking at growth. People are looking at stability and predictability. So I guess as far as the country is concerned, if they actually show execution, if they actually show stability of policy and the momentum actually going pretty well, I think you're going to see that continue much longer.
The continued chaos in the world, in the developed world in particular, benefiting emerging markets like Malaysia.
Well, I think now the scarcity of a product here is stability rather than anything, right? So, yeah.
So where do you see the KLCI going? How much more upside from here? And when it comes to the currency, can it strengthen further?
Well, as far as KLCI is concerned, I think there's a role to play for people like us, capital investors. We can be active market players to see it grow further. We've seen that in Japan, we've seen that in Korea, where if we actually try to be a bit more active and trying to get the companies to improve their ROEs and profitability and earnings, I think there's more room to grow.
And for the ringgit?
The ringgit, I think we'll see a bit more strengthening, and really looks at the US dollar, and I think the outlook as US dollar would reduce.
Come on, look into the crystal ball. Give us some projections for the end of 2026. Where do you see the ringgit headed towards?
I'd like to quote some of the analysts, and they're looking at 4, or even depending below 4. But yeah.
Of course, there are lots of headwinds right here in the world today. We talk about how they are shifting alliances and geopolitical tensions are rising. How might that play out when it comes to emerging markets like Malaysia, considering the fact that when there is volatility, when there is a surprise, investors tend to make an exit from EMs first?
Well, I think you're right. I think emerging markets tend to have capital coming in and out fast, and that's why you see that. But I think people have to look at the fundamentals. Like I said before, what is scarce today is that stability. And when you look at emerging markets, especially in Asia, that continued growth about 4 to 5% across all the countries, and you can see the demographics, which is a lot younger. So you do see that long earnings growth going forward. So I think from that perspective, I think it's a good market to be in. Yeah.
What's your strategy for 2026? We know that you're 90% equities, 10% real assets. Any reason to make shifts?
At the moment, I think what we try to do is we follow developed markets. So, for example, we try to hug the beta for developed markets. Emerging markets, we have that as well. Being a sovereign wealth fund for the country, we're about 60% in Malaysia. And for that, I think it tends to be a bit more strategic. And what we are looking at are the ones where it could actually benefit from all this reconfiguration of the market. And that is looking at policy changes when it comes to semiconductor supply chain, infrastructure to capture growth within the region, whether it's connectivity, energy transition, as well as digital.
What's especially attractive this year that's different from the last maybe 12, 24 months?
I think what is attractive is with all this chaos that you see, people are trying to look at markets in order to get that stability. A weakening of ringgit, so people are looking at metals, looking at hard assets, looking at anything which might benefit from policy changes that countries are doing as a result of this change.
We know that Malaysia wants to be a big player in rare earths. We have the Prime Minister saying that it wants Khazanah to lead in terms of the projects and ventures. Where are you with that?
Well, first of all, that is correct. That's something we're looking at. But I think I mentioned to you this last time, it takes time to really understand the reserves available that can actually be accessed. Because a lot of the rare earth minerals are in protected forests, for example. And of course, the environmental impact needs to be looked at. And that is something which the country is currently looking at.
Are you in conversations with China? Because there are talks about joint ventures.
We're open with speaking to anyone.
What is the goal in the end? It's going to take time. Say in 5 years, where do you see Malaysia in this rare earths space?
If look at the country, for example, right? Now, the country has this concept where, from a trade perspective, it's a critical part of the world's supply chain, and it has to be neutral or central to trade, and as well as the supply chains. So it has to have, work well with China, work well with the US, work well with the rest of the world. And I think what I would like to see is, at least for this rare minerals, is for there to be trade with all countries.
Faisal, just one final question. I mean, we're talking about shifting alliances and uncertainties. What's top of mind for, I guess, CEOs like yourself here in Davos?
Well, looking at where the momentum is really going, I think the underlying current is important to identify and know. We have seen geopolitical changes like Liberation Day, even in Venezuela, but markets either have come back or not reacted. And so identifying that momentum.
Faisal, thanks so much for your time today. There you have it, Lizzie. The boss, I guess, Managing Director of Malaysia's Sovereign Wealth Fund, talking about the uncertainties and how to position amidst all of that.
Haslinda, fantastic conversation. Thank you so much. And that was Haslinda Amin, of course, on the ground for us in Davos. Coming up on Bloomberg Markets, EU leaders gearing up for an emergency meeting as trade tensions soar with the US. More just ahead. This is Bloomberg.
I never have changed my show to make it for YouTube. I'm very conscious of the fact that ABC pays for the show and YouTube pays nothing, and YouTube gets to sell it and keep half the money, and that's quite a deal for them. It really is. But I've never made the show for YouTube. With that said, I love YouTube and I love being on YouTube, because all you really want deep down is for as many people to see your stuff as you can. And I know that it has hurt, because it is so easy to watch the monologue on YouTube now. I know that it has hurt the ratings, not just for our show, but all of the shows. And maybe that's kind of what has killed late night TV. More likely the fact that we have our lead-ins are a tenth of what they were when I started.
I was alarmed to see that the most watched video from your show had fewer views than the average Mr. Beast video. And I don't know what that says about the state of the world, but
I think it says Mr. Beast is kicking is what it says, yeah. Well, you know what? There is a big difference. When you do the show every night, you're not going to get as many views. But we still, I mean, I woke up this morning, there were 2.2 million views of my monologue the night before. So for everyone who says late night is dying, it's just not true.
Technology is embedded in every aspect of our lives and laying the foundation for the future. From finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Drulers in Hong Kong. I'm Sherrian in Tokyo. Watch Bloomberg Tech Asia. New episode Friday, only on Bloomberg Television.
This is Bloomberg Markets, 11:16 a.m. here in London. Risk off on both sides of the Atlantic in terms of the US futures picture, of course, because US markets are closed for the holiday. But turning back to our top story, we have President Trump not backing down from his threats to impose a 10% tariff on the European Union over pushback to his plans for the US to buy Greenland. The UK Prime Minister, Keir Starmer, addressed the situation earlier on this morning.
Alliances endure because they're built on respect and partnership, not pressure. That is why I said the use of tariffs against allies is completely wrong. It is not the right way to resolve differences within an alliance.
So tough talk, but what does it mean in practical terms? Let's go back to Brussels with Bloomberg's Chief Europe correspondent, Oliver Crook. Ollie, you heard from Keir Starmer then. Is this the beginning of real cohesion across Europe now?
I think it may very well be. I mean, this is something that's quite notable here, Lizzie, what we've heard from a number of European politicians. And we don't have to tell you how fragmented the political landscape is in the United Kingdom, in Germany, in France, a number of different countries across Europe, where you have a lot of right-wing parties who are quite Trump-aligned on many issues and very Eurosceptical. Basically, universally, they're all aligned on this issue with the mainstream parties, whether it's Nigel Farage in the United Kingdom, whether it's Alice Weidel, the head of the AfD, the Alternative for Deutschland in Germany, Jordan Bardella in France for the Rassemblement National. They are all basically on the same side of this issue, that this is the United States going too far, despite how much support they may have got from Trump in the past, how positive they might feel on some of these sort of social issues, the alignment that they have with the Trump presidency. There is not agreement on this issue of basically violating Danish sovereignty and basically trying to coerce the Europeans into surrendering a large part of their territory to the United States. So for the Europeans, this might be one of these opportunities here where the sort of European many factions within Europe politically are driven together. The question is then, what will the Europeans do with that? How willing are they to take on the Trump administration? How willing are they to escalate the trade war? What we've heard from a number of politicians and from the sources we've been speaking to is that basically the Europeans will not enact anything until February the 1st, until they see the whites of the eyes of these sort of tariffs that are going to be put down by the President of the United States. That being said, Lizzie, in the next couple of days, the European Parliament was supposed to vote on the trade deal that was struck with the United States July of last year. That obviously cannot progress while the United States is threatening to do another trade war with the Europeans. So for the Europeans, as they are likely to convene here on Thursday at the European Council level, European leaders trying to find the path forward, they're going to have to decide what their risk appetite is for taking on the United States, not just the economic cost of that, but the cost geopolitically, which could be very dear indeed.
OK, Bloomberg's Oliver Crook, thank you so much, and we'll get back to you later on in the programme. But let's turn to how this is impacting the broader geopolitical landscape and the potential market impact as well. We're already seeing a lot of it this morning. We can talk to now Tina Fordham, founder of Fordham Global Foresight. Really good to see you, Tina.
Great to be here.
I've been reading your recent notes. They've been making waves this morning. Goodbye Greenland, the title of one of them. In another recent note, though, you'd said that we should all take a deep breath before seeing an imminent military intervention into Greenland by the US coming. Does the fact that Trump's tariffs are being threatened suggest that actually he isn't planning a military takeover?
So Trump loves to float these big ideas and see what happens. We've seen this sort of tactic before. In fact, Vladimir Putin uses it, which is escalate to de-escalate. And there is a fundamental misalignment between the way the United States president works quite unilaterally, loves to throw, hand grenades into discussions, and the very deliberate and methodical, process-oriented way that Europe works. And we saw that on display this weekend with, stern statements from the Prime Minister, the idea that things are not acceptable. Well, Trump really channels the spirit of the libertarian's favorite author, Ayn Rand, and says it's not who's going to let me, but who's going to stop me.
That's forgiveness, not permission.
Yes.
But is that a diplomatic way of saying, Tina, that Europe needs to get its act together and be cohesive in its response? Is it too soon for investors to be positioning for political unity from Europe?
So listen, I mean, I continue to be constructive on Europe, believe it or not, but I actually don't think that the measures under discussion at the moment from Brussels and the member states are really going to deter Trump from his Greenland strategy. So we're talking about 2 points. One is the potential for Europe to come together and to realize its geopolitical power, which I do think is happening. And where might the constraints and obstacles, impediments come when it comes to Trump's near obsession with Greenland? And that, I think, comes more likely on the U.S. side.
Yeah, we've been in the year of the midterms, of course, and you point out in your note that this isn't popular, this White House policy on Greenland. Is that actually what stops him? Rather than anything that the Europeans do, more is it U.S. popular opinion that holds him back?
So I don't think it holds him back. And all of us who lived through Brexit remember that nobody in this country was talking about Brexit, and yet here we are. So Trump has put something on the agenda that nobody was thinking about. 75% of Americans, including a majority of Republicans, don't support the idea of this. Republicans in Congress are against it. Of course, the president has midterms to think about. His approval ratings have declined. The Venezuela intervention was also not popular. So what's going on? You know, Trump himself is very clear about this. He says, I've been right about everything so far. He said that to Maria Bartiromo last night on Fox.
But then what about the Supreme Court in all of this? Because, of course, we're waiting for the decision on the IEEPA tariff. Surely these tariff threats could be deemed unlawful as well. If that's the case, then the market reaction in Europe today is an overreaction, surely.
Well, that's right. So you've seen the European leaders saying they're going to wait and see for February 1st because, you know, we've got taco, right? Trump always chickens out. And then we do still have a system of checks and balances in the United States. We don't know when that Supreme Court decision will come, but I don't think that President Trump and the White House have helped themselves with the announcement of these unilateral tariffs against Europe, because let's remember that the U.S. Constitution puts Congress in charge of that. The president has been relying upon his interpretation of emergency powers, and that may not hold up, and this decision may actually embolden the Supreme Court to rule against him.
We're also expecting UK Prime Minister Keir Starmer to head to China. We heard his statement there in response to President Trump's threats. Do you think that this is the moment where the UK starts to pivot more to China and away from the US? I'm sure we were all waiting for the Love Actually moment there from Keir Starmer, but of course it didn't happen.
Well, the Love Actually moment where Hugh Grant says he refuses to be America's poodle, which of course came in the aftermath of the Iraq War. China bears its own geopolitical risks, and Mark Carney, in his visit over the weekend, signaled willingness to get closer. But for Europe, it's fraught. What we do know is that diversification away from the United States, whether you're an investor or the leader of a country, is increasingly becoming a critical survival strategy.
Tina, so good to have you on. There's so much to talk about. We could have done Venezuela, we could have done Iran. We'll have to get you back for those. But Tina Fordham there, Fordham Global Foresight Head, thank you so much. We're still ahead. We're going to be speaking to the UAE Economy and Tourism Minister live in Davos. That conversation coming up next as we look at these markets firmly in the red. S&P E-minis down more than 1%. The Stock 600 down 1.3%. Stay right here. This is Bloomberg.
up-to-the-minute news whenever and wherever it happens. I'm Katie Greifeld at the JP Morgan Healthcare Conference in San Francisco, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
In case you missed it on Bloomberg Crypto.
Well, we certainly understand needing to pay back the debt. That certainly makes sense. But on the dividend, why are you so committed to paying this dividend? Would you ever consider suspending it? Companies do suspend dividends from time to time.
Yeah, companies do suspend the dividend, but it creates fear, uncertainty, doubt in our preferred shareholders, which will impact our convertible shareholders, which will impact our equity shareholders. So I think preserving the payment of the dividend, even if our board has the rights to suspend it, it's the right thing for the short term, for the next 1, 2, 3 years, and it's important. It's also important for the Bitcoin asset class, and we realize we play a role bigger than just strategy in the Bitcoin world.
So would you say investors should think you will never suspend that dividend?
Never say never, but yeah, our objective is to pay the dividend into perpetuity.
Don't miss Bloomberg Crypto, live Tuesdays.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Bringing you up-to-the-minute financial and geopolitical news whenever and wherever it happens. I'm Francine Lacroix in Davos, Switzerland, and this is Bloomberg.
Welcome back to Bloomberg Markets, 11:29 a.m. here in London, and it is red across the screen for European equities. US markets on holiday today. We are looking at futures, though, pointing lower stateside. Here in Europe, it's defence names rallying, but the tariff-exposed sectors hardest hit, autos, luxury, all but one sector in negative territory. And this risk-off sentiment really, as European officials have taken a hard-line stance against President Trump's threat of a 10% tariff on the 8 countries opposing his plans to take Greenland. Gold and silver up to record highs, the dollar down on the flip side, and euro dollar up as a result of that. Euro dollar at 116 handle, and the Swiss franc benefiting as well. Let's get back now to Davos, where Jumana Basetchi of Bloomberg Horizons Middle East and Africa is standing by with a special guest, Ju.
That's right. Good morning to you, Lizzie. Well, here from Davos, the sun is just coming out now, so a good setup for our next guest. I'm really happy to say that joining me right now is the UAE Minister of Economy and Tourism. Tourism is the new part to the title. His Excellency Abdullah bin Tulk Al Mari. Really good to be chatting to you. How do you think the setup is for this year?
Well, looking at the global economy and the fragmentation that's happening and the geopolitical shifts that's happening when it comes to tariffs and trade wars, there's always an opportunity. And the UAE's economic model has weathered the last 4 to 5 years a lot of these storms. And the basic part of the economic model that we have is resilience when it comes to diversification.
Yeah.
UAE's economy diversification today is about two-thirds about three quarters actually, 75 to 77% of the UAE GDP is non-oil, and is growing. 5 years ago, it was about 69%. So we are growing between 4 to 5% expected this year, 2025 and 2026. We have a growth of 5% as well in non-oil GDP. This shows that the UAE have the economic model to, in opening cooperation, in dialogue, and finding new areas for investments, and that's something which we are always keen on doing.
It's interesting you say the word dialogue, because you know that the theme for the forum this year is the spirit of dialogue, but at the same time, there has been a lot of headwinds to multilateralism. You have a U.S. president who will be coming here and making a big speech on Wednesday, but his approach has been one to tear up the existing playbook and really to challenge the norms that have existed with these multilateral institutions. What place is there, do you think, as an economy minister, for multilateralism in today's world?
Well, it's very important that the UAE's economy, we always look at the multilateralism as a key important aspects to really have that dialogue, to really converge, to really speak in the G20, in the BRICS, and others as well, in the UN's institutions, from tourism, from trade organizations. That's something which is important to really bring that dialogue and really speak about, weathering the kind of challenges that's happening. And we've seen the global economy that has a lot of elections happening this year. We're going to see a lot of, industrialization policies, protectionism. But we need to weather this as well, and we need to have diversification as part of the economy. And this is the kind of resilience model that we have. Now, let me explain a couple of things that we've been doing in the UAE. More specific one was very recent. We've changed the UAE company commercial law, changed about 15 articles in it that has today introduced 15 types of share types that you can introduce to a limited liability company, for instance. You can start a non-for-profit company, for instance, in the UAE. You can move from Emirate to free zone to any Emirate Abu Dhabi to Dubai company without diluting the company and starting up again and losing all the financial history of the such company. So movement as well made it more easier as well for the UAE. So that's kind of changes that happen in the law itself just 30 days ago have really eluded as well the kind of growth that we're looking at. We're looking at 10 to 15% growth in company registration just from that changes.
Yeah, let me pick you up on one thing before we talk about ease of doing business in the UAE. The UAE trades with Iran. UAE has economic relationships with Russia. And I wonder whether you think about the economic consequences of that, simply because, again, you have a U.S. president who thinks about weaponizing the economy. He's even spoken about a potential 15% tariff on the UAE because they still trade with Iran. Do you think about that?
In the whole aspect of that, all that, UAE's economic model is really based on trade, based on the economy, based on investment. We look at resilience, we look at diversification. UAE have attracted about $42 billion worth of FDI inflow into the UAE. We've grown from 19 billion 3 years ago up to 20, 30, 40 billion dollars worth of FDI inflow in the UAE. So UAE has been an attractive magnet in the region as well for investments to come at the UAE, to look at the UAE opportunity. We've seen the growth of companies from 5 years ago from 600,000 registered to now 1.4 million. And we are expecting to reach 2 million companies registered in the UAE in the next couple of 6 to 7 years. But that's kind of the growth. I believe in the UAE's vision, believe in the UAE's economic model, believes in the kind of aspect that the UAE is doing something right. Yeah. And I think the more important aspect is from, like I said, the company law to the CEPA signings to the reform into the immigration policies, the golden visas, for instance, have really transformed that. And tourism is, of course, tourism today represents about 15% of the UAE's economy, GDP, and that's when we show that UAE can go as well more than 17 to 18% of that in tourism. Today, the occupancy rate in UAE's hotels goes up to 78% on year round. That's one of the highest in the world.
Yeah. I'm sure you've heard Ray Dalio say this before, but he's several times mentioned that in his view, the UAE is a Renaissance country, or the Abu Dhabi is a Renaissance state, right? He tends to use that term quite a lot. And when you talk about ease of doing business, I mean, there is a reason that lots of asset managers, companies, financial institutions have chosen to relocate or to establish offices in the UAE because of that ease of doing business. What do you think enables the system to get this type of decision making through in an efficient and timely manner? Because it probably is a model that many countries around the world are looking at and saying we'd love to do the same as well.
Well, it's, trickles down from the leadership. Today we have the leadership wants the UAE to be 24/7, operates like an ink. incorporation. The UAE's government today needs to provide services, to everybody at 24/7. Today, AI, for instance, is still in the UAE's economy, and in the government as well, to use AI in doing services and providing services and becoming more efficient and efficient. We have in the UAE our colleague, His Excellency Omar Al-Olama, the Minister of AI, for instance. He has a program and agenda to really incorporate that even within the UAE's government as well. So when you look at the model of the UAE, we need to make sure that we improve our services, create kind of that ease of doing business into it. Now, there are two things in any economy. One is the ease of doing business, and the other one is intellectual property, the innovation capacity that the UAE creates as well. Now, any businesses today, yes, they want the entrepreneurship capacity to really go forward, but the innovation capacity is important. So we looked at the innovation from an IP, for instance, intellectual property, the registration. Now, today in the UAE, we have fast track that comes up to 6 months. If you have a green IP and intellectual property that's with the green technology, can go even faster, like 3 months registration in the UAE. The UAE today looks at the IP as well, ease of registering your intellectual property as fast as possible as well, like opening businesses. And these goes hand in hand as well.
Earlier on in the interview, you said that 2/3 of the UAE economy is now non-oil. And the UAE economy has been growing around 4 or 5% the last few years, weathering a lot of these storms in the global environment. What are going to be the biggest drivers of growth for the UAE economy in the next few years? Where's it going to come from?
I think there's a lot of growth, but today we have the Green Innovation District that we have launched very recently, for instance, in Expo 2020.
Yeah.
The Expo site. The Green Innovation District today is powered by renewable energy. The UAE today is as well an important aspect. How can we produce green products, green industry, green technology, green IPs, kind of the hub as well to help the world be more green and to help the other countries as well to reduce their carbon emission. The UAE has the ability to do that. In processing, for instance, we process aluminum, for instance, but we don't have a bauxite. We process gold, for instance, one of the leaders in the world in gold, but we don't have a gold mine. And we process chocolate, for instance, we have the Dubai chocolate, but we don't have a cacao farm, but this is as well. So the UAE has a very strong aspect in processing. Now, when it comes to green industrial, and more specifically on the critical minerals, critical minerals are more aspect as well for the future of growth, going from copper, lithium, nickel, cobalt, these kind of minerals that really are important for the future of industry. The UAE can help the world process these in green industrial zones, and one of them now today is in Expo City, which has been launched and going to be provided as well with circularity economy around it.
Let me circle back to where we started, which is trade, global trade. I know a big focus has been the signing of CEPAs, not necessarily your mandate, the mandate of the Trade Minister, His Excellency Dr. Thani, but I'm curious to hear whether we can expect more CEPAs to be signed this year, and whether also you see them as a big driver of growth going
Of course, CEPA today is a big driver of our diversification program and a plan that we have set back in 2021. And I think this is an important aspect when we led this kind of whole diversification agenda in the UAE for the economic model as well. CEPA had a huge part, and we're more than 26 to 27 CEPAs has already been signed. We have as well others under negotiation that will come under the plan as well. So there is more to come, and I think it's important to
give us any hints on which countries or regions?
Well, it depends on the negotiation that goes and how fast it goes, but they will come in very soon to the surface, and you'll hear about them. But there are still more in the pipeline coming through.
Okay, and just final point on this one. With the UAE signing these bilateral trade deals, does it impede the ability for the GCC as a whole to get trade deals across the line?
Not at all. Not at all. The same negotiation team who works on the CEPA, the same negotiation on the GCC. But as you know, trade today has, the GCC had different economic models, and everyone had different needs and requirements when it comes to these negotiations, but all of them as well complement each other on a bigger scale.
Your Excellency, thank you so much for your time. Lizzie, that was His Excellency Abdullah bin Touk Al-Mari, the Minister of Economy and Tourism for the UAE.
Jemana, thank you so much for bringing us that conversation. Hope you're keeping warm over there. But coming up on Bloomberg Markets, we'll get back to the trade tensions ramping up between the US and the EU. Leaders now threatening new tariffs on either side, and stocks selling off on both sides of the Atlantic. US futures pointing lower. We'll break down the latest next. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
This has been Bloomberg Markets, 11:44 a.m. here in London, and we are firmly risk off this Monday morning. The Stock 600 down 1.3%, S&P E-mini futures down 1.1%. We do have precious metals soaring, gold and silver at record highs on the haven demand, the dollar down and euro dollar up on the flip side at 116. All of this, of course, in response to President Trump's tariff threats on Europe to try to get the purchase of Greenland, and Europe hardening its response as well. Now, if we dive into the sectoral breakdown across the European continent, we have all but one sector in negative territory. You can see the autos hardest hit, along with luxury, but Volkswagen here down 2.2%, BMW down 3.9%, Mercedes down 3.4%. If we flip the board over, you can see some of the defence names are rallying this morning. The likes of Rheinmetall, Thales, Saab, big gains for Saab, 4.1% here. But this really not enough to offset the losses elsewhere in Europe. So the FTSE MIB in Italy really battered, down 1.7% as things stand. That appears to be the worst performer across the European continent. But we can go back to Davos now. Investcorp Executive Chairman Mohamed Al-Ardi says that there's value in pockets across the GCC for investment opportunities. He was speaking to Germana Versace on the sidelines of the 2026 World Economic Forum. So let's get back to Davos, Switzerland.
Obviously, uncertainty is there, but I think we look at value everywhere, and there is value everywhere in pockets. You know, in the United States, for instance, I think what's going on in terms of the stimulus, in terms of the focus on technology and AI, some of the things that made tax codes permanent is really helpful for business, but also the approach about looking at affordability. All these things are to make good business and investment environment. So basically, we see value everywhere in pockets.
Do you think private capital is going to play even more of a stabilizing force over the next couple of years as countries have to deal with the rise of protectionism and look inwards?
I believe so. I mean, as you know, InvestCorp has always really been a bridge for private capital from the Gulf outside and from outside the Gulf inside. And it's a patient, it's, I think, capital. It's something that really reduces volatility, especially in times when you do need patience with capital. You do need thoughtful processes in ensuring that you invest through crises and cycles.
Yeah, so you're a homegrown Middle East investment fund, and I'm curious to hear how you see the opportunity set right now in the Gulf. I mean, you have countries like Kuwait also looking to open up as well. I mean, how are you seeing the opportunity set specifically in the Gulf? You've been there a really long time.
So we look at the Gulf as really an ecosystem for us. It is definitely a very compelling long-term investment market in this global economy. I mean, you have clear policies, you have sovereign balance sheet that is really strong, you have capital, you have huge economic transformation agenda.
So that was Bloomberg's Jomana Basetchi alongside InvestCorp Executive Chairman Mohammed Al-Adi. Plenty more conversations to bring you throughout the week from Davos, of course. But turning back now to our top story. The trade tensions boiling over between the US and the EU, with leaders threatening new tariffs on either side over Greenland. Let's get to our trade czar, Bloomberg's Brendan Murray now. Brendan, I hate to have to ask you this, but are we back to square one? Where does this leave all of the trade deals that have been negotiated since Liberation Day last year? Do we just see that the US-EU deal and the US-UK deal have basically been ripped up? Good morning.
Yeah, exactly. I think most of us thought that the trade turmoil from the White House and President Trump's social media accounts were a 2025 phenomenon, but he quickly reminded us that that tariffs are his favorite tool, and he is increasingly using that tool for geopolitical purposes. We saw this with Iran last week. He slapped 25% tariffs on the trading partners of Iran. That hasn't been implemented yet, so it's still merely a threat. And then we saw this over the weekend, the new threat on these main European economies of 10%, ratcheting that up to 25%, really targeting Germany, France, Sweden, and some of the countries that are most vocally supporting Greenland's independence from his efforts to try to gain control of Greenland. So, yeah, I think that we're of course waiting for the Supreme Court to rule, and so we'll see if he gets reined in with that tariff authority or not. But it quickly dawned on us as we woke up this morning, and markets are trying to assess this latest threat, that President Trump still sees tariffs as a way to accomplish many of the things he's trying to accomplish.
Okay, and we are firmly risk off this morning. Brendan, thank you so much. We'll hope to get back to you later on in the day, but for now, that's Bloomberg's Brendan Murray. Now, one person that, of course, has a keen view on this is former Bank of Portugal Governor Mario Centeno. He says monetary policy must serve as a stabiliser amid the rising tensions between the EU and the US. Centeno, who is a candidate for the ECB's vice presidency, was speaking to Anna Edwards and Tom McKenzie earlier on the opening trade. Let's take a listen.
I think European Union institutions will increasingly be called upon to act as a stabilizing actor. And this very much applies to the European Central Bank and to monetary policy. It would be great if Europe can continue this coordination of policies that we achieved in recent years, because really the challenges are very, very big.
Okay, so monetary policy should act as a stabiliser, you think, Mario. What if European politics dictates that the Commission responds with retaliatory tariffs? How should monetary policy respond then?
Well, we have a mandate, which is price stability. Some of these policies and the shocks that we are facing, they have an impact on prices. So the best thing that could happen for all of us would be to each dimension of economic policy to do exactly what is expected for it to do. So monetary policy should continue to look for price stability. This is our mandate. But we do understand that it's very important for us to keep that in mind, that the coordination of policies helped us a lot to go through the COVID and inflation crisis. And these challenges that we face today are not smaller. So we need to expect that this, how I put it, this stabilization anchoring from policy can really be on the table.
Mario, in terms of that stabilization of policy at the monetary policy level, if we do get to a point where tariffs are imposed between the US and Europe, should the ECB consider additional rate cuts this year?
Well, it's all about inflation and financial stability. We want to have financial stability because it is a prerequisite of price stability. If tariffs really have an impact in prices that will take us to reduce cuts further, that will be our job to do. So the important thing here is to understand that each piece of these common policies in Europe play together in a way that delivers for us, because that's quite important for Europe, the stability we need to go through these very difficult moments.
And we want to get to your candidacy, Mario, in terms of the European Central Bank Vice President role, and of course you'd be representing in that role, should you get it, the Southern Europe. What would you bring to the table? What kind of voice would you bring that doesn't exist right now at the ECB?
Well, it will be a voice that brings all this experience of dealing with very difficult challenges, the financial financial crisis as a minister, then as a governor, COVID and inflation. Also a voice of consensus. This is probably my most well-known trademark. Is I'm striving always to get a consensus in a council that works in a collegiate way. So this will be my best credentials to the job.
So that was the former Bank of Portugal governor with Anna Edwards and Tom Mackenzie on the opening trade earlier, debating the impact of President Trump's tariff threats on European nations, on the ECB and its rate path ahead. Could it be that you see a hit to growth and therefore the need for the ECB to step in with rate cuts? Could it be that you see more European defence spending? It's the same debate that we had throughout 2025. But of course, Centino also looking ahead to his candidacy for the Vice President of the European Central Bank. So a fantastic conversation there on the opening trade earlier. If we just check in on these broader markets, it is risk off across Europe this morning. We have stocks pointing lower for the Wall Street Open tomorrow. S&P E-minis pointing lower there. Of course, it's a holiday stateside today, but records for precious metals on the risk-off sentiment, and euro-dollar there at a 116 handle. Coming up, we'll dive more deeply into these markets. Dana Doria, co-CIO of Investnet, on her market outlook for 2026. Coming up next, plus plenty more from Davos. So stay with us. This is Bloomberg.
GDP growth in South Africa has really been lackluster for quite a number of years, and largely because the economy has been hamstrung by state-owned entities that have a monopoly on transport, energy, that have not been functioning for a very long time. So one of the things that give us hope, and I think we're able to be constructive with the outlook, is the economic reforms that are taking place in the country. So on energy, I think Eskom has done well to stabilize the days of load shedding, and then the energy factor and reliability factor keeps on improving. It's overdue, probably should have been done about 20 years ago. But those are things that are important to support the medium and long-term growth prospects of the country. So that's encouraging. South Africa is our primary market. We'll have operations outside to make sure that they provide resilience and growth for the portfolio. So it was quite pleasing to be able to grow earnings in South Africa by 13% in an environment where GDP growth is less than 1%. Households are still under pressure. I mean, like the rest of the world, we've seen a high inflationary environment with high interest rates, so that has put pressure on households. But even then, that inflation is starting to come down. Rates have come down. In the long run, that's very good for South Africa.
Bringing you up-to-the-minute aerospace news whenever and wherever it happens. I'm Guy Johnson at the Dubai Air Show, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now. And very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the lights air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape more beautiful. 3. Then. Looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Welcome back to Bloomberg Markets. We're just coming up to 12 noon here in London. Of course, US markets are on holiday today, but we have futures pointing lower stateside and European equities red across the screen. This in response to President Trump's tariff threats and the hardening response from Europe. In response, we have the FTSE 100 down 0.5%, but the FTSE MIB in Italy really suffering, down 1.5% at the moment. Euro dollars at 116 handle. The dollar is feeling the pain as we see precious metals soaring to records. Gold there at $4,660 a troy ounce on the safe haven demand. Well, coming up on the programme, we'll dive into those trade tensions soaring. The European Union weighing tariffs on nearly $100 billion of US goods as the conflict over Greenland heats up. We've got EU leaders set to hold an emergency meeting this week as President Trump threatens 10% levies starting February 1st. And let's get more now from Brussels. The EU warning that it's ready to strike back if President Trump follows through on his new trade threats. The UK Prime Minister, meanwhile, Keir Starmer, of course, addressed the situation earlier on today.
Alliances endure because they're built on respect and partnership, not pressure. That is why I said the use of tariffs against allies is completely wrong. It is not the right way to resolve differences within an alliance.
Bloomberg's chief European correspondent Oliver Crook joins us now from Brussels. Ollie, Starmer's taken a softly approach to Washington so far. We know that the European Union somewhat rolled over when it agreed its trade deal with Washington last year. Is this the moment that Europe gets tough on the US?
Yeah. This is the real question, Lizzie. Is the moment of appeasement, is it over for the Europeans? Is this the time for them to really stand up? Because at a certain point, depending on what you get demanded from the United States, it seems that no trade deal is going to be a final trade deal at the end of the day. And whenever there's something new, in this case Greenland, you're going to get these threats of tariffs again. So then the fundamental question comes, what is the price that the Europeans are willing to pay for their own sovereignty? And that's sort of how this conversation is increasingly being framed. Again, the sort of reminder to everybody, we're expecting 10% tariffs from the United States. That's what Trump said, beginning on February the 1st for 8 nations across Europe, including the UK, France, Germany, Denmark, of course, all about their participation in trying to safeguard the Arctic, and that small delegation of military personnel really seen as more of a symbolic gesture to try to boost the sort of defense situation over in Greenland. Now the Trump administration saying that if you do that, there's going to be not only 10% tariffs in February, but that'll go to 25% tariffs in June. For the Europeans now, they need to make a very, very fine calculation, a very complicated one. They would like to see a diplomatic off-ramp. They would not like to engage in a trade war with the United States, but there reaches a certain point, and we heard the word...
Okay guys, ये नेचुरल गैस को देखोगे, नेचुरल गैस काफ़ी देर से रुका हुआ है, 3 बार पहले इस लेवल पे आ चुका है, पास्ट में ये चौथी बार आया था मॉर्निंग पे, उसी लेवल पे रुका हुआ है। अगर ये थोड़ा सा ऊपर निकलता भी है ना, यहाँ पर एक और रेजिस्टेंस है प्रीवियसली, वहाँ से देखेंगे थोड़ा रिस्की ट्रेड था ये, मॉर्निंग पे मोमेंटम ऑलरेडी कर चुका था, तो मॉर्निंग से आप कह सकते हो साइडवेज ही है पिछले 6-7 घंटे से इसी रेजिस्टेंस एरिया पे। बट अगर ये थोड़ा सा ऊपर निकलता भी है तो बाय मत कर बैठना, ऊपर एक और रेजिस्टेंस है इस एरिया में। वर्ल्ड इकोनॉमिक फोरम की मीटिंग ऑलरेडी कंटिन्यू है, लेट्स सी कुछ वहाँ से स्टेटमेंट अगर आते हैं तो।
Okay, Bloomberg's Oliver Crook, we thank you so much, and we'll get back to Ollie in Brussels throughout the programme. But turning back to markets now, Dana Dioria, who is co-CIO and Group President of InvestNet, has been writing, if we can believe the economic data, there doesn't appear to be anything to rain on the multi-year bull market parade high note that 2025 rung out on. Dana, I'm pleased to say, joins us now. Dana, does that stand up against the geopolitical threats that we've been seeing over the weekend on Greenland and the tariff threat as well?
Yeah, it's interesting how much markets can shrug off and for how long they can seem to shrug it off. I actually do think it holds up. I think, to a certain extent, we've obviously been dealing with the threat of tariffs. I mean, if you have a hammer, everything's a nail. So, it's tariffs. I'm upset about this or I'm upset about that. Let's look at doing more tariffs. I think the market's been seeing that for a long time. I don't think until and unless we actually see, real conflict with allies and, we don't know where these tariffs will even land. But I don't think the market, is going to stub its toe too much on that. I do think under the surface, right? I mean, the market can shrug off a lot of geopolitical uncertainty. We've been dealing with it for a long time now and in a lot of other ways. I do think, though, under the surface, obviously gold has done phenomenally well. We have sort of this barbell approach that the market is taking where stocks are doing great, but you also have, kind of this turn to assets like gold or silver where, there is some concern kind of shining through there, and the dollar has taken such a big hit. So I think underneath the surface, there's some signs that the market is, these sorts of concerns do penetrate. But at a high level, I think, that alone doesn't stop the market based on what we know today.
Well, when it comes to that Sell America trade, if European countries own twice as much of America's bonds and equities as the rest of the world combined, if you are seeing this renewed tension between the US and Europe, in fact, a stepping up of that tension, are we not about to see a serious rebalancing in response to Trump's threats?
Yeah, I don't think it can happen fast, but that is part and parcel of what I mean about the sort of the under the surface, where slowly but surely you will have this sort of rotation, I think, and this paradigm shift. And I do think that that's exactly what you're seeing now. That's what you're seeing in the dollar, you're seeing in gold. You're sort of seeing this hedging of bets and this kind of moving out of a paradigm where, you know, the dollar is the world's currency, and you know you do in certain respects have to kind of move out and diversify. And we saw last year, you know, if you're thinking about this from the perspective, obviously, of a U.S. Investor, you know, diversification is probably the answer for you too as well, right? And we saw diversification work phenomenally well last year. I mean, the S&P 500 did turn in another double-digit gain, but international markets trounced that, right? 30% returns in the MSCI EFA, the MSCI emerging markets, and it really spoke to the reason that people need to have diversified portfolios, or most people are well benefited by diversified portfolios, especially in uncertainty, right? And this administration is marked by nothing more than uncertainty, right? It's all uncertainty. Who are we going to, you know, kind of go after next? And so I think for a U.S. investor, you should diversify the portfolio to the extent that you can handle some sort of tracking error to U.S. indices.
But what about the potential hit to European stocks in the context of that diversification? If President Trump isn't just using these tariff threats as a negotiating ploy, if he goes ahead with them and Europe responds with the anti-coercion instrument, what about the hit to European earnings?
It's true. I mean, you certainly have a situation, and you're already seeing it in today's markets are sort of showing us this, right, where it could be problematic for European stocks. And you know, the comments are on point where if these are allies and, you know, we're sort of playing with fire in a certain extent, yeah, there could be some, you know, some fallout there. But I think largely for U.S. investors to try to get fully ahead of that, right, and to say, okay, where is this going to land? Are we going to land in a place where it's 10%? No, actually, we do ramp up to the 25% threat. Or are we going to land in a place where there's some level of, you know, negotiated outcome here, as it has been every time, and, you know, we're not going to pull out of European markets with the anticipation that we're going to land in the very worst spot. I think, again, it's a hedge your bets kind of a philosophy, but as much as yes, you know, from a pinpoint perspective, if we move forward with these tariffs, and of course if the tariffs are legal, right, which is also hovering in the background here, that we haven't had that decision yet. But to the extent that we come out in a place that's bad for these tariffs, obviously markets will reflect that to a certain extent. I think for the U.S. investor, it's not a reason to be pulling out of international markets by any stretch.
Okay, I take your calm, I take your skepticism. Maybe this is all just taco, maybe it's something that we see struck down by the Supreme Court. Let's turn as well to another policy risk emanating from the White House, Dana, and that is around the Federal Reserve. Of course, we've seen the threats to Jerome Powell, the criminal investigation, and then we've seen the comments from the President over the weekend, and actually Rick Reeder emerging as a more likely candidate as well to replace Powell. How different do you expect the outlook for the Fed's path to be under Walsh, Hassett or Reeder?
You know, I think we have to, I think markets realize that whatever that choice, right, there's going to be pressure from this administration to be more dovish with rates. It's going to be, there's going to be a certain expectation that we see rate cuts. And so then it becomes sort of path dependent how you think about what's going to happen there, right? If it's a more dovish Fed, but in fact we should be cutting rates, then there probably isn't, you know, too much of a negative outcome as long as we actually kind of take the foot off the pedal on some of this, you know, kind of craziness around, you know, the current Fed chair and you know, a legal investigation, et cetera, right? So if we can back off that and it becomes a matter more of, you know, who gets appointed as the next Fed chair, we're clearly going to be more dovish, then it kind of becomes path dependent as to whether that's a good thing, you know, long run or a bad thing. I do think it's helpful, at least to a certain extent right now, that the data seem to point, at least for now, that we do not need a rate cut. I think it's pretty deterministic. I think, you know, it would be hard to, obviously what's interesting about the last few meetings is that there's been controversy and some feeling we should cut more and some feeling not at all. I think where the data stand now between unemployment and CPI, it doesn't look like we should cut in January. It'd be hard to make a strong case for cutting in January. And I think that's good for a Fed sort of under siege, because it doesn't leave a lot of room for argument. It doesn't leave a lot of room for, hey, there's a path here for the very dovish to say we needed a cut. In fact, it doesn't look like we should have a cut. The unemployment is cooling a bit, but we're not getting huge amounts of jobless claims. We're not getting a reason to say that that's the more concern. The Fed will and should prioritize, kind of the concerning stick in inflation, worrying about what January inflation is going to come in at, which we could have a filtering in of higher prices there. So I think at least for the moment, we can breathe a little bit of a sigh of relief, because we should not have a cut in January. We also should not have a huge amount of controversy over it.
Okay, the data doing Powell and Co. a favour for now. Dana, thank you so much for your insights this morning. That's Dana D'Auria of InvestNet Solutions. Well, coming up, Francine Lacroix is in Davos, and she's been sitting down with the Franklin Templeton CEO, Jenny Johnson. So we'll get that conversation coming up next. This is Bloomberg.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet. But there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. Stamp tool on Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
This is Bloomberg Markets, 12:14 p.m. here in London, and you're looking at it risk off in markets. The Stoxx 600 down 1.25%, S&P E-mini futures down 1.1%. This, of course, in response to Trump's tariff threats on Europe, because he wants to acquire Greenland, and Europe hardening its stance in response. We've got gold and silver hitting fresh records on the safe haven demand. Gold here at $4,666 a troy ounce. The dollar down and euro dollar up on the flip side at 1.16 at the moment. Just diving into the sectoral landscape, and all but one European sector is in negative territory. Of course, it is the tariff-exposed sectors that are hardest hit. Autos and luxury, you can see here, BMW down 3.6%, but the defence names are rallying at the moment. Goldman's basket of defence shares hitting an all-time high. Rheinmetall up 2.7% and Saab up 4.5%, but that really not enough to offset the losses elsewhere. elsewhere that we're seeing in Europe. Let's dive into what's actually happening in terms of the European response to these tariff threats from President Trump. Bloomberg's chief Europe correspondent Oliver Crook joins us again from Brussels. So, Ollie, we've talked about potentially how Europe could retaliate. We've talked about whether this is the moment where we see European leaders uniting. Is this the moment when we see European populist parties breaking with the MAGA movement and President Trump?
Yeah, because we can talk as much as we want about the retaliatory measures that are possible from the European side, whether it's the anti-coercion instrument, whether it's $100 billion worth of American goods that come into the European Union, tariffing that, all of those sorts of things. You start to get real problems in sort of taking any of those actions, even if there's agreement at the sort of mainstream and leader level, particularly domestically in a number of nations, whether it's the United Kingdom, whether it's in Germany, whether it's in France, where you basically have these far-right Eurosceptical parties that tend to push back on everything that the sort of mainstream tries to do. This is not the case in what we're seeing on the conversation around Greenland, whether it's Nigel Farage, who believes that the Trump administration has gone too far here. We heard the same thing from Alice Weidel and the other head of the AfD over in Germany, basically saying that this Wild West approach from the United States is not an appropriate way to do business. Same thing from Jordan Bardella over at the Rassemblement National in France, all basically communicating a very similar message. That then leaves the question of what the Europeans will do with that degree of unity. They obviously do not want to sort of pull the plug on their own economy, create all those sorts of issues. They still want to de-escalate with Trump. They want to negotiate. They're hoping to take the opportunity this week for Trump, who will be in Davos, to try to have that conversation. But if not, come February the 1st, it's hard to envision a world where the Europeans basically don't do anything. And we should say it's been a year that's been marked by the Europeans doing nothing, rolling over, giving the Trump administration what they want. At a certain point, and I think we may be reaching that point, there is a question about what is the price for sovereignty, for the sovereignty of a nation, in this case Denmark, and that is a price that now the Europeans will have to gauge basically how much the cost will be economically, but also geopolitically for the future of NATO, and so issues like Ukraine that is still very much dependent on continued American support.
So, Ollie, we know that the French President Emmanuel Macron backs using the ACI, the anti-coercion instrument, which is basically the trade equivalent of going nuclear. How much support does he have for that approach in the rest of Europe?
I think that we're going to hear more and more about this. Generally speaking, with the ACI, Emmanuel Macron has been the one that's really sort of pulling the trigger quite quickly on that. He's brought it up before in the original negotiations with the Trump administration. Didn't really get much buy-in at the European level from other leaders who really wanted to bring the temperature down. I think that may be starting to shift. You're starting to hear rumblings from the Germans, who are, of course, the sort of biggest stakeholder in this conversation, in addition to the French in terms of how to retaliate. But we also heard from the German business lobby, for example, saying, effectively that, we're now approaching a sort of line in the sand and that you cannot continuously roll over. And that is a very different tone from what we had heard from a lot of the sort of corporate voices. Again, what we're trying to envision is the difference between this tariff war and the last tariff war. The last tariff war was about rebalancing the trade balance with the United States and Europe, about the trade deficit that exists between America and the Europeans. That is potentially a much more legitimate use of tariffs. As far as the Europeans are concerned, to try to take the sovereignty of Denmark and try to advance your geopolitical goals so aggressively using tariffs, it's not seen as that, to say nothing of the fact that if it's really just about not winning the Nobel Peace Prize, then you're really going to confuse the leaders here in Europe, and they're going to have to figure out how to respond to that.
Okay, Oliver Crook, thank you so much. That's our chief Europe correspondent, Oliver Crook, out of Brussels. Well, we've heard the European response there. Let's also turn to the response here in London. UK Prime Minister Keir Starmer taking a stance against President Donald Trump's threats of new tariffs on EU nations, but also the UK, and saying that they would damage the British economy.
I talk regularly to President Trump, and my team is in daily contact with all the key figures in his administration. These relationships matter. They deliver concrete outcomes in the national interest. Mature alliances are not about pretending differences don't exist. They are about addressing them directly, respectfully, and with a focus on results. On Greenland, the right way to approach an issue of this seriousness is through calm discussion between allies. And let's be clear, the security of Greenland matters. And it will matter more as climate change reshapes the Arctic, as sea routes open and strategic competition intensifies. The High North will require greater attention, greater investment, and stronger collective defence. The United States will be central to that effort, and the UK stands ready to contribute fully alongside our allies through NATO. But there is a principle here that cannot be set aside, because it goes to the heart of how stable and trusted international cooperation works. And so any decision about the future status of Greenland belongs to the people of Greenland and the Kingdom of Denmark alone. That right is fundamental, and we support it. Denmark is a close ally of the United Kingdom and of the United States, a proud NATO member that has stood shoulder to shoulder with us, including at real human cost in recent decades. Alliances endure because they're built on respect and partnership, not pressure. That is why I said the use of tariffs against allies is completely wrong. It is not the right way to resolve differences within an alliance. Nor is it helpful to frame efforts to strengthen Greenland's security as a justification for economic pressure.
So not quite a Love Actually moment, but still an unequivocal response there from the UK Prime Minister Keir Starmer. Well, let's go back to Davos now. The InvestCorp Executive Chairman Mohammed Al-Adi says there's value in pockets across GCC investment opportunities. He's been speaking to Jemana Basekci on the sidelines of the 2026 World Economic Forum in Davos, Switzerland.
Obviously, uncertainty is there, but I think we look at value everywhere, and there is value everywhere in pockets. In the United States, for instance, I think what's going on in terms of the stimulus, in terms of the focus on technology and AI, some of the things that made tax codes permanent is really helpful for business, but also the approach about looking at affordability. All these things are to make good business and investment environment. So basically, we see value everywhere in pockets.
Do you think private capital is going to play even more of a stabilizing force over the next couple of years as countries have to deal with the rise of protectionism and look inwards?
I believe so. I mean, as you know, InvestCorp has always really been a bridge for private capital from the Gulf outside and from outside the Gulf inside. And it's a patient, it's, I think, capital. It's something that really reduces volatility, especially in times when you do need patience with capital. You do need thoughtful processes in ensuring that you invest through crises and cycles.
Yeah, so you're a homegrown Middle East investment fund, and I'm curious to hear how you see the opportunity set right now in the Gulf. And you have countries like Kuwait also looking to open up as well. I mean, how are you seeing the opportunity set specifically in the Gulf? You've been there a really long time.
So we look at the Gulf as really an ecosystem for us. It is definitely a very compelling long-term investment market in this global economy. I mean, you have clear policies, you have sovereign balance sheet that is really strong, you have capital, you have huge economic transformation agenda.
That was Bloomberg's Romana Bassetti alongside Investcorp Executive Chairman Mohammed Al-Ardi. Well, still ahead on this programme, Axis Bank MD and CEO Amitabh Chaudhry from the World Economic Forum in Davos, Switzerland. But just checking in on these market moves because they have been pronounced throughout the day in response to Trump's tariff threats because he wants to acquire Greenland. You're seeing a sell-off here in Europe. The Euro Stoxx 600 down 1.25%. S&P E-minis pointing lower because, of course, the US is on holiday today, but futures down 1.1%. Gold at a record here. Euro dollar at 116 off the back of the dollar weakness, but particular weakness for the tariff-exposed sectors in Europe. Autos down today, defence rallying, but nowhere near enough to offset the losses elsewhere. We'll continue to dive into these markets throughout the programme. This is Bloomberg Markets.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoin?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. I'm Romana Bassetti. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Watch Horizon's Middle East and Africa every trading day at 9 a.m. in Dubai and 5 a.m. in London. Only on Bloomberg.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
Oh boy.
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
This is Bloomberg Markets. We're just coming up to 12:30 p.m. here in London and checking in on these markets. If you're just joining us, we have the Stock 600 down 1.25%, firmly risk off here in Europe on President Trump threatening a 10% tariff on the 8 countries opposing his plans to take Greenland, and Europe hardening its stance in response. The US is on holiday today, so we're seeing US futures pointing lower, but stocks and bonds closed today, volumes lower in general, and these moves elsewhere likely more pronounced as a result. But as traders flock to safe havens, you've got gold at a fresh record, silver too, and the dollar weaker. Euro dollar on the flip side is higher, as is the Swiss franc. So pronounced moves in these markets, and we continue to monitor the geopolitical situation. It is, of course, top of the agenda over in Davos. Global investment leaders gathering at the World Economic Forum, and Bloomberg's Haslinda Amin is there on the ground for us. She's standing by with a special guest. Haz, over to you.
And Lizzie, we're talking about Indian banks. We've seen a flurry of deals with foreign banks worth about $15 billion. I have with me the CEO of Axis Bank, which is the 3rd largest private bank in India by assets. Let's get his perspective on whether those deals are sustainable going forward. Amitabh Chaudhry, we thank you so much for joining us. What do you think? Those deals, are they sustainable? And what does it mean for Axis?
Well, firstly, the good news is that so many of these deals are happening, and they're coming in, investing in some of the mid-sized players in the country. So it obviously clearly indicates that they find the Indian market attractive. They like the GDP growth rate. When they look at their markets, they believe they can make those returns. And it's good for the banks where this investment has happened, because it gives them staying power. They have foreign brands backing them, and so on and so forth. The only issue I have with this is that banks are the most leveraged institutions in the world, and the only way for them to really grow is to be able to get the deposits in. And getting deposits in India is not the easiest of things. Your local brand, local presence, local depth matters, and that will take a long time. So each of these investors who come into India, I'm sure have a very, very long-term view, and they do need that long-term view to be able to leverage the capital they're infusing in these entities completely.
We'll pick up on deposits just slightly later. I'm just wondering, in terms of these deals, how many more are you looking at? How big are they likely to be? What does it mean in terms of competition for you?
So, well, I mean, obviously the reason these banks are coming in is because they believe they can add value to the institutions they have invested in, and it could lead to increased competition. We are also hearing about merger of public sector banks to make them bigger and larger. There's also 1 or 2 divestments being talked about by the government, and again some foreign players and some local players have shown interest. So the competition is intensifying. I mean, by the way, there's enough competitive intensity anyway. So we are all generally well prepared for it. I do believe that 1 or 2 of these institutions will be able to come out from that mid-size bracket and give competition to some of the larger banks. I think there are in India today only 5 or 6 banks who can cater to every requirement of a customer across the entire value chain. India, given the size of the economy, given the ambitions of the government, does need many more banks. So competition is welcome. Competitive intensity is high. It might increase a little bit. Not that I should say it does not bother us, but we are well prepared for it.
Consolidation, is that expected? We know that the RBI, the government, they pretty much want the big banks to consolidate further. Where are we with that?
So consolidation will happen. The problem is that the ones you want to consolidate don't want to be consolidated. The ones who are not worth buying are the ones which are available for sale. But I think over a period of time, as disproportionate share of profits continue to remain with the larger institutions, I think some of the banks might be forced to look at the strategy all over again. You're seeing that in other parts of the markets also. It's not that banking is the only one. So I would expect consolidation to remain a theme for a long period of time. Now, how many happen, how many go through with whom, only time will tell.
How many? What is the right number?
I think, obviously we have a large number of banks, but India does need, in my mind, at least 8 to 10 large institutions to support the economy who can, as I said, play across the entire product suite. Right now, we don't have that.
So the small banks are at risk. Fair assumption?
I mean, either they decide to stay small and just cater to a certain section of the population or a certain product suite. If they want to be large, if they want to play across the entire spectrum, they need to be much larger than where they are today.
So right now, deposits, a huge problem for Indian banks. Why is that? Is it a case of, retail, I guess the mom and pops, they're putting their money basically in the equities market? Is that it? They're propping up the equities markets in a huge way.
So, that money which the small investors are putting in, it does come back. back. The nature of the deposit changes, but the money remains in the deposit system. The problem is not that. The problem is that initially RBI had curbed liquidity quite a bit, which obviously played into the low growth of deposits. Government is also carrying a lot of surplus balances, so that money is not in the economy. Also, RBI had infused a lot of cash in the system. So when you look at all of that, the basic flow of money to the deposit system, the banking deposit system, has definitely slowed down. RBI has stated openly that they would like to maintain certain durable liquidity in the system. We have seen times when that has not been possible because RBI has intervened in the foreign currency market, so liquidity has got kind of sucked out a little bit. But the expectation is that RBI will stick to its stated stance and bring durable liquidity in the market. That should help in deposit growth. But if on the credit side, the expectation is that the Indian credit growth will be 15 to 17%, ultimately deposit growth also should be a similar number. It cannot be different. And I think we are still some distance away from it.
So when realistically can we see that pick up
I
in
think
deposits?
it's another, in my mind, and I'm just throwing it out here, 18 to 24 months is the minimum time required for deposit growth to come back, and that will require sustained intervention by RBI in terms of ensuring that the durable liquidity remains and this deposit growth continues to move forward. Another thing which is happening in India is that, obviously, as I said, nature of deposits changing. So the cost of funds overall for the system is rising because the wholesale deposits tend to come at a higher price than...
It doesn't help that the RBI cut rates 4 times at 125 basis points. That is part of the reason why you're having trouble with deposits.
Yes. I mean, obviously, we have not been able to pass on the entire cut on the reverse repo side in form of deposits, while the interest rates on the lending side have definitely kind of come off a little bit. So you have seen squeezing of net interest margins of various institutions. I think it is stabilizing now. Hopefully from here on, assuming no further interest rate cuts happen, the net interest margins will start stabilizing or start moving up. Please understand that RBI also has institutionalized that if they cut interest rates, they need to be passed on to the customers very, very quickly. So all of us, literally within the quarter in which the interest rate cut is announced, have to pass it on to the customers. In our case, the number is 60 to 65% cuts happen immediately.
Amitabh, I want to talk about the rupee, the Indian rupee, among the worst performers in Asia. In fact, it was the worst performer in 2025. Is that a reflection of the economy? And I mean, how can it be so weak when the economy is growing at 7.5 to 8%?
That is reflected in our stock markets also. We're one of the worst performing stock markets. So yes, I think it's just reality on the ground. If you look at the net FDI inflow, it was close to zero. Gross was 1%. An economy which expects to grow anywhere between 7 to 8%. The net foreign direct investment should be in 3 to 4% range. We are still far away from it. I think the investors generally have moved away from India. They have gone into China and some of the other markets. I think there is a belief somewhere that maybe on the AI side, India has got left behind a little bit. Government is fully cognizant of that fact. So you have seen constraints being removed on fiscal, monetary side and the regulatory side. Government has formed various committees. You have seen some reforms which were not even thought were possible earlier. So I would say that the government realizes that they have a bit of a problem in their hands. I think very, very focused on trying to see as to how they can remove some of those cobwebs. I expect budget to continue to reinforce that notion, and hopefully that should reflect in foreign investors wanting to come back to India, and that should reflect in the currency over a period of time. At least it should not slide at the pace it has slid.
What can the budget do? What do you expect from the budget to prop up the currency?
Well, one is that the fiscal consolidation has to continue, so people have to believe the story that India will continue down the path of fiscal consolidation. I think they have to do a lot more in terms of ensuring that the share of manufacturing in our economy continues to grow, that MSMEs, the small enterprises, are supported much more than what has been done in the past. Government needs to continue to support manufacturing in terms of doing something about some very specific schemes for some of the sectors of the economy. End of the day, we want to come out of the mid-income trap. We need to invest a lot on R&D and creating global product firms. We're still far away from it. I think the time is slipping by, and the amount of money which government has to commit to invest has to be many times more than what they have done till now. So let's see what the budget is able to accomplish.
And Amitabh, what's fair value for the Indian rupee? And do you see the RBI under pressure to actually support it? It's done something, but it's not enough to reverse.
So RBI's stance has been that we don't intervene in the foreign markets. We let the rupee do its job. The only thing when we come and intervene is when there are sudden spikes which happen. So they are saying that we are not trying to aim a range. We are not trying to have a certain number in mind. But yes, if the spikes are there, we do support the currency so that the exporters and the importers...
What's fair value?
My mind is that I think India has seen a pretty sharp depreciation over the last 12 to 18 months. With a lot of the other things which are happening and what are happening around the world, hopefully the rupee should stabilize in this range as we go forward.
All right, Amitabh, thank you so much for your time today. Amitabh Chowdhury there, CEO of Axis Bank. Lizzie, handing back to you. Of course, he says that, you know, he expects the rupee to stabilize somewhat, but it has had some issues.
All right, Haz, thank you so much. That's Haslinda Amin. Of course, she'll be on the ground in Davos for us throughout the day and the week. But turning back now to our top story, trade tensions boiling over between the US and the EU, with leaders threatening new tariffs on either side over Greenland. Let's get more now with our trade czar, Brendan Murray. Brendan, we've got markets selling off here in Europe, safe havens at record highs. Do traders need to keep their hair on a bit about these tariff threats? Is this just a negotiating ploy from President Trump? Are these threats actually likely to be struck down in the Supreme Court? Hello again.
Yeah, it does. It does seem like this is another extreme threat that President Trump throws out there in an effort to drive parties to the negotiating table so he can accomplish something that's somewhere in between what the other side wants and what he wants. So we've seen this time and time again, starting on April 2nd of Liberation Day, where he announced these very high tariffs, and they came in, you know, much less than they ultimately did. So this looks like, and Kevin Hassett, the White House economic policy director, said yesterday on the Sunday shows that this was classic art of the deal stuff from Trump, and so. Obviously, the Europeans are looking at this with shock and dismay, and Trump has their attention now. But whether this actually will result in ultimately what President Trump wants, and that's a full, complete annexation of Greenland into the U.S., is a whole other question. But it definitely has the Europeans worried and scrambling to figure out how they're going to respond.
Yeah, so this could be the usual negotiating tactics from the White House, but what about whether the Europeans would put their money where their mouth is? We're hearing from the French President Emmanuel Macron talking about using the ACI, the anti-coercion instrument, basically the nuclear option when it comes to European trade. How likely are they going to be to use that?
Yeah, they ultimately could use that. Some of the member states would like to see that see the tougher approach. There are about $100 billion worth of tariffs that the Europeans have suspended. They could bring those back pretty quickly. Those would target companies like Boeing and American Bourbon and some other high-profile products. That could be the first step, and then the anti-coercion step is the sort of the bazooka. That's the tool that they could use to target digital services companies, big tech, and so that would ultimately be a last resort. And a lot of the Europeans still want to pursue diplomacy, but as one of the German officials said today, Trump has crossed the red line with the talking of taking over Greenland, and now the Europeans need to the time for diplomacy in that instance is over, and some of the Europeans want to see a much more vigorous and stronger response to the threats that are coming from the U.S. right now.
Well, speaking of diplomacy, we've just had Canada's Mark Carney in China. We're expecting Keir Starmer to follow in his footsteps. Has President Trump really just opened the door to a closer relationship between Europe and China?
Yeah, exactly. Canada made they weren't shy about the fact that they are now seeing China as a more reliable trading partner than the U.S. Remember, over the weekend, we had the European Union signing a new free trade agreement with the Mercosur countries in South America. So to a lot of folks, other countries, the trading partners that are getting burned by these tariffs that the U.S. is applying on their exports, they're going elsewhere, and they're trying to sign deals, and they're trying to rebuild relationships, as Mark Carney of Canada did with his counterparts in Beijing last week. And so the risk here is that the U.S. pushes these countries just so far away that they just decide that they can't be they don't see a partner in the U.S. anymore that they can rely on, and they have to build more alliances. And so the U.S. will say, the government will say, but we're too important of a market for you to ignore any. But this is sort of what we're seeing as the steady, slow creep away from the U.S. and more toward trading partners that these countries can build relationships with and replace what they're losing with the U.S.
Okay, Bloomberg's Brendan Murray, we thank you so much. That, of course, is our trade czar. Well, coming up on Bloomberg Markets, we're going to talk to Laura Mayfield of Fort Washington Investment Advisors as President Trump's self-imposed credit card crunch looms. Another threat from the White House. Stay with us for that. This is Bloomberg.
Now, you've written that younger people today are not as happy as their parents were. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in a climb. That's the climate of happiness that's been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about. It's about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home. Make sure that people don't interact socially, and that was catastrophic for happiness.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
This is Bloomberg Markets, 12:47 p.m. here in London, and you're seeing steep losses for European equities on President Trump threatening a 10% tariff on 8 countries opposing his plans to take Greenland, Europe hardening its stance in response, and US futures pointing lower too. Of course, it is a holiday stateside, so volumes are lower in general, and the moves that you are seeing are likely more pronounced. But as traders flock to safe havens, you've got gold at a fresh record, the dollar weaker, and euro dollar up on the flip side at a 1.16 handle as things stand. If we break it down by sector across the European continent, all but one sector is in negative territory at the moment. Tariff-exposed sectors the hardest hit, as you would expect. And look at some of these autos names. You've got BMW here down more than 3%. Flip again, and you can see the defence names are rallying. Goldman's basket of defence shares hitting an all-time high. The likes of Thales here at 1.6%, Saab up 4.1%. But none of this really is enough to offset the losses that we're seeing across the rest of European equities. So the Stoxx 600 down 1.2% as a whole. Well, thinking about the market reaction here and what lies ahead for traders in 2026, speaking to Bloomberg's Francine Lacroix in Davos, the Franklin Templeton CEO Jenny Johnson said market volatility is actually creating opportunity, but she also stressed the need for diversified portfolios to absorb these political and economic shocks. Let's listen in.
Volatility is opportunity for active managers, right? And so, you know, look, this administration has shown us that there are surprises around the corner, and so you have to position your portfolio. You know, Franklin Templeton, we have clients in 160 countries. We're going to celebrate 80 years next year. We've been through a lot of administrations. Our job is to make sure our clients have their investment portfolio that is really diversified so that they can actually take these kind of short-term shocks. And if you do it right, you can get through it. And I think, you know, in the case of President Trump, look, think about what the markets did after Liberation Day. You know, we were all like, oh, my gosh. And you know what? We came out pretty okay on the tariffs. China, it was going to be 100%, right? The markets reacted to that. A little less. You got through that. I think we'll get through this latest
is this because the U.S. economy is resilient, or I mean, the world economy is resilient, or
well, it's both that, and believe me, I think AI. We haven't even begun to see the impact of AI on individual companies. I think the next really exciting thing is the companies within sectors that actually get it right. They will take off, leaving the others behind in that sector. And so right now, it's been the picks and shovels that have really been the ones that have gotten the evaluation advantages. It's going to be those companies, and it takes time for them to figure it out. So that, of course, is part of the volatility. I think the other thing is,
Jenny, is it productivity that they work on, or just in general, like spending and to upgrade their systems?
It's going to be hugely transformative in the productivity. And by the way, you actually have seen in the U.S. companies for a decade productivity was running at about 1%. We're now closer to 2%. It's massive, which is why I also think you've seen not so many jobs created and yet companies growing, because we're getting there are 157 million people working in the United States. We've had a 1% productivity. That's 1.5 less people that you need for the same kind of growth. And so definitely AI productivity, and I don't think that's in the numbers yet. I think that the productivity gains are from the technologies that have been kind of the last decade, cloud servicing, other things, digitalization. So the AI, it's going to take time, and there's going to be winners and losers in it. But the pace of it is so dramatic, faster than even I thought it would be.
So that was the Franklin Templeton CEO, Jenny Johnson, in Davos. Well, turning to another of President Trump's threats, he's calling for a temporary 10% cap on credit card interest rates, a proposal that's rattled financial markets and raised serious questions about its feasibility. Joining us now for analysis is Laura Mayfield, Vice President and Senior Portfolio Manager at Fort Washington Investment Advisors. Good to see you, Laura. Thank you so much for making time for us on what I know is a US holiday. I wonder how likely you think it is that this cap is to be introduced. The threat at least weighed on bank earnings last week, but from a credit market perspective, is it even operationally possible given the potential impact on banks' business models?
Hi, Lizzie. I think the reality is it's not particularly feasible. If you look at, bank earnings, yes, they were forced to address it. We did see a bit of a sell-off in most issuers that the market views as being very exposed to this proposed legislation. But interestingly, if you look at how the ABS market is responding, where some credit card receivables are securitized, the market is unfazed. Spreads were unchanged. Even in the subprime credit card ABS space, where that would be most exposed to this legislation, there really isn't any trading activity at all.
But if the cap were to come through in a meaningful way, where would the stress show up?
I think the funny thing is, I don't think it's where you would where President Trump might expect, based on kind of a blanket proposal here that we have without many details. The stress, ironically, I think would be on the consumers, that on the surface he's potentially trying to assist. The reality is that a credit card cap of 10%, the average credit card rate on cards outstanding is over 22%. So capping rates at 10% doesn't just mean that those consumers are saving money. It just means that they're going to be eliminated from those credit card programs, and access to credit will actually just be cut off for them. So I think the reality is the intended effect, which would be to save consumers money, help them spend less of their hard-earned dollars on interest expense, it would actually have a very, very negative effect instead, because they would actually lose access to that financial instrument altogether.
Okay, so potentially backfiring when it comes to consumers, which is surely not what the president wants in an election year. But more broadly, Laura, are global credit managers getting complacent? You're looking at corporate bond spreads at their lowest since 2007, credit markets running at their hottest in decades. Are they brushing aside too easily the risks on the horizon? We've talked a lot about geopolitics in this programme.
I do worry about that. With spreads at historically tight levels, that doesn't give you a lot of wiggle room for volatility and certainly not fundamental risks. It seems like certainly geopolitical issues are percolating and escalating a bit. Even the concentration of global markets in the success and the monetization of AI and data center infrastructure investment. There's a lot hinging on the success of that, the successful monetization of that investment. And I do worry that markets aren't quite pricing in enough wiggle room to allow for the volatility that could play out as we see continued record investment in that space. I think it's possible that even if we continue on a positive trajectory towards successful productivity gains and all of that, it's likely to be a bumpy ride on the way. We have a lot of complicating factors between here and there. There being a fully integrated, successful utilization and optimization of how we use AI and how those data centers provide the processing power that's needed. But I think it's very possible that some of those investments, specific investments, may not pan out as expected. There could be, those that succeed and those that fail. And I think the risk is that credit markets really aren't pricing for any of that uncertainty at this point.
Okay, Laura, great to get your take. Laura Mayfield there of Fort Washington Investment Advisors. Thank you so much. Well, coming up, Kevin Mann of Hennian and Walsh as Trump's tariff threat weighs on US investors. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
The kids, the millennials, they now all of a sudden have to pay back their student loans again.
Part of the millennial generation, when we also graduated, you were dealing with the aftermath of the financial crisis, and you also had this problem of finding jobs.
Weakness in the labor market is not just the young people, it's also my generation, the baby boomers. 67% of companies said, we're not thinking about hiring right now. That will change. This is a great time to be alive, I think.
Don't miss Open Interest, live weekdays.
Governments make the commitment for net zero. Companies have begun to do the work of looking down their supply chain. I'm not sure. I think that while there isn't the intense activity around accelerating ESG, it is not a stop. In fact, I wouldn't even say that it's a pause. I think it is a, how do we do it in this current environment? I mean, it's only 3 short years that Thailand hosted APEC, and the thematic from that APEC to subsequent ASEANs to, to so many of the bilateral engagements that we've had is really how are we going to do this just transition? How are we going to transition our economies from energy systems to data systems in a way that's going to get us to a net neutral world, right? I mean, a net zero world. I don't think that that's going to change. I think that there are adjustments to this. All the companies that I've been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going. And if you look at policies, like in Europe, they've got CBAM, right? I mean, the carbon border adjustment. Different governments have put forward commitments to getting to net zero. And I'm not seeing any giant signal around the world that is saying, let's stop doing this, right? I mean, so if that signal is still there, that is actually, I think, one area of predictability for businesses and investors, that is still directionally where we're going.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
In case you missed it, on the pulse.
Markets like oil, you got the short, 2 weeks ago it was 230 million barrels short, bigger than what the glut is that's floating out in the South China Sea in these dark fleet ships. So the market going in is record short. Demand is not slowing down, it's picking up, and geopolitical risk is at, I would say, an all-time high. That's a recipe for a spike in prices right now.
Where do you see the next risk?
Basic commodities and affordability, starting to put pressure across the interest rates and everything like that. And, the curve is beginning to steepen on the yield curve. And then you got to ask, as the yield curve begins to tip out and you start to see higher interest rates further out on the back end, are people going to be willing to sell these commodities? It starts to become even that much more riskier as your underlying cost structure of the economy changes and a re-rating of real assets. And it's
like a shock.
It's a shock.
Don't miss the Pulse, live every weekday.
Welcome to Bloomberg Markets. It is a risk-off Monday. Coming up, trade tensions soaring, the European Union weighing tariffs on nearly $100 billion of US goods as the conflict over Greenland heats up. EU leaders set to hold on an emergency meeting this week as President Trump threatens 10% levies starting February 1st. Well, as we check in on these markets, European equities facing steep losses across the continent. The Stoxx 600 down 1.2%. You're looking at the FTSE 100 down 0.4%. The DAX in Frankfurt down 1.2% as well. So Europe hardening its stance in response to Trump's tariff threats. US futures pointing south as well. Of course, it's a holiday stateside, so markets are closed, but volumes are lower in general. And as traders look for safe havens, we've got gold at a fresh record here at $4,672 a troy ounce. The dollar down on the flip side, and the euro benefiting as a result at 116 right now, and the Swiss franc benefiting too. Break it down into the sectoral picture, and we've got all but one European sector in negative territory. Tariff-exposed sectors the hardest hit, as you would expect. Take a look here at the autos. BMW down 3.3%. And if we flip the board, you can see the defence names are rallying. Goldman's basket of defence shares hitting an all-time high. So the likes of Saab up more than 4% as things stand, but that really not enough to offset the losses elsewhere. Now, the lines keep pouring in terms of the European response to Trump's tariff threats. We've heard from the German Chancellor Friedrich Merz saying earlier on in the past few minutes, we don't want a trade war with the US, but we can take action if needed. We'll see a solution to avoid additional tariffs if necessary. Germany and its EU allies are determined to avoid tariff escalation. So the response pouring in. Let's get over to Brussels now. Bloomberg's chief European correspondent Oliver Crook has the latest. Ollie, what is the mood where you are? Is this the moment that we see unity between European leaders?
Well, Lizzie, the mood was pretty bad last week, and I have to say it's even worse now after those tweets and, or I should say, Truth Social posts that we got from Trump on Saturday, really proclaiming, the sort of trade war 2.0 down to the support that a number of European nations have given in the form of really symbolic troops in Greenland to the Danish government. And so effectively now, what we're awaiting is this potential implementation of 10% tariffs from February the 1st. That then ramps up to 25% in June if there is not a clear pathway for the United United States to take control of Greenland on 8 nations within Europe. That has garnered a great deal of response from a great deal of European leaders and ministers and everybody, basically showing a united front on Denmark, on the European Union. And I think what is really interesting this time around is it's much stronger rhetoric than we've heard from a number of leaders from the initial trade war. And that's, I think, in large part because the initial trade war was seen as a tool. Those tariffs were seen as a tool to readjust what was a lopsided trade balance between the European Union and the United States, where the European Union had a sizable trade surplus. Now we're seeing the tariffs being used to effectively pursue Donald Trump's geopolitical gains and to basically compromise the sovereignty of an EU nation, namely Denmark. So for the Europeans, so far it's been basically saying that this is now the red line. As you say, Lizzie, nobody has an interest in getting into a trade war with the United States. That being said, I think for European leaders, the point that we're approaching here is appeasement going to continue to work with Donald Trump. They already got the trade deal initially. Many Europeans were very unhappy with that trade deal. And now if the Trump administration is willing to come to the table and renegotiate that deal and come out with new tariffs, what is the value of that deal at all? So for European leaders, they're going to have an emergency summit here in Brussels on Thursday to try to discuss the path forward. They're going to have to envision potentially the real reality of trying to escalate the situation with Donald Trump if those tariffs do come into place on February the 1st.
So what could that European retaliation look like, Ollie? If Germany says a red line has been crossed, what can they actually do about it?
So what they already have, Lizzie, is this list of goods, $100 billion, a bit more worth of goods to basically put tariffs on to retaliate against the United States. That's a list that they put together in the initial negotiations with the United States at the end of last year, or I should say really throughout the year last year, and that deal was struck in July. We should also say, Lizzie, that that deal with the United States on tariffs was supposed to be ratified by the European Parliament in a couple of days' time. I think the first concrete action you're going to see is the Europeans going to say basically that's going to be put on hold. You can't really ratify a trade agreement with the United States if at the same time they're threatening to wage a trade war at the same time. So that's probably going to go into the back burner. There is the question of the anti-coercion instrument. That is a new device that has never been used by the European Union before. That's meant to sort of have more expansive trade actions they can take against the United States. It could extend also to technology companies. Emmanuel Macron has already called for the use of it. So these are all the sort of things that are on the table. But I think, again, Lizzie, the point is for the Europeans, of course, there's a great risk that they could carry by sort of escalating things with the United States from an economic standpoint. There is also potentially an even larger risk from a geopolitical standpoint. Could it threaten the unity within NATO? Could it put Ukraine and the sort of influence that the United States has on the peace negotiations with Russia, the military support for Ukraine? These are all going to be in the fine calculus for European leaders as they descend upon Brussels to meet on Thursday in the evening in this building, in this very building.
Okay, Bloomberg's Oliver Crook, we thank you so much. We'll get back to Ollie throughout programming in Brussels. But thinking about the market reaction here, we've had futures stateside lower on President Trump's threat of levies on the countries opposing his plans to take control of Greenland. All 8 of them, the UK included. Kevin Mann, the President and Chief Investment Officer for Hennion and Walsh, I'm pleased to say, joins me now. Kevin, do we need to be a bit calmer about all of this? You've got sell-off in markets at the moment, but are markets really overreacting? Is it simply that Trump is going to chicken out on this and the tariff threats will be struck down in the Supreme Court anyway?
All great questions, Lizzie, and I would suggest to everybody watching today, let this serve as a reminder that 2026 is going to be a much more challenging year for investors in the markets worldwide. But if we learned anything from 2025, to your point, that's not to overreact to the threat of tariffs. We remember during the initial tariff tantrum in 2025, through April 8th, the markets were down roughly 15%. And if investors had fled the markets then and gone to the sidelines, they would have missed a run-up of roughly 39% for the S&P 500 from April 8th through the end of the year. Time will tell exactly what happens with tariffs and trades 2.0, what the Supreme Court will decide. But what we do know is that trying to time the market is often an exercise in futility. And I do think regardless of the outcome of tariffs and trade 2.0, there are many other opportunities for investors to consider if they only follow where all the money is going to be spent in the new year.
So, Kevin, is what you're telling me that today is a day to buy the dip?
Possibly. It depends on where you're buying. So where I've been doing this for roughly, let's just call it 3+ decades. I don't want to reveal my age because people always guess much older than I actually am, and it hurts my feelings, Lizzie, but I digress. So over the course of my career, I've always tried to follow the money, not where flow of funds are going, but where the money is being spent. Where do we know that money was spent last year, will be spent this year, and will be spent for the balance of this decade? It's AI infrastructure. It's power solutions. It's aerospace and defense. It's healthcare. And I think if investors lean into those areas, they're going to find opportunities for growth and hopefully be able to better manage all of the volatility that we'll likely see in 2026.
But if European countries own twice as much of America's bonds and equities than the rest of the world combined, and you've got these threats from President Trump on Greenland and on Europe, are we not about to see a huge rebalancing away from the US, more sell America?
Perhaps, but that's not going to happen over the immediate future. They can't. Where are they going to turn to replace that? We saw some of that in 2025 with central banks across the globe hoarding more gold at the expense of U.S. securities. But I don't think that continues in perpetuity. In fact, I think that all of this ultimately will be resolved, and we'll see U.S. start to take back some outperformance that it lost to international markets last year. Think about how much international developed markets and international emerging markets outperformed U.S. markets last year. And the U.S. markets had another great year, double-digit returns, the third consecutive year of double-digit returns. But now to me and to your audience, they should now consider investing overseas to build a globally diversified portfolio. In this new world order, more and more money is being spent on defense. I think of the largest European defense contractor, BAE Systems, as an excellent way to actually feed into that new world order, because they're also a prime contractor of the U.S. Department of Defense. So yes, there are more opportunities for investors to consider in the new year ahead.
Okay, really interesting. BAE Systems is one of the many names on the defence stocks in Europe gaining this morning, but even bigger gains for the likes of Saab, up 4% at the moment, Kevin. I mean, let's just play out the worst case scenario though, shall we? If these tariffs do go ahead and Trump doesn't chicken out, to use the shorthand, how damaging would it be to U.S. consumers and the inflation story?
Well, what we have to look at right now, we have U.S. inflation moderating. In fact, we're almost at the Fed's PCE target for the year already, as we saw that CPI came in, core CPI, of course, stripping out volatile food and energy, came in at 2.6% year over year. The Fed's looking for core PCE for all of 2026 to come down to about 2.5%, so we're almost there. If, in fact, there's an escalation in this trade war, which I don't think ultimately there will be, but that does add more inflationary pressures. And that's just another example of the type of volatility I think we're going to see throughout the year. We have uncertainty over tariffs. We have uncertainty over, remember, the short-term funding of the U.S. government expires at the end of January. Will the federal government shut down again here in the U.S.? We have midterm elections. We have debt ceiling debate. We have the unknown nature of the AI bubble. Will all this money continue to be spent on infrastructure? Boy, Lizzie, is that a lot for investors to try and understand and wrap their arms around? So that's why I believe diversification wins out in 2026, and you need to lean into those areas once again and follow the money to look for investment opportunities.
Okay, so we've got to diversify, but how much can the US stock rally hold up if you don't get as many cuts as are priced, whether that's because of the geopolitical risks, the tariff threats, the impact on inflation, or because of whoever ends up replacing Jerome Powell?
Yes, another excellent question. But as it stands right now, Lizzie, the Fed is only forecasting one rate cut this year of 25 basis points and one rate cut the following year in 2027 of 25 basis points. Perhaps we get both of those cuts this year once the new chair of the Federal Reserve is put in place in May, a chair that we believe will be more dovish than the current one. But the market shouldn't be looking to the Fed for too many answers. In fact, I think the way it stands right now is that the economy will continue to grow, albeit modestly. Inflation will continue to moderate, getting closer and closer to the Fed's 2% target, and unemployment will stay roughly where it is. So if those three things hold, the Fed really doesn't have to do much more. But We also know, and here's a great stat for your listeners, we did the research at Henyon & Walsh. We looked back to 1950, and what we found in the year following 3 consecutive years of double-digit returns, the market was only positive 40% of the time, with an average return of just under 1%. So just playing the indexes this year may not provide investors with the returns they're looking for. You're going to have to look for other potential areas of growth. And again, I think it's in those areas of smaller cap biotech, aerospace and defense, power, utilities, nuclear, and of course, AI infrastructure.
I love the history lesson, Kevin. We always appreciate the historical context. Let me just finally ask you, look, we've got the volatility risks piling up. We've talked about them, politics, valuations, the Fed. What's the biggest mistake that investors could be walking into in 2026?
Yeah, I think the biggest mistake for retail investors that they could walk into in any given year is trying to outsmart the market, trying to time the market, because timing the market to me is an exercise in futility, because you got to get it right twice, when to get out, and more importantly, when to get back in. And here's another history lesson for you. Through the end of 2024, we looked at those 20 years in the market, and what we found, Lizzie, was that 7 of the 10 best days in the market take place within 2 weeks of the 10 worst days. Now, I don't have a crystal ball. I don't know when those 10 worst days are going to be, but rest assured, if you're not in the markets on those 7 days, you're likely to miss out on the most significant returns that the market has to offer. So resist the temptation to try and time the markets, diversify your portfolio, and look to spread it across asset classes, geographies, and sectors in this new year.
Lighting up the FOMO. Kevin, thank you so much. Always a pleasure. Kevin Mahon of Henyon & Walsh there. Well, coming up, we're going to have another conversation with Ben Emons of FedWatch Advisors as that race to replace the Fed chair is heating up. Stay with us. This is Bloomberg.
I never have changed my show to make it for YouTube. I'm very conscious of the fact that ABC pays for the show and YouTube pays nothing, and YouTube gets to sell it and keep half the money. And that's quite a deal for them. It really is. But I've never made the show for YouTube. With that said, I love YouTube and I love being on YouTube, because all you really want deep down is for as many people to see your stuff as you can. And I know that it has hurt, because it is so easy to watch the monologue on YouTube now. I know that it has hurt the ratings, not just for our show, but all of the shows. And maybe that's kind of what has killed late night TV. More likely the fact that we have our lead-ins are 1/10 of what they were when I started.
I was alarmed to see that the most watched video from your show had fewer views than the average Mr. Beast video. And I don't know what that says about the state of the world, but
I think it says Mr. Beast is kicking ass, is what it says, yeah. Well, you know what? There is a big difference. When you do the show every night, you're not going to get as many views. But we still, I mean, I woke up this morning, there were 2.2 million views of my monologue the night before. So for everyone who says late night is dying, it's just not true.
Welcome back to Bloomberg Markets, 1:16 p.m. here in London, and checking in on these moves that we're seeing risk off on both sides of the Atlantic. It is, of course, a holiday stateside, so we've got stock and bond markets closed, but futures pointing lower for S&P E-minis. The stock 600 already down 1.2%. Steep losses on Trump's threat of a 10% tariff on the 8 countries opposing his plans to take Greenland. Europe hardening its stance in response. But as traders flock to safe haven assets, you can see here gold at a fresh record, $4,671 a troy ounce. The dollar down and euro dollar benefiting on the flip side. The Swiss franc also benefiting, but euro dollar here at a 1.16 handle. Now, if we flip into the sectoral landscape, all but one European sector in the red. Tariff-exposed sectors hardest hit. Autos, by way of example, really suffering. So BMW down 3.6%. The luxury names getting whacked as well. But turnover, and we can see some of the defence names who were benefiting today because of the need to rearm in Europe, because of this Greenland threat, and the likes of Saab up 3.7%. But really, this rally not enough to offset the losses that we're seeing elsewhere in European equities. Let's dive into these markets now with with Ben Eamons. BlackRock's Rick Reeder's chances to be the next Fed chair reportedly gaining late momentum. Sources telling us that here at Bloomberg, that Reeder's interview with President Trump went well and that the search is now a four-man race. Ben Eamons of FedWatch Advisors, I'm pleased to say, joins me now. Ben, you've been watching this race closely. It isn't a write-off yet. It still seems very open. How different would the rate path ahead for the Fed look if we got either of the Kevins or indeed now Rick Reeder? Good morning.
Yeah, good morning, Lizzie. And I think it's the pictures that you're showing there, you have varying rate paths because, let's start with Kevin Walsh, which I think the market was reacting to on Friday quite strongly. The yields went higher and the probability of rate cuts dropped a little bit. Kevin Walsh is far more conservative about monetary policy, particularly the balance sheet. So on him, I think you're getting much more of a rate path that's maybe realigning back to where the rate paths are priced for the European markets or Australia. Whereas in the case of Rick Reeder, he's a friend of the markets, right? He's like us, like portfolio manager, trader, so he has a markets hat on. And, he was in interviews in the US talking about how to use the balance sheet more creatively, how to target the yield curve. That's more friendlier language to markets. And I think under him, that rate path will be much more priced more in the direction what ultimately the administration wants it to be, which is actually far substantially lower interest rates than they are right now. So we'll see who will be ultimately the Fed chair will be the most consequential decision this year, I think, for financial markets. And the heat is still on, so it's not like it's not over yet. It seems to be still up in the air. Who will be ultimately the new next Fed chair?
But how much should investors care about the individual versus the economic backdrop that they inherit, Ben?
I think that's a fair question, Lizzie, because you're right. Like, it's not all about one person, and it's never how the FOMC has operated. Of course, the chair has a really, really strong voice, and whenever she or he came out in the press, that gets a significant amount of attention. But ultimately, it's indeed about the economy, and the economy is in the U.S. picking up. You could tell from the various data that came out last week, whether it's in surveys or whether it's in hard data, we're seeing it now picking up in the real-time GDP data over 5%. So the productivity gains are coming through. And that will be for this Fed also a new sort of setup where, this is not an economy where you need to lower rates aggressively for that reason. And that sets itself up a bit for attention, in the next few months. So we'll see how that plays out. But it's ultimately the economy that matters.
But if we do focus on the personnel, Ben, how much does the Lisa Cook case actually matter more than the probe into Jerome Powell? Are we getting sidetracked?
Yeah, that is important because, the Lisa Cook case is really about the ability for the president to, fire someone at a federal agency that's considered to be an independent federal agency. That's very different from the case from Powell, which is related to the cost overrun and the concerns about the testimony before Congress. It's like a real legal case. Whereas with Lisa Cook, it's about, she has some issues with her mortgage, but it's really about ultimately, can I actually get rid of someone at an independent agency? And if the Supreme Court gives the president the authority to do so, that will be huge, significant, because I do think markets will react very strong, because that means that the president could use any cause to get rid of any future Fed official, including the new Fed chair, believe it or not. So yes, it is a hearing, by the way, on Wednesday, so not a decision, not opinion day, but it will be the first real test of where this case really is. So we'll see.
Exactly. Well, we also got to talk, of course, about the other risk out of the White House today, Ben, and that, of course, is around President Trump's threats on Greenland, his threats of tariffs on the 8 nations opposing his plans on Greenland, and indeed the potential European retaliation. We're seeing the euro stronger today, the dollar weaker, but could that reverse if, in fact, we see the president backing down on tariffs, and if the tariffs are imposed?
Yeah, I think that this is setting itself up for the same scenarios we saw last year. It is President Trump's whole, sort of signature here. It's a tough negotiation. He always said that he had the hardest time he had negotiating was, aside from China, was with the Europeans. And so it's a bit of a standoff here coming into Davos on Wednesday when he delivers his speech there. I actually think, Lizzie, that this will be worked out. You mentioned earlier in the segment that from the European side there were a lot of if he does this, like conditions to put on additional tariffs. So I think it's just negotiating what exactly the U.S. will do with Greenland, what is really going on there. For the record, by the way, there's about 150 U.S. troops stationed there. So you could see it more like there's going to be expansion of troops there, just simply because of a security issue. But then from there, nothing really changes. So I think this is negotiation posturing, in my view, and this is how the market initially reacts. So to your earlier question to the other guests, yes, this is probably a buy the dip moment.
Okay, well, in that case, at what point do you stop buying precious metals? Because you've got investors flocking to the safe havens right now, but at what point do you turn around and say, we don't need to do that, everything's going to be okay on Greenland?
Yeah, that's a bit of a timing issue, I guess. But if you look at these metals, take particularly silver and tin and palladium, or platinum, sorry. I mean, that's really parabolic now. That's actually so extreme. It doesn't take much for that to correct, just technical correction. So I think you do not want to allocate that any further because that seems to be off the charts, perhaps because of technical reasons, related now by the sentiment around Greenland, which we would say, is that now really such a significant geopolitical risk? Not really. It ultimately is, I think, again, about resources. Greenland sits on untapped resources in oil and rare earths, so that is another angle to the story. So I think you want to move away from those stretched metals and look at opportunities, indeed, in defense stocks, in cyclical stocks, in small caps. I think that's where the opportunity is.
Okay, and so you think that this rotation into small caps is healthy?
Very much so. I mean, we have a huge start for small caps, like it's up like 7.5% year to date. It reflects the underlying strength of the U.S. economy very much because we have come really strong out of the gate on various of economic data that people initially were negative about, meaning skeptical because of the impact of the shutdown in the fall, that maybe led to a lot of slowdown. It's actually not the case. It's all picking up. So I think small caps have a lot more room to run here. Could really outperform tech shares in the U.S. for a period of time at least.
Okay, Ben, great to get your take. That's Ben Emmons of FedWatch Advisors telling us to buy the dip on a day when European equities really are selling off and US futures are pointing lower as well. On the geopolitics, President Trump threatening Greenland and Europe with more tariffs. But still ahead right here on Bloomberg Markets, Rick Pedersen of Bow River Capital. That's next. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
In case you missed it on Bloomberg Crypto.
Well, we certainly understand needing to pay back the debt. That certainly makes sense. But on the dividend, why are you so committed to paying this dividend? Would you ever consider suspending it? Companies do suspend dividends from time to time.
Yeah, companies do suspend the dividend, but it creates fear, uncertainty, doubt in our preferred shareholders, which will impact our convertible shareholders, which will impact our equity shareholders. So I think preserving the payment of the dividend, even if our board has the rights to suspend it, it's the right thing for the short term, for the next 1, 2, 3 years, and it's important. It's also important for the Bitcoin asset class, and we realize we play a role bigger than just strategy in the Bitcoin world.
So would you say investors should think you will never suspend that dividend?
Never say never, but yeah, our objective is to pay the dividend into perpetuity.
Don't miss Bloomberg Crypto live Tuesdays.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Katie Greifeld at the J.P. Morgan Healthcare Conference in San Francisco, and this is Bloomberg.
This is Bloomberg Markets coming up to 1:30 p.m. here in London, and I've got 2 words for you on what's happening in these markets today, this Monday. Risk off. We've got European equities selling off on President Trump's threat of a 10% tariff on the 8 countries opposing his plans to take Greenland. Europe hardening its stance in response to the Stock 600 currently down 1.2% and US futures pointing lower too. It is, of course, a holiday stateside, so volumes are lower in general. These moves are likely more pronounced. But we do have traders flocking to safe havens. Gold here at a new record, $4,671 a troy ounce. The dollar down on the flip side and euro dollar benefiting. We're at a 116 handle on the single currency as things stand. In terms of the sectors impacted by these tariff threats, of course, autos are being hit. The likes of BMW down 3.5% as things stand. The defence names are rallying, but that really isn't enough to offset the losses elsewhere in Europe. The likes of Saab, though, currently in the green as a result of the expectation of more defence spending. Now, we are diving into the market impact of this. It is, of course, as well, another key week for US economic data on deck. We can speak now to Rick Pedersen, who is Vice Chairman, Economist and Chief Strategy Officer at Bow River Capital. I'm pleased to say he joins me now. Rick, I've had 2 guests in the past 3 hours telling me this is a moment when you should be buying the dip. Are they right?
It's a good question. I mean, it is interesting how resilient the United States bond markets have been in the face of geopolitical and policy changes. Geopolitics has gone from a background risk to a weekly economic input, and we have it again today. We have had surprisingly little impact in stock or bond markets to some of the most recent announcements. This one perhaps will be different.
Okay, so basically you position as if President Trump will, to use the shorthand, chicken out when it comes to these tariff threats and the threat of US military intervention.
I think that there is some sense in the U.S. that there is a negotiating tactic that our president is using, and the outcomes are somewhat less milder than the threats. But this is a bit different, frankly. These are direct attacks, if you will, on transatlantic relations, long-standing ones, and the idea of more tariffs in Europe is unsettling. And so I have less confidence that the markets will plow through this in the next few days than I have in the last.
Okay, really interesting. I mean, we get the core PCE data out of the US this week, the Fed's preferred inflation gauge, of course. If these tariff threats do materialize, I wonder how quickly US consumers would be impacted when it comes to inflation.
I think not terribly quickly. Inflation has been almost disappointingly muted with at least the impact of tariffs. But that's not to say that inflation has disappeared. I think inflation is not running the show any longer, but it is still writing the script. And I believe that the Fed is more focused on inflation, frankly, than they are the employment markets. Kansas City Fed president last week used some words that I tend to agree with, which is continuing to lower rates at this particular point in time would do more harm to inflation than good to the employment markets. And so I think inflation is still with us. It is sticky, and will probably dominate the Fed's mind in the near term.
And when it comes to the labour market, Rick, to what extent will President Trump's immigration curbs scare employers into holding on to employees?
They're already holding on to employees. This is a very, as it's been said, low hire environment for labor. And part of that has to do with policy uncertainty, economic uncertainty. But an important part of this has to do with the shrinking American labor force. Demographics, baby boomers are now retiring out of the labor force. And not unimportantly, immigration policy has caused the workforce to slow. In the last 20 years, immigrants have represented about 1/2 of the American workforce growth. And without that input, we have a shrinking labor pool, which I think the good news puts probably a cap on unemployment, but it also creates a very flat job growth environment.
And so we're also looking at a new Fed chair coming. It could be a number of names, and it looks like Rick Reeder stands more of a chance than perhaps the betting markets had thought previously. How much more hawkish would you expect Kevin Warsh to be than Kevin Hassett, and how different from both of them would you expect Reeder to be?
We hope any or all of them will remain institutionalists as opposed to political animals. And so I do think I have to repeat that the chair is only one voting member out of 12. On the other hand, he, and it will be a he, will carry a good deal of influence in setting agenda and mood of the Fed. And so I would like to think that the Fed will remain cautious, remain on hold. There will continue to be, of course, from the administration, pressure to lower rates, but we hope that they will remain data-driven.
Okay, and so even with falling housing and energy costs, you see core inflation staying at around 2.5%, I think, next year. What's keeping inflation sticky, bottom line, Rick?
Well, some of that is tariffs, not as much as I think many economists would like to think, however. We are seeing certain goods, European goods, which now may come up further. We're seeing, however, much of the inflation come from the services side. It's coming from electricity, it's coming from insurance, healthcare, perhaps something that hasn't been talked about but is important is subscription video services. It's much more expensive now to continue with your Netflix account or your Spotify account, and these seem to be non-negotiables for American consumers. We apparently can substitute for beef, but not for movies.
Yeah, inelastic demand for the movies. Rick, thank you so much for all your insights this afternoon. Rick Peterson there of Bow River Capital. Well, let's get back to our top story now, the geopolitics, of course. The UK Prime Minister Keir Starmer has been taking a stand against President Donald Trump's threats of new tariffs on European nations. He says that they would damage the British economy. Let's listen in.
I talk regularly to President Trump, and my team is in daily contact with all the key figures in his administration. These relationships matter. They deliver concrete outcomes in the national interest. Mature alliances are not about pretending differences don't exist. They are about addressing them directly, respectfully, and with a focus on results. On Greenland, the right way to approach an issue of this seriousness is through calm discussion between allies. And let's be clear, the security of Greenland matters. And it will matter more as climate change reshapes the Arctic, as sea routes open and strategic competition intensifies. The High North will require greater attention, greater investment, and stronger collective defence. The United States will be central to that effort, and the UK stands ready to contribute fully alongside our allies through NATO. But there is a principle here that cannot be set aside, because it goes to the heart of how stable and trusted international cooperation works. And so any decision about the future status of Greenland belongs to the people of Greenland and the Kingdom of Denmark alone. That right is fundamental, and we support it. Denmark is a close ally of the United Kingdom and of the United States, a proud NATO member that has stood shoulder to shoulder with us, including at real human cost in recent decades. Alliances endure because they're built on respect and partnership, not pressure. That is why I said the use of tariffs against allies is completely wrong. It is not the right way to resolve differences within an alliance. Nor is it helpful to frame efforts to strengthen Greenland's security as a justification for economic pressure.
That was the UK Prime Minister Keir Starmer on President Trump's latest threats on Greenland and of tariffs on European nations. If we check in on cable, in fact, it is one of the beneficiaries today, as is the euro against the dollar. The dollar is weaker, but the pound is up 0.25% against the dollar at 1.34. Euro dollar now at a 1.16 handle, up 0.3%. Well, coming up, we're going to go right back to Davos, Switzerland, as Haslinda Amin catches up with the Mitsui OSK Line's President and CEO Takeshi Hashimoto. That conversation coming up next. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
This is Bloomberg Markets, 1:43 p.m. here in London, and we've got European equities in the doldrums this Monday. We are looking at the Stoxx 600 down more than 1%, US futures pointing lower too. Of course, it is a holiday stateside, so volumes are lower, but this is all in response to President Trump's threat of a 10% tariff on the 8 countries opposing his plans to take Greenland. Europe hardening its stance in response. Guest after guest today has told me this is a moment to buy the dip, but that sentiment not catching on just yet. We have gold at a record high, the dollar down and euro dollar up by 0.3% right now at a 116 handle. If you break it down by sector across the European continent, 2 sectors now managing to eke out gains, but only 2. That's telecoms and insurance. Autos still near the bottom of the basket, down more than 2% as a sector. BMW getting whacked here, down 3.3%. But if you flip the board, one of the winners, if you can call it that, is the defence sector today. Some of the defence names rallying, the likes of Saab up 3.1% on the expectation of more defence spending here in Europe. Goldman's basket of defence shares at an all-time high, but that not enough to offset the losses elsewhere, and of course in the very, very dire context of the latest geopolitical news. Well, global shippers are coming off a year of historic uncertainty, kicking off 2026 with fresh questions around global trade. President Trump ramping up tariff threats on the EU as the tensions over Greenland intensify, and this in bigger context after the escalating tariffs on Iran's trading partners, including China. Let's take you right back to Davos, to the World Economic Forum, where global power players have been converging. And Bloomberg's Haslinda Anand joins us again with a special guest. Has.
Well, Lizzie, we know that shipping has been disrupted. In fact, 75% of shipping companies in Europe say that their business was disrupted over the last 2 years. Let's get perspective from a man who knows the answer. We have Takeshi Hashimoto, Mitsui O.S.K. president. The company, by the way, is one of the largest shipping companies in Japan. Hashimoto-san, good to have you with us. Hi. Talk to us about the kind of disruption that shipping companies are undergoing right now. Do you expect that to accelerate in 2026?
Yeah, 2025 was a very, very difficult year for us. But particularly for the second half of the 25, we observed that the situation was gradually stabilizing. So that at the moment, our sentiment is relatively optimistic about the future in 2026. still, lots of things are happening, particularly for the Middle East situation and Ukraine situations, and also that lots of the trade tensions between U.S. and other countries. But so far, that we can adjust ourselves.
There are global trade choke points, and the Strait of Hormuz is one of them. What's your own reading? Is the risk rising or easing at this stage?
We cannot ignore the risk. At the moment, the oil trade passing through Hormuz Strait is okay. That we are managing that so many vessels, particularly for tankers and LNG carriers, it's very important for the global business. Of course, we have some concern about the political situation in Iran and the action of the U.S., Israel, etc. So far, it should be all right.
People talk about the possibility of a regime change in Iran. Would that encourage you to invest more? What would it take for you to do that?
Yeah, very difficult question, but the regime change cannot happen overnight, and it will probably create the very confused period, 3 years, 5 years, or even 10 years. Therefore, to be honest, I do not like the dramatic change at the moment.
So even with a regime change, you may wait 10 years before you decide to invest?
Not say 10 years, but we really need to find out what will happen that after the potential regime change in Iran, and it's a bit too early to think about anything after the Iran situation.
We're also seeing a rising number of shadow fleet vessels carrying Russian oil and bypassing sanctions. Is that impacting your business in any way?
Yeah, to be honest, before the Ukraine situation, Russia was one of the very important oil and gas exporters, and that we enjoyed quite good business opportunities there. Gradually, we had to withdraw from that Russian business, and that so-called shadow fleet, they are fulfilling our vacancy, and so that their system and our system are working independently, so that that's a bit disappointing things for us, but for the time being, that situation will continue.
So you are seeing more shadow fleet out at sea. Is that a correct assumption to be making? What are you seeing?
At least that quite sizable the shadow fleet will continue their service as long as the sanction regime will continue, and Russia is very determined to continue the export of their oil and gas, particularly for the emerging markets and China.
Speaking of fleet, you have ambitions to own 150 LNG vessels. Where are you with that?
Yeah, we are very on the line, and at the moment there are so many the new LNG projects are coming to the market, like many U.S. projects, and also that new project in Africa or Latin America, and so that we expect that we can continue that growing this part of the business in LNG, LPG, and also SN project. So that's quite interesting.
Given the optimistic outlook, I'm just wondering whether you may need more than 150 vessels.
Yeah. Of course, the construction process will require the 3 years, 5 years. So we cannot achieve it in overnight, but within that the quite long period of time, that within 5 years, 10 years time, that we will certainly continue to grow our gas-related businesses.
Hashimoto-san, I want to talk about the weakening Japanese yen. How how is your company viewing the weakness in the currency? Some say that it is expected to weaken further and there'll be no intervention from the government, from the BOJ, unless it reaches 165, 169.
Yeah, I'm very amateur, but it seems to me that until the Japanese government will change their fiscal policy and try to improve the fiscal deficit, it seems to me that very difficult to see the turning point. So for the time being, that we expect the relatively weak yen will continue.
So at what level do you think the yen would be trading? What assumptions are you making for the company and the business that you're running? Is it impacting the company?
Yeah, of course, as a Japanese company, at the end of the day, our bottom line figure is a Japanese yen denominated. Therefore, on the surface, the weak yen is good for us. But if you have a big picture, perhaps the weak yen is not very good for the Japanese economy overall and the performance of our company overall.
We're expecting Prime Minister Takaichi to call for a snap election soon, and of course the market isn't too happy about that. They're concerned about the fiscal spending. Should we be concerned about the fiscal position of Japan?
Yeah, she already declared a snap election, and for the time being, if she will dramatically win, then her aggressive fiscal policy should continue, and in theory, it means that the weak yen will also continue. So.
Do you think the BOJ should intervene, raise rates earlier than anticipated to at least help provide some support for the currency?
Yeah, it depends on that to support the currency is that the government job in Japan. Therefore, it's very difficult. So it's a priority issue in the government.
And of course, companies looking at BOJ movements. When do you think the BOJ will raise rates? Might it happen in April?
Yeah. Once or twice in this year, they may. Yeah, the 0.75% is still very, very low compared to the 3% inflation rate as of today. So therefore, it is very natural that I expect a series of interest increase by BOJ.
Hashimoto-san, we thank you so much for your time today. Takeshi Hashimoto there. Lizzie, take a look at where we are. The sun is out. It's really nice today.
Haslinda, I hope you're keeping warm. That's Haslinda Amin over in Davos. Thank you so much for that conversation. Well, checking in on these markets has started her conversation there with the Iran risks. And indeed, we're seeing oil lower today as those risks ease somewhat. For now, Brent weaker 0.6% at $63 a barrel. Also because of the fallout from President Trump's threat to annex Greenland, his threat of tariffs on some European nations over Greenland rippling through these markets. We've seen European stocks falling, gold and silver hitting record highs, and as I say, oil down as well. But some latest lines in the past few moments from the German finance minister and vice chancellor, that of course is Lars Klingbeil. He said this is a very European moment. We stand together in solidarity in Europe. We are united. We need a clear response. We need to stay in dialogue with the US, he says. We don't want an escalation, but we are ready if needed. We have countermeasures and they must be prepared. So you've heard from guests throughout the past few hours on what that could entail. Could it be the ACI, the European trade equivalent of the nuclear option, really, the anti-coercion instrument? Not seeming likely in the minds of our guests, but markets poised for the worst here. European equities really in the doldrums. So if we just check in on these markets one more time before I leave you, the Stock 600 down more than 1%. It is a holiday stateside, but US futures pointing lower by more than 1% as well. Traders flocking to safe havens. We've seen gold at a record, the dollar down, and euro dollar there at a 116 handle. It's been a pleasure being with you over the past few hours. Guy Johnson is coming up next, so stay right there. This is Bloomberg.
GDP growth in South Africa has really been lackluster for quite a number of years. And Largely because, the economy has been hamstrung by state-owned entities that have a monopoly on transport, energy, that have not been functioning for a very long time. So one of the things that give us hope, and I think we're able to be constructive with the outlook, is the economic reforms that are taking place in the country. So on energy, I think ESCOM has done well to stabilize the days of load shedding, and then the energy factor and reliability factor keeps on improving. It's overdue, probably should have been done about 20 years ago. But those are things that are important to support the medium and long-term growth prospects of the country. So that's encouraging. South Africa is our primary market. We'll have operations outside to make sure that they provide resilience and growth for the portfolio. So it was quite pleasing to be able to grow earnings in South Africa by 13% in an environment where, GDP growth is less than 1%. Households are still under pressure. I mean, like the rest of the world, we've seen a high inflationary environment with high interest rates, so that has put pressure on households. But even then, that inflation is starting to come down. Rates have come down. In the long run, that's very good for South Africa.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial and geopolitical news whenever and wherever it happens. I'm Francine Lacroix in Davos, Switzerland, and this is Bloomberg.
Monday the 19th, welcome to Bloomberg Markets. I'm Guy Johnson, carrying on the coverage of what we're seeing in these markets right now. So let me give you the update. Donald Trump comes out and puts tariffs on Europe, says he's going to put tariffs on Europe as a result of his desire to acquire Greenland. You're getting a response to that. US markets are closed, so in some ways the response is not that great, but equities broadly are lower on both sides of the Atlantic. European cash, US futures. It's a risk-off kind of a tone. Gold is higher. That is basically the situation. But look at that screen in front of you, and I'm not sure it's that big a response. The move this morning isn't that great that we've seen in European hours. I think people are waiting to see whether Donald Trump is serious, whether the taco trade, Trump always chickens out trade, is going to work. Do I buy the dip? All of those things are on the table, and as a result of which, a mere 1% move in European equities doesn't look that big. So let's talk about this and where we go next. Let's bring in Bloomberg Markets reporter Moana Conningham to talk about what we are seeing. I woke up, I saw it over the weekend, into this morning, woke up this morning, looked at the market response, thought that doesn't look that great to me. And it's not a big response. You could argue that what we are seeing here is a very cautious market that is looking forward to the possibility of Trump backing down or at least buying the dip. Is that what I'm looking at on the screens?
I mean, it does seem to be the case. I think, like you, also thought that we might see more of an extreme reaction today.
It's crucial here. The US market, the cash market, is closed today. And that could mean, there's a bit less liquidity. But I think there's also probably, based on previous experiences of Trump and tariffs, that assumption that maybe by the time US markets do open tomorrow, there will be developments and we will not be dealing with the exact situation that we've been dealing with this morning.
Is this different? Is this economics? Is this geopolitics? Is it a combination of the two? Is the playbook from last year the right playbook for this year? Is Trump going to treat this the same? I guess all these questions are going around at the moment.
They're all very good questions. I wish I had, definite answers, but I think there is definitely a sense, that this is different. We are seeing a different response from European leaders, including Keir Starmer today. We've seen that from Germany as well. I think they really are quite outraged at the use of tariffs against allies in this way. It's not just about economics, ostensibly. This is very much becoming a political matter. But I think that actually probably adds to some of the hesitancy in terms of how markets interpret it, because what we actually saw as well was last year with the tariffs announcements in April, that one of the biggest impacts was on US assets. And there's also an assumption that maybe things will change when that starts to filter through. But Europe perhaps isn't reacting as it might do if we hadn't seen this before in terms of what it meant economically.
And in terms of market positioning coming into this, quite long, quite speculative, quite extreme. Does that make potentially the next few days even choppier? Could we see some volatility just because of the positioning we're seeing and how markets have rallied at the start of this year, how strong the response has been?
Well, I think certainly where we've seen the strengths, we've seen some strong corporate earnings. So I think if you started to see a shift in that, any sort of reasons for concern which would pull back, the NASDAQ, that could really rattle things. But then also the precious metals rally, which has really been a story, beyond this year. But that has continued, and we've seen it continuing today because it is this sort of flight to safety that's playing out. But I think there is some question about how far that can go and whether you see people start to take profits on those positions if they're really uncertain.
Well, great stuff. Thank you very much indeed, Moana Cunningham, joining us on the markets. Let's talk about kind of where we are in terms of the geopolitics, because that is where the story is right now. Clear tension between the United States and Europe. EU eyeing tariffs on 93 billion euros worth of US goods as the bloc plans to meet this week to explore retaliatory measures. This, of course, comes after President Trump threatened the EU, or some members of the EU, including the UK, not a member of the EU, with a 10% levy, unless a Greenland deal is reached to his liking. Let's talk to our Europe correspondent, Oliver Crook, and Bloomberg Opinions, Mark Champion, about what is happening here. Ollie, let's start with you. What's the latest in terms of the EU response?
Yeah, well, the absolute latest in terms of the EU response is some of the questions I just put to Lars Klingbeil and the French finance minister, both of whom, the German and the French finance minister, coming into this meeting that was really supposed to be about selecting a new ECB vice president, dealing with a lot of EU business, but of course, once again, has been hijacked by the Trump agenda in the form of these tariff threats. So I think it's first of all notable that the French and the Germans came out together to give a joint statement. Generally speaking, at these doorsteps, each minister comes up sort of on their own and goes to the scrum and has a conversation. This is a joint statement by the two biggest economic force within Europe, basically to say that now is the moment for Europe to come together, for there to be unity, for there to be a collective response. I think that the situation that the Europeans find themselves in, once again, with Donald Trump, is wanting to not be too confrontational, while at the same time saying that there is a credible threat here, that we will respond, that we will put tariffs on, for example, $100 billion worth of goods. We know that this is something that's on the table and that potentially could extend beyond that to the sort of anti-coercion instrument. This is something the French have talked about. They've reiterated here. So finance ministers are literally assembling as we speak to start to devise their sort of response. And we should say that there was an emergency meeting for EU leaders to convene in this building on Thursday, and that is before they're going to try some diplomacy in Davos, where Trump will be this week.
Mark Champion, let me bring you in. What is your read? What do you see thus far in terms of the European response?
Well, I think they clearly want to, put down a marker. They've gone through a whole series of what you can, quite
honestly call humiliations over trade talks and various other times when they've simply, tried as a policy to appease Trump, to flatter him, to, not to kind of do anything that would cause a breach with the Trump administration. And now over Greenland, they've kind of reached a point where that policy, clearly hasn't worked. And they are drawing a line and saying we need to make a stand here. I think the problem for them is going to be that the reasons for which they were very careful before have not gone away. That ultimately these things are about power, and if you get into an escalation, on trade where the EU could, take some pain, but might be able to go toe to toe with the US, it will spread into security. Which is there we're talking about NATO and we're talking about Ukraine, and as Scott Bessent has made very clear, the Trump administration sees these things as linked, and will use the leverage that it has.
What do you think the off-ramp looks like? How do we get a deal done?
I think it's going to be very difficult, to be quite honest. I think there'll be a lot of attempts at diplomacy. There'll be some threats like this, but the Europeans will be very careful about actually pulling the trigger. They were talking about unity. You have to wonder whether the Poles and the Balts will be as ready as the French to have a clear break with the Trump administration and to risk that spillover into security issues, to risk that Trump simply throws his cards in with Putin on Ukraine and says, fine, we're going to have a peace deal, and the Ukrainians either accept or I withdraw intelligence sharing and I withdraw even the ability to buy Patriot missiles from us to defend themselves. So, these kinds of things will have to be in the back of their minds as they try and negotiate an off-ramp. But ultimately the question is going to be, how much are we willing to sacrifice and to risk in order to make sure that Denmark retains control of Greenland?
Ollie, let's come back to you. We've got this meeting taking place between European leaders coming up. The president is on his way, will be on his way to the Davos World Economic Forum meeting midweek. Is that where, are people talking in Brussels and elsewhere about the fact that that's what it's going to come down to? What happens in Davos could dictate what happens next. How critical is this interaction going to be?
I think it's going to be fundamentally critical, Guy. I mean, listen, even going into these meetings, no one wants to speak with excessively strong rhetoric because nobody wants to have a full confrontation with the United States. But I think, as Mark has just been sort of outlining, I think to try to find an off-ramp, if the President of the United States is to be taken at his word, is that this is basically, a circle that can't be squared. You cannot basically resolve both the priority of the United States to take sovereign control of Greenland while at the same time, basically ceding that territory from the Danes. And for the Europeans, that's just sort of the fundamental question here. Are they going to go, is this a hill that they're sort of willing to die on? And that's going to be the fundamental question. There's going to be some conversations with Donald Trump. There has been some success in the past, diplomatic efforts by Keir Starmer, by the president of Finland, Alexander Stubb, and some others in order to break through to the Trump administration. Yep. But if fundamentally Trump, as he has said, is basically not going to take any sort of alternative to basically the full control of Greenland, there is no way to really square that circle.
But is there a sense, Ollie, who's going to speak? Trump comes to the World Economic Forum. There's a bunch of European leaders that are going to be there. Are we going to get the same message from all of them? Who's going to deliver the message? How is this going to work? It seems that there's huge amounts of danger of miscommunication. That the president is coming to a forum where there's lots of different Europeans. There isn't actually a mechanism at that meeting for this stuff to happen. It feels like a real wild card this week in terms of what could take place in the Swiss Alps.
I mean, absolutely, Guy. I mean, arguably, though, this whole sort of threat about tariffs could fundamentally have been at bottom a sort of misinterpretation of what the Europeans did in terms of some of the solidarity, some of the sort of military forces that were sent by European nations. We should remember that it was fewer than basically 50 troops from a number of different countries, you know, Germany, France, the UK, Netherlands, basically the whole list of those 8 countries that have now been tariffed by the United States. They said, you know, that it was to build up Arctic security in a certain way to sort of validate what Trump is wanting, saying that the Europeans are willing to contribute more to try to bring security to the Arctic. That was interpreted potentially by Trump as basically saying, you know, we're sending these troops here to defend against the United States. So I think there is also massive scope for misinterpretation, but that also happens, Guy, when people are not in the room, when they're not talking to Donald Trump. And you'll often have a situation where he said something very sort of critical, something intensely negative about Zelensky. Zelensky gets in the room and you get a sort of changed tone for a couple of weeks. But again, that's the sort of nature of diplomacy under the Trump administration. I think it can only help to get in the room with Donald Trump, and that is exactly what these European leaders are going to be hoping to do, in addition to the sort of head of NATO, who has been a sort of Trump whisperer throughout this, who arguably, who likely will, I assume, be talking to him at Davos as well.
Mark, how damaged has NATO already been by what is happening around Greenland? NATO is based on a principle of deterrence. Kind of, it has never really been tested, but I'm wondering how damaged it's been by what is happening here, and the fact that allies seem to be enemies and enemies seem to be allies, and it's all mutually interchangeable. How can you have a security architecture if that is the case?
Well, it's a very good question, and you know, this has been quite some time coming, beginning with the first Trump administration, where he said a bunch of things that you know, cast some doubt over his commitment to Article 5, the collective security clause, and that has continued at a higher pace, really, in his second administration. And as the Danes have said, you know, if you were actually going to have the U.S., you know, in clear conflict on an issue such as, you know, territorial sovereignty with one of NATO's most reliable allies, which is what Denmark is. It's been one of the most reliable allies that the U.S. has had since in the period since the end of the Cold War. So it's and even before, during the Cold War. But you know, if you had that, then it's very hard to see how this alliance survives. Each one of these events takes another chip out from, you know, the legs of the stool that NATO sits on, and it's weakening all the time. So there's a lot of concern around that.
Mark, great stuff. Thank you very much indeed. Blooming Opinions, Mark Champion, and our Europe correspondent, Oliver Crook. What are we going to do next? We're going to turn our attention to what is happening with the story around technology and the amazing chip story that is evolving. Micron just flagging that overnight, warning of a, quote, unprecedented memory chip shortage. We'll talk about that. We'll talk about the implications. That's next. This is Bloomberg.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? On this episode.
There's a need to update our regulation on the gambling industry. The current situation cannot stay as it is for long. It's unsustainable for the industry as a whole.
Premieres January 23rd, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome back, 17 minutes past the hour. This is Bloomberg Markets. I'm Guy Johnson. US on holiday today. It's MLK Day, but we've got to price in what is happening around the Greenland tariff story and whether or not actually that comes into play is a big question this morning. But there's so much other stuff happening in these markets right now. Let's talk a little bit about what is happening with tech. Micron is out warning that the memory chip shortage that we are seeing right now will last through this year, potentially beyond next year. Basically, what we are seeing is a surge in semiconductor demand. These are not the NVIDIA chips. This is all of the memory chips that basically are being consumed at the moment by the AI build-out, but are also required for other parts of industry as well. So you've got this global shortage that is not only affecting AI, but also pretty much every other part of the industry as well. Let's talk about the implications of it. Matt Bloxham joins us now. Matt, we've heard this from others. Micron is the latest to come out, but the language they're using is extraordinary, and they're talking about this huge shortage which is going to last for quite some time. Are prices of everything just simply going to have to go higher as a result of what we're seeing in terms of this chip shortage?
I think so. Linking it to another story about the iPhone success in China from Counterpoint. Counterpoint said that they expect memory chip prices to increase 40 to 50% in Q1 of this year, and then another 20% in Q2. So yeah, upward pressure on input prices. That's bad news if you're at the low end of the smartphone market. Bad news for the PC makers. Clearly, it's the AI chip manufacturers that have kind of got the money and the momentum on the demand side. So yeah, it's going to be a difficult year.
Is it possible to work out what percentage of an iPhone or a computer, or what, are these big parts of it in terms of the cost of building one of these things?
Yeah, I've forgotten the numbers off the top of my head, but yeah, there's a significant part of the component. I mean, obviously that they're an important part of NVIDIA's offerings too, but obviously the cost of those chips, $30,000-$40,000 or upwards is kind of a bigger scale. So it's when you're talking about a phone that's maybe $300-$400 or a phone that's worth $1,000, it becomes more meaningful on the price.
Okay. You and I have been doing this for a while. My experience of the chip industry is it's extraordinarily cyclical.
Yep.
Is that what we're seeing here? Is this the upper end of the cycle? And what happens once the cycle rolls?
I think it definitely feels like it's the upper end of an unexpected cycle. And I'm sure all of the chip manufacturers, whether it's memory chip or CPUs, are going to be kind of quite cautious about being too aggressive on capacity build-out because of the fear that inevitably we will see another cycle. I'm sure, this is a cycle, and obviously there will be a demand drop-off. so they won't want that overcapacity to come through in here. We heard similar things from TSMC back end of last week, although they're increasing their capex by $10 billion plus. A little bit of nervousness from the company CEO about how long that demand is going to come through and whether they're putting too much capital at risk.
Just a question to bring us back to the kind of the main story of the morning, which is tariffs and the European response to what Donald Trump, the president of the US, is doing vis-a-vis Greenland. How exposed are US technology companies? How big a market for US technology companies is Europe? How important is it?
It is very important. It's a huge economic area. It's typically the second largest kind of MOU, active monthly user kind of market for these companies. So Europe does potentially have quite a bit of power. Obviously, we've kind of just come out of a cycle where there was a lot of threats about digital taxes. Negotiations with the US administration have seen those ease off, but that's potentially an option that's back on the table. As you can see, the likes of Google and Meta, even maybe Apple, kind of impacted by specific import tariffs with its digital services or products. And obviously then there's a huge bunch of European regulations like the Digital Services and the Digital Markets Acts, which have focused a lot already on some of these big US tech players. They've been found to be kind of in breach of those rules. There are huge financial penalties and potentially behavioural penalties that come on the back of those. I'd say Europe has typically so far been relatively lenient, and you could see them put a lot more pressure, which would just restrict how easily they can trade and offer their services in these markets. So it's a risk.
It's definitely a risk. Matt, great to see you. Thanks very much indeed for stopping by. Matt Blogstone joining us on the technology story this morning. We're back in a moment with more on these markets. Certainly the Trump tariff story hitting risk sentiments. The US is out. We'll see what happens tomorrow. We'll check in again in just a moment. This is Bloomberg. Up-to-the-minute aerospace news whenever and wherever it happens. I'm Guy Johnson at the Dubai Air Show, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Watch Horizon's Middle East and Africa every trading day at 9 a.m. in Dubai and 5 a.m. in London. Only on Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape the more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
25 minutes past the hour. Welcome back. This is Bloomberg Markets. Let's get you up to speed with some of the other stories that are trending on the terminal this morning. The Japanese Prime Minister, Sanae Takaichi, has now officially called an early election for next month and promised a temporary sales tax to cut food prices if she wins a fresh mandate for her new coalition. The Premier, who took power in October, is betting that her ruling Liberal Democratic Party, the LDP, can strengthen its slim majority in Parliament in the February 8th election. And more than 36 people died in Spain after a high-speed train derailed and hit another vehicle coming in the opposite direction. Carriages on the Madrid-bound train derailed and crossed over the opposite side of the tracks, colliding with an oncoming vehicle that was coming from the south. The Spanish Prime Minister, Pedro Sanchez, has cancelled his Davos trip in the wake of the crash. Coming up, we are going to be delving into the credit markets and figuring out exactly what is happening. Madeline Jones of Oaktree is going to be sharing her investment approach. How is she thinking about the latest tariff story? Will it impact the credit narrative, which has been very buoyant since the start of this year? We will delve into that story and all the other things that are moving markets this morning. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Now, you've written that younger people today are not as happy as their parents were. That's in part
isolated. So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in a climb. That's the climate of happiness that's been ticking down since about 1990. Then the weather. Hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about. It's about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home, make sure that people don't interact socially, and that was catastrophic for happiness.
£5:30. Welcome back. You're watching Bloomberg Markets. Quick check on markets. Remember, the US is closed for MLK Day, but we are pricing in the risk-off sentiment that we are seeing around the Trump-Greenland tariff threats into a variety of assets this morning. European stock 600, the equities down by 1.12%. In some ways, you could argue actually not that big a move, but you've got defence offsetting the autos. We'll get to that in just a moment. S&P futures are also negative. If you are looking for a place to hide, gold seems to be the trade right now. It's up by 1.6% on the back of all of this. Take a quick look and see some of the stocks that are moving. You can see this sort of trade very, very clearly. BMW, the German auto, down. It is exposed to the Trump tariff threats. BAE Systems, the defence company out of the UK, up. There's an expectation that Europe is going to have to spend and continue to spend more on defence. Fresnillo is one of the biggest gold miners listed in Europe. It is up very strongly on the back of that. There are some key markets that are suffering more than most. Take a quick look at what is happening with the Danish OMX, and it is, as you can see, down by nearly 3% today. The euro-dollar not actually moving that much. Why? Because actually there's a repatriation trade which could get re-accelerated by this. And again, if you're looking for a place to hide, Swiss franc seems to be one of those places that people are going to. Gold and the Swiss franc certainly front and centre in that safety trade story. Let's talk about this from a credit point of view and figure out what we're going to see. It's been a very strong start to the credit story this year. Primary issuance has been incredibly strong at the beginning of the year. Maybe just beginning to soften up a little bit, but from a very high level. Oaktree portfolio manager Madeline Jones joining us around the table to discuss. Madeline, it's been an incredibly good afternoon. Get my timings right. It's been an incredibly strong start to the year for credit. Is there a danger now that
guys ये नेचुरल गैस के ट्रेड का ध्यान रखना है मार्केट यूएस मार्केट तो क्लोज है एंड नेचुरल गैस इज सुपर बुलिश रुक ही नहीं रहा है बिल्कुल भी दैट इज अ रेजिस्टेंस एरिया एसएल थोड़ा सा बड़ा है 5 पॉइंट का तो ध्यान रखना उतनी क्वांटिटी ट्रेड करना जितना रिस्क ले सकते हो 5 पॉइंट से बड़ा एसएल बिल्कुल मत लियो काफी है इतना मॉर्निंग से देखोगे फॉरेक्स मार्केट ऑलरेडी गैप अप ओपन हुआ था उसके बाद से इंडियन मार्केट भी कंटिन्यूएशन में चला गया अपसाइड पे जो लास्ट ट्रेडिंग सेशन पे मार्केट क्लोज हुआ था फॉरेक्स में वहां से फॉरेक्स ऑलरेडी 15% गैप अप ओपन हुआ था आज नेचुरल गैस में थोड़ा बहुत पुल बैक आया इंडियन मार्केट ओपन होते होते बट इंडियन मार्केट भी जब क्लोजिंग ओपनिंग हुई थी मॉर्निंग पे दैट इज स्टिल 13 पॉइंट ऑफ तो उसको कैचअप करने के लिए मार्केट ऑलरेडी कंटिन्यूअसली 13 पॉइंट यहीं से चढ़ गया सो ये जो आप मोमेंटम देख रहे हो अप्रोक्सीमेटली इधर तक 13% दैट इज जस्ट अ गैप ऑफ फिलिंग फॉरेक्स मार्केट के उसके बाद से मोमेंटम कंटिन्यू ही है यहाँ पर भी फॉरेक्स के साथ साथ क्रूड ऑयल में कोई ट्रेड नहीं मॉर्निंग से एक रेंज के अंदर ही चल रहा है ना सपोर्ट पे आ रहा है ना रेजिस्टेंस पे आ रहा है वेट करते हैं वैसे यूएस मार्केट क्लोज है थोड़ा वॉल्यूम अगर आता है और ऊपर की साइड पे इस अभी सेलिंग का ही प्लान है यूएस मार्केट इज क्लोज 8 बजे यूएस मार्केट ओपन नहीं हुआ है आज वहाँ पर दोनों ही एक्सचेंज क्लोज है नैस्डैक और न्यूयॉर्क स्टॉक एक्सचेंज
This is Scarlett Fu.
And I'm Paul Sweeney, inviting you to join us for the Bloomberg Intelligence Podcast.
Every day on Earth, like OpenAI. That is your legacy.
Day, then bring you the best conversations in our daily podcast.
So be sure to search for Bloomberg. I'm Scarlett Fu.
Now, I'm Dan Schwartzman. German Finance Minister Lars Klingbeil telling reporters in Berlin Monday that President Trump reached a red line with his threat to hit NATO allies with additional tariffs for opposing his bid to annex Greenland. Klingbeil said, quote, "We are constantly experiencing new provocations. We're constantly experiencing new antagonism, which President Trump is seeking, and here we Europeans must make it clear that the limit has been reached." The minister, speaking alongside his French counterpart, said there was a European toolbox available to use to respond to economic blackmail, which they believe should be now examined. Klingbeil was responding to Trump's announcement over the weekend to impose a 10% tariff on goods from 8 European countries starting February 1st, rising to 25% in June, unless there's a deal for the, quote, purchase of Greenland. Bloomberg's Brendan Murray says some countries are already starting to look away from the U.S. for new trade partners.
Canada made they weren't shy about the fact that they are now seeing China as a more reliable trading partner than the U.S. Remember, over the weekend, we had the European Union signing a new free trade agreement with the Mercosur countries in South America.
That's Bloomberg's Brendan Murray. The European Union is discussing potentially imposing tariffs on 93 billion euros of U.S. goods if President Trump follows through on his threat to hit European countries with tariffs, unless there's a deal for the, quote, purchase of Greenland. The president made the threat after the countries undertook a NATO military exercise on this semi-autonomous Danish territory. The EU is also weighing additional countermeasures beyond the tariffs, but will first try to find a diplomatic solution. Representatives from the EU's 27 countries met Sunday to begin preparing options. Meanwhile, Hennion & Walsh Asset Management CIO Kevin Mann says it is important for investors not to overreact.
Time will tell exactly what happens with Tariffs and Trades 2.0, what the Supreme Court will decide. But what we do know is that trying to time the market is often an exercise in futility. And I do think regardless of the outcome of Tariffs and Trade 2.0, there are many other opportunities for investors to consider if they only follow where all the money is going to be spent in the new year.
That's Hennion & Walsh Asset Management CIO Kevin Mann. President Trump has linked his claims on Greenland to not being awarded the Nobel Peace Prize in a letter to Norway's prime minister. The president says the world is not secure unless the U.S. has, quote, complete and total control of Greenland. The Nobel Peace Prize, though, isn't awarded by the Norwegian government, but instead by an independent committee. Markets reacting negatively to the news on Greenland, with futures all down from 0.75% to 1.4%, while European markets are also roiled, down anywhere from 0.4% to 1.5%. According to Spain's transport minister, at least 39 people are dead after a high-speed train carrying around 300 passengers traveling between Madrid and Malaga derailed and hit another train coming in the opposite direction. The accident took place around 7:45 p.m. local time. Spain has one of the world's largest high-speed train networks, which consists of private and state-owned players. Russian President Vladimir Putin's spokesman Dmitry Peskov says that Putin, quote, received through diplomatic channels, unquote, an invitation to join President Trump's Board of Peace for the reconstruction of Gaza. Peskov says the Kremlin is reviewing the invitation and is looking to get more details from the U.S. Gold and silver jumped to record highs as President Trump's push to take over Greenland spurred fears of a trade war between the U.S. and Europe. Precious metals have rallied sharply this year, with many analysts expecting the gains to continue, citing geopolitical risks and uncertainty undermining growth prospects and trust in the U.S. dollar. Spot gold traded near $4,670 an ounce, while silver surged as much as 4.4%. Overall, precious metals have rallied sharply this year, following dramatic gains in 2025. The Supreme Court agreed to review Bayer's challenge to a $1.25 million Missouri jury verdict over claims a company failed to warn that Roundup weed killer could cause cancer. The pharmaceutical giant is hoping a favorable Supreme Court ruling would help knock out thousands of similar failure-to-warn cases. Bayer's stock rose as much as 7.5% in early trading on the news. Roundup litigation has been a headache for Bayer since it bought Monsanto for $63 billion in 2018, inheriting a slew of lawsuits. The company has already paid more than $10 billion in verdicts and settlements. Japan's Prime Minister Sanae Takaichi plans to campaign on a 2-year cut to the sales tax on food in a snap election that'll take place with early polling beginning on February 8th. Economists warn the move will cost around 5 trillion yen, that's That's equivalent to $31.6 billion per year. Takaichi said she was still considering how to fund the move. College football's national championship game is tonight at Hard Rock Stadium in Miami as the Indiana Hoosiers face the Miami Hurricanes. Kickoff is scheduled for 7:30 Eastern Time. That's news when you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every weeknight. Balance of Power, weeknights at 10 p.m. London time, only on Bloomberg.
Our Players is back to take a look under the hood of the business of Formula One. Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard, oh boy, can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah, probably very fast.
Yeah. This is so exciting!
This season, we're along for the ride.
Forty-four minutes past the hour. Welcome back. You're watching Bloomberg Markets. Let's kind of talk you through the action that we're seeing right now. US is closed. It's MLK Day over in the United States. So US markets are not trading. E-minis are, though. So S&P futures are down by 1.26%, pretty much in line with Europe. The reason they're down is that we've got this threat of tariffs coming from the President of the United States, Donald Trump, relating to his desire to acquire Greenland. That is knocking European assets. People are seeking safety in things like gold, which is up by 1.54%. You are seeing the most potentially tariff-exposed stocks under the most pressure. So defense stocks are up, tariff-exposed stocks are down. Anything associated with gold and silver is also tracking higher. So let's move on to the next board. BMW, look at this, down by 3.5%. BAE Systems actually fading a little bit towards the market close here in Europe. Now, but defense stocks generally have been trading quite strongly. Anything associated with gold, and Fresnillo as a gold miner, is up very strongly right now. Norwegian markets, Danish markets, Swedish Swedish markets are all getting hit hard today. Denmark is at the top of the list. Its market is down by 2.8% as they worry there about what is happening with this story relating to these tariffs coming out of Donald Trump. You've also just seen a little bit of news coming over the Bloomberg terminal relating to France, which I just want to bring you as well. The French Prime Minister, Mr. Lecornu, is to use Article 49.3 to pass a budget. He'd hoped he wouldn't be able to do that, wouldn't have to do that. It looks like he now probably has to do that. And that is a story that I think we'll probably see priced into the French bond market later today and into tomorrow. But there's a lot going on. There's a huge geopolitical story which is emerging as a result of Donald Trump's desire to acquire Greenland. How is that going to play out at the World Economic Forum? Well, let's take you there to Davos now. Francine Lacroix is sitting down with the IMF's Managing Director, Kristalina Georgieva. Fran, over to you.
Yes, thank you so much, Guy. Thank you so much. I am absolutely delighted to speak to the IMF MD. MD, there's so much to ask you about. First of all, you released this morning, thank you for joining us, you released this morning your World Economic Outlook. And actually, it's not too bad, but this is without any expectations of extra trade wars or the spit and spat that we're seeing over Greenland. How much do you worry about all of the trade concerns from 2025 coming back with a vengeance? Well, let's...
गाइस इसमें एसएल चला गया नेचुरल गैस के ट्रेड में ज़्यादा ही बोले सही है एसएल इज गॉन ओके निकल जाना इसमें से एक लास्ट ट्रेड देखते हैं आज का ऑलरेडी 2 ट्रेड में एसएल जा चुके हैं फाइनल ट्रेड है अगर आता है तो मोमेंटम थोड़ा बहुत इसके बाद कोई ट्रेड नहीं लेंगे क्रूड ऑयल में कोई ट्रेड नहीं चल रहा मॉर्निंग से उसमें निकल जाना एसएल चला गया उसमें ठीक है एसएल इज गॉन हिट हो चुका है एसएल थोड़ा सा ऊपर एक नेक्स्ट रेजिस्टेंस है बट वहां जाते जाते प्राइस अगर होल्ड करोगे तो 7-8 पॉइंट का और एसएल ऊपर बढ़ जाएगा तो अननेसेसरी रिस्क मत लेना फ्रेश एंट्री करनी होगी तो ऊपर से करेंगे थोड़ी सी भी प्रॉफिट बुकिंग आ रही है रेड कलर की कैंडल बन रही है अगेन बाइंग लेवल था ये मेन लेवल एक और बचा था अब ये लास्ट 3 बार टेस्ट हो गया इसका ब्रेकआउट हो चुका है ऑलरेडी सो नाउ दिस एक्ट लाइक एज रेजिस्टेंस उस वाले लेवल को कंसीडर नहीं कर सकते बिकॉज ऊपर एक और रेजिस्टेंस है नेचुरल गैस भी कभी मूव करता है एक डायरेक्शन में चला जाता है कभी दूसरी डायरेक्शन पे जाता है उसी डायरेक्शन में चला जाता है बट मोस्ट ऑफ द टाइम इट फॉलो द प्राइस एक्शन बट सम डे इट जस्ट वन साइडेड आइदर बुलिश और बेरिश इवन कहीं पर इसने 50% तक का पुल बैक नहीं दिया अपने ऑल टाइम रिसेंट हाई से
see is devastating. The economy shrunk dramatically. Inflation is on the rise. We worry about hyperinflation. 8 million people left the country. In proportion to the population, more than Ukrainians that run away from a war. So how you turn this around, given that there is really no credible data, this is going to be extremely difficult. We are ready. If the membership says you're good to go, we will immediately step up engagement with Venezuela. And I can tell you, for the people of Venezuela, I just hope that there would be that kind of progress soon.
You've just come back from a trip to Ukraine. There's a lot of talk here that actually Ukraine is being forgotten, maybe at the margins, because of everything else that's going on. Can you update us on your program there and whether you see the resolve from European leaders to actually do enough?
Let me first say that going to Ukraine was very sobering, because this is the worst winter, minus 20 degrees Celsius. This weather here is paradise in comparison. The city is cold, dark, but functional. And that impressed me tremendously, that the streets are cleared so people can go to work. Traffic lights work, and actually everybody I talked to shows tremendous strength. I went to visit a power plant that was bombed. How cruel could you be to deprive kids from a chance to go to school because there is no heat, there is no electricity? And in 14 hours, they restored it for 75% of their consumer access to power. So there is that incredible strength of the Ukrainian people. For us, it was demonstrably so throughout the first program. We had, as you know, 8 reviews, all completed successfully. Now we are putting forward a new program for Ukraine, very important anchor of macroeconomic and financial stability, so the 90 billion from the EU can flow into Ukraine. You're saying, is there a risk for Ukraine to be forgotten? I don't quite see this, because in Europe there is a very clear understanding that Ukrainian security is European security.
So you're confident they'll get the money in good time?
I'm confident. We have to continue to move forward with the reforms that the country needs, because Ukraine cannot be in between market economy and non-market economy. Move to markets.
MD, thank you so much, as always, for joining us. That was, of course, the IMF Managing Director, Kristalina Georgieva. With that guy, I'm going to send it back to you, and we'll have plenty more throughout the day and the week here in Davos.
Yeah, busy schedule coming up. Looking forward to all of it. Francine, thank you very much indeed, and our thanks to the Managing Director of the IMF. Coming up, we'll be back to the World Economic Forum. Mubadala's CEO discussing the 2026 outlook, the strategy for Abu Dhabi's sovereign wealth fund. That conversation is coming up. What is the Gulf? What is the Gulf's priorities this year? How is it going to invest? So many risks around that region as well, but so many opportunities. Clearly, AI, a big feature of the landscape. We're going to find out much, much more. In terms of the market situation as we come towards the end of the day here in Europe, we are certainly seeing auto stocks under pressure. The safe haven bid is on. The Swiss franc is trading higher, and we have gold looking fairly favourable as well. That is the picture that we find ourselves with as we speak. Remember, it's MLK Day over in the United States. Its markets are closed. We'll be back with more from the World Economic Forum next. This is Bloomberg.
I never have changed my show to make it for YouTube. I'm very conscious of the fact that ABC pays for the show and YouTube pays nothing, and YouTube gets to sell it and keep half the money, and that's quite a deal for them. It really is. But I've never made the show for YouTube. With that said, I love YouTube and I love being on YouTube because all you really want deep down is for as many people to see your stuff as you can. And I know that it has hurt because it is so easy to watch the monologue on YouTube now. I know that it has hurt the ratings, not just for our show, but all of the shows. And maybe that's kind of what has killed late night TV. More likely the fact that we have our lead-ins are a tenth of what they were when I started.
I was alarmed to see that the most watched video from your show had fewer views than the average Mr. Beast video. And I don't know what that says about the state of the world, but
I think it says Mr. Beast is kicking is what it says, yeah. Well, you know what? There is a big difference. When you do the show every night, you're not going to get as many views. But we still, I mean, I woke up this morning, there were 2.2 million views of my monologue the night before. So for everyone who says late night is dying, it's just not true.
In case you missed it, on the pulse.
Markets like oil, you got the short, 2 weeks ago it was 230 million barrels short, bigger than what the glut is that's floating out in the South China Sea in these dark fleet ships. So the market going in is record short. Demand is not slowing down, it's picking up, and geopolitical risk is at, I would say, an all-time high. That's a recipe for a spike in prices right now.
Where do you see the next risk?
Basic commodities and affordability, starting to put pressure across the interest rates and everything like that. And the curve is beginning to steepen on the yield curve. And then you got to ask, as the yield curve begins to tip out and you start to see higher interest rates further out on the back end, are people going to be willing to sell these commodities? It starts to become even that much more riskier as your underlying cost structure of the economy changes and a re-rating of real assets. And
it's like a shock.
It's a shock.
Don't miss the Pulse, live every weekday.
Monday the 19th. Welcome to Bloomberg Markets. I'm Guy Johnson in London. US markets are closed today. It is MLK Day over in the United States. So there's a lot to factor into global markets. Let's talk about what we are seeing. Euro Stock 60 down by 1.1%. S&P futures, which are open, down by 1.1%. The reason for this, we have this threat coming from the President of the United States related to Greenland of further tariffs to be applied to certain European countries. That is not being received well, but in some ways you could argue it's a fairly muted response, a cautious response from markets. Gold is trading a little bit higher, again, understandably, given the fact that we are seeing risk off. People are flocking to gold, looking for maybe a place to hide down. But what do we make of the market reaction? What are we thinking about this Monday morning? Are we expecting maybe Trump to chicken out once again? Is the taco trade actually being dictating what we're seeing in terms of the market response? Let's find out. Let's bring in Bloomberg Markets reporter Moana Conningham. Nice to see you again. What do you make of the market reaction?
Well, I would say it's a little bit more muted than I would have expected.
Yeah.
Like, this was quite a clangor of an announcement, and I think it did shock quite a lot of people, even though, as you were saying, we have seen some of this before. We've seen these tariff threats before, and then we saw that they didn't follow through in the way that they were first promised. But I think this is a little bit different, just because there's a much more clear geopolitical dimension to it. It's not in premise about economics at all. It's a sort of...
It's not theoretical, it's practical.
No, it's a threat to achieve a particular end. So whether that makes it more likely that he will backtrack or not, I'm not quite sure, and I'm not sure the market is quite sure either.
Yeah, we don't know what the European response is actually going to look like. How strong will that be? How cautious will that be? This week is just littered with risk events, though. You've got a whole load of market events. You've got Davos, Trump's going to that, so we're going to see him there. But we've also got the Supreme Court ruling again tomorrow. We could potentially see his reciprocal tariffs being thrown out by the Supreme Court.
Right, and I think that is a key event because it also impacts those measures that have already been announced. And so perhaps I think markets are waiting to some extent to see whether these are considered valid or whether he has to go through other means in order to enforce them, and it can't just be this sort of unilateral declaration. I think that is a key risk event. We've been thinking it might happen for a while. It could happen tomorrow, and I think that's something that we'll be watching quite closely, particularly, of course, US markets are primarily closed today for a holiday.
Yep.
And that means that tomorrow we will actually only then really see how they are responding to whatever the headlines are at the time.
You've got a price in Greenland and Supreme Court potentially tomorrow, all on one day.
It's going to be a big one.
It's going to be an interesting session. Moena, thank you very much indeed. Bloomberg Markets reporter Moena Conningham joining us on what we are seeing in the markets today. Cautious response, you could argue, thus far, but the US markets are closed. There's a lot going on. There's a lot to think about. It is, in some ways, the perfect setup going into the World Economic Forum as those there consider where we go next. Let's take you back there now. Jumana Basechi is joined by the Mubadala CEO from Abu Dhabi. Jumana.
Hi, Guy. Yeah, thank you. That is right. I'm joined now by His Excellency Khaldoon Mubarak. It's really good to chat to you. There's so much to talk about going into what is going to be quite a pivotal week, I think, for the global economy. But first, let me just start off with a question about Mubadala, because this is the second year in a row, I believe, that you were the most active sovereign wealth fund in the world. Why have you been so active?
Well, first of all, thank you for having me. It's a pleasure to be here today with Bloomberg, especially on a Monday before this very interesting week we have ahead of us. 2025 was another very active year for Mubadala. Listen, the markets have been very interesting in the sectors we like, in the geographies we like. We've been working hard since inception to get Mubadala to where it is today. And I think over the last 2 years, we've really cranked it up as an organization, as an institution. And 25, I think we deployed anywhere between $35 to $40 billion in terms of investments around the world. We've had a lot of monetizations also. We've effectively monetized probably the same amount, around 35 to 40 billion also.
What about the sectors you like going into 2026? Is it the same pretty much playbook that you looked at in 2025, or are things going to be a little different?
Yeah, I think our trajectory in terms of sectors over the last couple of years has been pretty consistent. I think we've taken a very strong view on artificial intelligence, on AI, the entire spectrum of technology. I think that's an area Mubadala has been really spending a lot of time on. So that continues to be the case. I think on the infrastructure side of it, digital infrastructure, that remains, again, a very core area for us. Healthcare, consumer, financial services, credit. These are, again, areas which have performed extremely well over these last couple of years. And I think going forward, we continue to be pretty convinced of these spaces.
There's a lot of talk, as you see. You're watching Bloomberg, I'm sure. You see a lot of people talking about too much hype or over-exuberance in the ecosystem of artificial intelligence. Has it made you have to be a lot more discerning about where you're looking for value and for growth and for scale in this space?
No, I think the space, we have a lot of conviction on that space. I think leaving the noise and the hype aside, I think we have a very clear view of what we think are the investable spaces within the technology space, where we think, particularly when it comes to AI enablement, there's a lot of aspects that I think we believe in, we've invested well in, I think we will continue to invest in, and I think the growth continues to be high in that area.
Yeah, last year when I spoke to your deputy, Walid, he was mentioning to me that private credit was a really big performing part of your portfolio. Do you expect that to continue in coming years, given how much spread compression we've seen in that place and also new players coming to the market?
Yeah, I mean, listen, we've built the capability in private credit over these last couple of years. It's now a significant contributor to our balance sheet. Last year was the best. No, 2024, when he would have spoken to you, it was the best performing asset class for us. Last year it was strong. I think mid double digits, so quite strong. As you said, I think there's more headwinds in that space. But I think if you are with the right partner, and given the platforms we've built over these last couple of years, we remain quite, I would say, bullish and firm on that space.
Yeah, let's talk about your geographic focus. The UAE last year pledged to invest $1.4 trillion into the U.S. How much of Mubadala's investment objectives are centered around opportunities specifically in North America and the United States?
Well, let's start with the first word you used, the UAE. The UAE is a very important aspect of our portfolio. Of course, we are based in the UAE. We are owned by the government of Abu Dhabi. We have a significant aspect of our portfolio in the UAE. And last year was an exceptional year for us. We had north of 20% returns in our UAE portfolio across real estate, infrastructure, industrials, technology. So it's been a very healthcare, very strong year for us in the UAE, and I think the UAE is well positioned for growth. I think going forward, and we're well positioned to take advantage of that as significant investors in the UAE market. The U.S., of course, is the largest market. Is where we've been significantly invested over since inception. It remains our largest market in terms, and particularly in the sectors we're focusing on, technology. 25 was a good year. 26, I think we will continue to invest. You talked about the commitment made last year. I think for us, it's business as usual in the U.S. We know the U.S. market. We know how to invest. We know where to invest, and we have the right partners to invest with there.
What about Asia? What opportunities are you seeing there?
I really like Asia. I really like Asia. Over these last 10 years, we've been, starting from a weak point as a portfolio. We were underinvested in Asia. I've focused a lot, I think, as an organization in Mubadala towards building our knowledge in Asia, understanding the markets, and then focusing on the sectors we like most. We've done that. Today, we have a very strong operation in China. We know the markets in Southeast Asia well. 2025 was strong in Korea, Japan, China. All these markets we've done very well in.
Yeah.
So I think it worked very well for us.
Yeah, that lays up nicely my next question, which is one about the main story this week, which is going to be geoeconomic fragmentation and the weaponization of economy. Do you worry about the consequences of that and the fact that you will and you are trading with different potentially competing blocks around the world and the potential retribution that could bring up from the U.S. administration?
I think one has to always be careful. I think as geopolitics plays the role it plays, and increasingly more and more, it impacts all businesses and it impacts all, I would say, investment institutions. One has to be very conscientious of that. I think we've done very well. I think as the UAE, in that sense, we've done very well as an investment institution, as Mubadala in that sense also. We try to be agnostic. We try to pick the sectors right. We try to position ourselves with the right partners, both west, east, north, south. And I think we've done that. And our return, I think, shows that. Today, Mubadala, when I look at our returns over 10 years, over 5 years, double digits. We continue to be north of 10% on average over the last 10 years, which shows, again, among sovereign funds, we're probably top of the list.
Yeah, so a move to a multipolar world is not going to affect your investment decisions?
No, because I think it actually fits very well the way we operate and the way we invest.
Yeah, Your Excellency, thank you so much. Very good to chat to you. That was Mubadala CEO, His Excellency Khadoun Al-Mubarak, and obviously it's the first day here of our Davos coverage, Guy. Plenty more conversations to come throughout the course of the week.
I'm looking forward to all of them. Jumana, thank you very much indeed. Jumana Basechi and Mubadala's CEO. Thanks to both. Okay. What are we going to do next? State Street's CEO joining the team in Davos. That conversation is coming up. What does the US banking story look like in a world where we are seeing further fragmentation? We are going to find out next. This is Bloomberg.
Technology is embedded in every aspect of our lives and laying the foundation for the future, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Drulers in Hong Kong. I'm Sherian in Tokyo. Watch Bloomberg Tech Asia. New episode Friday, only on Bloomberg Television.
bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Beirut, and this is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Welcome back. You're watching Bloomberg Markets. We've got a lot going on today, despite the fact that it is MLK Day over in the United States. We're trying to factor in the tariff story into global markets. Let's carry on the conversation about how that's going to happen. We've got a great guest lined up at the World Economic Forum in Davos. State Street Investment Management CEO standing by with Lisa. Let's go back to Davos.
Thank you so much, Guy. I am here with Yi-Shin Hung, the CEO of State Street Investment, at a time where nobody's taking time off, given the fact that the news flow has been so intense. I'm so glad that we get to have this conversation. You wrote in your outlook recently that global shifts may present risks in the year ahead that some people may not be prepared for. People will hear that loud and clear right now. What exactly are you talking about?
Well, you know, we talk about geopolitics all the time, and that is also reshaping sort of economic alliances. And, you know, the markets, I think for the last several years, has been just enough to be really exposed at the broader level. If you held the S&P 500, you would have done very well. But we think that with what we've seen with tariffs, the impacts on individual countries, individual sectors, all of that matters. And so investors need to be paying attention to the micro as much as the macro.
With respect to the macro, why do you think markets have been so sanguine in the face of some pretty intense headlines?
You know, on balance, I think growth is pretty strong. We've recently upped our global growth estimates, in part because the U.S. economy is showing enormous strength. Consumer spending is good. We're starting with, obviously, monetary easing likely to continue into this year, and then you have the fiscal benefits of the One Big Beautiful Bill that's going to result in tax cuts and additional CapEx spending. We're also seeing companies do incredibly well. I know we just got off of first quarter earnings, and there's still more to report, but even as we look for the full year, we think earnings are going to come in close to 14–15%. So there's a lot of reasons to be very optimistic about the direction of the markets.
It seems like there are three prongs to this Davos. There's the AI prong on one hand. There's the geopolitics, President Trump speaking on Wednesday at 2:30 p.m. local, 8:30 a.m. Eastern time. And then, of course, you have this question about the business cycle and the deal cycle and how robust things have been, which is somewhat connected to the tech side of things. What are you most interested to hear in the conversations that you're preparing for?
It's really a couplefold. I mean, last year was all about AI also, but I think this year is very much focused around how is that going to be implemented across the board, and what does that mean in terms of sectors and who's going to realize the productivity now versus later, impact on the workforce. upskilling, reskilling. And then your point about, the macroeconomic political forces. And, the market tends to take a lot of these in stride. There may be short-lived reactions until the market sort of figures out, well, really, what is the underlying economic impact? So that's what I'll be listening for.
If last year was any map, we got Liberation Day in April, and the knee-jerk reaction, especially among Europeans, was to sell U.S. assets, was to sell out of some of them and diversify away. Then it sort of shifted, or you saw a plateauing in the dollar, and people started talking about the AI trade. Right now, there's some speculation that we could see a similar type of trend in the wake of the Greenland situation. Are you hearing anything about that?
Not necessarily. I mean, these are questions that investors are asking us all the time, what to make of all of these developments. When we look at flows, right, it has declined in terms of the amount of flows going into the U.S. 2 years ago. It was in the mid-80s. Last year it was mid-60s. Going into this year, I know it's only partway through January, but the flows are about 50-50 into the U.S. and into the non-U.S. markets. And even that part in non-U.S. is half going to international developed and half into emerging markets. So I think that's really quite interesting. It's not necessarily a sell away, but a sense that there's a need for greater diversification because it's very difficult to predict what's to come.
When the investments into the U.S., how much of them are into the tech sphere, this sort of bet on AI really developing and creating efficiencies versus more broad-based treasuries, dollar-based assets for the sake of the full faith and credit of the United States?
Yeah, what we're seeing in terms of flows is that equities are still outpacing fixed income on a 2-to-1 type of factor. You're still seeing the large, broad indices benefiting, and that's where a lot of the big names are very concentrated. That said, we're seeing a broadening out of the market. Equal weight indices are doing well. Small caps tend to do better as interest rates are coming down. We're starting to see that also. I think on the fixed income side, there seems to be a much more greater focus on the short to intermediate term. Just because, as much as I may sound more confident about the state of the economy and that inflation is not something to worry about, there is still that concern. But the broader trends in terms of ETFs going to low cost, passive, active picking up, those trends continue.
How hedged are people to a sudden spike in volatility, given the fact that we've seen volatility metrics fall so significantly and every geopolitical headline shrugged off?
If you consider cash and gold as hedges, then I'd say there still is quite an ample amount of interest. And today, cash is paying you a good reason to be around, and it's great for should there be a correction. And gold, I think, is a hedge from so many perspectives, whether it's inflation, U.S. dollar, geopolitical issues.
I joked when I saw you that you've made State Street interesting because you've done a lot of really interesting things in your tenure at the company, in part partnering with a lot of private market companies to bring ETFs that are exposed to private assets. How are you thinking about the evolution there, who you partner with, and what types of assets you're trying to give consumers exposure to?
Well, fundamentally, there's so much value creation happening in the private markets, whether it's private equity, private credit, and then, of course, when we talk about AI, we're talking about infrastructure and the like. And so our goal as a company, we started out, really focused around index, launching the very first S&P 500 ETF, this idea of democratizing investing and making available what institutional investors have and giving it to individual investors. That's where we're focused. And so we look for like-minded asset managers that are really interested in bringing those strategies to everyday people.
I'm looking at the list: Apollo, Bridgewater, Galaxy Asset Management, the recent partnership with Kohler Capital to deal with secondaries. Is there any asset class that you think isn't really appropriate or a good fit for an ETF construct, just based on the fact that it's not very liquid?
I think that's a very important point. Given that most of our business is in the liquid markets, we're very focused around intraday liquidity and valuations. And so in private credit, we felt we could do that, and with a partner like Apollo, provide those elements. And you're right, not everything is going to fit within an ETF. But target date funds, we think, makes sense, and we're the first to introduce private markets exposure in that. And so we'll continue to look at that, but over time, it feels like there needs to be increased liquidity. And even what we're seeing with our private credit ETF is that with greater transparency, there's increased activity and bids on the underlying. So this could be the beginning of something much bigger.
So you do see sort of further going into the secondaries market in particular for State Street. That's something you're going to continue on?
Agreed.
Okay. Going forward, you also have been really expanding significantly in the Middle East, in Europe. What's the vision there? How big do you hope to get? Is it going to be an equal presence in both the Europe and the Middle East and the United States? How do you see it shaking out?
Well, the world's wealth is fairly well distributed. It's about half in the U.S. and half outside the U.S., and we see enormous wealth accumulating in so many areas that you mentioned outside the U.S. And so we're a global firm today. We are in 30 different locations, managing money in about a dozen of those. And so we'll continue to emphasize those arenas. And I think global wealth is the other phenomenon that we talk a lot about, not just in the U.S., but all around the world. And so thinking about that broad suite of capabilities and investment exposures is really what's guiding us as we look at what the demand is.
What's the bull case for this year? What's sort of the outperformance and sort of your expectation in the best case scenario?
Well, I think that, we continue to see monetary easing on the part of the Fed. We're more concerned about the strength of the labor market, even though we saw unemployment tick down, quality of jobs, job openings, things like that we don't think are as good. And so we'd like to make sure that that continues. May not continue immediately, but in the spring, summer timeframe, I think that would set a very good stage. And then secondarily, all this investment going into AI, right, having companies begin to show realizations, return on those investments, I think is important.
On the flip side, is there anything that you could hear either Wednesday or in client meetings that would get you more concerned that the geographical realignments and the global shifts that we're seeing really will take center stage and won't necessarily be treated with a shrug by markets the way it has been?
I think it's very difficult to predict that. You know, when I think about when Russia initially invaded Ukraine, the big concern was what was the impact on oil, right? And so you have to examine each of these events as they occur. What's the implication? So I don't have a really good answer for you on that front, but certainly the market is paying close attention because we are in what has been a very constructive environment for businesses and the markets.
There were a couple of years when people said that Davos was coming to an end, that it was sleepy. What's been your impression so far? And it's early days, it hasn't even kicked off yet. What's your impression so far?
I think Davos is an incredible meeting place to deal with these very issues. As we've talked about the implications of AI, how to implement that responsibly. As the world powers shift and realign, that means there's probably increased volatility, need for agility. How do different organizations adapt to that? I think it's a perfect place for these kinds of conversations.
It's packed. That's my observation. So far, people are absolutely piling in because it is particularly interesting given a record number of world leaders. Thank you so much, Yishin Hung of State Street Investment. Guy, I'll send it back to you.
Fantastic conversation. Yeah, it sounds like it's busy there, and it's only going to get busier, I suspect, as we work our way to Wednesday. Plenty more great conversations coming up over the next few days out of the World Economic Forum in Davos. Bit of breaking news for you, though, while we've been listening to Lisa's conversation. CSG Group, which is the defense company out of the Czech Republic. Czechoslovakia is actually its name, Czechoslovakia Group, but CSG looks like it's going to come to market on Friday with a 25 billion euro valuation. Remember, this is a tightly held group. Father set it up, son now runs it, started off retrofitting tanks, now Europe's biggest ammunition producer. An interesting week to come to market when we see what is happening around Greenland and the Trump tariff threats that are being made, his desire to acquire that territory, and really the market looking at this and saying this is only going to accelerate even the rearmament story that we are seeing in Europe. Defence stocks generally have been higher today, and it looks like CSG could be coming into into the market on a week where we are certainly seeing significant interest in that space. So we'll watch that one very, very carefully. Stocks 600 currently down by around 1.2%. We're heading towards the market close. We're about an hour away from that. S&P futures are also down. The market is seeking safety in places like gold. The Swiss franc is also heavily bid today. Coming up, Bloomberg's conversation with Franklin Templeton CEO Jenny Johnson. Where does she see opportunity? Where does she see that volatility story going next? And where's the opportunity within it? We're going to find out next. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the lights air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape the more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Monday the 19th, welcome back. We're an hour away from the European close. Hello everybody, I'm Guy Johnson. Busy day though for markets, despite the fact that actually we are closed to MLK in the United States. We'll come back to the markets in just a moment, but there's so many great conversations happening at the World Economic Forum in Davos, giving us a real kind of flavour of what the conversation is going to be throughout this week. This morning at WEF, Franklin Templeton CEO Jenny Johnson spoke to Bloomberg's Francine Lacroix. She talked about market volatility. She talked about the opportunity around that volatility. She did, though, stress the need for diversified portfolios to absorb exactly what we're seeing today, political and economic shocks. Let's listen to a piece of that conversation.
Volatility is opportunity for active managers, right? And so, look, this administration has shown us that there are surprises around the corner, and so you have to position your portfolio. Franklin Templeton, we have clients in 160 countries. We're going to celebrate 80 years next year. We've been through a lot of administrations. Our job is to make sure our clients have their investment portfolio that is really diversified so that they can actually take these kind of short-term shocks. And if you do it right, you can get through it. And I think, in the case of President Trump, look, think about what the markets did after Liberation Day. We were all like, oh my gosh. And you know what? We came out pretty okay on the tariffs. China, it was going to be 100%, right? The markets reacted to that. A little less. You got through that. I think we'll get through this latest.
Is this because the U.S. economy is resilient? Or, I mean, the world economy is resilient? Or
well, it's both that, and believe me, I think AI, we haven't even begun to see the impact of AI on individual companies. I think the next really exciting thing is the companies within sectors that actually get it right. They will take off, leaving the others behind in that sector. And so right now it's been the picks and shovels that have really been the ones that have gotten the evaluation advantages. It's going to be those companies, and it takes time for them to figure it out. So that, of course, is part of the volatility. I think the other thing is,
Jenny, is it productivity that they work on, or just in general, like spending and to upgrade their systems?
It's going to be hugely transformative in the productivity. And by the way, you actually have seen in the U.S. companies for a decade productivity was running at about 1%. We're now closer to 2%. It's massive, which is why I also think you've seen not so many jobs created and yet companies growing, because we're getting there are 157 million people working in the United States. We've had a 1% productivity. That's 1.5 less people that you need for the same kind of growth. And so definitely AI productivity, and I don't think that's in the numbers yet. I think that the productivity gains are from the technologies that have been kind of the last decade, cloud servicing, other things, digitalization. So the AI, it's going to take time, and there's going to be winners and losers in it. But the pace of it is so dramatic, faster than even I thought it would be.
Is it faster? I mean, is the next 12 months, 12 to 24 months actually crucial for that? Because that could also mean job losses, implications on the macro level.
So I'm always one to say, like, every time there's a big new technology, we predict that there's not going to be any jobs for it. And somehow, like nobody would have thought Google would have 300,000 people and that there'd be all these new things that we have. So I'm always optimistic that way. Having said that, I think that when you say in the next 12 months, companies are going to invest in it to try to figure it out. There's going to be a lot of failures and dead ends in that process, but there's going to be learnings in that. And so I think that it's going to take a while for companies. And one of the reasons I ran the IT department for a long time, one of the hardest things about IT, any kind of new application, I think, is people resist change. So your change management's tough. It's going to be hard to bring it into organizations, but the ones who get it right, it's going to be dramatic.
There's a big presence of crypto here. The chief executives, if you walk around Promenade, a lot of the houses are actually country houses. The Qatar has a big presence, some of the other countries, but then you also have a lot of the crypto exchanges. How do you see crypto getting more into the mainstream, and what does it mean for Franklin?
So I think 2026 is going to be a huge year where TradFi and DeFi start to come together, and I'll tell you why. So Franklin Templeton launched a on-chain money market fund. It was approved by the SEC in 2020. It's natively on-chain, which means we actually pay you your interest posted in your account every day. We can do that because it's on the blockchain. You can actually transfer, you will within the next few weeks be able to transfer on a Saturday from your money market fund into a stable coin. You can only do that because we are natively on-chain, right? The SEC had us run it parallel between our old system and our new system. We were astonished by how cost effective it was. And why do I think it's 2026? Because one, I just attended a crypto conference last week, is that you suddenly have the traditional financial people who are showing up to these things, and you have your crypto exchanges and others trying to launch traditional products, and you have your traditional financial firms saying, I need to figure out how my clients are asking me how to provide advice on this, how do they invest in this area, and so I think you're going to have these things start to come together more.
We've got the full conversation, and she's got a lot to say. Jenny Johnson, the Franklin Templeton CEO. You can find it online. It's on the terminal. It's a great conversation. Check it out. Take a listen. Let's talk about what we are seeing right now. Jenny talking about the volatility we're getting. We're certainly getting that in some key areas of the European space. Three worst performing sectors today: technology, the luxury space, and the auto sector. The autos, certainly, as you can see, under significant pressure. They're going to be likely front and center when it comes to President Trump's tariff threats towards the EU. Let's talk about what can happen next. Bloomberg's Craig Trudell, who leads our coverage of the sector, joining me around the table. It was already a tough place. This is only going to make it worse. Do we have any indications about whether or not German car makers in particular could be one of the big targets here?
Yeah, absolutely. I think you have established, for months now that this is going to be a problem for the German manufacturers in particular. You have Porsche, for example, last year being an absolute nightmare for them, where it felt like every few months they were doing a profit warnings. They just don't have any local production in the U.S., nor do they have a sort of clear option that they can sort of stand up in a matter of, 6, 8, 12 months and have localized production there. I think we have seen some indications that the Volkswagen Group wants to find a way to get more of its brands, Audi being another one, manufactured locally. But for the time being, they are kind of sitting ducks right now in this situation of already being frustrated that it was taking so long for the EU and US to agree to relief.
We haven't even got the deal
We
yet.
haven't even had that ratified yet. And before we even get that sort of signed, sealed, delivered, we have this threat on top of that. So,
how does it, if you think about what can be done, you talked about Porsche. Now, maybe a 911 is a 911 if it's made in the United States. But in terms of what is the footprint of the others? How big a footprint does BMW have? Does BMW export out of the United States? Just give me us a sense, the runners and riders, in terms of who is most exposed here.
Yeah, I think, Volkswagen, I think, is particularly vulnerable because of the fact that they have some of their major brands without local production in North America. Audi, you do have a little bit of production down in Mexico, and that is somewhat helpful, but only if we have USMCA sort of go the way that the manufacturers are hoping. BMW does have its biggest plant in the world in South Carolina. That is helpful. They do a lot of exporting from there. They make a point of bragging year after year that plant is one of the most valuable exporting plants in the world. In terms of Mercedes too, they also have some local production of SUVs, which is very important.